So continues to hover around that 50 to 20 point downtick is what we may see for our own markets going into today's session. We'll talk about that in just a bit, but onto the top story that we are tracking. US President Donald Trump announced a 10-day ceasefire in Lebanon. In a post on Truth Social, he said that both countries have agreed to achieve peace between themselves. Now, in a later post, Trump called on the Lebanese president and the Israeli prime minister for talks at the White House. The US president also voiced confidence in a deal with Iran, saying that Iran has agreed to hand over its enriched uranium supply and that the two sides are close to peace. He later added that he would go to Islamabad himself if the deal to end the war was signed. Listen in.
We have a very good relationship with Iran right now, as hard as it is to believe. And I think it's a combination of about 4 weeks of bombing and a very powerful blockade. The blockade is maybe more powerful than the bombing. We had to do something. We had to make sure that Iran never gets a nuclear weapon. And we're at that. They've agreed to that. They've totally agreed to that. They've agreed to almost everything. So maybe if they can get to the table, there's the difference. They agree. They got to get to the table with a pen. We'll have that over with. I would go to Pakistan, yeah. Pakistan has been great. They've been so good. Islamabad, I might go. Yeah, I might go. If the deal is signed in Islamabad, I might go. The field marshal has been great. The prime minister has been really great in Pakistan. So I might go. They want me. All of them are important.
When will the next in-person
Probably
meeting take
maybe
place?
over the weekend. The blockade has been incredible. It's held. They're not doing any business. They're unable to do any business because of the blockade. And so the combination of having no Navy, having no Air Force, having no anti-aircraft equipment, they have nothing. I would say the fighting, if there's no deal, fighting resumes.
And despite all of these remarks from President Trump, the oil markets are, well, slightly subdued this morning. Brent, after testing levels of 100, is still consolidating around those levels. Let's get you the latest from the commodity space. Manisha Gupta is here with all of that. Manisha, good morning.
Morning, and thank you so much for that. Well, absolutely. We're looking at some profit taking when it comes to the crude oil prices today. Overnight, of course, was a near 4% of gain that we saw come into those markets there. Interestingly, it also is about the way we have been looking at statements coming in from across. The markets are looking at the U.S. president, as we just heard. And then, of course, it is about Israel and Lebanon as well, which has gone on as a ceasefire for the next 1 month. That seems to be supportive for the crude prices. Well, this is really going to be a second straight week of decline coming in for the crude. But while the crude prices have seen some decline, it is the metal space that you need to keep an eye on. This is going to be a fourth straight week that gold and silver prices are trading higher. Gold actually is 17% higher from its March lows, and silver is 30% higher from its March lows. So a lot of money coming back in case of precious metals there. And same is the case with base metal prices, where you're looking at zinc trading at multi-month highs, copper is at 2.5-month highs, you have aluminum trading firmly at 4-year highs, iron ore prices trading at a 1-week high, steel is trading at 2.5-week highs. So everything that comes in case of metals is positive. One, you have a dollar decline. Two, the Chinese data has come in on the positive side. And then the markets are looking at depleting inventories. All of that quite supportive.
Manisha, thank you for those updates there. Some profit booking in oil prices, but metals continue to do well. But the International Energy Agency has warned that Europe is going to run out of jet fuel in as few as 6 weeks. Now, several European countries may start to face shortages of jet fuel depending on how much they are able to import from international markets to replace the lost supply from West Asia, which accounted for 75% of Europe's net imports of jet fuel previously. Now, IEA's executive director Fatih, the Strait of Hormuz blockade will result in the largest energy crisis we have ever faced. Listen in.
In Europe, we have maybe 6 weeks or so jet fuel left. If we are not able to open the Strait of Hormuz, if the refineries as a result will start to work, I can tell you soon we will hear the news that some of the flights from city A to city B might be cancelled as a result of lack of jet fuel. So two big problems: first, the high prices, and second, availability of the gas, availability of the jet fuel.
Take a short break. Set you up for today's trading session on the other side. Stay tuned. Welcome back. On to results, on to the action from Wall Street. The indices there ended higher yet again, with the S&P 500 and the Nasdaq hitting fresh record highs as optimism grew over a possible resolution to the Iran conflict. The S&P 500 was up around about 0.25%, as was the Dow. The Nasdaq ended around 0.4% higher. The 12th straight day of gains for the Nasdaq, the longest since 2009. And of course, the S&P 500 too, gaining in 11 out of the last 12 trading sessions. Now, here is Jim O'Neill, former chairman of Goldman Sachs Asset Management and former UK Treasury Minister, sharing his views on the market reaction to the Iran conflict.
It's so much bigger than Venezuela and others we could compare, including past issues in the Gulf. It immediately draws in lots of other really big countries like China and others to try and find a solution. And so it seemed to me there was a lot of vested interest in trying to stop this thing from going on the worsening, escalating path that it was. And throughout the whole thing, it's really intrigued me that I guess you call it the forward oil price curve is so inverted. In the, I always have thought over the decades that if you really want to know about the long-term trend of oil prices, look at the long-term moving average in the forward curve. And the fact that hasn't moved so dramatically tells me that the real commercial oil market players, not the speculators, sort of don't believe that this is going to have a permanent impact.
Let's now set you up for today's trading session. Our research team is here with the trade setup, the stocks that should be on your radar, and of course the setup on the F&O side of things as well. Firstly, Vivek joins in to get all the market cues that we need to watch out for. Vivek, good morning. The day of consolidation yesterday, looks like the GIFT Nifty is pointing to something similar today.
Well, that's right, a day of consolidation yesterday, but markets will take solace from the fact that you've actually seen a very strong handover coming from Wall Street. Even oil prices that had spiked up, pulled off yesterday. Brent now hovering near the $98.50 a barrel mark. Along expected lines, Asian markets have started off on a slightly softer note, and GIFT Nifty 2 is indicating a mildly subdued start for our own markets today. In terms of what transpired in the markets yesterday, remember yesterday's day where you did see significant profit booking emerge after the kind of rally that we've seen over the last couple of trading sessions, and along with that, most of the indices ended sharply lower from their intraday high levels. Now, in terms of the top movers yesterday, mainly earnings reaction, ICICI Lombard, STB Financial Services, both of them moved higher on the back of positive results. Now, what is it that we'll be watching out for today? Remember, earnings reaction to Wipro as well as HDFC Life is something that the street will keep an eye out for. Wipro, supported by the buyback, but the guidance was slightly subdued. And today, what is it that we will be watching out for? Key earnings again, Bajaj Consumer, Jio Financial, Mastek will be declaring their results today.
Vivek, thank you for that update there. Over to Ria now, who has the list of stocks that should be on your radar today. Ria, good morning.
Well, good morning. Let's start off with Brookfield India Real Estate. Sources have indicated the launching of a QIP to raise up to 2,000 crores with the indicative issue price at rupees 323. Moving on to all of the Q4 results being reported yesterday, Wipro has reported muted revenue growth with Q4 constant currency revenue growth at 0.2% sequentially versus estimates of 0.4 to 0.5% growth. And they've also approved a 15,000 crore buyback, with promoters also intending to participate. For HDFC Life, the total APE has come in at rupees 5,329 crores, and VNB margins also in line with estimates at 24%. And further, they have also approved a preferential issue of 1,000 crores to HDFC Bank. For Angel One, the revenue has gone up by around 9% sequentially, driven by the strong growth in the F&O segment as well as the commodities trading activities segment. For Wari Renewables as well, revenue has seen a very strong jump of 2.3 times on a year-on-year basis. Moving on to Axis Bank, which will be in focus. They will be holding a board meeting on the 25th of April to consider fundraising via equity and debt. And Saman Capital will be in focus as the company will be excluded from the derivative segment on July 1st. Kolte Patil will be in focus on the back of its business update for quarter 4. The sales have gone up by 13% to rupees 714 crores, and quarterly collections have also jumped up by 18% on a year-on-year basis. Keep an eye on Viatech Vabag as well. They have issued a clarification saying that they are the L1 bidder for the rupees 3,400 crore Kuwait project in a JV with a US-based company, and they are still awaiting the LOA for this particular project. RVNL has emerged as the L1 bidder for an East Coast Railway project worth 968 crores. And lastly, CESC will also be in focus. They have signed a 25-year power purchase agreements with multiple companies for the procurement of power.
Riya, thank you for that update there. Lastly, Sudarshan joins in with cues from the FNO space. So, Sudarshan, good morning. Some resistance at 24,400, but what is the FNO data indicating today?
Good morning, Harmaz. So after a strong move that we had seen in the last few sessions, yesterday we saw minor profit booking at the highs. But good part was market breadth remained steady thanks to the advances that we have seen in the majority of the mid-cap names. That's the reason at the close, mid-cap index was largely higher. But now the focus would be on Saturday's big earnings that we are waiting for. HDFC Bank, Yes Bank and ICICI Bank will be releasing earnings. Now, Nifty Bank's move will indicate which direction market moves. As far as the indicators go by, crude remains below $100 per barrel despite yesterday moving higher from the lows of around 96 or 95. And another point is volatility index too remains below the level of 20 and rupee and yield remain positively towards positive bias. As far as the GIFT Nifty goes by, it's indicating a flat start for today. Put call ratio yesterday, it has slipped to 0.97 versus yesterday's previous day's level of 1.11. That indicates you that there was a minor call writing at the highs around 24,300. So the broad range for Nifty has now become 23,500 to as high as 24,450. That's the important level. So on the options data, put side 23,500 and 23,700 were the most active ones, while on the call side 24,400 and 24,500 have seen maximum increase in the opening test. Support for Nifty 24,000 immediate support, and the next support comes around 23,500. First resistance 24,450. That's your 50 DMA. Two stocks remain in the band, SAIL and Samant Capital. Samant Capital will also be excluded from FNO from July series. Some of the stocks that have seen fresh longs are BHEL, Adani Power, Policy Bazaar or say PV Fintech, Varun Beverages. On the short covering side, both the power financer names REC and PFC, CDSL and Hindalco.
Sudarshan, thank you for that update. Of course, keep an eye out on Samman Capital excluding from the FNO space from the 1st of July. Take a short break. On the other side, get your fine print of Wipro's numbers and some management commentary as well. Stay tuned. On the earnings front then, IT major Wipro reported numbers after market hours yesterday. Rima is here with the fine print of that. Rima.
Thanks so much for that. Just to give you an indication of the market reaction, Wipro ADR ended down nearly 5% at a time when Infosys ADR was up 0.5% and many of the software stocks in the US were on an uptrend. Now, the reason is that Q4 numbers were muted. Company missed the mark on the top line, growing only 0.2%, lower than consensus expectations and at the lower end of the company's guided band of 0 to 2%. And remember, this growth also comes in courtesy acquisition. So UBS estimates that the Harman DTS acquisition would have contributed approximately 1.5% to the top line, which means the organic growth for the company would have been negative, and the company says it's on account of delayed ramp-ups and some client-specific issues. With this kind of an end to the year, FY26 has also been a washout. It marks the third consecutive year where revenues for Wipro have fallen. In FY26, constant currency revenue growth was down 1.6%, following a 2.3% degrowth in FY25 and a 4.4% decline in FY24. Q1 guidance, Q1 FY27 guidance is not inspiring. It stands at -2 to 0%, which means your base case is, middle case is, if the company delivers at the midpoint of the guidance, it's still going to be another degrowth quarter. The company says, again, it's the client-specific issue in Americas too, though there will be some contribution coming in from the 2 large deal wins. But despite that, Q1 revenue growth is likely to be negative. For Q4, margins have declined on expected lines to 17.3%, and that's because of the integration-related costs of their acquisition, and there was a 1-month wage hike impact. So margins came in at 17.3%, but the balanced 2-month impact of the wage hike comes in Q1, which is why Motilal Oswal says that Q1 margins will further fall down, and their estimate is for 16.4% because of the wage hike impact, which continues. It started in March, and it takes place over a 3-month period. The management, when asked about the view on margins, they said our commitment, aspiration is to maintain margins within a tight band, and the band they work with is generally 17 to 17.5% over the medium term. But what could come as a bit of a silver lining is the buyback. It's the company's largest ever buyback, the first one in 3 years. 15,000 crore rupees is the buyback at a price of 250, 19% premium to where the stock closed yesterday, and promoters have indicated their intention to participate. Back to you.
Interesting, Reema. Thank you. Thank you for that update there, Reema. We heard out the management as well of Wipro at around 8:30 this morning. We've been in conversation with the top brass. And yes, the buyback, 15,000 crore rupees at a 19% premium to yesterday's closing price. So keep an eye out on Wipro in today's session. On to some national news then. The government's decision to convene a special parliament session to table 3 bills has snowballed into a major political controversy. The Congress and other parties, including the DMK, have criticized the government for bulldozing delimitation with women's reservation. Now, leaders of southern states have also claimed that the delimitation exercise would reduce their proportional representation. Opposition parties also questioned the need to initiate a redrawing of the electoral boundary without the completion of the latest census. The BJP has rejected the argument, calling it misleading. Prime Minister Narendra Modi, while speaking in the Lok Sabha, said that it was the need of the hour to not delay the 33% women's reservation any further. Home Minister Amit Shah said that the delimitation report will be applicable only when Parliament approves it, and the report is not expected before 2029. But the proposed delimitation bill does not specify this. And with that, we take a leave on this edition of Power Breakfast from me and the team. Thank you for watching. Bazaar Morning Call on the other side sets you up for the day's trade.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, hi. Good morning.
Hi, good morning. Friday morning, and as things stand, we would have our second weekly positive close. Last week, we ended with a gain of 6% on the Nifty, and this week, we're up close to about 0.6%. And the headlines, at least from Donald Trump, are positive.
Well, that's right. They are positive. And, I think let's just take it from the top with where we are at with regards to Qs, right? So U.S. markets continue to do well. And I think that has been the big story. No problems at all with U.S. So it's fresh all-time highs. S&P 0.25% higher. NASDAQ about 0.33% higher. And NASDAQ, it's the 12th straight winning session for the NASDAQ. I think it's the longest stretch we've had, unbroken stretch, since going back all the way to 2009. Now, Trump posted that Israel and Lebanon have agreed to a 10-day ceasefire. Lebanon, of course, was another sticking point out there. Added to this fact, yesterday morning we reported there were reports that, both sides, Iran and U.S. have said that they've agreed to extension of sort of this ceasefire. It's possible that they may extend the ceasefire beyond 2 weeks. It's not set in stone, etc., etc. And maybe that is the reason why. If you look at oil prices, Brent oil prices, last night they went up 3% or so, 3.5%, and we are around $98. If you look at Brent oil futures, they're at about $98, $98.5 or so. So from 94, 95, we're to about 98, 98.5 now. And maybe, markets thinking, well, if they're going to talk for not 2 weeks, but 4 weeks, it basically means that it's going to be status quo, which means the strait will stay closed for that much longer. And energy prices will stay high. That is perhaps the reason why oil prices took a leg up. Otherwise, there was no real reason, certainly not on the Israel-Lebanon headlines. Trump, of course, on Iran, once again saying it's looking very good that we are going to make a deal. So that's a quote. Netflix stock was down about 9.5% in after hours. Earnings missed expectations. That's a large name. And just to tie in the levels then, lots of single stock news flow, which we will address in just a bit. But yesterday we, came back above 24,300, but we could not sustain it. So supports on the Nifty will now come in at 23,900, levels we put out yesterday as well, and 23,465. It's basically just tracking prior swing highs. The first swing high on the way down is 23,900. The next one is 23,465. Those are the two supports. And of course, on the way up, I'm not sure if we get a retest of 23,465 levels and then you start to move higher, or we never go there and then we start to move up in any case. But the level on the upside is 24,800 or so. GIFT Nifty will give you a quick sense of how we are set up, where we start. It's about 17 points lower. It's into a weekend once again. And the news flow in terms of those tweets and Truth Social posts, etc., are expected to be high. So weekends are always tricky. No price discovery, but no stoppage of news flow and headlines. And that's what we've dealt with now for some time. Nigel has walked across to the wall with positioning and the F&O stats. Nigel, take it away.
Well, the message that came in yesterday was there appears to be continued risk appetite beyond the large cap names. And I say that because yesterday was the day when the Nifty and the Nifty Bank went home with a bit of a cut, but you had both the mid cap and the small cap indices that did quite well. In fact, if you look at the advanced decline ratio, not just yesterday, but the last many trading sessions, well, it's been in favor of the number of stocks advancing. And in fact, a few sessions ago, it was even better than 2:1. And I say this in the backdrop that the last few months, on an average, this is NSE data, the advanced decline ratio actually has been favoring the number of stocks declining. So after a while, that's turning around. To be precise, after close to around 5 months, we're seeing that the advanced decline ratio in the month of April is actually in favor of the number of stocks advancing. And that's why your portfolio will be feeling good. So the breadth of the market is seeing a lot of interest. The broader markets are seeing a lot of participation. And that's pretty good, right? That helps you feel like the markets are coming back into its own. The other positive has been the VIX. Remember, a few sessions ago, it almost went to around 30, and that's cooled off. Traders will be looking at a number sub that 15-odd mark. That's the pre-war level. So you'll want the volatility index to cool off yet again. In terms of flows, yesterday there was a bit of a switch. Role reversal is what we saw. The DIs, they turned net sellers. They have been backing up this market. The good news is the FI selling, which just a few sessions ago was 7, 8, 9,000 crores odd. That's turned into a buy number, marginal number, but the bulls will take that. In terms of the futures data, well, there was some unwinding of positions, both on the long as well as the short side. The FIs continue to remain net short, but not very, very aggressively in absolute contract terms, because now the net short positions on index futures are sub 2 lakh contracts. In percentage terms, it's around 80%. In yesterday's trade, you saw some call writing, though. They wrote more calls than puts in trade yesterday, and we should get a couple of strikes up for you on the screen. The 23,300 call and the 24,000 put, both those two strikes were fairly active. Which brings us to the levels. The recent low of around 23,556, that's the crucial support zone that you're looking at. In terms of the other support level, the 20 DI comes in at. So that's the important support zone. In terms of resistance, the 50 as well as the 200 DMI are going to be important. The first level of resistance will be ballpark around this 24,400 odd mark. You'll want to get past this to make a bit of a dash towards that 200 DMA. Finally, the Nifty Bank is going to be in focus. That's going to be the swing factor for today because we got a lot of big earnings that are expected tomorrow. So the Nifty Bank will be the swing factor, particularly in the final hour of trade. And in terms of levels you're looking at, the 50 and the 200 DMA, that's the crucial resistance mark. It's close to around 1,000 points away from current levels, around 57,200 odd. But it seems, irrespective of what happens on the headline index, the broader market participation is good. And that's heartening to see the number of stocks advancing, outweighing the number of stocks that are declining.
Thank you very much for that. The flows picture was quite interesting, right? The FI is buying for the second consecutive day, 382 crore in the cash market, while the DII sold 3,400 crore in the cash market. Tomorrow is going to be a very big day for banking earnings. Two heavyweights, HDFC Bank, ICICI Bank report numbers. Markets react only on Monday. And you also have Yes Bank, which will be reporting numbers tomorrow. But let's get to our guest then. James Knightley, Chief International Economist at ING, is now joining in on the show. James, thank you very much for joining in. We seem to be on a path to de-escalation. Global markets seem to be celebrating. The Indian markets are also up 9% in the month of April, while the S&P and Nasdaq are raking in new highs. But the warning that's coming in from global leaders seem to be that we're underestimating the fallout from the Iran war. So the Qatar finance minister said what we're seeing is the tip of the iceberg. A full-fledged impact is coming in 1 to 2 months. What is your own assessment that even if the war comes to an end, where crude prices will be and what the impact will be on global economies?
Yeah, I think that's a really important point. We are a little bit nervous that the market euphoria that we've been seeing is vulnerable to a reality check in that we still don't know what the real infrastructure damage is within the Gulf region. That could, even if we get back to 100% flows, the infrastructure may not be able to deliver what we had previously been receiving. And also, of course, we've still got to get a deal. We've been here before, there's been optimism before, only for the talks to fail. And we've got to be very realistic that this is not a foregone conclusion. So, yeah, I certainly agree with some of the governments in the Middle East that there is a lot of risk still out there. And even if we do get a deal which starts to unlock the flow through the Straits of Hormuz, we've got to remember that so many countries have actually got to replenish inventory, their energy stocks, in addition to meeting the current level of demand. And that excess demand, if you like, that we're going to be faced with in coming months is going to keep energy prices elevated as well. So that is not great news for corporates. It's not great news, certainly, for households either. There's still going to be quite a lot of economic pain. And we think that's going to be, upward pressure on inflation through the next 3 months, and also downward pressure on economic growth.
What's the level of crude that you're anticipating? Because you said that there will be demand that has to be met, and plus stock has to be replenished by various countries. So that's going to keep demand elevated and prices elevated.
Very much so. So even if we get a deal very soon, we're assuming something like we get back to about 40% of the normal flow through the Straits by the end of this month, and we get back to 30, sort of 70% gradually through the summer. So by that point, by say second half, we should, in theory, be back to perhaps 80, 90% of the typical flow. But even in that environment, as I say, with the replenishing of inventory within so many countries around the world, we would imagine we're going to be through sort of at $90 to $100 a barrel through most of the summer, through third quarter, and we may still be in the high 80s towards the very end of this year. So that still is pretty painful stuff.
James, hi, good morning. So let's assume oil stays high, right in the 90s handle. Could the outcomes for US equity markets and markets here in Asia be very different? So when you wake up and you look at US making a new high, even though oil's jumped another 3.5%, and to extrapolate what US equities do to Asia, I mean, is that the right way, or you think, the outcomes are very different for Asia and the US?
I think that's spot on. I think there is a big disconnect. We've got to remember the US is energy self-sufficient. It produces more energy than it consumes. It's a net energy exporter. The US is far, far more insulated from the economic fallout than any country in Asia and any country in Europe. So it's actually going to be much more resilient. There is actually possibly, an investment boom coming in the US oil industry as increasing numbers of Asian and European countries look to diversify their purchases away from the Gulf and go and look at more at the US. So they're a winner from that front. But also the supply shock for America is much, much narrower than it is for Asia and for Europe. Because, of course, in the US, it's just motor fuel. It's just aviation fuel. Natural gas prices have actually fallen. So my electricity bill is actually probably going to be dropping. Whereas in Europe and Asia, where natural gas prices have been jumping, there is the very real risk that, natural gas on its own plus electricity bills are going to be going up. So there's a much greater squeeze coming potentially for both households and consumers in Europe and in Asia than the US. So I think we've got to factor that into our thinking in investment allocations, that the US is much more insulated from the negative economic headwinds from all of this.
Europe, I think, has about 6 weeks of jet fuel left. That was a statement that they made yesterday. So we hope that the crisis ends soon, because the ramifications and the implications are going to be very severe and dire. So US is fairly insulated, James. Which economies are at risk the most? Have you cut down your GDP growth forecast for which countries and by how much? Where does it stand now?
Yeah, we've even cut growth in the US as well. So as I say, the US is insulated but not immune from all of this, because, $4.50 a gallon for gasoline here in the United States is pretty painful. And already we've got a household sector that's already feeling a bit of a squeeze. Real household disposable incomes are not rising. So that squeeze on spending power, we think, is a headwind for growth. But look, if we look at Europe as well and look at Asia, I think it's pretty broad spread. Look at countries which are heavily energy importing. The relief is not going to come immediately, and it may be quite a painful story. So look at Japan, look at Korea, look at those sorts of countries, heavy energy importers, Taiwan as well. But in Europe, again, it's pretty broad based. So we are just much more nervous about the growth outlook pretty broadly in Europe and Asia relative to the United States.
And in Asia, do you want to tell us your India's forecast? Do you have one?
We don't actually cover India right now. We're still waiting for that. But I think in general, we would be looking for the Indian economy to be impacted as well, just given the natural energy import usage as well.
James, great conversation. Thank you very much for joining in. That's the ING chief economist, expecting crude prices to remain at $90 to $100 per barrel, even if a deal comes through very soon. Europe and Asia are going to be, he's nervous about the economic impact on Europe and Asia on the back of elevated crude prices. Let's tell our viewers the interactions that we've lined up on the show today. So first up, 8:30, we get a conversation with the management of Wipro on the back of the Q4 earnings and buyback. 9 a.m., the management of Nuvoco Vistas will talk about demand trends and the outlook going ahead. 9:20. Sanjeev Prasad of Kotak Institutional Equities will be a market master for the day. 9:30, the management of BEML joins in following the recent order wins and outlook ahead. Following that, the management of Keystone Realtors will be with us at 9:40. 9:50, we'll be joined by IIFL's Ranjit Sirumala to put the focus on the chemical space in our QSQT segment. And following that, end of the show in our special segment, Indianomics, Lata speaks to IMF's Asia Pacific Director on the fund's outlook for India and Asia.
Well, time to slip into a short break, but we've got plenty of stocks that we're going to be tracking for you in our special top 10 segment. The list comes up for you on the screen. Angel One, VST Industries, Kolte Patil, Pari Renewable Technologies, Vatek, Vabag, and RVNL. All of them will be reacting to positive news flow, while Wipro, HDFC Life, Sammaan Capital, and Axis Bank will be reacting to negative news flow. Take that break, come back. We get into further detail on all of these names.
Welcome back. Let's talk about stocks then. Our research team is standing by with CNBC TV 18's list of top stocks for the day. Hi guys, good morning. But let me begin with Wipro. That's the big one to watch. And as an indicator, Wipro ADR closed down nearly 5%, 4.85%, at a time when the Infosys ADR was up 0.5%, and largely the software stocks in the US were also higher in trade. Now, the reason is the Q4 was a miss on the top line. The company's revenue growth came in at just 0.2%, lower than consensus expectations. And this growth has also come in courtesy and acquisition. If you look at the organic growth, the company doesn't spell it out, doesn't quantify it, but the organic growth would have been negative. FY26 now marks the third consecutive year when the company's growth has been negative. They've ended FY26 with a degrowth of 1.6%, which follows a 2.3% decline in the top line in FY25 and 4.4% in FY24. The Q1 FY27 guidance, though in line with expectation, is also underwhelming. -2 to 0%, which means your base case is that the company still degrows in Q1 FY27. The reason is client-specific issues in Americas too, and though there is a positive contribution from the two large deal wins. Margins for the company came in on expected lines at 17.3%, but looking ahead, Q1, margins are likely to face headwinds because of the wage hike impact and again, the integration-related costs of the large deals. So Motilal Oswal expects a further downtake in Q1 margins. The good part is there is a buyback. The buyback has been 15,000 crore rupees, the company's largest buyback, the first one in 3 years at a price of 250 rupees. Promoters, though, will be participating in the buyback. So that's Wipro for you. To wrap it up, ADR was down 4.85%. And you can catch the management at 8:30 speaking to CNBC TV 18 on their Q4 numbers and the outlook.
Okay, all right, that's about Wipro, but let's hop across to Divyani. She's joining to tell us about Angel One's numbers. Morning, Divyani.
A good set coming in from Angel One. Revenue came in at 1,460 crores, up 9% quarter on quarter, driven by strong growth in the trading activity. Employee costs dipped roughly around 11%, but that was aided by some cost reversals by the company. Other expenses was up 20% quarter on quarter. That included IPL promotion costs of 11.5 crores and certain reimbursements to customers worth roughly around 19.2 crores. Adjusted for this one-off, EBITDA would have come in at 498 crores versus 404 crores that we saw in quarter 3, up 23% on a quarter-on-quarter perspective, with a margin expansion of roughly around 400 basis points. PAT came in at 320 crores, up 19% on a sequential basis. And the company is making 300 crores worth of strategic investments in both Angel One Wealth and Angel FinCap, looking to diversify beyond traditional broking. So based on the strong operational performance, we're going with the green on Angel One and trade today.
All right, Devani, thanks very much for that. Well, Vivek is now here with more stocks with news flow. Vivek, take it away.
Well, good morning. First on the list is Waaree Renewable Technology. It's the EPC arm of the Waaree Group. A good set of numbers. Execution is quite strong. Revenue is higher by almost 2.3 times on a year-on-year basis. EBITDA up by 63%. However, much higher EPC contract cost this time around 871 crore versus just around 335 crore has gone ahead and dented the margins quite significantly, both on a year-on-year as well as on a quarter-on-quarter basis. Margins at 18.8% versus 26.5%. Profitability higher by 67%. This on the back of the higher base. Order book quite strong at 2.83 gigawatt peak, and the bidding pipeline too quite strong. The management says bidding pipeline is over 36 gigawatt peak. Now, the other stock, and it's an important clarification that is coming from Wartek Wabag. Remember, yesterday we had told you about a story where we had said that the company is the lowest bidder in two separate projects, one project in Saudi Arabia and the second project in Kuwait. So Wartek Wabag has given a clarification both to the exchanges as well to CNBC TV 18. As far as the order one in Saudi Arabia is concerned, the company has said that we do participate in various tenders in water as well as wastewater treatment projects in the kingdom, which is Saudi Arabia, and they are in various stages of evaluation. They say that once they receive a letter of award, the same will be duly intimated to the stock exchanges. As far as the order in Kuwait is concerned, they have confirmed the fact that they, along with another JV partner, have emerged as the L1, and here too, they are awaiting a letter of award from the exchanges. And keep an eye out on RVNL as well. The company has emerged as the lowest bidder in an East Coast Railway order. This is for EPC works. Time period of the execution is 3 years. The order size is quite significant at 968 crores. Remember, the company has an order book of over 85,000 crore rupees.
All right, Vivek, thank you very much for that. Well, VST Industries and Kolte Patil are the next two in focus, and Sonal is here with those. Sonal, morning.
Good morning, Prashant. Let me start with VST Industries. Reported strong set of numbers. There was pre-buying ahead of tax hikes and price hikes, which boosted numbers for the company. Cigarette volume growth came in at 8.6%, and cigarette revenues were up 30% on a YOY basis. Additional depreciation of 48 crore was recognized by the company. So overall revenue growth of 31%. EBITDA is up 200% for the company, with a margin expansion of almost 2,000 basis points. The profits also were up 120%, despite the fact that there was higher depreciation this time at 63 crore rupees. For Kolte Patil, Q4 business update was good. Their sales were up 13% on a YOY basis. Quarterly collections were up 18% on a YOY basis. However, on an FY26 basis, their sales value was down 7%, and sales volumes also lower by 13%.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Yash. He's joining to tell us about HDFC Life. Yash, morning.
Morning, Nigel. So just like ICICI Prudential Life Insurance, the top line or the total premium collection remained weak. But unlike ICICI Prudential Life Insurance, there was no positive surprise which came as far as the value of the business or the margin performance for HDFC Life is concerned. The new business premium, that grew just by about 5% on a year-on-year basis. Total AP, that grew by just about 1%. Retail AP growing at just about 0.37%. This was about the weak top line, but no positive surprise as far as value is concerned. VNB contracted or fell by about 9% on a year-on-year basis. The margins, they came in at 24% versus 26.5%, a fall of about 2.5% in margins for HDFC Life. All these numbers from NBP to total AP, retail AP, VNB and margins are in line with CNBC TV 18 poll. There's another development which has happened in HDFC Life. The company's informed the exchanges that it has, HDFC Bank will be participating in the preferential issue of HDFC Life. They would be infusing about 1,000 crore rupees in HDFC Life through this preferential issue, but the sole purpose is to shore up or to increase solvency, and the company's solvency will go up by 900 basis points with the infusion of this 1,000 crore coming from the parent bank, that is HDFC Bank.
All right. Thanks very much for that, Yash. Let's bring in Vivek back on with details on Axis Bank and Saman Capital. Vivek, take it away.
Well, first we'll go and see the news flow as far as Saman Capital is concerned, a hygiene development here. NSE has gone ahead and decided to remove the stock from the F&O segment, and the current April, May and June contracts will run till expiry. No fresh contracts will start from July 1. Axis Bank, the company has given an update to the exchanges that along with the results, they will also be looking at a proposal to consider either an equity or a debt fundraise. This is despite the fact that the company has a 16.55% CRAR ratio. It will be important to see whether this particular fundraise is mainly going to be used for growth capital. However, any near-term equity dilution could wane as far as the stock price performance is concerned.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are Angel One, BST Industries, Kolte Patil, Vari Renewable, VA Tech Vibhag, RVNL. Stocks with negative news flow are Wipro, HDFC Life Insurance, Saman Capital and Axis Bank. From equities to commodities, Manisha is now joining in for a complete roundup.
Well, thank you for that. I'll start with the crude oil prices, which are headed for a second weekly decline. There are positive statements coming in from U.S. in sense of good relationship with Iran, and the U.S. announcing a 10-day ceasefire between Israel and Lebanon also has done wonders. What the markets are still worried about, though, is that the Strait of Hormuz is completely shut due to a dual blockade by U.S. and Iran, and that is keeping the prices very close to $100 a barrel. What we also have seen gaining is the metal prices. So gold and silver are headed for a fourth weekly gain. You have copper prices, which are 2.5-month highs, zinc at a 2-month high, aluminum trading at a 4-year high, and good gains coming in for the ferrous metals like steel and iron ore. Both of these prices trading at a 2-week highs as well. The firm seasonal demand from China and restocking by end users are all very supportive factors for metals.
Absolutely. Thanks very much, Manisha, for that. We'll take a quick commercial break here. We're going to come back with the management of Wipro. Rima got you the numbers. Has promised the conversation on the numbers in just a bit.
Welcome back. Asia's on the back foot today, but it's had a good run from the start of the week. You've got the Japanese index, Nikkei, down nearly 1%. Hang Seng also lower 1%, 0.5% lower on the Taiwanese markets and on the Korean markets. Remember, while the headlines are positive from the Asian markets, markets across in Asia have rallied hard. For instance, Kospi from the start of the month is up 22%. Nikkei is up 15% from the beginning of this month. The Taiwanese markets also up nearly about 16%. So a lot of the good news perhaps is already in the price, and there is some consolidation taking place. This week itself, many of the Asian markets have rallied between 3, 4, 5%. So some consolidation taking place, and that's perhaps what's getting reflected in the GIFT Nifty as well. For the GIFT Nifty, it's suggesting a slightly lower start. Yesterday, we came off significantly from the highs of the day. In fact, if you pull up that intraday chart, in the morning itself, markets had opened up at higher levels, went on to hit levels of 24,400. And after that, some profit booking had emerged, and we ultimately ended with a minor cut and around the 24,200 mark. It's a light day in terms of earnings. Mastek is the one to watch today, which will report numbers. Many reactions. We spoke about HDFC Life, Wipro, Angel, Vari. But tomorrow is going to be a big day in terms of earnings. HDFC Bank and ICICI Bank will be reporting numbers. We'll talk about Wipro in greater detail. The management will just be joining in. So Wipro reported a slightly muted quarter. Revenues missed the mark. It was just up close to about 0.2%. And the problem for Wipro is that growth has been absent. It's been 3 consecutive years when Wipro's top line has not grown. And this is despite acquisitions boosting the company's growth. The company does not detail out what the organic revenue growth is. But if you look at just Q4, for instance, while the revenue growth was about 0.2%, UBS says 1.5% came in from the acquisition, which means if you strip that out, you're still looking at an organic degrowth of 1.5%. The company has said that there are client-specific issues, etc., which have impacted them in the conference call. But, it's a bit disappointing. And, we can perhaps see that today. In fact, it's a great time then to get the management in of Wipro. I had a chat with the CEO, CFO, and CHRO about the quarter. Let's listen in to what they had to say. And the first question begins with the outlook going ahead.
If you look at our Q4 results, 3 of the 4 SMUs had sequential growth. In fact, they had sequential growth the last 3 quarters, consecutive quarters, which is Americas 1, Europe, and APMEA. I think the SMU that we see degrowth is A2, which is very specific to a particular client situation, which had an impact in Q4, and we also have an impact in Q1, and it ends there. Second, also, there are certain deals that, especially the large deal that we have won, it's taking more time than we would normally want it to be. And that's also, delaying or rather impacting the growth aspects of it. However, if you remove the BFSI outside of Americas too, both in Europe and APMEA, the BFSI continues to grow for us. In terms of the pipeline, I think BFSI pipeline is strong and robust across the markets. And the only way I could reflect for you, outside of Q1 is how the pipeline looks. It is secular, and it is also robust across markets and across industries. I think our focus this quarter and going forward as well is to close some of these deals and create that momentum. I also want to talk about the deals that you talked about, which is the Olam deal, which is almost $1 billion deal, and it was a very strategic deal for us, and we are excited not just about the revenue commit that we have as part of the deal, but also the opportunities to build capabilities around farm to fork and supply chain based on the kind of distribution that Olam does. And also another acquisition that we just announced, it's part of the vendor consolidation. And we see a lot of these deals which are becoming more and more business outcome led, and we are staying focused on that. And of course, AI becomes integral to these deals as well, Rima.
And this delay in the ramp up of some of the large deals, is it on account of the macro?
It is very client specific, I would say, nothing to do with geopolitics that's going on or the trade or tariff.
Aparna, can you break up the margins for us in Q4, the impact of the wage hike, M&A integration costs, the benefit due to the INR depreciation?
Our operating margins included all these 3 factors. If you look at it quarter on quarter, our margins have slightly contracted by about 30 basis points, In Q3, we reported our highest ever margins. So given that we have rolled out wage hikes effective 1st March, and we had 2 months of the acquisition that we had done around Connected Services DTS Harman, we had those two as headwinds, and of course, the rupee depreciation came in as a tailwind, and our operating margin performance for the quarter reflects all those 3 factors, Rima. On a full year basis, again, we improved our profitability by 15 basis points year on year. So this will be 2 years where we are holding our margins in the narrow band that we have spoken about. As we get into Q1, we do see headwinds of 2 incremental months of the wage hike that we'll have to absorb. The revenue environment, given our guidance, you will note is continuing to be weak. So we will have to work through it. There could be some volatility on a quarterly basis, but in the medium term, we will. Our endeavor would be to hold on to the band of margins in the band.
But because now, Aparna, you have the benefit of the rupee depreciation, and can you tell us the exact quantum of the benefit that you had in Q4? Will it help you at least keep your margins above 17% for FY26 because you've got that cushion going for you?
We've got 0.5%, 50 basis points of improvement on account of Forex. See, the dollar rupee is something that's extraneous to, what we can control. What we are focused on is a very robust foreign exchange risk management framework. And to that extent, hopefully if it sustains, then it's certainly a positive as we get into the next year. But we are also investing. We are investing in capabilities through some of the acquisitions that we spoke about. We're investing in deals. We just did 2 announcements in this month. And we are investing in our people. We just rolled out our salary hikes. So we are continuing to invest. And therefore, we will have to improve operationally and not just rely on Forex.
Srini or Aparna, can you explain the math behind this 15,000 crore buyback? Why did you wait for 3 years to announce one? And what does it leave you in terms of further acquisition or strategic announcements for FY27?
I think we have a very good war chest in terms of the cash that we have on the balance sheet. The buyback that we're doing is after 3 years. We're doing 25% of the paid-up capital of the company that is allowed as per the statute. We are maximizing that. It's being done after 3 years, so we believe that we must do a large one. It's going to be one of our largest buybacks that we have announced. This is just execution of returning the excess cash on the balance sheet, ensuring that we have enough for our ambitions around the newly formed unit of Wipro Intelligence Platform. We continue to invest through our Wipro Ventures. We continue to do M&A. And given the leverage we have on our balance sheet, we have a very good war chest.
Saurabh, you hired 7,500 freshers last year. What is the guidance for FY27 in terms of fresher addition, lateral addition? Can you give us an indication of that?
So, Rima, yeah, we hired 7,500. We are not giving a guidance for FY27. Very, very demand specific, and demand looks up, we'll plan that. Today we have enough headspace, both from lower attrition, space to improve our utilization. The supply side is taken care. So the demand for hiring will be very, very demand specific, I would say. Not giving a yearly outlook right now. Very volatile environment.
Okay, one final question, and I'm going to put you all on the spot, but do you think FY27 is going to be a growth year for Wipro? Because the last 3 have not been. Srini? Yes, no?
It's a very good question. As you know, we don't guide for the year. I think what is important for you to note is, one is our pipeline today. It's very robust, Rima, and it is very secular, like I said, across the markets and across the countries. And second is, like Aparna said, it's very competitive. Winning deals are very competitive, but we are going aggressive. At the same time, if you look at just this quarter, this month, we had two deals that we have actually announced. One is the Olam, and other one is a very specific vendor consolidation opportunity that we got. So with that in the context, if we execute to this pipeline that we have, it should look much better. Rima. That's how I can end the conversation with you now.
That's the word coming in from the Wipro management. We will slip into a very short break. We'll come back and talk about more stocks. Motilal Oswal, Siddharth Khemka joins in on the other side.
Welcome back. There were plenty of big movers in yesterday's trading session. Hormuz joins us to run us through that list and some of them that were backed by big delivery. Morning, Hormuz.
Morning, Nigel. And there were a couple of underperformers in yesterday's trading session, two of them being Astral and Supreme Industries. Both of them saw losses of close to 5% in yesterday's trade. And for Supreme Industries, the most active option yesterday was on the 3800 call option, which was down around 54% on the FNO side. The premiums were down. Astral too, the 1500 put saw very heavy activity. The premiums almost doubled in yesterday's trading session. Now, even on the volumes on the trading front, the Astral had around 23 lakh shares that were traded. The 20-day average is only 7 lakh shares. Supreme Industries also had 6 lakh shares traded. The volumes, the 20-day average was around 2.7 lakh shares. And even for on the delivery front as well, 27% of Astral shares were marked for delivery and 44% of Supreme Industries shares were marked for delivery, both of them higher than their 20-day average. Now, for GMDC, the stock was up 20% in yesterday's trade. The biggest single-day gain since April of 23. The third straight day of gains is gained in 5 out of the last 6 trading sessions as well. And it was significant on the volumes front as well, because the Thursday's volumes were the highest since September of 2025. Over 5 crore shares were traded. The 20-day average of 45 lakh shares. 15% of those were marked for delivery. So that comes up to around 78 lakh shares that were marked for delivery. The 20-day average is around 10 lakh shares. And the stock ended at record highs yesterday and also turned out to be the fourth most traded stock on the Nifty 500. And a couple of outperformers yesterday from the Midcap IT basket, First Source Solutions and Sonata Software, both of them seeing double-digit gains in yesterday's trading session. The volumes too were higher. It was the best day for Sonata since August of 25. For First Source, it was the best since August of 24. Volumes for Sonata were also the highest since August of 25. For First Source, the volumes were highest since August of 2009. Now for Sonata, there were 2 crore shares that were traded. First Source had 7 crore shares traded, both of them significantly higher than the 20-day average. And on the delivery front as well, 6% shares were marked for delivery on both. For Sonata, there were 4x of its 20-day average, and for First Source, there were 10x of its 20-day average.
Okay, all right. Thanks a lot for that, Hormuz. We'll do a little bit more of a deep dive on GMDC and take some data points of what Hormuz has given us. Massive volumes and massive delivery as well in comparison to its averages. Let's welcome Sid Khemka onto the show. Hi, Sid. Morning. Good to see you. Let's talk about Wipro. Rima just told us the numbers not as good, as what were expected, or a little bit weaker. What's your view on the stock at around 210 bucks?
Good morning, Nigel. Glad to be on the show. So I think few key points here on Wipro. Soft quarter. The biggest disappointment was on the Q1 guidance. I think that is below what we were expecting. And thirdly, the margins that are likely to remain flattish to a bit subdued in the near term. I think all these points to compared to some of the other IT players in this volatile environment managing to report slightly better numbers. So we remain neutral on Wipro, and we would wait for things to improve in terms of business delivery. I think the key here is that the near-term headwinds from the ramp-up delays, the top client business decline, and the vertical weakness that would weigh on the stock price. The only, I think, positive that can support the stock price is the huge buyback that the company has announced, which may limit the downside. But clearly, it's a clear avoid in the current situation.
Siddharth, hi, morning. So Motilal Oswal also met the management of Vedant Fashion, the owner of Manyavar ethnic wear, many stores even here in Mumbai. Now the stock has been a rank underperformer, 45% lower in the last 1 year. Can you give us the key takeaways from your interaction with the management of Vedant Fashion? And is there enough meat for the stock to play catch up and do well from here?
Good morning, Rima. Yes, so we do keep meeting some of these managements to understand what is happening on ground. And while the valuations are turning attractive, but the key challenge remains the underperformance in terms of business. There is a prolonged slowdown in the retail segment, and that is largely due to the macro factors. For example, the IT company slow down, weak discretionary demand in the mid-premium segment, and higher competition in the organized space. A lot of other players have got into this ethnic wear segment, especially the large nationalized players, including the likes of Raymond, some of the other players, and that is increasing the competition. So what we are seeing is that while the company is targeting an 8% same-store sales growth on a steady-state basis, but the same is yet not converting into the numbers. And the company is focusing on improving the quality of its retail network. But what we are building in a modest 5 to 6% revenue, EBITDA and EPS CAGR, which is dismal for the valuation. So even after a 45% correction, we believe that the business growth is still weak to turn positive. So we retain our neutral rating with a target price of 420, which is around the current market price.
Okay, all right. Sid, do you have any view on Sammaan Capital? It'll be moving out of the F&O list. Mr. Banga, when he joined in, he was very, very optimistic that things in the next 2-3 years are going to look drastically different. And, if he could achieve that, then things could look up for the company. But what's your view?
Nigel, unfortunately, we don't have coverage or view on Sammaan Capital.
Okay, all right. Let me ask you about GMDC. Yesterday, suddenly these miners moved up. Beats my imagination, because now the company market cap is close to around 23,000 crores. This year is going to be a bit of a washout. But, the street is optimistic that in FY28, looking at a Nuvama estimate, they're talking about 1,200 crores of EBITDA. That would still make the stock trading at close to around, 17, 18 times. And that rare earth unlocking should come only after 3-4 years. Have you heard anything on that front?
So, Nigel, again, another stock we don't cover, but we do have a look at the mining stocks and the sector. So I think there is a lot of excitement with regards to the rare earth minerals unlocking for a lot of mining companies. I think if at all, what could happen is that policy has been rolled out. Some of the mines could be given out in the next 1 or 2 years, and the actual business translation could take 2 to 3 years from now. But I think clearly there is a lot of excitement for not only GMDCs, but the likes of NLC India, NMDC, some of the other mining companies where they stand a chance to diversify their product mix into some of these new rare earth minerals as well. Within this space, what we like, NMDC is something that we are pretty positive upon. A structurally strong demand for iron ore, rising realization and steady volume. That is expected to drive NMDC, on which we have a coverage and a buy rating.
Any thoughts on HDFC Life?
I think HDFC Life, if you see, numbers were not that great in the sense below estimates, specifically the VNB margins. But what we are also seeing is that the outlook from here remains pretty strong. We have seen that the second half of FY26, HDFC Life witnessed a slowdown. But there is definitely some green shoots with respects to improvement in the agency channel growth, the rising protection contribution, and the improving ULIP margins. So we expect the growth trajectory to improve along with a stable VNB margins, which should drive the profitability going forward. And with the ROEVs, operating ROEVs hovering around 15%, we still rate the stock a buy with a target price of 760.
Okay, got it. One quick word I want to ask you, Sid. I think you said you like NMDC, right? From the mining space.
Yes.
What about this aluminium melt up? You know, even gold saw a correction of 25% from the top when we had that skirmish, in Iran, between Iran as well as the United States. But aluminium, it's been sparkling. And sometimes these things take place, right? A couple of smelters got hit. A market that was already tight has got very, very tight. And now everyone's factoring in a deficit for not 1, but 2 years probably. Because to start these smelters will take some time. What's your view on these names? They've had a good run. Vedanta, Nalco, Hindalco, all of them a good run. But I was looking at Alcoa's numbers overnight. The stock actually was down 4% in post-market. That's because it didn't match up to expectations. And the stock is up 180% in 1 year. What's your preference in aluminium?
So yeah, Nigel, I think we discussed this last time as well. Some of these base industrial metals looks pretty interesting, and in the short term, the supply crunch that is adding to the overall the commodity price rise. And we believe that aluminium and copper, these two base industrial metals, will see a super cycle over the next 2 to 3 years. So what we like, Vedanta, which is a pure, which is, you can say, a commodity conglomerate with plays on both, on all the metals, in the sense that you can play zinc, aluminium and copper, which also comes along with the silver in Vedanta. I think that's the top pick there, followed by Nalco, where we believe that the strong volumes as well as strong volumes in the alumina and the higher aluminium prices that will support margins in the next few quarters. And even after the significant rise in the stock prices, we believe that the near-term outlook remains positive. So clearly, these two stocks are our favorite, Vedanta followed by Nalco in the aluminium space.
Yeah, no, absolutely. Point taken there with regards to what happened. Lots of strength in a variety of names yesterday. Power, if I want to just Sid, if I would ask you, right? Adani Power, by the way, hit a new all-time high. BHEL spiked starting about 250, 255 yesterday and actually ended about 7-8% higher. Interest started to come back in this space. I'm not just talking about the pure renewable companies, but I'm talking about independent power producers like Adani, like JSW, even Tata Power, etc. Your views here?
I think this is an interesting space. A lot of development. So electricity demand in India is seeing an upcycle. Peak demand has already crossed 250 gigawatts and is expected to move towards the 380, 400 gigawatts over the next few years. What is also helping the overall power demand structurally over the next few years is the rising manufacturing activity, urbanization, data centers, and we expect the power demand to grow at almost 1.2 times the GDP growth over the next few years. And we see that as the generation capacity expands, the next growth is also shifting towards some of the transmission, distribution, grid modernization. So this entire ecosystem is likely to do well. What we like, yes, power utilities, Tata Power is among our top picks. The company is seeing the fast tracking of the 5.2 gigawatt renewable capacity. Also, the core business is also doing that well. So Tata Power, we have a buy rating with a target price of 455. Some of the other, you can say, energy infra companies, for example, we have JSW Energy. Power grid looks interesting in this environment because of the entire focus on modernization of the power grid. Within the renewables, Wari Energy came out with good numbers. That also looks interesting. And also look at something like a Siemens Energy, Kirloskar oil engines to the ancillary of the power sector.
Yeah, no, absolutely. We'll just come back to you, Sid. Let me just get brokerage calls of the day with Sudarshan. He's been passing through what we have. Sudarshan, morning.
Morning, Prashant. So first, Morgan Stanley has written on consumer names. It believes that in a volatile geopolitical environments with visible inflationary trends, it prefers discretionary and retail stocks where growth is visible for FY27. So it has downgraded Jubilant Food to equal weight and target price has been cut to 486. It sees more risks in Jubilant Food emerging to growth in the near term. For Titan, it maintains overweight call with a target price of 5,102 rupees per share. On Avenue Supermart, overweight call with a target price of 5,188, and on Trend, overweight call with a target price of 4,835 rupees per share. Motilal Oswal has written a note on Dixon Technologies, maintains buy call with a target price of 14,700 rupees per share. It says, considering high memory prices, several smartphone makers have started increasing prices, and this is likely to impact overall volumes of the smartphone markets. But despite the volume impact, it sees positives in Dixon Technologies due to various reasons. First, expectation of government relaxing PN3 approval process. Second, Dixon Vivo JV can be approved very soon. And third, ECMS approval for Dixon display modules can be expected very soon. So these are the basic reasons that Motilal Oswal has given, and these are the reasons why they are positive on the stock.
All right. Thanks very much, Sid, for that. By the way, Dixon, of course, did well. Sid, if you want to talk about Dixon, but I mean, let's just put these intradays up. Keynes was up sharply yesterday. Actually, the entire EMS space. PG Electroplast was higher sharply. That is Keynes, 4,200. PG is the other one. Sirma was up sharply. There was Amber, which went up. Quite sharply as well. So these are all 7-8% kind of moves across the board. Actually, if anything, maybe Dixon lagged a little bit. Sid, any thoughts? What do you like here?
Yeah, I think the entire EMS space, after a bit of lug, is now starting to see some recovery. Valuations, at least for some of them, came down, especially the likes of Dixon, which corrected us a lot and is now looking interesting with the alignment of the government relaxing the PN3 approval process, thereby hoping that the Dixon Vivo joint venture will be approved soon. Plus, so we are also seeing the prices for some of these modules as well as the mobile phones that is seeing some improvement that is supporting the overall sector. And also the benefits of PLI. There is some news chatter that the government may announce the next wave of PLI schemes, as the current PLI schemes are likely to end soon. So overall, we believe that the entire EMS space looks interesting. Sirma is consistently outperforms the industry and continues to do well, which is our top pick. At this price, I think something like a Dixon looks very interesting. What we also believe is that the benefits of backward integration will start kicking in from the second half of FY27 and should support the growth going forward. So I think Sirma is a consistent outperformer that remains the top pick, followed by if someone were to look at a stock at a good valuation, Dixon can be that turnaround play.
Yeah. We'll take a quick break, Sid. Stay with us. A couple of more questions coming your way. We'll come back with the pre-open rates. We'll connect with Mitesh and Srikanth, who joins us this Friday, as always, with what they want you to do with trading ideas. Stay tuned. Welcome back. There's 16 minutes to go, a little over 16 to go for the market open. Mitesh Thakkar is with us and Shrikant Chauhan from Kotak Securities is with us as well. Gentlemen, good morning. Great to have both of you here. Finally, another Friday. Mitesh, go first. What's the sense? How we set up?
Prashant, in the short term, good morning. In the short term, I think my view is still positive. Though we kind of rallied from 22,000 odd levels to about 24,400 yesterday. And while the structure is positive, I think this is still, to me, a bounce back because the longer-term charts are still pointing negatively. So the idea should be to use buy on declines as primary trading strategy. The first support is around 24,050, and then a good support or the biggest support is around 23,750, 800. So the idea should be that in case you get closer to about 24,100, longs can be taken with a 70-80 point kind of a stop loss just below 24,050. And on the upside, 24,400, 300-400 zone was the level which I gave yesterday. So now 24,400 becomes the pivot. That should be the first target. And above that, 24 even, 750, 800 would be tested.
Got that. So buy at around 24,100 if there is a dip today. And the immediate resistance level will be 24,400, which coincides with yesterday's intraday high. Shrikant, hi, morning. What's the Nifty trade?
Good morning, everyone. So for Nifty, again, the logic is same that it is performing much better than the other indices, and it has crossed its important level at 24,000. Ideal strategy should be to create long position if there is any correction in the market. But as we have seen a solid rally of nearly 2,000 points in last just 5 days, I think here we can expect some stock-specific sort of activity, some more consolidation for the Nifty. In that, if we have to create any specific long position with a trading perspective, then in that case, we like Siemens India, which is around 35.50, 35.75. Most of these power-related stocks, they are doing really well, energy stocks. I think in that Siemens is into clearly a technical breakout. From here, the stock can move towards the levels of 37, 37.50, at least in the near term. In the long run, maybe 4,000 plus sort of levels. But 3700, 3750 should be the next target to watch out for. We can keep a stop loss around 34.75 for creating long position. The other stock on which we are bullish is from the metal space, and that is Hindalco. There also we saw technical breakout. After a very long time, the stock has broken its important resistance at 900 confidently. So from here, the stock can move towards the levels of 1,050, 1,060, and we can keep stop loss somewhere close to 940 for the same.
Mitesh, your stock calls?
I have a buy. In fact, I have all the buy calls today. A buy on BEL with a stop at 448 for a target of 468. A buy on Eternal with a stop at 247. Would look for short-term targets of 263 to about 265. Indian Hotels is a buy with a stop at about 641 for targets of 675. And also buy on Cummins. Buy here with a stop at 49.75 for targets of 51.80.
Yeah. By the way, Mitesh, Adani Power has hit a new high, right? I don't know, how's that looking? What's the trade there?
Prashant, disclaimer, I have invested into this stock, so it's a part of my portfolio, so there's vested interest. Adani Power, I think, made a good cup and handle pattern. If you look at the chart starting from January 24, May, June 24, it made a high of around 170, declined all the way to about 90, went back to about 170 in October 25, and declined to about 132. So completed a cup and then a handle. And the breakout above 170 happened this time. So I think the minimum target here should be about 205, 210, which is the depth of the handle. But the logical target should be the depth of the cup, which is about 80 odd points. So starting from 170, it gives you a rough target of around 250. So quite positive on this. Only thing is that it's rallied too much. So if somebody wants to enter a fresh, now I think a pullback to about 185, 180 should be the area where people can start looking at buying into this again.
Got that. Just one more name is NetWeb. For the last 2-3 days, has started to recover a little bit. Any thoughts?
Network again, Prashant, look at the charts from November, and on multiple occasions, I think about 8 or 9 occasions, the stock has taken support around 10 zones, and is now trying to break on the upside. The first target should be close to about 3860, which we are very close to, about only about 150 points from here. But the logical target should be around 4,400, which was the highest closing, weekly closing, which the stock did in October 25. So very positive again on the stock, but around 3850, but 3850-60 zone, you might see some marginal profit booking.
Got that. And out of all these EMS names, PG, Sirma, Amber, Keynes, they were all up 5, 6, 7, 8%. Anything looks good?
So I have not tracked all of them, but Keynes, yesterday came on my radar. I think it's made a good bottoming formation around 3,400, and the first breakout about 4,150, 4,200 is just about happening. I think once it clears these levels, the minimum target which I would look for would be close to about 4860, 49,000 zones on the upside. So very positive there as well.
Okay, got that. More later. Thanks very much, Mitesh and Shrikant, for joining us here. Well, we want to play out some market conversation and opinion, basically. This is Ramesh Damani. We had him yesterday, and he believes the worst is over. He did mention that the market should stay constructive. He said for the next quarter, 6 months. And the worst of the US-Iran war, according to him, is behind. And of course, he's looking to play themes. Defense is a big one for him, but not traditional defense, lighter, more asymmetric, spending towards those areas, drones, etc. So listen to a slice of that conversation.
I think the worst years of the war are behind us now. So that is a good sign. I think the markets will tend to favor some of the things that seem to be blossoming this morning, which is perhaps defense, localized supply chain, infrastructure building. So I think we can look forward to a period of gains in the next quarter or 6 months, as opposed to the very, very sharp volatility that we experienced for the last 3 months there.
And those are the 3 areas you've sort of been positive for a while. I think our last conversation, you defense on your mind, you had some of the mineral resources, right? And some of the infrastructure companies. These are the 3 areas, themes that you still like, Mr. Damani?
Yeah, that's pretty much summarized my view. I think critical minerals, plus I think the importance of localizing supply chain, whether it's, basic raw materials. I think no country can now afford to rely on a supply chain extending, say, to the Middle East, or extending to Japan, or extending to China. They need to localize and develop the raw materials themselves. So other than critical minerals, also the basic raw materials, copper, aluminum, things like that. The local producers will play a more important role, I think.
These are themes which kind of emerged because of the changing world order we've seen, and we've seen it turn before our eyes. What the Iran war has shown us, of course, is energy dependence as well. You think that perhaps there aren't that many themes here? I've heard ONGC mentioned by some investors, over the last couple of the stocks pricing oil is about $60, $65. I don't know. Is that something that you've thought about as well as a theme?
I think what the overriding lesson I've learned from the Iranian conflict is, while you're right, energy independence is, quite important, but that has been known since the OPEC crisis of 73. We've always emphasized that India has always been, very prone to shocks from what happens in West Asia. And I think we've worked a good job towards reducing our dependence on fossil fuels. But I think strikes me as most important, Prashant, is the need for asymmetrical warfare. A regional power like Iran has basically held the United States to quagmire by using cheap $4,000, $5,000, $20,000 Shahed drones, where they risk depleting their very costly and very expensive cruise missiles, patriotic missiles in America. So I think the nature of warfare has changed completely. I think planners in Delhi or planners in Washington are taking note of this fact. And I think the Indian Army budget that might be skewed towards a lot of heavy armaments might have to be rethought in terms of lighter, more asymmetrical warfare. Because I think increasingly precision missiles and guided drones will be taken over by across the world. So it will no longer be a matter of who has the best gold-plated military, but who has more emphasis on, lighter, flexible, asymmetrical warfare. So I think the nature of warfare has changed. I think it behooves us to pay attention to those matters.
Yeah. Mr. Damani, if you would allow me, have you, I mean, you've been bullish on names like, BEL has been a long-time favorite, and you own a bunch of others, Garden Reach, for example, and have you added anything new in that space to kind of bet on what you call asymmetrical warfare, cheaper drones and those things?
Yeah, I have. I think sometimes in the unlisted space, we bet on drone manufacturing companies. There are some companies now in the private sector that are more valuable than, say, companies in the public sector. I have exposure to both. I have sold some of the public sector, booked some profits, I would say, in that. But increasingly, I think it's a theme that will continue to propel the market higher for the next few years. I think whether it's in the missile area, whether it's in the drone area, whether it's in the laser fighting area. So in the private space and in the unlisted space, we have made significant bets in these companies.
Significant bets in these companies. And just to sort of wrap up your earlier view, I mean, you're always invested, right? I mean, you're, of course, looking to invest as well, but largely invested both on the private and the public side as well. As you look ahead, Mr. Damani, this is a more steadier kind of pace we would be on, trajectory we'd be on, or you think it'll be very zigzag? You've of course, you warned us it's going to be pretty volatile when President Trump took over, and it's kind of sort of played out. You think it continues to be a tricky place in that sense, or steadier from here? What's your sense?
I think, except for the last 4 years, when we had a pretty smooth ride post-COVID, the index went up without really too much trouble. Markets have been, the hallmark of all markets I know have been volatility, and I think they will continue. I mean, it will be great to see the index double without too much churn, but that's very, very unlikely to happen. But I think most of us who've been investing in India for the last 30, 40 years very firmly believe is that you have to ride out the volatility. You have to make that your friend, buy on the dips, hold for the long term. I think that tends to have better outcomes and more richer money, because I think people who remain invested and not been, say, blown out by COVID or blown out by the Gulf War, I've seen a lot of the returns evaporate where the market kind of turns around sometimes on a dime. So the best strategy I can tell for the young Indians is to remain invested, remain doing their SIP, remaining doing their direct investing in Indian markets. I think we're in a good place, good time, and the volatility that you went through was blood-churning. I'm not denying that, but we have learned over many 30, 40 years that they're just part of the beast.
Sane advice for many of these new investors who've seen the value of their portfolio get eroded in the last more than 18 months now. Volatility is a part of the game, and the best advice is to stay invested through that for the longer term. Let's get in Mitesh once again back on the show. 9:10 call, Mitesh.
I'll go with the buy on Cummins India.
Cummins India. Nigel, GMDC in focus?
Well, that's right. GMDC was buzzing in yesterday's trading session, and we saw massive volumes on GMDC. And it was backed by massive delivery as well, if you just compare it with the averages. Now, the stock had a big move. I didn't hear any fresh news flow. But the probable reasons why the stock spiked up was that the near-term demand for lignite could increase. Remember, there are disruptions in gas supply, and also there's a big spike up in international coal prices. So this, in turn, could provide an opportunity to see that, the offtake in lignite can actually move up. Remember, for this year, that's FY26, the street is factoring in more or less a flattish number in terms of volumes because of what we saw in the first 9 months. But they're expecting higher volumes to come in from the Bhavnagar mine, and they're expecting the opening of the 3 million ton Lakhpat mine as well. That's what could drive lignite volumes in FY27. So they're optimistic that the next year onwards, you'll see good volume growth. Next up, the power plant. That may revert to profits in FY27. Remember, the 250 megawatt thermal power plant, it got restarted in the past quarter. PLF was around 15% or thereabouts. And the first 9 months, if you look at their power segment contribution, it reported an EBIT loss of close to 38 crores. Remember, this is much higher than for the entire FY25. The EBIT loss in the power segment was around 19 crores. Point number 3 is the street is optimistic on this rare earth mineral foray. The contribution, though, in terms of earnings will only come in at best in 2030. So for the time being, there'll be investments, but the rewards will come only in 2030, so that's a distance away. Besides lignite mining, they're also getting into coal mining. And the Baitarni coal mine, which is a 15 million ton block, that could start producing from FY27 onwards. So some kind of diversification towards coal mining is what the street is looking at. Finally, in terms of valuations, it was expensive, continues to remain expensive. So I'm just going through Nuvama note, the last one they came out with. The diluted EPS they're talking about is around 28 rupees in FY28. So the stock is still trading around 25 times. It's not cheap at all for a mining stock. And the EBITDA number they're talking about is going to around 1,200 crores odd. But the current market capitalization is around 24,000 crores. So effectively on an EV upon EBITDA as well, it's trading close to around 20 times. Net, the street seems to be excited about prospects going ahead. Valuation's not cheap, but they weren't cheap even at 500-600 rupees. Yesterday it ended at around 750 rupees.
All right, very interesting, Nigel. Thanks very much for that. We've got market open coming up in a couple of seconds, I guess. And we'll have the clock come up in just a bit. 24,165. So it's an insipid kind of a start. At least, as far as the open is concerned, then maybe action picks up. Small cap index is up a third. Mid cap index, I think, is also indicating a slightly higher start compared to the Nifty and the Nifty Bank, which is lower. So it's similar to where we left off yesterday. So what do we have? 70 points lower on the Nifty. The Nifty Bank is down about 1/3%. Mid cap index is flat. No change. Small cap index has got some green. It's up 0.2 or 0.3% or so. Advanced decline is still out of the gates opening. I don't know if you've got a first, if that's changing or there's still some from yesterday. But 2 days now, advanced decline has looked very, very good. Nifty heat map will come up on your screen, gives you a quick sense of where the 50 stocks land, right? Where the word go. ITC, Trent, NTPC are doing well, but more down than up. On the losing end, you've got Wipro, HDFC Life, HCL Tech, Bajaj Finance, Infosys are some of the names which are lower in trade. So, it's not a sharp gash or anything of that sort. It's 40 points, but it's a quieter start, perhaps the better way to put it. Rima.
And the mid-cap index is flat, now back in the green, inched back into the green with an advanced decline ratio, which is still positive. So 1,200 stocks on the green line, 1,400 stocks now on the BSE advancing, for about 650 stocks declining. So at least a start for the mid-caps. In fact, now the Nifty and the Sensex are also back in the green. Disappointing numbers from Wipro is dragging the IT pack lower. Wipro is the top Nifty loser with a cut of nearly 3%. And that's the reason why. And along with that, you've got the rest of the IT names under pressure. The Nifty IT index is down nearly 1%. HCL Tech, Tech Mahindra selling off about 3/4 of a percentage point, while Infosys and TCS are down nearly 0.5%. HDFC Life also posts disappointing numbers. Has opened with a gap down, 2.5%, nearly 3% lower now on HDFC Life. Hindalco is weak in trade. That's got a cut of about 1%. In fact, Nalco and Vedanta also under pressure. JSW Steel, Tata Steel, the entire metal complex is opening lower, trending down. Asian Paints, M&M, Tata Consumer are stocks where you can see a red tick. On the way up, ITC trend in higher in trade. NTPC is seeing some buying. Reliance Industries has opened up in the green. ONGC up and about. That's got a gain of about 1/3 of a percentage point. The Nifty and the Sensex are now just moving around between the red and the green line. Absolutely flat. HDFC Bank and ICICI Bank should be on your radar. 1 day to trade before their numbers come out tomorrow.
Well, that's right, Rima. But the result reaction of the morning has to be VST Industries. Cigarette volume growth of around 8.5%. Margins expanding to around 45% from around 20%. Bazooka move, VST Industries, pull up that stock. Massive volumes on that name. That's flying away in today's trading session. Angel One as well. That's up close to around 3%. So clearly the street likes what they've seen. Remember, this is a stock that's corrected a goodish deal as well from the top, but it's moved back in style. Revenue growth of around 9%. Margins rise by close to around 400 basis points. The street likes that. Stock moving up close to 3.5%. RVNL, they have been declared the lowest bidder for a 3-year contract. The order size is close to 970 crores. So that explains why that stock is up and about. KPI Green, they have got an interstate power trading license from CERC. So that stock is well up and about in today's trading session. In fact, the result reactions actually are quite good today. You also have Vare Renewables. This is the smaller one. The EBITDA number is up by close to 64%. The revenue number as well has close to doubled on a year-on-year basis. So for the time being, that stock as well has opened up, gap up in today's trading session. So good start, I think, to trade. From the red, we moved into the green, and a lot of stocks are flying away. Keeping an eye on BSE Industries, the street believes maybe the cigarette volume growth for the industry will be good because Godfrey Phillips is now up close to around 6% as we speak. Big move out there.
And ITC is also now up nearly 2%, and ITC is the top Nifty gainer. You can see the rub-off impact of VST. Strong numbers, 15% up on VST, but ITC is up nearly 2%, while Godfrey Phillips has a gain of about 5.5%. Pretty good volumes to begin trade with. Kolte Patil is another one where we got an update on the quarterly performance. Kolte Patil has opened with a gain of about 12%.
Absolutely. I think, it's a good start, all told. I mean, from the initial dip, we've sort of come back up about 14, 15 odd points. I just want to say this once again. If we don't know how long oil stays high, but 98 is high, is quite high. 95 was high as well. All the markets react to incremental change on a day-on-day basis. But, you stay in the 90s handle, and you see US equities at an all-time high, and you wonder, well, if US is at an all-time high and markets here should be at an all-time high as well. I'm not sure if that is a straight-cut linear relationship that you should bet on. US is in a very different place with regards to energy. They produce more energy than they consume, and which is not the case for pretty much the rest of the world. Most of Asia, Europe, and of course, India, most certainly as well. Of course, they get impacted because they pay more of the consumers pay more of the pump, but that's a different story. At a top-down, more macro-ish level, it's not. They're not buying oil at $100, $120 odd dollars, which is what other countries will have to. So that's a short point. Sanjeev Prasad is with us, Managing Director and Co-Head Kotak Institutional Equities. Sanjeev, good morning. Great to have you with us here. Thanks for joining in. So just on that point, Sanjeev, this oil bit and the damage it could do to earnings, etc. If it prolongs a little bit more, some of the damage is already locked in. It shows up in the quarters down the line. But how are you thinking about this now?
Well, it's a negative for sure, given the fact that we import about 85% of our crude oil requirement, and even gas, we import about 50% of our consumption. So obviously, higher oil prices are negative for India. And if you do the math, every dollar per barrel is about $2.2 billion negative impact on the economy straight away. And here we are talking about, crude prices being on average higher about $30 compared to FY 2026. Assuming current oil prices stay, if this conflict prolongs, it is possible that crude prices could unfortunately go up. So obviously, we will see the negative impact of higher oil prices to all our macroeconomic variables, right? The direct impact is pretty straightforward on current account balance that will deteriorate pretty significantly. So this year, for example, that is March 27, we are looking at about 2% CAC to GDP compared to 1% for 26. And unfortunately, because of capital flows also being pretty weak, BOP will be under pressure, which means probably some pressure on rupee. And depending on how much the government wants to absorb of higher oil prices and at retail level, that is, instead of passing it on to consumers, accordingly, we'll see negative impact on either the government's fisc or inflation and consumption. So we'll have to wait and see how the government responds. But so far, the government has decided to take the brunt of the hit by cutting excise duty on diesel and gasoline. But I don't know how long the government can also continue to subsidize retail prices of diesel and gasoline. So at some point in time, it will probably get passed on to the consumer. I just hope that this gets over quickly. Otherwise, the damage can be a lot more long-lasting.
Sanjeev, hi, morning. So your market view had changed from neutral to negative to a little more constructive when we last spoke to you after the long period of consolidation and price correction. Now, because of the war, the possibility of elevated crude prices, does that market view change? What do you expect going forward?
Well, it all depends on the duration and magnitude of the conflict, right? If it gets over as it's hoped for over the next few weeks, we are okay in that case. And you don't see that much damage on the macro as also earnings. But if this prolongs, then it's a different proposition altogether. So the view was more like, I would say, from very negative, which used to be 1 to 2 years back, to more like neutral to minor positive, I would say. But given the war now, we have to recalibrate accordingly. As I said, if it's a short-term conflict, let's say 2 months starting from end of Feb, by April, hopefully it gets over. It's okay, it's manageable. But if it continues, and obviously, things are very different in that case. And apart from the macro challenges, accordingly, you start seeing earning downgrades also coming through. One of the reasons why we turned slightly constructive in September, October of last year was our expectation that earnings would start recovering. So for now, we are still holding on to our 18% growth in net profits of the Nifty 50 index for FY 2027. In fact, numbers have actually gone up a little bit because of higher crude prices, higher metal prices. And given the competition of the index, actually the earnings impact is not that high. I mean, if you just break down the earnings on the Nifty 50, actually 50% is coming from sectors which really don't have much to do with the Indian economy. I'm talking about IT services, pharmaceuticals, even if you take utilities, their earnings are protected. Telecom, their earnings should be largely protected. And of course, metal mining, oil and gas, where if anything, you could probably see some earnings increase. And then about 1/3 of India's earnings, at least the Nifty 50 level, comes from banks and NBFCs, where the immediate impact is not that much. Of course, if the situation prolonged, then you start seeing, maybe worries about credit costs going up and accordingly downwards coming through. So the domestic part of the economy, which is negatively impacted by higher crude prices and derivatives of crude prices, is actually not very large, about 15% or so. So it is manageable short-term conflict, but as if it prolongs, then definitely we'll see earnings downgrades. And even though the market is looking slightly okay now at about 19 times going forward earnings, if you start seeing earning downgrades, then you start more expensive. Right? So I would say, yeah, it looks okay at current levels, but it's all a little bit up in the air depending on what happens as far as the conflict is concerned.
So Sanjeev, if the conflict ends April end, which seems to be the way the path of de-escalation right now, then you think we can still do that 18% earnings growth for FY 27? If not, what would be the extent of downgrades?
Oh, yeah, if the conflict gets over in end of April, Strait of Hormuz reopens, oil and gas supplies start to normalize over the next few months after that, then we are broadly okay. I don't see a big earning downgrade coming in that case. As explained earlier, most of the earnings seems reasonably insulated from whatever the challenging domestic part of the economy is going to face. So yeah, so short-term conflict manageable, long-term definitely we'll see earning downgrades in autos, most of the consumer-facing sectors, whether it's consumer staples, discretionary, etc. One more challenge in the short term is not just the price of oil and gas and the derivatives of oil and gas. It's also availability of oil and gas, and accordingly the negative impact on something like packaging, for example. We are all worried about higher, let's say, petrol and coal prices for cement. But if you don't have packaging, how do you sell cement in that case? Same way for consumer staples also. So we have somewhat inventory. Most companies will be sitting on 1 to 3 months of inventory, so it's manageable. But over time, it just continues. You have all sorts of not just the first order impact, which is higher inventory prices and lower margins accordingly, but also second and third derivative impact, which is slightly tricky to model as of now. But honestly, the impact is non-linear. That's our problem. Short term doesn't matter. If it continues for long, the impact is not more negative. And if the duration is even longer, then the impact is actually, unfortunately, exponential. That's our problem over here.
So 18% earnings growth, valuation at 19 times for India. How would it compare with other emerging markets? Because you also look at it closely, and you've talked about the FI outflows that we've seen from India.
No, that's the whole challenge as far as India is concerned. So if I look at India on an absolute basis, it doesn't look too bad. But as far as investors are concerned, we're looking at India on a relative basis. India doesn't stack up very well. And unfortunately, from India's perspective, we have countries that are showing some insane amount of earning growth. You have Korea, for example, where the 26 calendar year is supposed to go 200% by the way. and it's a market trading at 8.5 times. Obviously, the 200% revenue growth is coming because of very high demand for chips and prices of chips going up significantly and so on and so forth. May not be sustainable, but that's what the market is looking at, 8.5 times, 12% growth in earnings. Even in 27, if I look at Korea, it's actually 7p. We're still looking at 20% earning growth in calendar 27 also. If you look at Taiwan, as an example, again, country very exposed to the current chip cycle, AI cycle, etc., trading at about 19 times net profit for expected about 50%. And then you have the big daddy of all, which is the US. You look at the Nasdaq over there. It's about 27p on December 26 numbers, and the net profit expected to go at 38%. That is what we are competing with, unfortunately. So, as of now, India's struggle is, if we don't really have any AI-related stories, and that's what the excitement is. And also, there's a lot of excitement around commodities. Metal prices have gone up a lot. So then you're also competing with countries which have a very heavy base as far as commodities concerned. For example, Brazil, trading at 10 times December 26 numbers. The net profit growth is about 40%. I mean, it's a very commodity-heavy market. So that's the trouble for India. If you look at the EM basket, either you're competing with countries which have very high exposure to the AI trade and commodities. And if this continues, that is, the excitement over AI and commodities continue, I mean, India will probably continue to get overlooked. If you look at the last 1.5 years, because of the performance of India, the weight of India itself has come down so much in the MSCI Emerging Market Index. It's down to below 12% now. It used to be almost 20% towards the end of 2024 calendar year. So you are running into a somewhat, I would say, a risky zone where people start to ignore India, unfortunately. Not something you want to hear. But at 12%, it's neither here nor there from many portfolio managers' perspective. Obviously, it's still a very large country. Growth prospects are tremendous in the medium term. All that is there. But in the short term, you're just competing with countries which are showing tremendous earning growth, for whatever reasons, so AI cycle and or commodities.
Yeah, this Sanjeev, when you say it's interesting the way you put it, it's risky. The way perhaps is the risk that India is being ignored, or is it risky that India is being ignored? Because both are very different, right? Because if it is risky that India is being ignored, my question is, wouldn't reflexivity kick in? That it's so underowned now that it automatically there is mean reversion.
No, what I meant was that you run the risk of India continuing to get ignored. I mean, it's already getting ignored, right? If you look at the amount of outflows, as far as FPI outflows are concerned, it's like crazy. I mean, the month of March, you saw $40 billion of outflows. February, you have seen only $4 billion, almost $4 billion. Yeah, so that's a huge drag as far as the economy is concerned, right? So much money going out in a way. So if this continues, and India is obviously very vulnerable to the challenges that you are seeing because of the West Asia war in the form of high crude prices and natural gas and so forth.
And Sanjeev, there is no mean reversion here. There is no mean reversion here. There is no reflexivity. Yeah, it could continue.
We are all hoping for that, but as long as the AI trade and the commodity trade continues, I think we will probably be on the sidelines only.
Just one quick question. If crude prices remain elevated, you said there are two options. The government bears the cost, which is what we're seeing right now, or it's eventually passed on, which again hurts inflation, spending power, etc. comes down. In the event that the government bears the cost, its spending ability gets constrained. How will that show up, and which sectors could that hurt?
We do have some buffers. If you look at the way the government has gone about tackling this problem, it has created the Economic Stabilization Fund, right, roughly about 1 trillion rupees. Our assumption is you can also get some money from extra money from the RBI compared to whatever the expectation or the numbers in the budget. And also because of higher export duties on petroleum products, you get another 550 billion rupees or so. And if you sort of postpone consumption on some of the capex on some of the items like investment in BSNL, etc., you can save about another 1 trillion rupees or so. So based on our math, what have we done at $85 per barrel? and including this extra duty cut of the 10 rupees per litre diesel gasoline. That's about roughly 1.65 trillion rupees impact, including higher impact of LPG and fertilizer subsidy. It's roughly 3 trillion rupees. And as of now, broadly between 1 trillion rupees in the Economic Stabilization Fund, roughly 250 billion rupees extra which you can get from the RBI, 550 billion rupees extra from excise duty, high excise duty on exports of diesel, gasoline, ETF, etc. And some, postponement or capex, I think we can still manage. I don't see a big fiscal impact immediately, but as I said, if crude prices are higher, then of course the government may not have any option but to pass it on to the consumer, which has its own, either fiscal implications and or inflation implications.
Sanjeev, thank you very much for joining in. Happy Friday to you, and look forward to our next conversation.
My pleasure. Thank you.
Thank you very much for joining in. Let's invite the first corporate on the show, actually second one. We spoke to Wipro as well. BEML is in focus on the back of the recent order win from West Asia to supply heavy earth-moving equipment. Remember, the company's international order book now stands at $107 million as of April 2026. Shantanu Roy, CMD of BEML, is now joining in, and a couple of discussion points with him: supply chain stability, defense and export order inflow, and outlook on the large tender pipeline. Thank you very much, sir, for joining in. Rima here. Let me begin with the second point about the defense and the export order inflow. And what we should expect. Now, because of the conflict, have we seen a pickup in the overall order inflows? And your guidance for the full year for FY26, you had spoken about a 20% revenue growth, order book of 20,000 crore as we wrap FY26. Are those two numbers? Have you met these two numbers?
Good morning. Let me talk about the impact of supply chain, impact on supply chain and the order book, order inflow. So the conflict directly does not have an impact on the order book as far as the exports is concerned. The order that we have received from West Asia, it has been going on for quite some time now. I mean, we have been working on it for almost 7 to 8 months. And finally, it has come to us. And it's a game changer for us, I believe, for the heavy earth moving machinery. These are special type of equipment that we'll be supplying, special in the sense that our normal equipment, there have been a lot of modifications, there will be a lot of design modifications, including, enhanced fuel capacity, advanced provisions for armoring, then the ROPS and FOPS, that is a rollover protective structure, and the falling object protective structure cabins that have been specially designed for this. And this project also has a provision of a 12-year annual maintenance contract, which is of course not reflected in the current order book value. It will come to us subsequently, 5 years and 7 years optional. This order also has a provision of 100% repeat order within next 3 years. And the stages that we'll be following in this order is, first is we have to develop, we have to do the design validation, proto development, and then the bulk supply. As far as the supply chain is concerned, fortunately, it did not impact us in a big way, I would say. But yes, one of the reasons was that we have indigenized to a great extent, and our dependence on imports has gone down drastically, especially for the heavy earth moving machinery, for the defense equipment, for the commuter rail. The current order book, since it's aspects, other points, but what I can share with you is that our current order book, if you look at the breakdown or the breakup of the current order book, it is 66% from rail and metro, 23% from defense, 5% from mining construction, and very healthy 6% from international business. And we have been talking about our aspiration to have at least one rolling stock order from the international market, and that we could achieve in the last financial year after having got the $60 million rolling stock metro order from Africa. As far as 26-27, FY 26-27 is concerned, order book, we are looking at an opportunity size of around 40,000 crore. in defense, aerospace, in rail and metro, and in mining and international business. And as I talk to you, there is already a tender for 110 million euro for heavy earth moving machinery, which has been announced in Tunisia. So that is a good omen for us, because we have done a lot of business in Tunisia for their mines, having supplied a lot of mining equipment over the last 20 odd years.
Okay. So
Second is the partnership, the strategic partnership that we entered into Delhi with DMRC. So that is going to hold us in good stead. And out of this 40,000 crore, I expect to have a success rate of around 50%, with rail and metro leading it, followed by defense and followed by mining and international business.
Okay. So we should look at an order inflow of about 20,000 crore for FY27 as well, assuming a 50% success rate. And the opportunity side is 40,000 crore rupees for next year. On international, you crossed that $100 million order book. What's the next milestone that you're targeting?
The next milestone is crossing $200 million order book in the international business, for which we will need to address more orders in heavy earth moving machinery, more orders, more opportunities in the rolling stock, and of course the defense, the platforms, the high mobility vehicle platforms.
Do you think you get there in FY27, given the pipeline, or how long will it take for you to get to $200 million?
We will, since already one tender is out in Tunisia, as I mentioned, and we are aiming for some more projects of large capacities. So we will aim for $200 million order book. That is 100 plus 100 we have currently, and 100 more in FY27. And of course, this order from West Asia, which has come for the heavy earth moving machinery, we will try to execute this entire order this entire order within the current financial year, that is FY26-27, even though our delivery is scheduled to end in May 2027, we'll try to complete that by March 2027.
Okay, all right. Hi, Mr. Roy. Good morning and good to see you in. Nigel on this side. A quick check with regard to the guidance you had given us earlier for FY26. You were talking about 20% revenue growth, margins improving by 150 basis points, and the order book swelling to around, I think, 23,000 crores. On all these three parameters, what's the update? Oopsie daisy. I think that line snapped out there, but we'll wait by. I think we'll reconnect with Mr. Roy on that front. For the time being, sounding very optimistic on the international order book. We'll add another $100 million in the coming year, and that's how they'll scale up. But Mr. Roy is back with us. Mr. Roy, I want to ask you about FY26. Three numbers. You had guided for revenue growth of 20%, margins improving 150 basis points, and the order book swelling to, I think, around 23,000 crores odd. What's the update on all these three numbers?
Very good to see you, Nigel, again.
Always good to see you,
That brings a smile back on my face. These numbers, I think we'll discuss after our audited results are out. And we'll have to wait for another month or so.
Okay, all right. On whatever you deliver then for FY27, how are things looking? And I had a word with regard to these exports. You know, you're talking about scaling it up, but as of now, are exports profitable?
Exports are definitely profitable. If we talk about the margins, I've always maintained in our earlier conversations also that our margins are driven by, number one, the exports, number two, the sustenance, number three, the high-end mining equipment and the commuter rail products. Okay. So these 3-4 are our drivers for the margins, for the bottom line.
And exports guidance as a percentage of the total mix, what will it be? In FY27, sir, since 26, you're in silent period.
Sorry, I didn't get a question.
Exports as a percentage of your revenues in FY27, FY28, what will it scale to?
Exports in 26-27 should be around 6 to 7% of our total top line, and 27, 28, 29, I would like to scale it up to around 10% of the top line.
Right.
That is the aspiration.
Good morning, sir. Prashant here. I just had a quick question. We are out of time, but briefly, if you can tell us, very, very briefly. Yesterday we had Ramesh Damani with us, who's an investor, and he was saying that his biggest lesson from the Iran war was that the pattern of, or he thinks, at least maybe it's a hope or it's a signal, things he's picked up, but it's logical, that the pattern of ordering from defense side for our forces perhaps moves to, lighter stuff. What Iran has shown is asymmetrical warfare, right? I mean, cheaper drones and that kind of thing. Have you seen any, it's too early, of course, but do you believe that's a logical kind of expectation to have? You're a big supplier to defense, but I mean, on the traditional side. Go on, sir.
Hi, Prashant. I missed the first part of your question. There seems to be some challenge with the connectivity.
No, I was just saying.
But yes, I definitely agree with what has been, what is expected, and that is going to be the future of warfare. We all know, we have seen how Russia-Ukraine war has panned out, how this current conflict in the West Asia has panned out, and this is going to be the future, the contactless warfare that we are all seeing. And this is definitely going to be the future.
It's going to be the future. Yeah. So would you look to participate in that future, sir?
We are contemplating. We need to diversify. We are contemplating how we can contribute to that. Currently, our focus is all on non-kinetic type of equipment to support support our defense forces, and it will be a diversification which we will contemplate how to go about it, how to do it.
So this 23% order book of yours comes from defense. Of that, it doesn't come, nothing can be attributed to this precision warfare, drones, etc.
The opportunity size that I mentioned, it does not have any of this because it is too soon. Even if we start preparing today, or had we started preparing 6 months back also, it will take at least 3 to 4 years to come to that stage.
Absolutely.
So yes, the current aspiration of order book and the opportunity size that I have spoken about, it all is based on our current strengths, our current capabilities in defense.
Which is high mobility vehicles, military wagons, armored recovery vehicles, bridge systems, etc., right? So, but you, as you said, you are contemplating more diversification.
Then we have trawl.
Yeah.
Then we have trawl. We have self-propelled mine barriers. We have command post vehicles and all, which is basically, we have gone ahead one step from being a platform supplier only to the system supplier.
Yeah.
So the MME is a system, the self-propelled mine barrier is a system. So that it is organic diversification, I would say, that we have already achieved.
Yeah.
And we are further going to consolidate in this sphere.
And we will talk to you again soon. So apologies, we're just running out of time. We've got back-to-back corporates lined up on the back of earnings, but we will keep talking to you. As you said, you are contemplating diversification into more kinetic systems, and the future, as we spoke about, drones and things like that. So it's a conversation we will keep having. Thank you for joining us, Mr. Roy. Appreciate it. The management of Keystone Realtors will be speaking with us on the other side. Stay tuned. Coming up.
Welcome back. Some green on the screen. Breadth of the market continues to remain positive. So that's good tidings then from a bullish perspective. Maruti Suzuki is a stock actually that's moved to the high point of the day. One of the biggest gainers on the Nifty. It started off in the red and then it's picked up pace. So Maruti at the day's high. But let's focus on the relative pack. Keystone Realtors, that's the stock in focus. The company has achieved its FY26 pre-sales guidance of around 4,000 crore rupees. Joining us now is Baman Rustam Irani, the CMD of Keystone Realtors on the show. Hi Baman, good morning. Always good to have you on the show. Well, on this sort of a base of around 4,000 crores odd, what kind of a growth are you guiding for? And give us a brief insight in terms of customer behavior. What have you observed in the last few months? The stock market does a thing of its own with regard to share prices, but on ground, is demand as strong?
First of all, thank you, Nigel. And like the earlier speaker mentioned, I think it's always nice to see you guys. First of all, let me tell you, Rustamji is now 30. We're 30 years old as of this year, and now we're in our prime. Our entire teams are primed up to kind of take on the future. And the way we are describing our future is the next is best. We've clocked about 4,022 crores in pre-sales, like you've already mentioned. And Nigel, if you remember the question that we faced the last time also was the markets are slowing down. Do you think this will continue? We clocked our probable best quarter, about 1,346 crores of pre-sales only in the last quarter. Even our collections have been best in the last quarter, being 800 crores plus. So overall, we are very confident that given the MMR landscape and the kind of projects that we are doing, this will keep us in good stead for the future. Add to that my teams have launched about 10,000 crores worth of projects in the last year. And at the same point of time, have added projects closer to 10,500 crores. So all of this is just a sign of what is going to come in the future. Like I said, we at Rustamji are saying next is best.
All right. So 4,000 crores is what you've achieved in the past year. On this pace, will you be guiding for a 20, 25% or 30% growth?
So I will stop being shy and I will say this, that if we keep this pace of growth, we'll be at 10,000 crores in about 4 years' time, because that's the kind of growth we've given over the last 3 years. We've always achieved our milestones. We've continually worked towards improving our teams and towards making sure that we achieve every milestone that we have, guided for. So including GDV of projects added, projects launched, and of course the pre-sales, which happens to be a very important precursor to most of the conversations, have been at a growing pace of about 25 to 33%. While the MMR market has grown only 9%, we've shown a steady state growth of 35% plus in the last 3 years, and nothing is pointing to otherwise. As a matter of fact, we believe that we've risen to about 2% of the total market volume by value, and we are probably going to only keep growing this. And given the fact that companies with the ability to kind of deliver on time and give the right product are only growing their portfolios, we look forward to a bright and beautiful future.
Bowman, hi, morning, Prashant here. I was just thinking that you got, if you take the 4 of us, 3 of us here in the studio and you on the other side, you got an even split between Bandra and Parel. And you got projects coming up in both locations. You got a large project coming up in Parel. And just a quick, is absorption happening, sales happening pretty quickly, or lots of projects in that area, Bhavan? For example, there's a huge project coming in from Sattva, pretty close. I think it's one of their first projects. Godrej, Sobha is there. Rima is telling me more names. So
you have 2 buyers in the studio.
Is absorption easy? Is absorption, what's happening? Yeah.
I don't know, Prashant. I've always said this, and I am a true believer that the more developers that go to one particular area actually kind of exemplifies the importance of that area. It brings to fore the fact that there was an area that is going to be growing a lot, right? All the research, all the data points in that direction. And if you look at the kind of infrastructure that is happening in the city and the connectivity, you take Parel and you take Worli, they're going to be hardly about 5 or 7, 10 minutes apart once the bridge gets completed. And you look at the price arbitrage you get a home in Lower Parel at about, or the Parel area, city area at about 45 to 50,000 rupees. Whereas you take a project in Worli and you can get as much as 1.5 lakh rupees, right? So obviously there's a locational advantage to Worli with the sea, but all of those advantages are being, are being capped, are being noticed even in this area called Sivri. And we are seeing a huge surge of developers coming here. At the same point of time, development taking place out here. And as a matter of fact, it could be the next BKC. When we went to the Mada layouts and we kept telling the people that if you buy now, you will more than double your prices. I think we proved ourselves wrong. We more than tripled or in certain places quadrupled the prices that we sold initially from. I think the same will happen with Sivri, and it's definitely a hot location that is important for the future. At the same point of time, our portfolio actually quite honestly extends all the way from Thana, Dombivli, Virar, and all the way into South Mumbai as of right now. Parel being where we've already launched the project this quarter, and we look at a bigger surge taking place in the South Mumbai area, but given the infrastructure growth. And I've always said the government's is watching pace for this, and it's up to us developers to make the most of it for the citizens of the city and give them a good home where infrastructure is available the most.
Yeah, no, absolutely. And I hope those words come true, that Shivri is the new BKC. Just so, trajectory, you've set the end target, but you've got to live day to day, quarter to quarter, or 6 months, every 6 months, right? And in that sense, it's a graph. Hopefully it's a upward sloping graph. So are we right now in a bit of a funk, or is it steady? I mean, my question, basically, that absorption question right now, longer term is a separate issue, but is it all selling through easily?
So again, the first quarter of the year is always a little slow. The last quarter of the year is always the best. And given the fact that you have a lot of festivals coming up in the second and third quarter, things only start getting better after the first quarter itself. So the first quarter is when you kind of double down and work on your systems and processes, get things done, and work on your launches, which will allow you to sell extremely well in the second, third, and then of course the fourth quarter, where both the year end is something prime that people are actually buying and making their investments at that point in time. If you're asking about the short term, I can tell you the projects this quarter will be a little slow, but at the same point of time, the slew of launches that we've done last year, like I mentioned, 10,000 crores worth of launches, we'll see a lot of buying happening, because as we mentioned, we sell about 30 to 40% of our stock before the plinth comes up, which is roughly 6 months within the launch. So you will see a good buying taking place, and we will be reporting a good quarter.
All right, Bowman, we'll leave it there. Good conversation as always, and maybe we should do a slightly deep dive into that particular area, right? And get your thoughts longer term in terms of, that connector is coming up, from Shivri to Worli, and a lot of infrastructure projects, etc., which perhaps change the landscape, connectivity, distance, time spent on the road, etc., over the next 10, 15 years, maybe shorter, hopefully shorter. Thank you very much once again. Appreciate it. We'll take a quick commercial. Okay, we're going to take a break here. We'll get you the update in terms of the preview with the specialty chemical space. Quarter se quarter tak. Sonal will set it up for us before we go to our analyst. Sonal, take it away.
Thank you so much for that. Well, the chemical sector is seeing early signs of cost pressure with a sharp increase in input as well as finished product prices. But do remember, every chemical company has a different fundamental, right? But during the month of March, this is important because specialty chemicals are closely linked to base petrochemicals such as ethylene, benzene and propylene as well, which in turn track crude oil and natural gas prices. In the near term, some companies could benefit from price hikes, but the broader impact of rising input costs is likely to start reflecting more meaningfully from Q1 FY27 onwards. Q4 FY26 for most companies remains steady because of having some inventory levels, but this could be the calm before cost pressures fully come through. There are already some early disruptions being flagged. Players like Alkyl Amines and Balaji Amines, they have announced force majeure due to ammonia unavailability, highlighting supply-side stress. The agri-input segment also continues to remain uneven. Fertilizer companies in particular are facing margin pressure as input costs rise faster than realizations. But let's take a quick look at some of these companies, how they will be performing in Q4. This is based Bloomberg estimates. SRF is expected to report an EBITDA decline of 5.6%, but profit growth could come in strong at 15.6%. Navin Fluorine will see robust growth, both EBITDA and PAT up 37%. Acutaas Chemicals to see sharp momentum. This has been an outperformer in the chemical space. EBITDA expected to increase by 77%. PAT up 68%. But on the weaker side, some of these commodity chemicals might not do so well. Deepak Nitrite expected to report a 34% drop in EBITDA, 25% decline in PAT. Galaxy Surfactants hasn't been doing well for a while. It is also expected to see pressure, with EBITDA down 24%, PAT down by around 15.5%. UPL is expected to see EBITDA declining by 16%, but profit could see a growth here by 13%. On the valuations, the space continues to trade at a wide range. Navin Fluorine and Acutaas Chemicals remain on the higher end at 52 or 58 times basis FY27 earnings. Deepak Nitrite and UPL are closer to the lows at 20s. SRF is at around 40 times and Galaxy Surfactants trade at 17 times. But going ahead, there are two key monitorables for the sector. One is developments in West Asia, given their impact on energy-linked inputs. And the second is management commentary around pricing power, demand and margin outlook as we move into the next quarter. And more importantly, as every company has a different fundamental.
Okay, all right. Thanks a lot for that. Sonal, well, to discuss this, we're now joined by Ranjit Chirumala, the Senior Vice President Research at IIFL. Hi, Ranjit. Good morning. Good to see you. When you heard what Sonal had to say, where should we expect that earnings surprise from the chemicals pack for the past quarter?
If you look at 4Q, there will be few surprises. What we have seen in the month of March is there has been price hikes. So the ones, to give you a few examples, PVC prices has seen a significant spike for the last one quarter, almost 60% up. Over the month of March, we have seen phenol prices, acetone prices spiking. So clearly, this is what we will see. Deepak Nitrite on a sequential basis is likely to deliver a strong performance, and PVC prices should benefit Chemplast Summer. But the caveat here is that we are not sure about the sustainability of these prices. Hence, one should not extrapolate these earnings into the 1Q.
And what could be the extent of stress in Q1? Are we looking at EPS downgrades? And if yes, could you give us a sense?
Yeah, if you look at the key parameters that the sector's earnings determine, if you look at crude oil, we have seen an inflation in the crude oil that should translate into a significant input cost inflation. Rupee has depreciated. While this may benefit exporters, but the shipping disruption that we have seen will definitely have some impact on the sales front. So given these factors, the risk to FY27 has clearly emerged. While we believe that is not going to uniform for the entire sector, hence we are waiting for the management commentary. Given the linkage to the natural gas chemicals and the crude oil chemicals, we will see a very difference across all the chemicals companies. To that extent, we are closely watching the 4Q earnings and the management commentary, and then the earnings will be calibrated accordingly.
Okay. Sonal was also talking to us about how some companies like Alkylamines, Balaji Amines have all declared force majeure. How serious is the ammonia shortage and how is it going to get reflected?
While I don't track actively these companies, but yes, there is a pressure. So if you look at India, we are majorly dependent on ammonia and sulfur. Ammonia is a clearly natural gas derivative. So to that extent, India is predominantly dependent on the imports, and availability of ammonia is getting incrementally challenged. But there are steps that the companies have taken. We are working with the US, and there are expectations that we will enter into an energy deal there. So barring this near-term disruptions, expectations are that we should be able to tide over this crisis. But till the time that ammonia will remain a bit of a challenge, the fertilizer companies and largely the complex and the amine companies are exposed to this supply disruption.
Okay. And finally, you want to tell us how the valuations stack up? Sonal, give us the picture right now, but how would it compare with historical averages, the mean, and which stocks do you like, Ranjit?
If you look at the sector has been in a sideways for the last 3 years. We have seen a significant destocking and deflationary cycle. There are early signs if the supply disruption kind of stays a bit longer, we could actually enter into a restocking cycle. And there is a bit of a pricing inflation that we have already seen. So the adversities may most likely may trigger the upcycle, but it's too early to comment on that. And to that extent, we'll have to wait and see how this pans out. As far as the valuation is concerned, there has been a moderation. The sector has not done well over the last 3 years. Yes, there have been a few exceptions to this larger trend, but overall, the sector remains a bit in a sideways, and we are looking for that upcycle.
Thank you.
On the preference front, if you look at, we are continue to prefer the long-term outsourcing stories like SRF and Navin Fluorine, and the import substitution stories like Deepak Fertilizer and Deepak Nitrite.
Got that. Thank you, Ranjit, for sharing your insights. We will slip into a break. On the other side, Manisha Gupta will join in to talk commodities. Welcome back. Let's talk commodities now. Manisha Gupta, as always, joins in. Manisha?
Thank you so much for that. And the best sector performance that we have seen come in for this week is clearly coming in from metals. Expectations of a more permanent ceasefire between US and Iran is what the street is working on. And then you also have firm demand signals coming in from China. The Chinese data, the Chinese demand, the Chinese inventories have all been very bullish for the metal prices there. I'll start with gold and silver, which are headed for a fourth weekly gain, by the way. And from the kind of sell-off that we saw in the month of March, from there's a good amount of buying for these precious metals. So when you look at gold, there is a 17% of a jump up from its March lows. And silver, by the way, is back by nearly 30% from its March lows. But precious metals is just one part of this. When you look at base metal prices, there are stronger gains coming in there. Copper, for example, is trading at a 2.5-month highs right now. And we have seen copper prices in the international markets do quite well. Also, when you look at Chinese imports data for the month of March in sense of copper, ore and concentrate, well, that is gained up by 6.5% on an year-on-year basis. Apart from copper, what is also doing well is zinc prices, trading at around 2-month highs onto this one, above $3,400 a ton on LME. The Shanghai inventories have declined 1.7% in last 1 week itself, and the ongoing mine closures and operational disruptions have also been quite supportive for the zinc prices there. And then you have aluminum, which clearly is an outperformer on a week-on-week, on a month-on-month basis as well. So prices here for LME also are trading above $36.50 a ton. You are looking at a Wood Mackenzie report which says that 4 million tons of a deficit globally in 2026 is what they're working with right now. So you have various names, for example, Emirates Global Aluminum, Alba, Qatar Aluminum, they have cut production. This is within the Middle East. But outside of Middle East as well, it is Mozal Aluminum Smelter in Mozambique, which also has been placed on care and maintenance. So there are supply concerns coming in from various areas, including Indonesia as well, which is facing some power problems therein. So LME stocks are under 4 lakh tons, and you also are looking at Shanghai stocks lower. The LME warehouses deliverable stocks have seen a 70% of a decline coming in, and it stands just at around 1864 tons therein. So CME, LME and Shanghai exchanges have seen aluminum inventories continue to decline. That's about base metal prices. Ferrous metals also have seen gains come in. So when you look at iron ore, 1 week highs on that. The stronger than expected China economic data has been supportive. And then you have steel rebar futures also trading at a 2 week highs. This is after China Steel Corporate says that they're looking to raise domestic prices for a 5th straight month onto this one. There is also a report from World Steel Association suggesting increase in global demand growth from nearly 1.72 billion tons in this year to 1.762 billion tons in the next year. So you're looking at stronger demand, weaker US dollar index, stronger buying, money rotating here, decline in inventories, all of that as very supportive factors. This is what we've done in the last 1 week itself. Gold is just about 0.5% higher. Silver outperforming with 3% of gains. And 2 to 4% of gains is what we're looking at across base metal prices. And as you can see, the outperformance clearly comes in from aluminum. That one is trading at a 4-year highs, 6% higher in matter of just a week itself.
All right, Manisha, thank you very much for that. We'll take a quick commercial break here. On the other side, our special segment is the economy. Lata will be speaking with IMF's Asia Pacific Director on the fund's outlook for India in Asia post the West Asia war. Stay tuned, coming up.
It's the economy. The IMF on Thursday cut its global growth forecast by 20 basis points to 3.1% global. That was in its first economic outlook after the West Asia war. The fund has, however, retained India's growth forecast for FY27 at 6.5%, though even this is lower than the Reserve Bank's forecast of 6.9%. To get a better handle on growth and inflation and currency swings in India, Asia and the world, I'm joined by Krishna Srinivasan, the Director of Asia Pac region for IMF. He joins us all the way from Washington. So thank you very much, Krishna. First, for starters, the IMF has cut global growth forecast. Can you start by telling us how it may impact the Asia-Pacific region alone, since we are bigger victims of the Gulf of the Hormuz Strait?
What we call this as a reference scenario. So basically, what this means is that Asia came into 2026 on a strong footing. Growth was strong. All the parameters pointed to a very strong growth outcome in the last half of 2025. The second half, all the growth we had, growth surprises were pretty positive in Asia. So it came into 2026 on a strong momentum. And so despite the shock, our numbers for Asia are broadly unchanged compared to January. Of course, there are differences. We have revised down certain country growth forecasts quite significantly. For example, Philippines, we revised down quite sharply. China, modestly from 4.5 to 4.4% this year. But overall, for the region, I would say it's broadly unchanged relative to January, because our reference scenario assumes that the shock is temporary.
Okay. What about India? While your forecast is lower than RBI, compared to your pre-war forecast, you have not changed the forecast despite the West Asia disruption. Why?
It's a tweak. We actually tweaked up a little bit by 0.1%. 0.1 percentage point, and that is because despite the fact that you have the energy shock, India is quite vulnerable to energy shock, but we had some offsetting factors because the momentum at the end of last year was very strong coming into 2026, and you also had earlier we assumed tariffs of 50% for the US. Now that's been reduced to 10%. So there are offsetting factors at play. So India modest revision up, and we have the same 6.5% for next year.
Now, China was a disinflationary force for Asia-Pacific region in 2025, maybe even 24. Will it continue to have a disinflationary impact, or will the fuel price rise actually start a sharp inflationary trend in Asia?
So we don't have deflation in our baseline for China. We still have inflation in positive thing, but it's still on the lower side. So that is still an impact on the rest of the region. But I must point out that China growth itself, the first quarter numbers came out today, and it is stronger than we had assumed in our forecast. So it came out at 5% year on year, and it is higher than what we had assumed and what consensus forecasts are. So China is still doing well. So in terms of, I don't know whether I mentioned this number to you before, Lata, a 1 percentage point increase in China's growth translates into a 0.3 percentage points of additional growth across emerging markets. So when China does well, the region does well. And in fact, the whole world does well. So China's number came out on the positive side just today. And so that's a strong fillip for the region.
Okay, yeah, it is still today for you, Krishna, in Washington. It's become tomorrow for us. Well, actually, what fuel price are you assuming for all your forecasts? More generally, the closure of the strait hurts oil and gas flow to Asia more than any other countries. Won't this push up inflation here?
So in some sense, we have increased our inflation numbers for Asia. In fact, we had inflation for Asia at 1.4% in 2025. We assume that goes up to 2.6% and then comes down to 2.4%. Now, all this, let's be very clear, Lata, that we are assuming that this energy shock is temporary. Now, in the World Economic Outlook, we have two other scenarios. One we call an adverse scenario, and one we call a severe scenario. In those cases, inflation does go up quite a bit. And for Asia itself, growth could be 1 to 2 percentage points lower, depending on which scenario you are in. So it's all a function of whether it's inflation or growth. It's a function of which scenario you're talking about. So in the benign scenario, what we call the reference scenario, if it is all a temporary shock, it goes away, then that's where we are. But if the shock intensifies or the duration increases, then we are in the adverse or severe scenario where growth could be significantly lower in Asia, 1 to 2 percentage points, cumulatively through 2027, and inflation that much higher.
Okay, so growth could be 1 to 2 percentage points lower and inflation 1 to 2 percentage points higher. Okay, I heard your press conference, and one factor that did not come up was the El Nino forecast. India's Met Department has forecast 8% deficient rainfall this year. Will the El Nino impact, hurt Asia's food inflation and hence India's too?
So let me separate the two. El Nino will have an impact on the Asia-Pacific region. Again, because this was a first reading, it is not fully internalized in our projection. But I'm more worried about food inflation because we are focused on oil and gas right now, but there is interruption in fertilizers, and the whole supply chain is affected. So, you could see food price inflation down the road in Asia Pacific, and that's something which we have to worry about. So, it's both El Nino, which has to be internalized fully, and the fact that you could have lagged effects of the fertilizer disruption. A lot of fertilizers still come through the Gulf. Yes. And so that could be a factor at play. So the combination of that, you could see an additional supply shock for Asia down the road, including notably for India.
Yeah. Actually yesterday, India's agri expert Ashok Gulati was on my show, and he said that he is worried less about deficient monsoon because India has food stocks. But he said a combination of fertilizer shortage and water shortage can impact rural incomes, and that can hit demand. Any thoughts on that?
See, in terms of downside risks for India forecast, there are a few. One, of course, I would say, like I said, we are only quantifying numbers down the road in terms of the two other scenarios I mentioned. If the energy shock emanating from the war in the Middle East, if that intensifies or the duration is longer than we are assuming, then that could have a significant impact on growth in Asia, on Asia, and including in India. And on top of that, we're talking about the energy shock, but we have to talk about the fact that the fertilizer disruptions at a time when planting season is beginning, in many parts of Asia, including in India, that could have a second order effect. That's a second risk, downside risk I'm talking about. And third, of course, is what you mentioned, the weather-related shocks. Ashok could be right that monsoon deficit may not be a factor, but it could become a factor in combination with the fertilizer shortfall and so on. So yeah, these are specific shocks for India. I would say that India has been quite prudent on its fiscal policy over the last few years. So it does have the buffers to tide over some of these issues for the short term, right? Of course, you must have heard we talked about the fact that you have to be prudent in the use of your fiscal buffers. So how they play. So when you go from the baseline to downside and then the policies, these things have to be taken into account.
I agree. India doesn't have much of a fiscal deficit problem, but we do have a balance of payments deficit problem. There has been a flight of capital from all of Asia, actually, since the war began. Do you see current account deficit and balance of payment problems worsening for India and actually for other Asian countries as well this year?
So in terms of let's talk first about the capital flows, right? At this point in time, Lata, we've seen a series of shocks that the whole world has faced, including Asia Pacific. And every time there's a shock of this proportion, you see a risk-off sentiment in markets, capital outflows from emerging markets towards safe haven assets like the US dollar and so on. So you are seeing that in Asia. I think the one factor which we talked about a little bit about remittances. Again, remittances are holding up quite well for India and for many parts of South Asia, whether it's Nepal, Bangladesh, Sri Lanka, and so on. And so that is a good offsetting factor. In terms of capital, my view is that we should not rush to judge that this is a structural thing. It could be a short-run thing, and markets are looking for yield, so you could see capital coming back once the thing settles. Everything is a function of how long this shock transpires and how much impact it has. I think if it intensifies and duration is longer, you could see a more of longer-term impact on capital flows coming out of Asia. But you're absolutely right. Capital is flowing out of Asia to every country I can think of.
You know, actually, we don't have a very big current account deficit. It's small, at less than 1% of GDP. We just had the trade data. It's not a bad deficit at all. But we don't even have capital flows to fill this small deficit for 2 years in a row. The rupee has had a very tough 2025, falling 10% against the dollar. Do you think 2026 could be another tough year?
So, it's possible. And our advice to countries has been to allow exchange rate to be the first line of defense. Let exchange rate move. They're flexible so that they can respond to the shock. And of course, if the exchange rate pass-through inflation becomes a significant factor, then monetary policy will have to adapt accordingly, right? So what we're saying for now is monetary policy can see through the shock if it is transient. But if there's risk of inflation expectations getting unanchored, then move on monetary policy, and that could happen because of the exchange rate, the pass-through from the exchange rate. But you could have a difficult day for the rupee, and I think allowing it to be flexible is important so that the shock absorber.
Yeah, I think RBI has followed that. Now, after the war, we are going to come back to the problem that we have forgotten for now, and that is artificial intelligence. Do you see AI impacting Asia and India severely? Do you see job losses and sometime soon?
So Lata, let me give you the numbers we have for. In fact, AI can actually, if used well, increase into higher productivity. Growth can be higher by 0.1 to 0.8 percentage points. I'm talking for the world at large, right? So the question, of course, is how prepared you are, in terms of adoption, both adoption and preparedness. So AI is both a challenge and an opportunity, right? And I think that's where it's important to think about it. And where I feel that the region could be affected is, I think, three factors at play, Lata. One, of course, this is a region, Asia-Pac, which has benefited a lot from trade liberalization, trade integration, and so on. So the region faced a shock last year. It bore the brunt of tariffs from the US. The second factor, of course, is demographics. There's a lot of people within the region. There are countries where there's a huge demographic shift, and a lot of people are joining the labor force. And the third thing is, of course, AI. How does this combination of these three affects growth prospects is important, and that applies for India too. I think that's where we have to think in terms of whether, over the last few years, every country in the world has been responding to short-term shocks. I think structural reforms are very important. You should not be postponing that. I think that's where it's important to think whether are we producing enough skills for the kind of jobs that AI will generate. And in fact, if you looked at the chart I showed at the press conference, educated or skilled people are finding it hard to find jobs, right? So is there a mismatch between what our education system is doing and what the firms want? So that bridge needs to be that needs to be bridged. That gap needs to be bridged for AI to play a positive role. So yes, I am worried about the fact that you could have growth without sufficient jobs, but that is where the impetus is on structural reforms going beyond near-term macro, fiscal, monetary. We need to think seriously about structural reforms.
No, I agree. Actually, we perhaps have to reset educational syllabuses, even in the midst of a course. Okay, just a final question. Global growth has been pretty resilient, actually. In the past 2 years, it has not wilted despite serious challenges like the tariff disruption. Will the world economy and India be able to bounce back in a similar fashion after this war as well?
So if you look at the US growth, it is pretty strong. If you look at China growth, that's pretty strong. And India is doing reasonably well. So if you look at the key players in the world economy, they're doing reasonably well despite the shocks.
Yeah.
And if this shock dissipates, it's a temporary, then I would expect growth to bounce back. So we have, in our reference scenario, we have growth going back to pretty good numbers. So I would say that it's all a function of how long this shock right? And how the supply disruption, the supply chain disruptions. We are focusing on a few on oil and gas and so on. It could be wider than that. So if those downside risks become more intense, then you could have a bigger impact on growth. But if the shock is transient, I would expect the economy to bounce back across the world. The major economies are doing well, and like I said, China number came out pretty good today, and the US is doing quite well. So there is upside there.
Well, we'll have to leave it at that, out of time. Thank you very much, Krishna Srinivasan, and we do hope to touch base with you when you come out with your next outlook, and we may have better tidings then. Thanks a lot for joining us. I just want to point out one issue. The rupee is actually at a very strong point. It's 0.5% higher, and I think a line that just ran on your ticker should be repeated. The IBJA, which is the bullion importing agency, it says that all gold import applications have been rejected from April 1, and only MMTC and IIBX imports are going on. That may be an added factor why dollar demand has gone down. So that's a fairly strong rupee. It's the only one that's so strong, and not just strong, it's 0.5% higher. So even if you're not getting too much joy from the stock markets, here's something to keep you cheered. Thanks much for joining It's the Economy. After break, Chartbusters.
Muted top-line growth in the March quarter, dense Wipro's fourth quarter show. IT Bellwether's revenue has also declined for the third straight year, the company will buy back shares worth 15,000 crore rupees in what will be its 6th and largest buyback to date.
HDFC Life is under pressure following a weak showing in the fourth quarter. Value of new businesses fall by over 8% on a year-on-year basis. Promoter HDFC Bank to up stake in the insurer to strengthen solvency and growth.
Waaree Renewables revenue doubles in the fourth quarter while bidding pipeline also remains strong. The stock rises over 12%.
Kolde Patil Developers reports a strong fourth quarter business update. Sales rise 13% year-on-year, while collections are higher by around 18%. The stock rallies more than 10%.
BST Industries too rallies on strong fourth quarter numbers. Secret volume surge on pre-buying ahead of tax hikes, while price hikes also give a tailwind. Peers, Godfrey Phillips and ITC also rally.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And the color is green on the screen. The market started off in the red very, very briefly. But from there, just picked up pace. Mangalam, good Friday morning. And hopefully on Monday morning when we wake up to the US cues as well, hopefully things will not be too bad. But otherwise, global equities itself seem to be in fine fettle.
The markets seem to be in fine fettle right now, and now the street is looking forward beyond the uncertainty and perhaps looking at earnings, etc. as well. Saturday, we'll have big banks reporting numbers. Then the week after, we'll have some of these FMCG numbers coming through as well. We've been, giving the street a preview on what the expectations are this time around. Not much in terms of numbers, but the commentary will be extremely crucial. The FMCG stocks, they found some wind beneath their wings today. So the FMCG index is up around 2.6%. HUL, 4.5% higher. Britannia is not doing badly either. From a demand standpoint, this is the first time you have the full quarter impact of the GST rate cuts. Colgate, seems like there's a bit of a short squeeze out there. The stock has seen an 18% correction in the last 1 year. It's down about 40% from the peak as well. That stock is up around 6.5%. And we are seeing that fall through across the board with Pidilite and Container Corp along with Godrej Consumer. So a bunch of these consumer-related stocks doing extremely well. And the one that was buzzing around for the last 2-3 trading sessions is WeWork India. In fact, the entire office leasing space was buzzing around. So we thought, why not get the management itself and ask what exactly is happening. Karan Veerwani, who is the managing director of the company, joins in. The stock up 17% in the last couple of days. They've signed 5 large-scale long-term lease agreements across Bengaluru, Hyderabad and Chennai. That's nearly 0.7 million square feet of Grade A office. This was on April 6th. And to discuss how the company's fourth quarter performance was as well. Karan, always a pleasure speaking with you. These agreements that you signed for nearly 7 lakh square feet, when do they come on stream and what is the likely improvement in your revenue on account of this addition?
Good morning, Mangalam and Nigel. Great to be here again. Yeah, I think we, continue to be on an expansion spree. We have expansion throughout this next financial year lined up, and a lot of these signups are basically to open in the next few months or within this FY itself. And, the momentum on the demand side continues to stay strong. So I think briefly the stock had some impact around, some of this IT services, ancillary type of impact and everything that happened over the last few months. But clearly, once you see our Q4 numbers and you see the kind of pipeline that we have even going into Q1, I think it'll be clear that Flex is now the choice for all occupiers. And we're starting to see larger and larger demand coming in for this year as well.
So what does this do to your revenue, this addition that you've seen? How much does it, add? At the same time, what's the kind of investment that it entails?
I won't get into it. We'll probably talk about it when we do our Q4 earnings in a few weeks. But I think I'll just comment in saying that, for last FY, we would definitely have beaten guidance or would have done better than the street has expected. And in terms of the growth, both on revenue and the bottom line, upwards of 20% like we promised. That's the same that's going to happen going into next year as well. And we have a, good pipeline already locked in for that. And we can probably get into more numbers, sometime in May or towards the end of May when we do our earnings. I think, the more important thing is that we were getting counted out, and there was all of this narrative that, office leasing and et cetera is going to get impacted with this AI story. That is definitely not happening. We're seeing the demand actually increase, and we're starting to see more people adopt the flexible model. So all positives for the coming year for us.
All right. Hi, Karan. Good morning. Ironically, I think just 12 hours or so ago, I saw Mr. Virvani at the Wankhede Stadium, and Karan's on the show in the morning as well. That said, you'll had some new signings. Just wanted to know the timeline. By when does this get operationalized? And what is the structure? What is the investment you'll have to be making on the 7 lakh?
So roughly on the 7 lakh square foot, will be close to about 200 odd crores of capex that would just go into those spaces that we signed up. And you would have seen that we reported a signing of a large managed office deal with T-Mobile as well. That's going to be a separate set of investment that we have coming up. This entire set of assets that we signed will all open within the next few quarters. So pretty much 90% or about 80% of our expansion for next year will happen within sort of Q1, Q2, and maybe some spilling into Q3 of this financial year.
Right. What about the industry at large? Obviously, you did say that there were impacts because the street was worried about whether AI would have some sort of spillover in terms of an impact coming in for your industry. Now, a recent report that is coming from Cushman and Wakefield, they've said that office vacancy has tightened to about 13.85%. That's the lowest since 2020. Could you give us a sense on the supply coming in from the industry standpoint and how that is likely to impact overall, availability, overall performance for a lot of the players?
Yeah. So I think, there was a little bit of overhang that continued from COVID in terms of supply availability and demand. And also some of the speed of supply has slowed down, especially in Gurgaon and, even in Mumbai because of some of the construction delays. But we're starting to see big developments come about in the next, few years. We've been signing some under construction assets also. So we're hoping a lot of those come live eventually. But the reflection of the vacancy is really a reflection to show you how much more demand there is right now than supply. And also the speed of demand, outpacing the speed of supply, which is where a lot of our operation or, our platform comes in. When you have ready to move in spaces, these companies tend to want to move much faster because they kind of need to get business going and get seats, people on seats as quickly as possible. We're also seeing that, as companies are grappling with this transformation when it comes to this new technology change, a flexible model seems to be what they prefer, or at least starting to move a bigger percentage of their workforce towards a flexible workspace model. And that's playing out in all of our occupancies, which we will again, talk about in the next few weeks.
All right, Karan, final question before we let you go. The margins have improved substantially, right? From low teens, 14-15% or to adjusted margins of around 21%. Where is this number headed? What's the guidance you want to give on that front?
It will definitely move upwards in Q4. But like we've kind of been explaining to the street, our business is still in an extreme in a growth phase. So we continue to bring on assets, like this 7 lakh that we just spoke about. Those rentals will start hitting us in the next few quarters. So as those ramp up again, you will see a small dip in the margin coming in the next quarter, and then again they will ramp up towards the end of the year. So what you saw this year, which was Q1, we were roughly about 15% EBITDA. Q3 we were 21%, like you said, and Q4 will be slightly higher than that. So we will continue to average around 20 to 22% EBITDA margins, even while adding capacity and growth, like we've been guiding the street from the start. And that's really playing out. We're seeing assets ramp up faster than we expected. We are seeing some really large back-to-back deals deals that we've been able to sign up. So that cushions any of the cost impact coming up front. And, all business drivers right now are looking extremely healthy, and we're very bullish on our growth and the space.
Got that, Karan. Thank you for giving us an insight into what the business is likely to do in the very near future and the medium term. But we'll get to more granular details post you've reported your fourth quarter numbers. Until then, wish you good luck as well. With that, we take a short break, come back on the other side. We continue our corporate conversations, and today we have with us Nuvoco Vistas. The management joins us to discuss their fourth quarter numbers.
Welcome back. Well, let's get talking about the cement pact then. Mr. Jaikumar Krishnaswamy, the MD of Nuvoco Vistas Corp, joins us on the show to discuss the fourth quarter numbers. Hi, sir. Good morning. Thanks a lot for joining in. A rare voice, but good to have you on the show. Well, first up, let's start about demand. How is demand panning out in April 2026 so far? And what's the industry growth you're working with for this fiscal? Will Nuvoco outgrow the industry?
As we start the month of April, other than the first 3-4 days of April, I guess demand has generally picked up in all the markets. East markets, which are core markets for Nuvoco, are doing pretty well. And similarly, some of the key markets of West MP, Gujarat and Rajasthan, things are pretty good. Bihar, Bengal, Chhattisgarh, again, demand is fairly consistent and good for the month of April. That's how we started this year. As regards the growth going forward, I'm looking at a growth for the industry anywhere between 7 to 9%. And certainly Nuvoco will be in the same range of about 7 to 9% during the year FY27.
All right, 7 to 9% of the industry growth, and you will grow in line with the industry. So we'll work with 7 to 9%. And the price increase, if you could quantify how much has been taken so far, how much of that has been absorbed?
Yeah, I think in the markets where we operate in West, North and East, by and large in all the markets, we have seen a price increase. We have taken a price increase around 5th, 6th of April. In the East markets, we have taken a price increase of about 10 to 15 rupees. And similarly, in the North and West market, the price increase in trade channel has been 10 to 15 rupees. The non-trade side, in all the markets, the price increase we have taken is about 20 rupees. As we stand today, We have seen absorbment of the prices about 10 rupees in all the markets for the full 15 days of April, and we are taking another price increase last night in the eastern markets, and we will see how the 10 rupees pans out. Certainly, I guess with the kind of cost inflation which is happening, we need to find a way to take more price increase to defray all the cost increases which have happened in the last 4 to 6 weeks.
Okay, got that. So 10 rupees has been absorbed. But sir, if you could tell us how much of additional price hikes will be needed to offset that cost spike?
This is a little bit difficult to exactly quantify because as we speak, it's such a dynamic scenario and costs are continuously moving in the last 4 to 6 weeks. But as far as Nuvoco is concerned, one of the positive things which we have is in the Q1, we have our fuel costs more or less taped up with not too much of impact because of the inventory which we are carrying at least till the middle of June. The actual cost impact due to fuel will happen around July onwards. That will be the big impact will happen for the orders which petcoke orders which you are booking as we speak. But the big impact which has happened in the month of April is the packaging bags cost increase, that is to the tune of about 80 to 100 rupees for us as well as for everybody in the industry. And on top of it, the fuel prices right now marginal at about 15-20 rupees. And last one is the price of gypsum and other raw materials, which is to the tune of about 8-9 rupees. So net, if you see, from exit March till during the month of April, we are looking at a price cost increase of close to about 100 to 120 rupees per ton.
So a cost increase of 100 and 120 rupees per ton, what does that do to your EBITDA per ton? How does that look like on your assumptions of volume growth, price spikes and the input costs?
We closed last year with about 923 rupees EBITDA per ton. So there could be a little bit of a transient phenomena in the first few weeks since the things settle down. But I'm really looking at a number which is comparable to last year's number at a full year average. There could be a short-term blip, but at an all-India, at a full year average, we're looking at a number which we achieved this year, maybe a little bit more if the cost inflation goes down. And I'm looking at a cost pressures going down in the first after the first 6 months. We should pick up efficiency factors because a lot of internal levers will be working on, and looking at a number of 900 plus for the full year as a whole.
Got that, sir. With regard to operational performance, 900 rupees per ton of EBITDA and volume growth of 7 to 9%. But you know, the Vadraj acquisition, that's going to be a test for you. I say this because even Ambuja struggled to ramp up Sankey, despite having the group expertise that they talk about. What gives you confidence that you can turn around this Vadraj asset?
I think when we went into acquisition mode for Vadraj, we had kind of thought through what could be the options, and as we kind of completed the acquisition and started building rebuilding the plant, we came up with multiple options, the sea freight road. But as we more or less completed the acquisition, we realized that the rail connectivity to Vagot and Vadraj is been approved by Indian Railways, and we have completed our ESP and project report done, and currently we are in the process of land acquisition and developing the site for rail movement. So our movement of clinker from Kutch into Surat is going to happen both through the sea route as well as through the rake route. And in the quarterly results, we also announced that we are setting up a bulk terminal very close to Ahmedabad in a place called Sachana. That's where we are going to have another bulk terminal with the rail connectivity, with bulk cement coming from Kutch into Sachana and then distribute in Ahmedabad, Saurashtra region through the bulk movement. And Surat will have clinker coming in through either rake or by sea route, and then distribute product in South Gujarat, Godhra, Baroda, all the way up to Mumbai.
So what you're saying is you are confident about turning out the Vadraj asset?
Absolutely. We started reconstructing this plant in August, and I'm very happy to report that our commissioning trials is going to happen in Q2 of this year in Surat. We would be churning out cement out of Surat end of Q2, middle of Q2 this year for sure. and very also proud with the work done by my team that we have been able to rotate the kiln in Kutch as well within 4 months of work happening. The work is happening in both the places, the frenetic pace with WHR coming, CP being repaired, the RABC as well as the alkali bypass system all under construction, desalination plant. So as we progress into Q1 and beyond, our target is to get Surat commissioned and operational by Q2 this year, and by H2 of this year we should have Kutch clinker happening and the Kutch railway setting will happen Q1 FY28.
Well, and we wish you well, sir, in turning around that asset. But the other big question that your shareholders will be wondering is, will the promoter entity look to sell out of the cement business? Could you clarify on that?
We entered the business in 2014 with our Nimbol plant with close to 2 million tons. And in the last 12 years, we moved from 2 million tons to 35 million tons, the fastest growing cement company in India. So our plans are pretty big. After Vadraj, we will certainly look at expanding the business in North or in Gulbarga, and those plans are in place right now. And however, we are very clear that we will do one project at a time. The moment we complete Vadraj, we will take up the next expansion to grow Nuvoco to even bigger and larger company in the coming years.
We got that, sir. From 2 million tons, you're headed to around 35 million tons odd. But just want to clarify, so the plan is to expand capacity and not sell out. Is that correct?
I will certainly say that our job is to expand the business, and we are committed to growing the cement business. That's our ambition and aim.
Okay, all right. Appreciate you joining in, sir, and speaking to us here on CNBC TV 18. All the best for this fiscal, and we catch up during the course of the year. For the time being, though, we slip into a short break. Come back. We'll get you some updates on the rupee. Stay tuned.
Welcome back. The market's holding up well around the 24,250 mark. But in the consumer space, there's something very interesting which is currently underway right now. You know, in the FMCG space, we would always speak with all the guests and they would say that, you know, they prefer discretionary to staples because staples have been overweight, slow growth, etc. But today, that trade seems to be coming undone. Why do I say that? Because on the way up, you have HUL, you have Britannia, you have ITC. All of them are doing well, along with Nestle, Dabur. So all these stocks which belong to the staples category are seeing cash go into that. Whereas the discretionary players, the types of jewelers, so we have Titan, which is currently lower. Titan's at the low point of trade. Kalyan Jewelers has seen a 4% cut. Even something like a Jubilant Foodworks or Eternal, which is more discretionary than staples, is actually not doing particularly well. So money is moving away from discretionary into staples. That's the trade that is playing out in the consumer space, perhaps on account of severe underperformance of the staple space in the past as well. But with that, we're extremely out of time on this edition of Chartbusters. But you stay tuned to CNBC TV 18. Trading Hour comes up next. We track the market action, individual stocks, and a lot of sector talk as well. Stay with us. You're watching us here on Trading Hour. We come to you live from the CNBC TV 18 Motilal Oswal studio. I'm Mangalam, with me Hormaz. The market's doing market things, holding up in the green by about 50 points. The Nifty Bank as well, holding mildly in the green. The mid-caps, as they have been doing all through this week, are outperforming and continue to do so even today, with 2,000 stocks advancing for every 775 stocks which are declining. Hormaz has moved across to the big wall right now to put the spotlight on all the movers and shakers. The biggest of them all are the consumption plays today. Hormas.
Oh yes, and they are looking to end the week on a high, and at least the markets, if not significantly higher, they are still doing fairly okay for themselves. They are positive for the week. That's the more important thing. The index needs to close above the 24,050 level to end the week on a high and a second straight positive week. So it's 200 points up for the week now on the Nifty. So that's good going for the markets. The advanced decline, well, the broader markets they were the outperformers in yesterday's trading session, even as the recovery in the Nifty got sold into. And even today, the gap has been fairly big. The parallel line continues to remain as is, over 2,000 stocks advancing compared to around about 800 that are in the red today. But leading the research today are the FMCG names, and almost every single beaten down FMCG stock is doing well. Colgate is up 6% in today's session. Imami is up a similar quantum. HUL is up 4% in today's session, among the top gainers on the index, and as is Radico Khaitan in high spirits, 3.5% higher in this stock as well. There have been some news reports with regards to the halting of gold imports, and as a result of which stocks like MMTC are doing well. MMTC, of course, that's the one that is still ongoing. But Titan and Kalyan Jewellers are seeing some impact. Titan's down or 1.5%, but Kalyan Jewellers now has slumped to the lows of the day, 5% lower on the stock. We've seen some clarifications as well flash at the bottom of your screens. Now look at the PSU names in today's session. They are doing fairly well, led mainly by the PSU railway stocks. It was Railtel earlier in the week. Today it's Ircon and RVNL, of course, after the order win. Then Engineers India too, 6% higher on the stock on fairly strong volumes. Result reactions, we'll get more of those as the week goes by next week. But look at VST Industries, that's up 15%. Kolte Patil, after a strong business update, is up 13. Angel One is slightly off the highs of the day, still holding on to gains of around 3%. And HDFC Life among the underperformers in today's session, 3% lower. And among the big movers from yesterday, seeing some bit of profit taking in today's session. Gallant Ispat was up almost 20%, is down 4. GMDC was up 20%, that's down 2. And Carraro India too, still below its issue price, but still down around 3% in today's session.
Take that point, Hormas. Thanks a lot for that. A bunch of stocks which one can add to that list that you've put out. Alembic Pharma has now surged to the high point of trade, taking this weekly gain to about 7.5%. Good up move is what we're seeing, backed by volumes. IEX and Hyundai Motor are the others which are spiking as well. So IEX has moved to the high point of trade. Hyundai Motors up around 3%. Auto stocks generally doing well in today's trading session. But what's the best performing asset class right now is the Indian rupee, and this compares with all the others that we're tracking. The rupee is actually the best performer this month, up over 0.3%, even as most other emerging market currencies like the won, rupiah, Thai baht and Philippine peso are lower. Lata joins in. Lata, what's working for the rupee?
Well, actually, the rupee was 0.3% when I started to make the calls. Now it is 0.5% higher. So most EM currencies are in the red compared to the dollar. And for the month, the record is the rupee is about 0.5%. The rupee is about 3% higher versus the dollar, whereas most other EM currencies are 2 to 3% lower. So what's working for the rupee? The latest positive for the rupee is that the Reserve Bank has told most oil companies to take credit, a line of credit from 1 or 2 PSU banks. The idea being that, if they go and ask several banks, then it gets an exaggerated sense of dollar demand, and that sentimentally pushes up the dollar price. Likewise, we understand, that must be the trigger even for what the IBJA, the Bullion and Jewelry Association, is saying, that they have been told to reject gold demand from all parties except MMTC, which is a canalizing agency, and the IIBX, so that those gold buyers can go buy via the MMTC. What happens in these cases is again the same. Instead of many gold buyers going and putting multiple demands with many banks to get the best deal, creating in that sense a larger demand for dollar, this canalizing way of giving dollars tends to reduce the psychological impact of dollar demand. It's not always a happy thing for the importer, because they would like multiple quotes. But of course, in the public interest, for a few days or for a few weeks, this system is adopted. It's typical Reserve Bank of India playbook. First, they control banks' speculative positions like they did on 28th March. And then they tell the big importers to come through canalizing agencies or to go to specific banks. The other thing that we know that is working for the rupees, for the past 2 days, FPIs have been dollar providers. because they've been buying equities net. Small amounts, but still, at least the big demand for dollars is not there from this large group. Again, as we know, banks are not any longer in a position to create arbitrage demand as well. So all this is resulting in the rupee outperforming because of these specific measures. But overall pressure remains because whatever the talks, crude is still pushing towards the $100 mark for a barrel. And that's why you can see all of Asian EMs who are most affected still in the red. So pressure on the rupee has to be understood.
Indeed, and that's the big talking point, right? Even as there is a significant talk with regards to peace and a peace deal between the US and Iran, there is no let-off in oil prices. They're still higher. In fact, the real-world Brent prices are still at 120, if not lesser. Lata, thank you for summarizing that for us. Still, the rupee, the best-performing currency in today's session. On to a corporate conversation, then Signature Global has entered into a strategic collaboration with Italian lifestyle brand Tonino Lamborghini. The company has also reduced debt to 200 crore rupees, which is at an all-time low. Now, let's get chatting with Rajat Kathuria, the CEO of the company, who is joining in. Rajat, good morning. Thank you for taking time out. Explain the nature of this collaboration to us first. Is this just a licensing play, or are you going to be building projects based on their specifications as well? Tell us more on this.
Sure, Mangalam, thanks for inviting us to your show. So, Mangalam, Sector 71 in Gurgaon, which is on the southern peripheral road, is one micro market where we own significant amounts of land, and it's quite significant to us. So we are planning our next launch, which is above 12 acres of land. That will be the first one for this year, and we'll have a GDV potential in excess of 4,000 crores. So this is a high-rise development wherein we have partnered with this iconic luxury lifestyle brand Tonino Lamborghini, and they'll be helping us with the design aspects and the branding side of it. Whereas the construction, sales, and all other activities will be done by Signature Global.
All right, we take that point. Rajat, this is Mangalam here. The first couple of questions asked by my colleague Horma is out there as well. No worries. Just wanted to understand a couple of things. We speak about launching a premium product in a market where we might see peaking demand. If you don't reach the decided top line, will you not get the flat fee as well? I'm just trying to understand how demand is right now, because there have been concerns around delayed or slowing growth in the NCR region.
So, Mangalam, first, apologies for kind of mixing names. But yeah, I think we've heard these concerns over the last 12 to 15 months, but by and large, the demand has been steady. Okay, it's not really shot up, it's not spiked. We've seen a fairly steady demand over the last 5 to 6 quarters. Even if you look at the last year, by and large, we've been doing that 2,000 crores of sales a quarter, and it has stayed steady. Maybe. And bulk of the projects which we launched were also in upper mid kind of segment. They weren't really at the lower middle income group sort of positioning. So we are seeing steady demand. The numbers are not too large. We are coming up with a stock of about 800 odd apartments. And we are seeing that, as you launch, you are able to sell, a portion of these units right at the start of the project itself.
Rajat, what's the situation on ground currently? How has demand been this quarter, at least in the fourth quarter gone by? There was this 1 month full of the war in Iran. There have been some concerns with regards to the cycle as well, plateauing out. What has been the situation on ground, and have you seen any impact because of the war and the subsequent impact on remittances and so on and so forth?
So, I wouldn't disagree that macro headwinds are kind of, impacting the, emotion of customer, and there are a set of people who want to hold on with the purchase, but I think it's a fairly large and deep market. There are people who are coming forward and doing the purchase, and that's why we are also going ahead with this particular launch. But at the corporate level, we are taking abundant precaution. We kind of, even announced this trade with RMZ Group, where we've, offloaded about 50% stake in one of the subsidiary entities. And, that really makes our balance sheet position very healthy. Our net debt position is as low as ever. It's down to about, INR 2 billion. And for the last few years, we've never seen such a good, healthy cash position for the company. So, we are not going ahead with very massive acquisitions at this stage, but we are open to collaborations. We'll keep cash position strong. And, we are focusing on completion, sales, business as usual. So, not really kind of taking any significant hit to the corporate strategy, while all these situations are evolving.
Have there been any impacts to your projects, your ongoing ones, Rajat, because of the supply chain disruption? Has there been cost escalations and so on?
No, so all building materials are available. They're mostly locally manufactured. Yes, prices have been a little on the rise, but one will have to see, how this entire situation, plays out over the coming weeks. But so far, I think there is no supply disruptions in place. Labor is a little lower, but I think that should get back to normative levels. So by and large, I think no significant disruptions as far as business activities.
All right, final question before we let you go. Your pre-sales down 5% in the fourth quarter. You have collections down about 22% as well. You had given us an inkling around the third quarter that, you may face some sort of, slowdown in demand. Was the number that you've reported in line with your own expectations, or do you think you could have done a little better? And while we have you with us, if you could give us an inkling into what you're expecting from FY27.
So see, the number is down vis-a-vis, our expectations at the start of the year. And we could sense that, by the time we were closing out on third quarter, and that's why, we gave that heads up that, yes, we are not achieving the kind of guidance we had suggested at the start of the year. But, we need to put into perspective a slightly longer term cycle rather than just, quarterly performance. So over the last, between fiscal year 22 and 25, we were almost growing at about 60% sales CAGR. So last year was a bit of, decline vis-a-vis, the year prior to that. But we are expecting, growth in this particular year. The numbers, are yet being contemplated, but, we expect growth in this particular year. Let's see what kind of guidance, the board finalizes.
FY26 pre-sales were down 20%, area was down 35%, collections were down about 10% as well, closer to 4,000 crores. So obviously there will be growth on a favorable base. Just wanted your thoughts on how much more it'll be, because CAGR of 60%, like you pointed out, on a high base, difficult to achieve the same kind of numbers, but obviously on a low base of a decline in FY26, you could see about mid-teens or sort of 20% sort of growth at least on the pre-sales and area and collection, right?
No, Mangalam, definitely. I'm not talking about a 4 or 5% growth. I'll rather call that flat rather than calling growth. But yes, we are definitely seeing a double-digit growth on a favorable base. But, we are yet to decide on that exact number. So I don't want to kind of, preempt it.
Rajat, thank you for sparing time and joining us. Wish you good luck for FY27 as well. Take a short break, focus on the bond markets on the other side with Manisha Gupta.
Hello and welcome to Bond Street. Our guest today is Somnath Mukherjee. He's CIO at Ask Wealth Advisors. Somnath, hi, thank you so much for joining in. My first question really is on how would you describe the current environment when it comes to investing, especially by the wealthy Indian investors?
Well, the market's growing very fast. In fact, the last 10 years have been extremely positive in that respect. Two things have happened. Wealth creation have gone up in India. Partly because of the growth of capital markets that has enabled a significant amount of monetization of operating assets, both by legacy families as well as new age startup entrepreneurs. And secondly, there has been a much higher embracing of risk assets by Indians in general. And we see that in terms of the growth in number of demat accounts. It's sort of grown by 5 or 6 times in the last few years. Ditto in the number of mutual fund folios, that's also grown by 6 or 7 times in the last few years. So that sort of represents the growth in wealth, and hence that kind of then we are part of an ecosystem that enables people with wealth to manage them optimally.
All of these high net worth investors, what are they thinking about debt investing right now?
Debt actually in all shapes or forms continues to be the single largest asset class in client portfolios. Obviously, equities has grown significantly over the last decade or so. But if you look at overall savings pool of India, including fixed deposits, which I consider as one of the elements of debt investing, by far it continues to be the largest part in client portfolios. As I said, nobody, even the most wealthy, nobody comes to us to create wealth. They've come, their intent in financial markets is to preserve and optimize the wealth that they have already created. By definition, therefore, by simple precepts of asset allocation, debt will continue being a very, very large part of portfolios.
How are you then looking at the OBPs? Have they changed a lot on ground when it comes to investing within bonds, or do you think it still is about education and some bit about transparency that the street faces?
I think we are at a stage where the market was, the institutional market was, with respect to G-Secs, say in the late 90s, early 2000s, when primary dealers came in. And before that, G-Secs were also not such a transparent market, dominated by brokers on Dalal Street and banks. It did not have the reputation of being very transparent and so on. But late 90s, early 2000s, a whole bunch of primary dealers got licensed and they kind of created a market. And today G-Secs are a very large market. Indian G-Sec market is the 3rd largest G-Sec market in Asia. I think we are at the same cusp as far as corporate bonds are concerned, and OBPs have had a significant role in getting us to that stage. Just as the Mutual Fund Sahi Hai campaign by AMFI created the whole movement towards SIPs and in many ways sparked off the tremendous growth of mutual fund AUMs in the last 10, 15 years, I think in bonds, we are right at the cusp of it. We are seeing significant amount of interest. What has helped is equalization of tax regimes across various fixed income products that happened 2 years ago. So whether it's banking deposits or mutual funds or bonds or insurance, everything gets taxed at the same rate. One can argue whether the rate is too high or too low. The fact is it's the same. And that has taken tax arbitrage out of the equation in terms of selection criteria. And that's become a big sort of enabler for growth of the corporate bond market. I think we are right at the cusp, and we'll see a tremendous growth in the next few years.
In the kind of market that we are in right now, what is more attractive as an opportunity, and especially within the fixed income part of it?
See, there is no one spot that one can say is the most attractive opportunity as a bellwether sort of criteria or bellwether decision. There are various things that make sense. Newer categories, newer products are getting created. InvITs have gotten created. REITs have gotten created in the last 4 or 5 years. They have brought in a different dimension to fixed income alternates in the whole equation. We have seen structured credit take off in a significant manner in the last, I would say, 4 or 5 years. Again, a category that was usually the bailiwick of institutional investors, especially foreign institutions. In the last 4 or 5 years, we have seen a significant amount of domestic HNI and as well as in some ways retail interest in that category as well. A lot of it is dependent on risk appetite. A lot of it is dependent on sophistication, experience of the investor. But the sheer variety and eclecticism in product mix today that is available is very, very significantly wide. And hence people can choose. And the level of interest, one of the things about Indian financial markets is that adaptability and adoption are both very high. Anytime a new category comes in, if it's relevant, if it's good, it gets embraced very quickly, irrespective of how complex or non-complex the product is. So I would say that the opportunities are significant, but you do require a significant amount of work, research, evaluation in order to pick a portfolio that is right for you.
Somnath, thank you as always for joining in, and thank you for joining us here at Bond Street.
Thank you.
Appreciate your time.
Thank you.
Thank you.
Welcome back. You're watching us here on Trading Hour. If you look at the trends coming in from the F&O space, the market's doing well. The Nifty Bank, both of them higher. The Midcap Index a step further than both the Nifty as well as the Nifty Bank, as you can see, up around 0.8%. The Midcap Index is doing a lot better. The market breadth for the last 3 trading sessions has been firmly in favor of advances. So you see the crisscross lines on your screen. For the last 3 trading sessions, there have been no crossing or crossing. Over 2,000 stocks in the green for about 800 in the red. And today, the baton has been passed to FMCG staples. So you have Colgate, HUL, Pidilite, all of them doing extremely well. Now, if you asked market experts earlier, where in the consumption space would you place your bets? They would earlier say discretionary and maybe staples, not because of growth, etc., and the valuations. But today that trade is coming undone. The discretionary stocks are actually seeing some money being pulled out. Now, whether that's news-based or just capital moving towards staples versus discretionary is something that we need to know now. But the jewelry stocks, we have Kalyan Jewelers as well as Titan, both of them under a wee bit of pressure in today's trading session. The 50-day moving average on the Nifty is proving to be a bit of resistance. So 24,423 is where we are watching that supply zone coming. Yesterday as well, the Nifty's resistance was over that 24,400 mark itself. So that's where a lot of the call writers are fairly positioned as well. But in terms of individual stocks, we are seeing some short covering in DMart as well as Dabur. So FMCG stocks also accelerating because of some of the short squeezes that we're seeing. Power stocks, they've been doing well earlier in the past as well. So Suzlon Energy is one which has been fairly well bid in today's trading session. RVNL is the other one which has seen a fair amount of long positions being added as well. So things are looking a lot better this week, week second in a row where we are going well. And the broader markets tell you that the mood is a lot more sane than what it was earlier. Hormas.
Oh, absolutely, they are, and show up a lot of these names in the small cap space. There are at least 7 or 8 names that are now trading with double-digit gains. MMTC has now extended its gains to 15%. Is the top gainer on the small cap index now, and that sharp spike just came in within the last 60 minutes or so on MMTC, and there you can see now 15% higher on that stock. VST Industries continuing to hold on to gains of 15%. Apex Frozen Foods is one name, 12% higher. As the shrimp feed names have done well today. Apex Frozen Foods is up 12%. Avanti Feeds is not too far behind. That too is now trading with gains of around 7% as we speak. So good going for the broader markets. At least the stock-specific activity is very robust today, even though the index has not yet managed to test yesterday's high, which was at 24,400. Jay Thakkar from ICICI Securities now joins in for a quick chart check. Jay, good morning. Thank you for joining in. We have now gone, 2,000 points, 2,000 plus points now from the recent close of 22,182. Where do we go now? Do we have enough legs to get to 24,500 first? Your call on the index and your specific stock recommendations as well for the morning.
Sure. Good morning to you, Almaz. And, our initial target was 24,000 report, which we had released on the 6th of April, wherein the index was somewhere around 22,800 levels. And we clearly indicated or pointed out a few reasons for the same. We expected, the India VIX to in fact fall. There was a clear divergence there. And now if you see, it has fallen by almost 35% now from the top. And if you look at the IVs as well, Hormas, for Nifty, last 30 days, it has, the IVP, that is the IV percentile, has now come back to 10. So it's one of the lowest levels, I would say, for the IVs. The IV is at 16, 17. It had gone up to 33. So it has corrected by almost 50%. Even if I look at for past 45 days since the war started, I mean, the IVP data has come down to 45, 50 levels, which is in the middle range, which clearly indicates that, the volatility has topped out. Another signal. Third is that, even if I look at the Bank Nifty IVs, which contributes quite a lot to the Nifty, has fallen from 38 to 20 now, so almost kind of 50% correction there. And a similar kind of data on the IV percentile as well. So as far as the bottom formation is concerned, very high probability. Now, after achieving our 24,000 target, what next we see on Nifty is 25,000, 25,200. The reason is that if you look at the mean of that is a 20 days mean of the Nifty, it's somewhere around 23,300. So we are not even expecting Nifty now to fall below the levels of 23,300 now, Homas. And the 3 sigma deviation from the same comes to around 25,200. So that's our short-term target for the Nifty going forward. There can be some consolidation after having, bounced by almost 2,000 points, as you rightly said. A short-term consolidation cannot be ruled out, but within that, we are expecting good sectoral rotation. So if you see, then most of the beaten down names or sectors have bounced back quite sharply. Pharma has just bounced back or recovered by 1%. It didn't even fall much by more than 1%. So now we expect some rally to be seen in pharma names. So one of the top pick would be Dr. Reddy's. 1223 is the current level. I think that it can reach towards the levels of 1,300 to 1,340 in the short to medium term. One can place a short-term stop loss of 1150 and go long on Dr. Reddy's. The second buy recommendation would be on ITC from the FMCG pack, wherein we are seeing a good move today, good short covering today. ITC is one of the stocks wherein we have good shorts and early indication of short covering. A short covering rally further can be expected, on ITC as well. One can target around the levels of 330, 345, placing a stop loss below 296, and one can go long on ITC as well. FMCG index so far has bounced back by 6% over months, but in the last war, Russia-Ukraine had a bounce back by 12%. So there's still much more room out there. And the final recommendation would be on Reliance. Reliance seems to be showing early signs of bottoming out now, trading around the levels of 1365, placing a stop loss below 1310. One can target 1430 to 1470 going forward. I think Reliance can also see a good short covering from here on, because of which Geo Finance trading at around 242 per month can also bounce back to 265 to 80. So one can go long on that also, since it has good portfolio of Reliance into it. One can place a stop loss around 225.
Take that point, Jay. In fact, Reliance, as we speak, 1365, if our director can pull up Reliance with the 20-day moving average, you would see that it's just crossed its 20-day moving average. 1364 is the 20-day moving average on Reliance. Reliance has actually moved to 1365. Staying around that would be extremely crucial, because for Reliance, the interesting part is we pointed out earlier as well that 20 and the 50-day moving averages are fairly close to each other. So as you can see, the 20-day moving average is the blue line. Reliance is fairly close to that. And we have the 50-day moving average, which is just under the 1400 mark. So between 1365 and 1400, extremely crucial zone for Reliance. We take a short break on that note. Thank you, Jay, for talking us through the indices and individual stocks. We talk about the hospitality sector. The stocks have been under pressure of late, but is the worst over? Our insight edge coming up on the other side of the short break. Stay tuned. Welcome back. You're watching us here on Trading Hour. The market's doing well. In fact, over the last week or so, sentiment seems to have improved as well. So let's take note of some of the sectors which were underperforming because of the uncertainty and weakness. And one of them that stands out is the hospitality space. And in our special Insight Edge segment, the question is the worst for hospitality behind us. If you look at some of the stock price movements, we've seen hotel stocks go through the roof earlier, but from their peak, Leela Hotels down 10%, Indian Hotels down 25%, Park Hotels down 30%, Sami 35%. If you look at some of the others as well, ITC Hotels down 37%, Lemon Tree, Royal Orchid down anywhere between 37 to 40% as well. The biggest reasons for decline, obviously, once they had run up ahead of the expectations were, then came the impact, the temporary impact of the West Asia crisis, the pace of average room rate growth actually normalizing, because we've seen the best of the cycle. Now, will that continue or not? Increasing supply and rising costs as well. Those are the reasons why the stocks did see a bit of a decline. And thereafter, obviously, a lot of the PE deals, major IPOs, a lot of the listings were done as well. So leaving very few triggers from the capital market standpoint as well. And then to add to all of this, softer foreign tourist arrivals. Foreign tourist arrivals in the country actually have been lower than pre-COVID levels as well. And they are an addition to the ARR. And finally, we have the stock market impact as well. The underperformance of the stock market, especially in the mid and small cap end of things, reduced the wealth effect, the decline that we saw from the highs in the markets in the month of March itself. Told you that maybe Street wasn't, fairly happy about spending at hotels. But thereafter, after this correction that has taken place, domestic tourism is resilient. Corporate travel and all the meetings, events, weddings, etc. have moved onshore as against offshore. And at the same time, we are seeing, a resilience in business as well. What is it that the analysts are expecting? They are expecting the revenue per available room to grow between 5 to 7% in the fourth quarter. That's a moderation that we saw from the 12 to 13% in the third quarter. And they have put out expectations. This is from Jefferies, where for Indian hotels, they expect revenue, EBITDA and PAT to grow between 12 to 13%. ITC hotels, they expect 19 to 22% growth in revenue, EBITDA and net profit. Chalet hotels, they expect a 4% RevPAR decline. And as a result of which, the revenue, EBITDA and net profit will grow anywhere between 2 to 7%. They've lowered on the back of all these factors their EBITDA estimates by around 2 to 8% across peers. And that has led to a 10 to 15% reduction in EV to EBITDA multiples as well. But all of these, estimates are in the price, because if you look at the stock price correction, as we had pointed out in the first plate, they've seen a 10 to 40% correction. So looking at the Jefferies note and their target price itself, GMR Airports, a 120 rupee target price, compare that to the current stock price, the upside is 30%. Indigo, again, a travel play, 5,500 rupees is their target price, and the current market price leaves you with a 19% upside there as well. These are 1 year forward upsides, obviously. Indian hotels, ITC hotels, Chalet hotels, even accounting for the reduction that we've seen in EBITDA and multiples, the stock price reduction has been a lot more, leaving upsides to the tune of 18 to 22%. So that's exactly the question that we are posing to our expert who's joining us here in the studio, Devendra Parulekar, who's the founder of Saffron Stays, joining us now. Devendra, the weakness that we saw in the sector because of the concerns that I just pointed out, do you think they're overdone right now, and maybe right now another tailwind of the hospitality industry is ahead of us?
I think the hospitality industry is, of course, witnessing the present predicament that we are in, the West Asia crisis, primarily affecting valuations. But I feel there is one very strong tailwind, which is the domestic tourism. You look, just yesterday they opened the Dehradun Expressway. The missing link is coming here. These are small but very, very powerful infrastructure signals. And all of these only build the resilience of the domestic tourism. And the domestic tourist is not going anywhere, right? Whether West Asia crisis is impacting flights to Europe, whether it's flights to US, I think all of that summer vacation holiday, which everybody would have otherwise gone to Europe, I think there's a big question mark on that travel, and all of them will come, and you'll find hotels in India finding very, very good occupancy. That's my clear, point of view.
Are you witnessing something similar? Yes.
So, in fact, just this quarter to last year's same quarter, we expect at least a 35% growth in business. And I think this is purely on the back of a lot of the developments that are happening and a robust infrastructure growth that is happening.
35% growth in business, how much of that is led by same store sales, and how much of that is led by you increasing your footprint?
So our footprint increased 25%. So the same, 10% is so 10% is a same store.
Right. Kind of the thing that I wanted to know about is at higher prices.
Yes.
The comparison moves away from India and goes to neighboring countries. So only up to a certain point, say if a hotel room was available for 5,000, 7,000, 8,000, 9,000, Once it crosses that 10,000 threshold, from a customer standpoint, then they start calculating. For 10,000 rupees plus, for $100, can I go to Sri Lanka? Can I go to Maldives? Can I go to, say, Dubai? Can I go to some other place, Vietnam for that matter? So the competition goes away from India and goes outside of India. And a large part of that has not to do with the hotel, but it has to do with the infrastructure around that.
In fact, just flight prices, right?
Exactly.
I mean, yeah, if flight prices are exorbitant, then the question is
that a headwind according to you?
Yeah, absolutely. I think somewhere, if a Goa flight ticket itself costs a bomb, then I will not even consider booking a hotel in Goa, and I will consider looking at the Southeast Asia as an option or Sri Lanka as an option. And of course, there are beyond infrastructure, it's also the soft element around perceived notions about women's safety. Perceived notions around non-availability of cabs, perceived notions about cleanliness. So these are softer aspects which probably I think we as a country need to get our act in place. And you will find, and I call it the bikini test.
Okay.
Because I feel that if a woman can be in a bikini and very comfortable in any place, women are going to vote for that destination. Whether they actually do it or not is another story. So safety, cleanliness, infrastructure, I think there are all other parameters that we need to get our act in place on.
You spoke about pricing. Have you faced any resistance in terms of pricing? Have you all increased prices over the last 12 months?
5% is the delta that we've had, but we've had good price increases in the last 3-4 years. But in the last 1 year, we've seen just a 5% increase in pricing, and we found headwinds immediately coming up there.
From a demand standpoint, it's resilient. We take that point entirely.
Domestic tourism.
Domestic tourism. Domestic tourism. Is there any place where you see a gap in the industry? Because from what we witness as customers, I can tell you that there are many destinations where you either have a 3,000 rupee room, which may not be, the best room for everyone to stay in, or thereafter you have a 15,000-16,000 plus room. It's this middle of the market where there is a fair amount of opportunity. Do you think, is there a size that you can put, and is there actual opportunity there, or is it just perceived by people like us?
I feel there's an opportunity between that 7,500 to 11,000, that particular gap.
How big is that market?
I don't have a quantitative term around that, but intuitively and anecdotally, I can tell you that anything that we put up in that inventory in that space just flies off the shelf. So there's a dearth of supply in that space. There's either great luxurious properties that are coming through, or there are a lot of budget accommodations that come through your way. But that space, that sweet spot for me is 7,500 to 11,000.
So if there's a next leg of growth that you have to look at in the hospitality industry, where would that come from? Premium?
Upper upscale and upscale. The premium, but upper upscale. That's the area that not necessarily luxury. Or not necessarily uber luxury.
Which of the companies, as per you and your
Everybody has a play there. Everyone has a play. Every company has a play there. I think even Indian Hotels has a play there.
Gingerization.
Yeah. Ginger is slightly less. So they call it the lean luxe.
Yes.
Right, and they've repositioned Ginger. So yeah.
Are you all looking to tap at that space as well, or increase your presence in that?
Yes, so upper upscale, we call it the signature category of our homes. We have an X series, which is the uber luxury. But the signature category for us, which is at 7,500 to 11,000, that ARR, this doesn't include your meals or anything else, but that ARR is our sweet spot for us.
All right, finally, before we let you go, we take a short break. Hand on heart, Devendra, is the worst behind. That's Absolutely. How we started, right? The stock prices have corrected.
Yeah.
If you were to put your money in any other place apart from your own business, would you buy hotel stocks after the correction?
No, I would do that.
You would do that?
I would do that.
Take that point. Thank you so much. You're putting your money where your mouth is. We take a short break, come back. We focus on the markets at large as well. Srinivas Rao Ravuri of Bajaj Life Insurance joins in to set up market fundamentals, the sectors that one should bet on.
Welcome back. The index now is heading towards the 24,300 mark. Still now technically at the near the highest point of the day, at least 24,280 is where it stands. NBCC has emerged as the highest bidder for a 1374 crore commercial tower at the Bharat Business Park. That's the flash at the bottom of your screen. So keep an eye out on NBCC. But continuing our conversation on the markets with Srinivas Rao Ravuri from Bajaj Life Insurance, who is now joining in. Mr. Ravuri, good morning. Thank you for taking time out. With the situation that the market has been right now over the last, say, 30 to 45 days, have you all made any tweaks to your portfolio? Have you made or have you put more money to work? And if so, where are or which are those areas where you've put more money to work?
Yeah, good morning, Harmos. Thanks for having me on this CNBC show. Yes, last 30 days have been tumultuous, to say the least. March end was a tough quarter. Markets were down 15%, then large cap index was down 15%. So we had interesting times, but I think this is not the first time when we had such interesting times. We've used this opportunity to reduce export to sectors, stocks that we are less comfortable, and added stocks that we used to like but were waiting for a better price opportunity. I think we got that, we used that. But let me also say, Harmos, I think if I see FY26, we started the year with a double-digit earnings growth, expectations 12 to 14%, but looks like we'll end with about 6-7% earnings growth. So this is on top of a weak 25 as well. So now we had 2 years of weak earnings growth, and it is only natural that even returns from overall equities have been very muted when earnings growth is weak. So I think we saw a sharp rebound in the last 10 days, but the impact of what we witnessed in the last 8 weeks is real. We are yet to see the impact of this translating into earnings, but we can see on ground things are not as good as they were a few weeks back. So we are waiting to see how this will unfold.
All right, you're waiting to see how this will unfold. But, basis what your estimation and reading of the market is, what are the sectors where still there is some sort of opportunity left when it comes to earnings and the valuation correction? Where is that window where, earnings haven't corrected as much, but the stocks have corrected a lot more?
So if I look at the sectors that we are positive now, I would say autos, private banks, telecom, pharma. I think these are the 4 sectors we are positive. So finally, I'm talking sectors, but we buy stocks. We are not buying sectors. Overall, I think more opportunities have emerged in the last few weeks. But I started with auto. Auto is a sector where clearly we saw correction, but at the same time, I think we will see numbers being cut in the coming months and weeks, whether it is due to demand destruction or due to challenges on the supply chain front.
Mr. Ravuri, a question that has been on the minds of everyone has been with the conversation surrounding the IT sector. We saw numbers from TCS, we saw numbers from Wipro yesterday. Those flattered to deceive, to say the least, even after the buyback announcement that the company made. But do you believe that, okay, now we've had a lower base in FY26, so FY27 would be a better year for a lot of these IT companies, or the fact that these AI concerns are actually posing to be a structural issue for them, and that these acquisitions that these companies are doing are too little too late?
Almost, we get returns from earnings growth and re-rating or de-rating of price to earnings. When it comes to IT sector, I think we are clearly in a phase where there are more headwinds. So I think the questions related to AI will remain for some more time. So to that extent, we would be concerned on IT sector. I think maybe after this fall, the downside is protected also because most of them are trading at close to 4% dividend yield. So I think that gives a cushion in terms of downside. But for stocks to go up, we need upside triggers. I think those are clearly missing in case of IT.
Right. What do you make of the consumption space right now? FMCG staples, all of them are doing extremely well. They've been under pressure, underperforming for about 18 to 24 months right now. Multiples have corrected. Earnings growth haven't come by. But, so far, because there is inflation, price growth returning, the street believes that maybe this time around revenue growth will come by as well for them. HUL up 5%, Nestle up 2.5%. Big names, bigger moves. We have Colgate up 7% as well. Where do you stand when it comes to your strategy on consumer staples?
So, Mangalam, we are negative on consumer staples. I'm saying this after what you said in terms of today's price moves. Because we are not looking at 1 quarter or 2 quarters. When we are investing into a company, we would have a 12 to 24 month view, not on a 1 quarter view. I'm also getting a sense that I think in the near term, so what has been the issue with FMCG names for now last 5 years? I think they've been very aggressive in taking price hikes. As a result, volumes have collapsed. And from there, we are seeing, I think, there is some momentum in volume and also little bit of a pricing. So as a result, short term, yes, looks like they're in a better placed. But if you are buying these companies at 40 times price to earning, and if the earnings are going to be, lower double digit, I don't think that is a great place to be in and to make money. So to that extent, I'm not so positive on consumer staples. Whereas when it comes to discretionary, consumer durables, etc., so they're also not cheap. But at the same time, we have comfort on higher growth visibility and better margins. So we are more positive on discretionary.
That's been the consensus so far. So obviously, we're not, holding you on to being a contrarian here, because that's exactly how, everyone's positioned. So, which is why, today's up move was slightly interesting in the sense that will the street also look at staples now after this underperformance or not? But, we hold you on to your view. Take a short break, come back, get you more markets. Thank you so much for joining in and giving us your view on the sectors and investment bets. We'll come back. On the other side, we will discuss a lot of other stocks which are moving around. Keep it with Trading Hour.
The highest point of the day now is the index back at 24,300. So 24,323 was the high that the index made just a few minutes back. The broader markets too doing well for themselves. The Nifty Bank is up around 230 points. And with that, we take your leave on this edition of Trading Hour from Mangalam and me. Thank you for watching. The team of Halftime Report is waiting on the other side to take the action forward.
Midcap sees some strength even as heavyweights hold steady ahead of the weekend. FMCG, industrials and healthcare gain while IT and consumer durables track.
Wipro sees organic degrowth in Q4 and no growth ahead. A 15,000 crore rupee buyback may have brought some cheer, but the decision of promoters with over 72% holding to participate significantly crimps the minority opportunity.
HDFC Life Insurance falls short of estimates on annual premium equivalent in Q4, while margins, though in line with estimates, are disappointing in light of peer performance. The stock slumps.
BSE Industries jumps on a smoking hot show with a near 9% volume and over 30% sales growth. Wadi Renewables powers up on more than doubling revenues even as margins shrink, while Colte Patil climbs on healthy sales growth in Q4.
Rupee outperforms EM currencies, rises 0.5% after RBI tells oil companies to make dollar purchases from only a couple of PSU banks. The Bullion Association also says gold import applications from private parties have been rejected since April 1 and are allowed only through MMTC and IIBX. Dealers say both steps are to prevent exaggerated sense of dollar demand.
Hello Hello and welcome to a halftime report live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batra and with me Sonal Bhutra as well as Vinny Motiwala. Well, it is turning out to be a day of no complaints for the markets. So we're back at the high point of the day currently for the Nifty at around 24,260. So hovering around those levels of around 24,300. For the mid-cap index, it is outperforming, so up around 0.7%. And if you look at it, that's really the story which is played out on a month-to-date basis for the Nifty as well as for the mid-caps. On a month-to-date basis, the Nifty is up around 8.7% and the mid-cap index is up over 13%. So good going for the markets, and we'll be ending the week in style, at least for the mid-caps, which will be up around 3% at current reckoning.
Okay, all right. And also it's a Friday, so happy Friday, guys. But, you know, Nifty is sharply coming off from the highs. We need to track that. It is below the 24,300 mark for now. And a lot of these stocks are from the Nifty pack, which are leading to the losses that we are seeing. A lot of it from the banking pack. So banking continues to be on our radar. Big numbers expected over the weekend as well. So look at something like Kotak Mahindra Bank that is coming off from the highs of the day. You do have Trent as well, which is off the highs, though the FMCG pack continues to do really well. So some of these stocks should be on your radar. The banking pack in particular leading to the losses that we're seeing from the highs of the day. But you know, it's all FMCG. A lot of it today on the back of earnings. We have VST. Then Colgate is up 5.5% higher. FMCG index in general doing really well.
Absolutely. Hi, afternoon, guys. But FMCG doing well, top sectoral gainer there for the Nifty FMCG. Then we have energy that's doing well in the trading session. IT, obviously, that's the one that's down and out. And for the week also, autos, that's actually the one that will maybe close in the red for the week. Energy, metals, realty, all of them for the week have done well. FMCG also has done well overall for the week, but most of the gains coming in today's trading session. But we have a very exciting lineup for you all on the show. And we'll first up start with our movers and shakers segment. We'll be putting the center stage on Wipro, Waaree Renewables, HDFC Life, VST Industries. Then we'll also speak with Gaurav Sood of Avendus Capital, who will join and talk to us about the Indian markets, geopolitical concerns that come in here. And in our Commodities Corner segment, Surendra Mehta of India Bullion and Jewelers Association will join on the gold price trajectory. Towards the end of the show, we will also have our Crypto Corner segment where Arjun Goswami of as well as will be in conversation with Manisha Gupta discussing cryptos. So stay tuned for that. And now it's time for our Movers and Shakers segment, where we track a whole host of stocks that are buzzing in a trade. And first up for that, we have Rima, who's here to take us through the numbers for Wipro, the guidance for Wipro as well, and anything in terms of commentary. Rima, over to you.
Thanks so much for that. So the problem with Wipro is that the growth has been very, very poor for the company. It's underperforming peers yet again. Even in Q4, the company's revenue growth was just 0.2% lower than consensus expectations. And this is despite the benefit coming in from the acquisition. The acquisition of Harman DTS contributed to the company's top line. If you strip that out, the organic revenue growth would have been negative. FY26 also marked the third consecutive year of a revenue degrowth. Last year, the company's top line declined by 1.6%. The Q1 guidance is also underwhelming, -2% to 0%. Again, this is despite the company seeing some benefit of two large deals which they recently won. They will come through in Q1, but yet the company is guiding for negative growth. They said it's on account of client-specific issues in America too. Some of the deal ramp-ups are taking time, though they said it's not on account of the macro. Margins for the company have been stable. In Q4, they came in at 17.3%, but the fear is that in the subsequent quarter, margins may further come down because of the wage hike impact. The company announced wages on 1st of March, so there was a 1-month impact in Q4, but the 2-month impact comes in Q1, which is why next quarter's margins could also be a bit headwinded. The silver lining is the the buyback announcement, 15,000 crore rupees, the company's largest buyback at a price of 250 rupees. But the street is a bit nervous about growth. And many of the deals, when they did that Olam deal and even prior to that, the street just gets the feeling that they're trying to get growth via making these acquisitions, striking these large deals. And even though these large deals, the company's been winning large deals, it's not really translating into revenue growth. Back to you.
Okay, all right, Rima. Thanks very much for that. So that's a Wipro top loser on the Nifty. But let's go across to Yash. He's going to tell us about HDFC Life and what the street doesn't like about the numbers. The stock is down around 3% odd. Yash, over to you.
Well, the top-line growth for HDFC Life has come in line with what the street was anticipating, which is on the weaker side, but that was largely in the price. What the street was watching out for is that would HDFC Life surprise when it comes to the quality of that growth and the margin front. That hasn't happened for the company in fourth quarter. The total AP grew just by about 1%, retail AP growing by about 0.5%. VNB and margin were the two matrices which the industry and the street was looking out for. VNB growth declined by about 9% in the fourth quarter on a year-on-year basis, though it is in line with what the street was anticipating. Margins came in at about 24% versus 26.5%, a fall of about 2.5%. That is what is hurting sentiments today, because the street thought, just like ICICI Prudential Life, HDFC Life could also go ahead and surprise positively on the margin and the quality of the growth side. That did not happen, and that clearly reflecting in the stock today.
Okay, take that point, Yash. Thank you so much for joining us. So that's about HDFC Life, but Vari Renewables, that's also on our radar. Vivek, how did the numbers look?
Well, optically, the numbers look very strong. Remember, Vari Renewable Technology is the company that we are discussing, and this particular company is a renewable energy EPC as well as an OMM player as far as the Vari Energy Group is concerned. Basically, does the EPC job as far as the solar panel setup is concerned. Now, when you're talking about the numbers and how Q4 panned out, revenues higher by almost 2.3 times, very strong, EBITDA higher by 64% on a year-on-year basis. However, much higher EPC subcontracting costs coming in at 871 crore versus 335 crore on a year-on-year basis impacted the margins quite significantly. So margins fell significantly, almost at 18.8% versus 26.5% on a year-on-year basis. Profitability higher by 65% on a much higher expanded base as far as operations were concerned. And on the back of that, you have seen a significant uptick as far as the price of the stock is concerned. Now, when you're looking at the order book is at 2.83 GW, which actually stands for the gigawatt peak. One important thing to note is that both on a year-on-year as well as on a sequential basis, there has been a moderation as far as the order book is concerned. However, in terms of opportunity, the management is quite positive. They're saying that the bidding pipeline is quite strong at over 36 gigawatt peaks. On the back of that, one of the top gainers today in the broader end of the markets.
Okay, thank you so much for that, Vivek. But let's also talk about VST Industries. That's also buzzing in trade. Mangalam is here to give us more details on this one. Mangalam, over to you.
It's a stellar set of numbers that have come in from VST Industries, and they are on account of three things. One, it's a favorable base. Remember, same time last year, the revenues actually contracted by about 7%. Secondly, there has been pre-buying in cigarettes ahead of the tax hike that came by effective from February 1. So obviously, a lot of the dealership stocking happened in January. And the third part, after that, these companies had taken a price hike. So on a low base, higher prices and pre-buying, all these numbers on the top line look extremely strong. The second part is that same time last year, leaf tobacco prices were on an inflationary trend, and they too have come off the highs, and as a result of which we've seen the bottom line expand a lot more as well. Cigarette volume growth 8.6% is what the company has reported, revenue growth at 30%. Additional depreciation of 48 crores is recognized. That's a non-cash expense. Despite that, we've seen a bigger jump that we've seen in the profitability. EBITDA obviously not impacted by depreciation. The key is to watch whether sustainability of these volumes stand by post this tax increase that has come as well. So revenue growth of 31% is what the company has reported, 457 crores. EBITDA jump of 200% from almost 69 crores to about 208 crores, which means that the margins have jumped from 20% to 45.5%, and the net profit has doubled. So from 50 crores, it's gone all the way up to over 116 crores, and this despite depreciation increase from 12 crores to about 68 crores for all the reasons that I just mentioned. So stocks surging around 15% right now higher, and along with it, it's also taken the prospects of Godfrey Phillips and ITC higher because of the very three reasons where there would be pre-buying, so there could be some sort of volume growth. Revenue growth would come by as these companies have taken price hikes as well, and lower tobacco prices would mean that margins would expand for all these players too.
Okay, all right, Mangalam, thanks very much for that. So that is the word coming in on VST Industries. But remember that while it surged today, it is still a far cry, around 20% away from its 52-week high of around 350 odd rupees. But let's go across to Vivek now. He's going to take us through all of the stocks that are moving around in trade. Vivek, over to you.
Well, thank you so much for that. It's a buzzing screen, advances ahead of declines, especially in the broad end of the markets. A lot of stocks good, higher on significant volume as well. When you're looking at the important stocks that we're tracking today, MMTC, that particular stock surging higher. Sources have indicated to CNBC TV18 that all gold import applications have been rejected except those that are happening on the MMTC portal. The other set of stocks doing quite well is the entire railway team. They've moved up higher significantly throughout this particular week, and today the trend continues. So names like RVNL, names like Railtel, all of these stocks moving higher in the session today. Waaree Renewable, we just spoke about it, significantly higher. The entire metal pack, especially the iron ore names like NMDC, Jindal Steel, Lloyd Metal, APL, Apollo Tubes, all of these stocks high anywhere between 2 to 5%. And Gujarat Gas, one of the top mid-cap gainers today, a Nomura upgrade too coming in for this particular name. On the other hand, quite a few laggards. The entire jewelry pack, especially names like Kalyan as well as Titan, seeing quite a bit of selling pressure. MCX, this is one particular stock from the intraday high, one of the top laggards as far as the F&O space is concerned, below the 2800 mark. Wipro again, as well as they're looking at some of the other names. Not too many laggards in the session today. A name like Afcons Inscra is another one of the top mid-cap laggards. But apart from that, not too many laggards in the session today.
Okay, all right, take that point. Thank you so much for joining us with that list, Vivek. So that's a lowdown on all the stocks that are buzzing in trade. Kolte Patel also, of course, on the back of its quarter four update. We'll slip into a short break. When we come back, we'll connect with Gaurav Sood of Aventus Capital to talk about Indian market, the geopolitical concerns that we've been seeing, and the outlook going forward. Welcome back. You're still tuned into Halftime Report. Let's get in Gaurav Sood, Managing Director and Head Equity Capital Markets at Aventus Capital, to understand the market outlook and some of the sectors they would be bullish or bearish on. Gaurav, good afternoon. Thank you so much for joining in. Well, there's so much that has happened in the past month. Do you think most of it has been priced into the equity markets and other asset classes as well? And do you is the assessment now that there could be some buying opportunities emerging in Indian markets, fundamentally and from a valuation perspective?
Sure. First of all, thanks for having me on the show. I agree with you. A lot of stuff has happened in the last 35, 40 days, and market has been in a little bit of a tailspin. However, we are starting to see green shoots in the market, both in terms of primary market activity, where we've seen selective transactions. More importantly, the secondary market valuations, most people believe, are coming in a zone where equities are beginning to look attractive. And we do think that that will result in buying opportunities for people who are cash surplus and have cash to deploy. So this is obviously a volatile market, and every week, every day is different. But overall and directionally, we are hearing from investors that they do see interesting opportunities in the equity side.
Gaurav, hi, welcome to the show. Well, what are those interesting opportunities? Can you narrow down, share some sectoral ideas that you might have, which would probably give some good returns? And what are the returns that you're estimating, say, maybe by the end of this year?
I think it's not from a stock specific. As investment banking, we don't comment on specific stocks, but I think directionally we see a lot of primary market activity in healthcare, especially both multi-speciality and single speciality, where a lot of IPOs are in the offing. These are resilient businesses and defensive businesses with high ROC, high growth, and still sort of reasonably underpenetrated businesses which are gaining scale, and from probably tier 1 cities in the country becoming a pan-India business opportunities. So healthcare, we think, will be very relevant for both private investors and institutional investors. Another space we are quite positive is new age tech, where strong, mature businesses who are profitable or near profitability will continue to find resonance and acceptance in public market. So that's a sector of interest, and we believe there will be a lot of institutional interest in this sector once a little bit of this volatility subsides. Another sector we believe we think investors will have interest is manufacturing, especially value-added manufacturing. It could be EMS, autocoms. That's another space we are seeing a lot of investor interest, both on private side, where we are seeing private equities invest in sort of large check sizes in some of these companies who will get scaled up eventually to come to the public market. So these are some of the sectors we think a lot of capital is chasing. And as India sort of goes through this global volatility, some of these sectors will emerge even stronger than they have been probably in the last couple of years.
Hi, absolutely, Gaurav. Hi, this is Vinny joining in the conversation as well. One point that I do want to highlight is FIIs. They're not coming back, no matter what you say. They're waiting out for maybe earnings growth and everything to sort out on the India front. DII is supporting in terms of the move here. But is this sustainable for us as a country or India to grow without FIIs coming in? And how much of this DII, the move that we see or flows coming in is sustainable also now?
Yeah. So, FIIs have been sellers in India for 3 to 4 years now and continuous selling. March, of course, was an exceptional high selling, but otherwise, directionally, you would see $1 billion to 10,000 crore worth of FII selling monthly onward. So even though the secondary market has been, at least till end of 24, early 25, secondary market was giving strong returns. So one thing is clear, Indian markets, both on a secondary market side or primary market side, not dependent on FIIs. Of course, when FIIs are also buying, that is probably the best risk on market. And you will see a lot of activity in terms of transactions and issuers getting the right pricing and valuations. So of course, FIIs buying helps, especially we see FIIs coming into large transactions. If one data point which is interesting is that last year in primary market, FIIs were actually buyers to the tune of $5.5 billion. And that you would have mostly seen in large IPOs and large secondary sell downs and fundraisers. So it's not like FIIs are completely staying away. In primary market, we still see interest for larger transactions. But otherwise, of course, I agree with you. This is a market that's been held up by domestics. Fundamentally, we don't see any reason that this domestic inflow should slow down. In fact, we were just looking at some math. It's about 30,000 crore that comes into from SIPs itself every month and 1,000 crores a day. So that is not abating. That's not slowing down. Even in March, the number was higher or probably in line with how it has been growing. So we don't see this domestic inflow slowing down anytime soon. And FI is not that important, but at some point of time, once India starts looking more attractive from a valuation perspective, some of this FX related concerns sort of settle down and volatility is slightly more I would say more in the acceptable zone comes down. We do think FIs will also come back probably second half of the year, which generally is always stronger in India than probably the first 4-5 months.
Rupee has been an issue for FIIs amongst other things, which has recovered today at least. Gaurav, your take on the other asset classes that we don't talk about so much, REITs and InvITs. Recently, we did have SEBI pushing a lot tax changes. Then we had them categorizing it as equity for mutual fund investments, though there's not much investments that goes on there. I think 1% of the overall mutual fund AUM as well. Are you seeing a lot of deal activity with InvITs and REITs now, considering that there has been some volatility in equity markets otherwise?
REITs and InvITs, I think, is a space that is still just scratching the surface. As a house, we sort of over-indexed on this whole sort of space in the last 18 to 24 months. And we are seeing that the pool of investors that sort of is looking at the whole space is just significantly growing. As you rightly mentioned, this equity classification for mutual funds has significantly increased the pool for the REITs side. But we are seeing a lot of family money, family wealth, or private family office money being channelized in InvITs and REITs itself. So this is a space which is seeing a lot of investor interest. This is right now more dominant by domestic investors for obvious reasons, because for the kind of returns which are there, probably for the FIs, with the whole FX, that the way the FX is panning out, maybe not the most interesting right now, even though selectively we've seen FIs also come in this product. But this is a product more dominant by domestic asset managers, insurance, and wealth. And this is just increasing. So as a house, we are very positive on the space. And we believe that this ecosystem will continue to grow. In fact, our assessment is between REITs and InvITs, this year itself, there should be about 30 to 40,000 crore worth of capital market activity, and this is a conservative estimate. So this is a space that will just sort of, and it is a little bit of a hedge to primary market, but at the same time complementary to the IPO market. So unless interest rates completely shoot up, this is a space that will continue to see significant interest from institutional and HNI investors.
All right, Gaurav, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the view coming in from our vendors. We need to take a short break with the news that we have the Midcap Index, which is now up around 0.9%. So good going for the broader markets. Nifty is also picking up pace at up around 90 odd points. We'll take a short break, a lot more in terms of specific stocks once we're back. Stay tuned.
Welcome back to Halftime Report on CNBC TV 18. As of now, the Nifty is still at 24,282.90 level, still below 24,300, up 0.4% in the trade. But let's move on and put the spotlight on Bharat Wire Ropes, and that's in focus today. Nigel is actually joining us now to tell us what is the reason behind this up move. Nigel.
Well, Vinny, Bharat Wire Ropes, that's up close to around 8% odd, and it's moving on very, very large volumes. Remember the stock, if I look at it in the last 1 year, it's up between 12 to around 13% or thereabouts post this big move. However, if you look at it from the peak that we saw in 2024, the stock is actually half of what it was at that point of time. Remember, the street got excited when the promoters went ahead. They marginally increased stake in 2024. And that's why, in fact, we did see that move. Additionally, in October 2025, actually, the Lloyd's Metal promoter, they bought the compulsory convertible preference shares from the banks in the company. And the probable reason why the Lloyd bought these CCPs is because Bharat Wire is a potential client for them with their capacities coming on stream. Remember, the company has an integrated wire rope plant facility with a manufacturing capacity of close to 72,000 tons. And because of its close proximity to the ports, well, it allows easy access for exports, and exports contribute more than 70% of its entire revenue mix. So with the geopolitical stress easing out, there's a possibility that their exports could ramp up as well, which could have got hit in the past 1 month or so. With regard to the financials, well, the EBITDA has been range-bound, 130 to around 160 crores or thereabouts, while the debt profile has improved over the last few years. The company is now almost debt-free as the debt number has come down, though the cash conversion days have spiked up actually, and that primarily could be because of the high proportion of exports. Valuations not too cheap, not too expensive as well on the current numbers. If you look at it on EV upon EBITDA, trades at roughly around 10 times or thereabouts. And if you look at it on a PE basis, it's around 17 times for a company that's doing ROEs of more than 20%. Besides any material disclosures with regard to the shareholding pattern, which we'll wait for, and since the debt restructuring has already been completed, well, the street now will be focusing on debottlenecking, which they've been talking about in their presentations, and also ramping up capacity utilization levels, which I understand is around 65 to around 70%. So volumes very, very high. We'll wait for any disclosures on the exchanges, but for the time being, we just thought we'll put together the fundamentals for you. Back to you.
Okay, take that point. Explains the move there. 15% higher on this one. Thank you, Nigel, for joining us with all those details on Bansal Wires. But let's get to our special What's Trending segment. We are tracking bank earnings, a lot of them over the weekend. On the earnings front, all eyes will be on ICICI Bank and HDFC Bank, with both lenders set to report numbers tomorrow. But before that, let's go across to Ekta. Few stats in terms of valuations. There's a lot that you have worked on.
Well, yes. If you look at it, HDFC Bank has been a rank underperformer. In the past 1 year, it's down around 16% as compared to ICICI Bank, which is down around 5% and as compared to the Bank Nifty, which is up around 3.5%. That's on HDFC Bank in terms of the business update, but this is in terms of the performance on a stock basis. Year-to-date basis, if you look at it, ICICI Bank is just about lower by around 0.4%. HDFC Bank has been an underperformer year-to-date. It's down around 20-odd%, and the Bank Nifty is down around 5.7%. Month-to-date, if you look at it, interestingly, all three of both the stocks as well as the Bank Nifty have seen a good performance. So ICICI Bank is up around 11-odd%. We have HDFC Bank, which is up around 9.3%, and the Bank Nifty, which is up around 11.6%. This is on a month-to-date basis in the month of April. Now, valuation-wise, how exactly does it stack up? ICICI Bank is trading at around 2.6 times its FY27 price to book value. Compare this to its peak, which was at around 2.9 times, and HDFC Bank, which is at around 2.2 times, so a significant discount as compared to even ICICI Bank and as compared to its peak valuation the past 1 year, which stood at around 2.8 times. What to watch out for in terms of the earnings? ICICI Bank loan growth, which was up around 12-odd% in Q3 and 3% on a Q-on-Q basis, and HDFC Bank would be commentary, obviously, around the chairman's resignation and details with regards to that would be top of mind. So if you look at it, there is an underperformance which has taken place for HDFC Bank as compared to ICICI Bank. But remember that we do have other companies or banks such as Yes Bank, which will be releasing numbers on the weekend as well. So a lot to watch out for in terms of a Monday reaction. But Ananya now joins in. She has a preview on HDFC Bank. She's here with more.
Q4 are expected to be steady on operations, but the main focus will be on governance and management commentary. Now, previously they had come out with their business update, and we can see that the growth remains healthy, with advances growing around 12% year-on-year and 4% sequentially, while deposits remain strong at 14% year-on-year and nearly 9% quarter-on-quarter. CASA ratio has moderated to 34% on year-on-year basis. Now, coming to the earnings side, the street expects that this is a stable quarter and not a big surprise. Now, net interest income and pre-provision profit are expected to grow around 3% on Q-on-Q basis and 5% on year-on-year basis, while PAT is seen up 2% sequentially, but largely flat year-on-year. Now, the big focus will be on the governance. After chairman's resignation citing issues regarding values and ethics, the bank has clarified that there are no material, operational or regulatory issues going on, and RBI has also mentioned the same, that they did not find any material concerns with the company. However, the lack of clarity on what triggered the resignation is weighing on sentiment. So this will be the key monitorable for the stock going forward.
Okay, surely. We'll watch out for that. And Ananya, thank you so much for joining in and explaining us what we should keep an eye out on from HDFC Bank's numbers tomorrow. But on that note, we're going to slip into a very short break. On the other side, Manisha Gupta will join in with Surendra Mehta of India Bulls Jewelers, Bullion and Jewelers. Stay tuned in for that conversation.
Welcome back. Well, for the Nifty, we're up around 70 odd points. We have the Midcap Index, which is up around 0.8% at this point in time. We have a lot of stocks which are in focus in today's trading session, and we've been covering them on account of numbers. So, for example, we have the entire FMCG space, which is firing on all cylinders. HUL, which is up around 5 odd %. We have Colgate, which is up around 6 odd %. Nestle, which is up around 2.6% at this point. So, all of these stocks which are doing extremely well in today's trading session. Month to date as well, all of these stocks have rallied. So Nestle is up around almost 10 odd % along with HUL on a month to date basis. Not doing too badly today is also Apollo Hospitals. Remember, vendors just spoke about healthcare as one of the themes that they're watching. So Apollo Hospitals is up around 2% at this point. It's gained around 9% this year. So good going for Apollo Hospitals. Not so much for a couple of these earning reactions. So Wipro is your top loser on the Nifty. So that stock is down around 3%. HDFC Life is down around 2.7%. And Sun Pharma, that one is a bit subdued, has been even for this entire month, possibly on fears of that large acquisition that they might be contemplating. Sun Pharma is down around 5%. But let's go across to Manisha. She's tracking the commodity space. Manisha, over to you.
Thank you so much for that. And I have a guest along with me, Surendra Mehta, is Secretary, India Bullion and Jewelers Association. Mr. Mehta, hi, thank you so much for joining in. And even before we start talking about Akshaya Tritiya, which is this weekend, what the markets really are looking at, the import of gold, which seems to have hit a bump really. We do understand that the doré has been not being imported for the last 3 months, but from 1st of April, the kind of gold import decline that we have seen, how have you seen that? What really are the reasons and implications?
Manisha, we import gold through the banks, and the banks have to, the DGFT has to clarify whether bank can import gold after 1st April 2026, because on a year-to-year basis, they issue a notification. Now, what happens because of this, since the DGFT has not given a clarification, the ICE gate through which the gold are imported, it is showing a payment of GST at the rate of 3% to the banks, which is actually exempt. And hence, it's a technical problem relating to ICE gate, for which the DGFT has to issue a notification or a finance ministry has to give a clarity. Till that time they give a clarity, the banks would not be in a position to import gold, because prior to 31st March 2026, banks were permitted to import gold without payment of GST on the import port.
So, Mr. Mehta, what you're saying is this is a decision that would come in from Finance Ministry, and the 3% GST really is a concern. The imports have not been stopped. It is the DGFT clarification that the street is waiting for.
Well, you can say this, but virtually the imports have stopped because of this, because the banks would not be in a position to pay GST. And why they should pay? Because there is a clarity from GST department that they need not pay GST at the import point. The other problem is the gold doré which were being imported by the gold refiners in India. The DGFT is not giving permission to renew the old license or issue the fresh license for import of doré. Now, what it means that the refiners which have the old license can only import to the extent of quantity which is mentioned in the old license. So the license are not getting renewed, nor a new license are being issued almost since last 90 days. But on a selective basis, they have issued one license to a company where government is a minor shareholder. So that is the case. And this is a very serious matter, because there are more than 50 refiners in India who have been importing gold doré. This could result in closing down of all the refinery, could result in a lot of unemployment in our sector. And these licenses are neither renewed nor new fresh licenses are issued without assigning any reason. At least the DGFT needs to give a reason why they are rejecting the license.
So, Mr. Mehta, it does look like a bit of a concern, because TRQ is not working, doré imports are not coming, and now because of the GST clarification not having come in from DGFT, that import seems to have also getting stuck. And as you mentioned, the government, let's take names here, then MMTC and IIBX perhaps are the only two agencies which are able to import gold. Do you see a mechanism here really? Because this is just, I'm just talking this off my head then. Are we looking at a gold monetization scheme coming in a good new avatar, is what the street believes all of this perhaps could be leading to?
No, Manisha, I think you left out one more thing. On 2nd April or 1st April, I don't remember the exact date, the DGFT has also stopped all jewelry import, and they have transferred all jewelry imports from free category to restricted category. So it is not only TRQ quota which is stuck, it is also gold import which is stuck, the doré import which is stuck, and jewelry import also moved to restricted item. The only
so then it is. So, Mr. Mehta, is it safe to say that gold monetization scheme is coming?
No, I don't think so. I don't think that gold monetization that this is the way can be the gold monetization can be done. Restricting import will definitely create shortage in the Indian market.
So Mr. Mehta, Mr. Mehta, would you say that the DGFT is just delayed in giving all of these clarifications? Is how we are to read this?
See, actually, they should give the reason for rejecting the license. Why they are not giving the reason? They are just rejecting the license without.
So, Mr. Mehta, all these delays, restrictions, how are you reading it? What is it that you see it as?
In my personal opinion, I see the falling rupee can be the reason they are trying to delay this. That can be only one of the reason, because in future this is going to, if this creates shortage in the Indian market, like almost on the in the month of March there was a $70 discount in the gold in the Indian market. Today there is virtually no discount. So the shortage is about to come after the Akshaya Tritiya is over. There can be shortage in Indian market if this relief is not given immediately.
Well, those are some concerns there. Akshaya Tritiya perhaps may not be impacted so much, but going forward, as the demand, as we see festivals and wedding season, and then a run-up to Dhanteras, there could be an issue if there's no clarification coming in immediately into the markets. Mr. Mehta, as always, thank you so much for joining in and making some analysis on that. With that, we'll go for a short break, come back, and we will be connecting with Arjun Goswami on cryptocurrencies.
CNBC TV 18 presents Crypto Corner, powered by Binance.
Welcome back. Joining us on Crypto Corner is Arjun Goswami of Cyril Amarchand Mangaldas. Mr. Goswami, thank you so much for joining in. And your first sense really on crypto as an asset class, which seems to be behaving like a risk-on asset. We've seen most of the other asset classes gaining right now, and so has been the case with crypto.
Manisha ji, thank you, and great to see you again. I think, there may be three factors which are leading the kind of crypto surge in the face of the West Asia conflict. One is that crypto is seen as a bit of a hedge because it's decentralized, so relative to government risk. Secondly, if we look at remittance flows, that's 135 billion fiscal year 24-25 for the 10 million Indians or so in the Indian diaspora. Whilst SWIFT network works and it has increased some of its efficiencies, still there are efficiency gains, and crypto is playing in that cross-border remittance space. And lastly, I think for people who are in the exports business and imports business, again, it can act as a hedge against sanctions, etc. So those are probably factors that are leading this.
Mr. Goswami, what we have seen in last 12 or 18 months do very well within crypto as a segment is one, stable coins, and second, the real world asset tokenization.
Correct. Both. And stable coins are maybe a slightly different category relative to real world assets. We're seeing a lot of sort of market development of real world assets, tokenized gold, silver, fixed income securities, real estate, fractionalized property, both residential and commercial, artwork, etc. So all of this is driving that growth. Stable coins, of course, there's been resistance by policymakers for various reasons. So that's maybe in a slightly different category.
Mr. Goswami, when it comes to India, and every time Chain Analysis comes with a report, India is shown as a country which is the highest growth in sense of adoption in crypto, even with 1% TDS and 30% taxes.
Correct. You're right, Manisha ji. I mean, notwithstanding that 30% and 1% TDS, it's still growing with close to 100 million Indian users. And I mean, I think that the long-term sort of direction that this is going to go is going to have to be some direction of regulatory clarification. The movement that's taking place across the G20 is in that direction. The signals that are coming from the US are clearly in that direction, both through the Genius Act on stablecoins, and if the Clarity Act passes this year, then for the broader market, there are issues there in the battle on yields where there's pushback from banks because of their concern for savings accounts. But if it goes through, then that will be another huge step forward. And the way the courts have been signaling, they have repeatedly been saying that in 2020 they rejected the RBI attempt to prohibit. The kind of Madras High Court decision that's come through last year recognized it as property. So I think that is the directional road for us.
Clearly. Mr. Goswami, even as there's just so much happening in global markets, there is regulations in place, even as evolving, forever evolving, let's say.
Yeah.
But for the Indian markets, would you say that we are yet to take the first step there?
Yeah, so I think if we are to look forward at where we're going to go on our regulatory journey, we can maybe take some inspiration from the multi-regulatory models that are developing. I mean, it doesn't have to be a single new regulator. What we're seeing in the Clarity Act is that, in other words, they're splitting the jurisdiction between the Securities Exchange Commission on the one side and the Commodities Future Trading Commission on the other. And that is by design, because they think that one side is better for investment contracts, it's better for the primary market. CFTC is better for spot markets, it's better for sort of more mature assets and for dealing with intermediaries. So, for us, we have to work this out between what the remit of the RBI would be on the payment side, what the remit of the SEBI would be for securities, what the remit, for example, would be for the Ministry of Electronics and Information Technology on cybersecurity and so on. And of course, there'll continue to have to be space for the financial intelligence unit, etc. So it's not an easy task, but I think we're a sophisticated country in terms of regulatory governance. So I remain optimistic that is a journey that we will eventually travel.
So are we. Mr. Goswami, as always, thank you so much for joining in and making sense of what really is happening within crypto as a space. And with that, we'll go for a short break. We'll get you more on markets and stock specifics on the other side.
CNBC TV 18 presents Crypto Corner, powered by Binance.
Welcome back to Halftime Report on CNBC TV 18. As of now, the Nifty has been steady in the last 1 hour at 24,250 levels, above that mark, not going to the 24,300 level where we just started the show with. But broader end of the market continues to do well in the trading session today. Let's look at some of the names that in the last hour have seen a bit of an uptick. Angel One has seen a further more uptick in the trading session, 5% up just in the last 1 hour. We have Jindal Saw. That's also seen a sharp uptick, especially in the last 30 odd minutes. Vedant Fashions, among other names, also seeing an up move in trade. Apart from that, you had the news flow that came in also of Apollo Microsystems, where they got some approval or a manufacturing license from the government of India. We did see a spike up for that stock as well. And you have Bajaj Consumers on your screen. You're seeing the numbers that have come in for the company. Profits of the company at 63 crores versus 31 crores. So almost doubling on that front. We're seeing the revenue of the company seeing an uptick of 31%, and the stock has seen a spike up in the trading session as of now. But more on Bajaj Consumers and more stock specific and market action after the break as well, because Halftime Report is going to take your leave and we'll have Business Lunch to take that action forward.
Midcap see some strength even as heavyweights hold steady ahead of the weekend. FMCG, industrials and healthcare gain while IT and consumer durables drag.
Wipro sees organic degrowth in the fourth quarter and no growth ahead. A 15,000 crore buyback may have bought some cheer, but the decision of promoters with over 72% holding to participate significantly crimps the minority opportunity.
HDFC Life Insurance falls short of estimates on annual premium equivalent in Q4, while margins, though in line with estimates, are disappointing in light of peer performance. The stock slumps.
VST Industries has jumped on a smoking hot show with near 9% volume growth and over 30% sales growth. Vari Renewables powers up on more than doubling of its revenues even as margins shrink, while Kolte Patil also climbs after a healthy business update for the fourth quarter.
The rupee outperforms EM currencies, rises 0.5% after RBI tells oil companies to make dollar purchases from only a couple of PSU banks. The Bullion Association also says gold import applications from private parties have been rejected since April 1st and are allowed only through MMTC and IIBX. Dealers say both steps are to prevent exaggerated sense of dollar demand. Hello and welcome to Business Lunch, live from the CNBC TV 18 Motilal Oswal studio. I'm Arundhati Ramnan, and with me as always is Hormaz Patakia. Good afternoon, Hormaz. It is the last day of the trading week, and you know the market's looking good right now. They're in the green, and the mid-cap outperformance continues, right?
It does, and the market is now moved into a bit of a snooze mode. And can't blame them, it's Friday, so you can't really say much. But yeah, 80 points higher on the index. It's traded in this very narrow 200-odd point range all through the day now, has the Nifty. It has not managed to cross yesterday's high, that's the first thing. But of course, after you've seen the kind of recovery that we have had from the recent close, it's only par for the course that you see some consolidation, some profit booking. We are going into the weekend as well, and we are going into a very important weekend, not just for the monitorables on the global front, but two of India's largest lenders are going to be reporting results tomorrow, and that is HDFC Bank and ICICI Bank. So, of course, that also keeps some bit of caution on the street. Pull up the Nifty Bank. The Nifty Bank was the reason why the index moved lower yesterday from the intraday highs, and the Nifty Bank has been the one that has not managed to cross that 56,500 to 56,800 band. It's managed to face resistances on multiple fronts on that occasion. And today, although it's at the highest point of the day, it's still below those levels. So as of now, we are in the green. We are most likely to end the week on a positive note as well. But tomorrow's day is going to be the most important one as to how do we react on Monday.
Absolutely. So we'll have to wait and watch how those banks' earnings come out, and then we'll see how the markets take it on Monday. But if we take a look at the sectors that are doing well today, we've got FMCG stocks which are leading the up move. We saw HUL soaring over 4% as we speak, and that was on account of price hikes that it took across its soap portfolio. Colgate up nearly 6% and ITC also up 1.3%. Oil and gas stocks also doing well. Adani Total Gas up 3%. Gujarat Gas is up nearly 8% as we speak. But on the downside, we've got those IT names, HCL Tech, Wipro, Persistent, all of them down between 1 and 3% in trade today. But first up, the Indian rupee is the best performing currency today, and indeed this month, the rupee is up over 0.3% to 92.85 levels, even as most EM currencies like the won, rupiah, Thai baht and Philippine peso are lower. Lata Venkatesh is here with what's working for the rupee. Lata?
Well, it has been a very strong showing of the currency. At one point, it was up 0.5% going towards 92.60 per dollar. That's, almost a 1 month high for the currency. In fact, if you take a 1 month performance, the rupee is the best performing currency with a 3% gain compared to most other EM currencies, which are down 2 to 3% versus the dollar. The latest positive report for the working in favor of the rupee is that the Reserve Bank has told oil companies to stick to a line of credit from 1 or 2 PSU banks. The other reason or similar reason is that all gold imports have been stopped from April 1, we are told, by the IBJA, the Indian Bullion and Jewelry Association, and only MMTC and IIBX are allowed. MMTC normally buys on behalf of other companies. It's a canalizing agency. So probably gold imports are getting routed. The joint reason of both this oil companies and gold imports getting canalized through a few banking routes is probably to ensure that there is no exaggerated demand for dollars from both these major importers. When multiple oil companies seek to buy dollars, they go to many banks and ask for quotes. It gives an exaggerated impression. Probably a similar experiment is also being made with respect to gold. We don't know, but that's how the forex market is reading it, that these are, ways in which the RBI is trying to restrict the demand for the sense of demand for dollars. The other reason, of course, is that FPIs have become dollar providers for the last 2 days, albeit in very small quantities. They are buying equities and therefore they're selling dollars, taking the rupees and buying the equities, which has been very different from the experience of the past several weeks where they have been huge dollar buyers. The old pressure on the banks remain. They can't have open positions over 100 million in the onshore market. So all this has led to the rupee being very strong. But let's not forget that the pressures remain. Why are the EM currencies in the red? The same factor applies to the rupee as well. The fundamental reason being that whatever the peace talks go, oil is still nudging $100. And, for actual buyers, it's even more when you go for a Dubai crude or any other variety, Middle Eastern variety. So the pressure remains on the currency, but there are these other steps the Reserve Bank and the government are taking to ensure that the demand is not exaggerated.
Thank you for that update there. 92.80 now on the currency, seeing some bit of appreciation after those record lows that we saw at the heights of the Iran war. Now, the other news that the markets are reacting to is the ongoing tensions in West Asia. US President Donald Trump has announced a 10-day ceasefire in Lebanon. In a post on Truth Social, he said that both countries have agreed to achieve peace between themselves. In a later post, Trump also called on the Lebanese president and the Israeli prime minister for talks at the White House. Now, the US president also voiced confidence in the Iran deal, saying that Iran has agreed to hand over its enriched uranium supply and that the two sides are close to peace. He later added that he would go to Islamabad himself if the deal to end the war was to be signed. CNBC's Dan Murphy is now joining in with the details. Dan, how does this ceasefire between Israel and Lebanon help the United States in the broader peace talks with Iran?
Ceasefire between Israel and Lebanon took effect at 1 o'clock this morning, Gulf time. It is significant. It's the first halt in major fighting between the two sides in nearly 7 weeks. President Trump has now invited Israel's Prime Minister Benjamin Netanyahu and the Lebanese President Joseph Aoun to the White House for direct peace talks. Netanyahu has accepted, Aoun has not yet committed, and Lebanon's army has already reported Israeli acts of aggression in violation of the truce earlier today. Looking ahead, though, the obstacles here are very significant. Of course, Hezbollah, which has fought Israel in Lebanon for decades and remains one of the country's most influential military and political forces, is not at the table here. And in fact, Hezbollah said that any ceasefire must cover all of Lebanon and cannot grant Israel freedom of movement inside the country. Analysts have told me today that the Lebanese government, which of course has taken steps in recent months to distance itself from Hezbollah, actually lacks the military capacity to enforce that position. And history also offers us a pretty sobering precedent here as well, because we saw peace efforts in 1983, 1993 and 2024 all collapse, in part because Hezbollah was never brought in. So we're watching and waiting to see exactly what unfolds inside that country over the next 10 days, and of course how the political developments continue to unfold. And then to your question on the broader Iran front, well, President Trump claimed yesterday that Tehran had agreed to surrender its nuclear material and reopen the Strait of Hormuz. Iran has not confirmed either concession, and that of course remains the most contentious issue in any negotiation. We're also hearing more and more about what could be a second round of US-Iran talks in Pakistan now being discussed for what could be next weekend. And of course, this also ultimately directly impacts what's happening inside the Strait of Hormuz as well, which is most critical for market investors here. On the Strait, the US naval blockade remains in full force. CENTCOM reporting 14 vessels were intercepted or turned away in the last 72 hours. So it appears it's all calm on the water, at least for now. when you look at what could happen, though, of course, Iran had insisted a Lebanon ceasefire was a precondition for further nuclear talks. That ceasefire is now in place. The big question is whether or not it's going to hold and whether, to your point, it actually unlocks a broader deal here. All of that remains to be seen.
We have a very good relationship with Iran right now, as hard as it is to believe. And I think it's a combination of about 4 weeks of bombing and a very powerful blockade. The blockade is maybe more powerful than the bombing. We had to do something. We had to make sure that Iran never gets a nuclear weapon. And we're at that. They've agreed to that. They've totally agreed to that. They've agreed to almost everything. So maybe if they can get to the table, there's the difference. They agree. They got to get to the table with a pen. We'll have that over with. I would go to Pakistan, yeah. Pakistan has been great. They've been so good. Islamabad, I might go. Yeah, I might go. If the deal is signed in Islamabad, I might go. The field marshal has been great. The prime minister has been really great in Pakistan. So I might go. They want me. All of them are important.
When will the next in-person
Probably,
meeting take
maybe
place?
over the weekend. The blockade has been incredible. It's held. They're not doing any business. They're unable to do any business because of the blockade. And so the combination of having no Navy, having no Air Force, having no anti-aircraft equipment, they have nothing. I would say the fighting, if there's no deal, fighting resume.
So that's the latest on the war in West Asia. But on that note, it is time for us to head into a short break. More news and updates coming up on the other side. Stay tuned.
Welcome back. On to some underperformers of the day, Wipro being one of them after its fourth quarter results. Rima is here with the earnings fine print. Rima.
Thanks so much for that. So the problem with Wipro is that the growth has been very, very poor for the company. It's underperforming peers yet again. Even in Q4, the company's revenue growth was just 0.2% lower than consensus expectations. And this is despite the benefit coming in from the acquisition. The acquisition of Harman DTS contributed to the company's top line. If you strip that out, the organic revenue growth would have been negative. FY26 also marked the third consecutive year of a revenue degrowth. Last year, the company's top line declined by 1.6%. The Q1 guidance is also underwhelming, -2% to 0%. Again, this is despite the company seeing some benefit of two large deals which they recently won. They will come through in Q1, but yet the company is guiding for negative growth. They said it's on account of client-specific issues in America too. Some of the deal ramp-ups are taking time, though they said it's not on account of the macro. Margins for the company have been stable. In Q4, they came in at 17.3%, But the fear is that in the subsequent quarter, margins may further come down because of the wage hike impact. The company announced wages on 1st of March, so there was a 1-month impact in Q4, but the 2-month impact comes in Q1, which is why next quarter's margins could also be a bit headwinded. The silver lining is the the buyback announcement, 15,000 crore rupees, the company's largest buyback at a price of 250 rupees. But the street is a bit nervous about growth. And many of the deals, when they did that Olam deal and even prior to that, the street just gets the feeling that they're trying to get growth via making these acquisitions, striking these large deals. And even though these large deals, the company has been winning large deals, it's not really translating into revenue growth. Back to you.
All right, Rima, many thanks for taking us through those details. Now, a number of stocks are moving on news-based triggers. Ria is here to bring us all of those details. Ria, take us through the top movers and shakers today.
Well, yes, let's start off with the stocks that are moving on the back of their Q4 numbers. The first one is VST Industries. Very strong set of numbers here. The pre-buying ahead of tax hikes and price hikes has boosted the numbers this time around, and cigarette volume growth has come in at 8.6% for the company. For Wari Renewables as well, the revenue has gone up by 2.3 times on a year-on-year basis, and the stock is also seeing very strong moves on the back of that. Angel One as well is up around 3 to 4%. The revenue has seen an increase of around 9% sequentially, driven by strong growth in the F&O segment as well as commodities trading activities segment. And HDFC Life, on the other hand, has reported a muted set of numbers, which is why the stock is also down around 2 to 3%. The total APE this time around has come in at 5,254 crores, and VNB margins have come in at roughly 24% versus the poll of 23.8%. Moving on to some other stocks, though, Colte Patil has been in focus today on the back of its business update for Q4. The sales have gone up by around 13% on a year-on-year basis, and even the quarterly collections have seen an increase of 18%. RVNL is also up around 3 to 4% today, as after emerging as the L1 bidder for the East Coast Railway project worth 968 crores. And lastly, Apollo Micro has been in focus, up around 11% today after receiving a lifetime arms manufacturer license from the Government of India for missiles, ATGMs, torpedoes, aerial bombs and loitering munitions, and this provides the company entry into high-value strategic defense manufacturing.
Ria, thank you for all of those updates there. Apollo Micro now up 12% as we speak. What has also moved to the highest point of the day is Angel One, and the stock has extended its gains after its earnings call, where the management made some commentary, and the stock is now up almost 9% on last check. So good going for Angel One as well. It opened higher, then it moved on, and they saw a bit of a cool off, and then it picked up after the earnings call. Angel One is the stock that I was talking about. Apollo Micro 2 now at the highest point of the day, 13% higher on the stock. There you can see Angel One there, 9% higher now at 319, sharp spike in the last 30 minutes. The Lok Sabha also witnessed chaotic scenes as members of the opposition and treasury benches clashed during the discussions on the women's reservations and delimitation bills. Ashmit is now joining in with more updates on this. Ashmit.
Well, clearly a political hot potato, this strong emotive issue being played out in the parliament as we speak. The debate continues. 4 p.m. today will be critical. 4 p.m. is when we'll see a vote on the legislative package that has been introduced by the centre. There are 3 bills as a part of this legislative package. Now, what's important is that the centre, since yesterday, we saw the senior-most leaders from the government talk about and assuring the opposition that, look, all the states will see an equitable increase, all the states will see a 50% increase, there will be no drop in proportion of representation in the Lok Sabha. However, what the opposition leaders have been flagging is that while this assurance is welcome coming in from the leaders on the floor of the House, there is no such assurance or guarantee in the letter of the law, in the letter of the bills, the way they've been laid out before the Parliament. So clearly, 4 p.m. will be a key time to watch. That's when we'll get clarity on whether or not this will move ahead. What's also interesting is that overnight, in between last night and today, we saw the government notify the women's reservation law. This, many commentators are saying, may perhaps be an indication that the centre is not fully confident that these legislative amendments will go through, this legislative package will go through. The reason being that one of the 3 bills in question is a constitutional amendment bill, which essentially means that to pass this bill, the government will need a supermajority, will need a 2/3 majority. Do they have those numbers? Well, we've been crunching the numbers. The centre, with all its allies, stacks up to about 300 seats. However, The magic figure is 360. So the center could well be shy of that figure. Conversely, on the other side, the opposition, the magic figure for the opposition is 180. If they're able to hit that figure, these bills don't go through. The opposition have strength in excess. Their tally goes up to over 230. So clearly, it will be a tough call for the center. 4 p.m. holds the key.
All right, Ashmit, many thanks for taking us through those details. But on that note, it is time for us to head into a short break. More news and updates coming up on the other side. Stay tuned. Welcome back. You're still with us on Business Lunch. Fears of an extended energy crisis are intensifying as the closure of the Strait of Hormuz continues. Global leaders have also warned of an impending crisis as stocks of fuel run out. Hormuz has walked across the wall to tell us more. Hormuz?
Well, if you see the global market action in the month of April, you would wonder that everything has returned to normal. US markets are at record highs, but then that's where the good part ends. But look at the headwinds here. Oil prices are still at $100. The real world oil prices are even higher, maybe at $115 or $120 a barrel. And the common theme that all of these world leaders who have gathered in Washington, the common theme is the fact that the markets are underestimating the fallout of this US-Iran war. The first big warning has come from the finance minister of Qatar, who is Ali bin Ahmed Al Kuwari, who mentioned that what we are seeing right now is just the tip of the iceberg and that the full-fledged impact is coming in the next 1 to 2 months. And he also said that you will see a huge economic impact of this as a result of this war, and it might even take up to 5 years to restore facilities and exports in Qatar. What he also said is that Qatar accounts for more than 30% of the world's helium, which is significantly used in chip manufacturing. That was not it. The other big warning comes from the IMF chief economist, who says that every day that passes and every day that we have more disruption in energy, we are drifting closer towards that adverse scenario. Now, what is that adverse scenario? The global growth figure drops to 2.5% from the 3.3% that was projected by the IMF earlier. Now, in case of a severe scenario, that falls to even further lower, down to 2%, and headline inflation goes up to 6% come 2027. That's the warning coming in from the IMF. Now, what they also say that the inflation going up would mean that the cost of these energy intensive goods, fertilizers, chemicals, food, transport, all of that goes up as well. Ajay Banga, the president of the World Bank, for all of those who are saying that this is a transitory phase, they say, and he says that he does not think that this is more of a 1 month pain. Think of it longer, because it will take a very long time for the supply systems to settle down. Even if there is no more fighting, there is significant structural damage to energy installations. The energy watchdog, the International Energy Agency, they are already saying that this is the biggest energy crisis. Fatih Birol, the executive director, said that March was a very difficult month. April might even be worse, and he's also gone on to say that the global oil demand could even face destruction if this persists any further. Now, why is the market optimistic? That question was posed to the MD of the IMF, Kristalina Georgieva, who said that possibly the relative health of the US economy, because it is now a net oil exporter and it does not have significant exposure to any of this crisis, although it is directly involved in the war. That could be one reason for the optimism. But the picture beyond the US is a lot worrying, because there is still a lot of pain in the rest of the world. She was asked whether the market should be more wary of, and she said that I would argue yes, because what we see in the supply chain disruption is already very significant. Now, the developing economies have been the worst hit, and Nigeria's finance minister put this well, and he said that the IMF and the World Bank must mobilize more resources, because the US and other rich countries have abruptly scaled back foreign aid, and the poor countries are now paying more for servicing their debt. Now, the only voice of optimism here is the US Treasury Secretary Scott Bessent. The US continues to maintain that as soon as everything is over, everything will return back to normal. He said that this war will end, even if it is in 3 days, 3 weeks or 3 months, but it will end, and the markets will go on to live in the future. Whether the markets right now are buying what Scott Bessent has to say, but a lot of other world leaders don't necessarily seem to agree. The picture on ground might just be quite different than what the markets are currently projecting.
All right, Harmaz, many thanks for taking us through that. But with that, it is a wrap on this edition of Business Lunch. Midcap Radar will take all the market action forward.
Good afternoon. Welcome to Midcap Radar. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, Vivek Iyer. Continues to be a day in the green. We are very close to that 24,300 mark, you have to say. FMCG doing well. Broader markets also contributing and outperforming as well. So is the Bank Nifty today if we compare it with the benchmark Nifty.
Good afternoon, Sonal. Absolutely right. It's another day of strength. The advance decline ratio is skewed firmly in favor of the advances, and majority of the stocks, especially as far as NSE 500 is concerned, reacting quite positively to the kind of earnings that you've seen as far as Q4 is concerned. But a lot lined up on the show, so let's start off with the top headlines. Midcaps see some strength even as heavyweights hold steady ahead of the weekend. FMCG industrials gain while IT and consumer durables drag.
Waaree Renewables zooms in trade after its revenue doubles in the fourth quarter, while the bidding pipeline also remains strong. The stock rises over 12%.
A whole host of jewelry stocks fall in trade today as reports suggest banks have halted gold import orders from overseas suppliers. IBJA says importers await DGFT's clarifications on concessional duty resulting in GST blockage. The Bullion Association also says gold import applications from private parties have been rejected since April 1 and are only allowed through MMTC and IIBX.
Gujarat Gas gains as Nomura upgrades the stock to buy. The upgrade is driven by improving demand visibility in the industrial segment, particularly in Gujarat's Morbi ceramic cluster.
Well, good afternoon and welcome to Midcap Radar once again. Well, a whole host of stocks from the broader end of the markets are heading towards fresh highs, especially the capital market stocks. Angel One standing out particularly even as we speak. That particular stock very close to the 10% temporary upper circuit limit. Remember, this particular stock is in the FNO. And along with that, a whole host of other names like Nuvama, Motilal Oswal, BSE, all of these names are trending significantly higher in the session today. But these names and a whole host of other names is what Upasana has on our radar. She's standing by the big wall to take us through all of the mid-cap movers in the session today.
Well, certainly the stocks continue to hold on to the gains. So now first up, let us look at the key top movers in today's trading session right now. First up is Ircon International, one of the key volume buzzers. The volume's up nearly about 8 times as compared to the 1-week average. Next up is Ola Electric. The stock continues to shine and rise up today as well. It's up nearly about 70% this month. Aegis Logistics is the next one, up nearly about 8%. MMTC is also buzzing in trade today. Volumes high, up nearly about 18 times as compared to the weekly average. And lastly, Apex Frozen also in focus. More than 10% is the kind of gains that we are seeing. So shrimp stocks are also seeing some bit of a green today, rising in today's trading session. Now let us look at some of the stocks that are in focus on the back of its Q4 results. First up is VST Industries. Strong set of numbers here. Cigarette volume up 8% and even revenue has seen an uptick of nearly 30% on one-year basis. Next up is Angel One. Good set of numbers here. Revenue up 9% sequentially, driven by strong growth in the trading activity, and even the management is guiding for a margin improvement going forward in their con call is what we know. Next up is Waaree Renewable Technology. It's a good set of numbers. Revenue has seen an uptick of 2.3 times and PAT has also seen an uptick of 66%. So strong set certainly on this one as well. Now let us look at some of the news makers in today's trading session. Colte Paltil also in focus on the back of its Q4 update. We are seeing a healthy pre-sales growth of nearly about 18%. RVNL declared as L1 bidder for a 3-year contract. Next up is Gujarat Gas. The stock certainly remains in focus, up nearly about 8% on the back of the Nomura upgrade to buy from reduce with the target price of 390 per share. And lastly, coming to Apollo Microsystem, strong gains seen here, double-digit gains certainly, as the company gets arm manufacturing license from Government of India. And now coming to some of the cable and wires company, even they are seeing a good bit of green today. Polycab up nearly about 3%, followed by KEI and even RR Kabil. And lastly, now let us look at some of the top losers in today's trading session. Not much here. Kalyan Jewellers down about 3.5%. Muthoot Finance, Afcon's Infra down nearly about 4%. And lastly, coming to Gallant Ispart, which was surging yesterday. Today, we are seeing a downtick of nearly about 4%.
Okay, take that point. Thank you so much for joining us with that list. Upasna, it's a good time to get a technical check on the markets. Himen Kapadia, technical associate from DR Choksi's FinServ, is joining us for that. Himen, good afternoon. Thank you so much for joining in. What are the charts suggesting now? How do we go into the weekend? Could we see higher levels today itself?
Very good afternoon to you, Sonal. Thank you for having me on the show. It's always a pleasure. We are at the cusp of important resistances, Sonal. 24,400, 24,600, very strong resistance levels. And if you remove Hindustan Unilever from the movement in the Nifty today, I think the markets probably might be, and Reliance, if these two things hadn't participated, two stocks, I mean, we might be 50 points lower. So it's a narrow move. Everything is hunky-dory. But 2,200 points as far as the Nifty is concerned in 10, 12 trading sessions, we're walking into historically strong resistance levels. 24,400 came yesterday. So maybe about 24,400, we see 24,600. But frankly speaking, without a correction, Sonal, I'm not quite hunky-dory about it going to higher levels. It needs a breather. There are two bullish gaps on the daily chart. I mean, one is deeper at around 23,555, and there is one around 23,900, Sonal. So I think as far as the Nifty is concerned as a benchmark index, normally such big gaps don't remain uncovered for a very long time. Exceptions are always there. So I would be slightly cautious and be more stock specific at the moment, Sonal.
Okay, good afternoon, Himen, and thank you so much for your views. Slightly cautious after the sharp rally we witnessed from the lows post the West Asia crisis. Well, Himen, what are your intraday picks or even positional picks that you have for us today?
Hello, Vivek. Yes, I would prefer positional picks. Firstly, there's a buy call on APL Apollo. It's just closed above the 55-day exponential moving average. High tops, higher bottoms. The daily oscillators, MACD, RSI, stochastic, all are in buy mode. Vivek, even the weekly picture is improving. So we're seeing an upside. It may be a bounce, but it's more of a trading buy. One can buy APL Apollo at 2090, stop loss 2040, target of 2190. And the second stock, Vivek, is Biocon. We are playing a contra play. It's fallen very sharply from 410 to almost 330. Now we are playing for a recovery. Everything and is deeply oversold. There are positive divergences also. So everything seems to suggest that we are setting the stage for a bounce from here. As of now, we'll term it a bounce. So buy on Biocon at 355, stop loss 340, target of 385. Vivek.
Well, thank you so much, Himen, for joining us, giving us a view on the markets, and we wish you a very happy weekend as well. But before we slip into a short break, we are proud to bring back HSBC presents CNBC TV 18 Future Female Forward Season 4, co-presented by Cognizant, with a powerful cultural launch gala in New Delhi. Top industry leaders come together for a dynamic town hall on equity and leadership in New India, along with curated entertainment performances. The launch will also see the announcement of a special advisory committee to guide female micro-entrepreneurs through the year to drive more meaningful impact. Tune in on April 23rd, 5 p.m. onwards, only on CNBC TV 18.
Welcome back. You're still tuned in to Midcap Radar. This is our special segment, Midcap Spotlight. Magnum is here to focus on Bajaj Consumer. Magnum, what's happening here?
Well, it's a very good set of numbers coming in for Bajaj Consumer. The last couple of quarters, this has definitely been the result of the season from the consumer pack. Early days, and I can still call it the result of the season. Why do I do that? Because it's an over 30% jump that we've seen in the company's revenue. Gross margins have increased from about 55% all the way up to 64%. EBITDA has jumped 140%. That means margins have doubled from 12.5% to closer to 23.5%. And the net profit too, on a low base, has doubled from 30 crores to over 63 crores. Visible change under the new leadership of Naveen Pandey, who obviously before this had roots in Unibic and before that was in Marico, so knows a thing or two about hair oil. Stock up 80% in 2026 so far. And even if you look at the internals, the low unit packs and the sachets where the company has been, focusing there, the growth has been strong 20s. There's been near double-digit growth in Almond Drops hair oil, which is about, 80-90% of their overall business. Rural registered strong 20s growth in the fourth quarter, which is a marked improvement from what we've seen in the earlier few quarters. And organized trade also is doing well for them. Now nearly 30% of their sales. Importantly, the street was saying that Bajaj Consumer so far has been a one-trick pony, only Almond Drops hair oil. The company has steadily been growing their non-Almond Drops portfolio as well, which they call it the growth portfolio. It now contributes about 225 crores to the annual sales. This portfolio is also net contribution positive with margins in single digits. And the company in its presentation has said that they aspire to take this business to 500 crores over the next 3 years. Now, the company's stock has rallied about 80% in this year so far. FY26 net profit is 190 crores. Assuming a 25%, a mere 25% jump in profitability in FY27, the stock still trades at 25 times FY27 price to earnings, which is a significant discount to all the other players in the FMCG space, and which explains the up move that we're seeing on Bajaj Consumer after a turnaround from the new leadership.
Well, thank you so much, Manglam. You're calling it the result of the season, but we'll have to remind you there's quite a bit of the result season left as yet. But moving on, Gujarat Gas, after a while, we are seeing this particular name surging in the session. Sonal, you've been tracking this name for a while. What's transpired here?
We've been talking about how gas shortage could impact Gujarat Gas, specifically because it imports a lot of LNG. That is a bigger mix in its raw material basket. But now do remember, a lot has changed since then. On the back of which, Nomura has upgraded the stock to a buy now. The target price remains the same at 390. They are talking about now LPG being a priority for households, right? So industries won't be able to use so much LPG. And there's a shift now for industries from LPG to, say, propane, and a lot of it to natural gas, which Gujarat Gas provides, which is the PNG. Nomura also says that ceramic producers in Gujarat's Morbi region, 78% of those who use propane biofuel are in discussions with Gujarat Gas to shift to natural gas, which is Gujarat Gas's fuel as their raw material. This is because a lot of them are seeing propane shortage as well right now. What would this mean? This would mean that this will substantially alter Gujarat Gas's outlook in the Morbi region, which is a big chunk of their customers overall. There are opportunities for significant growth, and the government has been pushing for more PNG connections. It has been pushing for more piped gas, more LNG, which can be, of course, transported within the country. Morbi producers are also planning price hikes of 15 to 25% to pass on those increased gas costs. They've cut the FY27 EBITDA, of course, because LNG prices are quite high. It would impact their margins. But they've raised FY28 EBITDA by 14% on account of increased margins in industrial segment and slightly higher volumes. But, of course, we'll have to see how it pans out, because now most of the LNG, we are getting LNG, but if the supply continues or not, it remains to be seen, and Gujarat Gas is dependent on imported LNG. To make their final product, they will need LNG continuously. So that is something we'll be tracking. But for now, if the industrial usage increase versus LPG, then Gujarat Gas definitely tends to benefit, because it does have a bigger chunk of their volumes coming in from the industrial segment.
Well, thank you so much. And clearly, the street is taking note of this particular development. But VST Industries, after a while, we are seeing a cigarette company do very well. Manglam, what's actually transpired that's making the stock surge in the session today?
Three things in particular doing extremely well for VST Industries. One, it is on a very low base, so favorable base. Same time last year, the revenue declined by about 7%. Second part, volumes have grown because there was pre-buying ahead of the tax increase. Remember, cigarette tax had been increased from with effect from February 1. So January saw a lot of pre-stocking by the dealers. And the third part is that we're seeing obviously price growth come by, because after Feb 1st, where the taxes were increased, the cigarette companies went ahead and took price hikes also to the effect of anywhere between 15 to 25%, more than 25% for a lot of the premium players, not so much for VST Industries. Add to all of this the further tailwind that they got. Same time last year, leaf tobacco prices, the raw input for them, was actually at an inflationary trend, and now it's at a deflationary trend. So that's further benefiting the company's margin. So if you look at the overall performance, cigarette volume growth of 8.6%, revenue growth of 30%, and overall revenue growth for the company this time around has been 31%. EBITDA has actually jumped 200% from 69 crores to 208 crores. Margins have jumped from 20% to near 50%, and we've seen the net profit grow from 53% all the way up to 116%. And this despite the company taking an additional depreciation charge of around 48 crores. So that's a big move that we've seen on VST Industries on account of stellar set. And as a result of which, we are seeing a rub-off on names like Godfrey Phillips and ITC as well, because they too expect volumes to improve on account of pre-buying, revenue to improve on account of price hikes, and margins to improve on account of deflation in leaf tobacco prices.
Well, thank you so much, Mangalam, for joining us. 11% higher as far as VST Industries is concerned. But another stock that's moving significantly on the back of a good set of numbers is Waaree Renewable Technologies. Remember, Waaree Renewable Technology actually is the EPC arm as well as an O&M arm as far as the Waaree Group is concerned. Now, looking at the numbers over here, revenues higher almost 2.3 times on a year-on-year basis, EBITDA higher by 64% on an expanded top line. However, EPC contract costs, cost of raw materials have gone up quite significantly at 871 crore versus 335 crore on a year-on-year basis, and on the back of that, EBITDA margins have contracted quite sharply, both on a year-on-year as well as on a sequential basis at 18.8 versus 26.5%. Profitably on the expanded base is up 65%. Order book is at 2.83 gigawatt peak, which is quite strong, but one thing that we need to keep an eye out on is the fact that both on a year-on-year as well as on a sequential basis, there has been some moderation as far as the unexecuted order book is concerned. However, the order prospect pipeline, the management says, is quite strong at over 36 gigawatt peak. On the back of that, clearly one of the top outperformers in the broader end of the markets today.
Okay, yes, that's about Waaree Renewables. I'm tracking Colte Patil developers. It's a lot happening in the broader markets today. Colte Patil reported its Q4 operational update, and it looked decent for the quarter gone by. They've seen a pre-sales growth both on a sequential and on a YOY basis. However, volumes did decline on a YOY basis by 7%. They were up 7% on a sequential basis. Collections were up 18% YOY and 18% on a sequential basis to come in at 834 crore rupees. But if we look at the FY26 numbers, there has been a decline both on a pre-sales number and a volume number as well. However, collections have gone up by 11% to come in at around 2,700 crore rupees. They've also acquired projects in Bhugao with an aggregate GDP of 2,250 crore rupees. Company says it is the upcoming geography for them where they will see a lot of project additions. Funds affiliated with Blackstone, where there was a funding update that came by, has where it was a 40% stake in the company. They are well positioned to drive consistent growth and create long-term value for stakeholders. So the demand outlook for them continues to be very strong. But, you know, the industry conversations that we've been having suggest that maybe real estate demand is peaking. So watch out for that. But yes, some of these companies have reported good quarterly updates as far as the last quarter of this fiscal is concerned.
Well, it's been quite a bit of a comeback as far as the realty pack is concerned, right? Prestige came out with very good numbers. Goddess Properties too, quite encouraging. The entire pack has moved up quite sharply in the last fortnight or so. But we'll now slip into a short break. We'll get you more buzzing stocks on the other side. Stay tuned. Welcome back to Midcap Radar. Well, one stock from the broad end of the market that's surging is Bharat Wire Ropes. Nigel joins in with all the key details.
Well, that's right, Bharat Wire Ropes. Well, that's surging on massive volumes in trade today. And if you look at it in the last 1 year, the stock is up roughly around 12 to 15% after you see this sort of a move. But if you look at it from the peak of 2024, well, the stock is half of what it was. Remember, the street got very, very excited when the promoter entity went ahead and increased stake in 2024. And additionally, if you look at it in October 2025, the Lloyds Metal promoter, they bought the compulsory convertible preference shares from banks in the company. And the probable reason is Lloyd bought the CCPS is that Bharat Wire is a potential client for them as well. Remember, Bharat Wire Ropes has an integrated wire rope plant with a manufacturing facility of close to around 72,000 units. That's both their plants together. And because of its proximity to the ports, it allows easy access to exports. And exports, as you can see on the screen, contributes more than 70% of its revenue mix. So with this geopolitical stress easing out, there's a probability that they could ramp up their exports even from here on. With regard to their financials, well, the EBITDA has been in that vicinity, 130 to 160 crores, while their debt profile has actually improved over the last few years. The company is virtually debt-free, very, very minimal debt in their books. Though the cash conversion days, well, that's moved up as the screen is telling you. It's probably due to the higher proportion of exports, and there has been very skirmishes on the global front. Valuations not too cheap, not too expensive. It trades at around 10 times EV upon EBITDA, on a PE basis at around 17 times or thereabouts for a company that has ROE of more than 20%. Besides any material disclosures with regard to shareholding pattern that we'll be eyeing very closely today and in the next few days, and since debt restructuring has already been completed, now the street will be looking at any kind of debottlenecking of capacities as well as ramping utilization levels. What I understand last was that they were at around 65 to around 70% capacity utilization levels. But disclosures on the exchanges will be tracked very, very closely post-market hours today as well as in the coming week in case there is any kind of large buyer or seller on the counter.
Take that point, Nigel. Thank you so much for joining us with all those details. Up and away, that's on Bharat Wire Ropes. But Angel One, that's the other stock on our radar. Buzzing post strong Q4 numbers. Devyani is joining us. What did they make of the conference call as well? Devyani, tell us more. 10% higher on Angel One now.
Well, yes, Angel One is buzzing today after delivering a strong set of results led by a jump in revenue and profit. Now, growth was fueled by a surge in F&O and the commodity trading segments, which has helped push their adjusted profits beyond the 34% mark. Now, leadership is also sounding very optimistic, noting that active clients are now returning and the cash segment market share is likely to bounce back in the month of April. With a focus on the higher value customers, the company is now eyeing 45% plus long-term margins for its broking business. All in all, it's been a good set and the company is doing well in trade today.
Well, thank you so much, Devyani, for neatly wrapping up what's exactly driving Angel One stock price higher in the session today. It's good conference call, strong margin guidance, and that particular stock surging in trade today.
Okay, all right. So with that, we'll do one thing. We'll take a leave on this edition of Midcap Radar. Have a great weekend, folks. Your stocks when we return to answer all your individual stock queries.
Hello and welcome to Your Stocks live from the CNBC TV18 Motilal Oswal studio. I'm Arundhati Ramnan and with me as always, Vinny Motiwala. Hi Vinny, good afternoon. The market's doing well today. The Nifty holding above the 24,300 mark as we speak. So both Nifty and Sensex nearly 0.5% in the green. Then we've got that mid-cap index, right? That outperformance continuing from yesterday. That index is up over 1%. The Nifty Bank also not doing too badly, about 0.5% in the green. And if you take a look at the sectors that are doing well, on top, we've got that FMCG pack. And the top gainer on the Nifty as well is HUL, which is gaining nearly 5%. If you look at all the other sectors, oil and gas, we've got Nifty Media, metal stocks, realty, the bank stocks, all of them doing well in trade today. On the downside, we've got only those IT names and the pharma pack that's a little bit in the red right now.
Absolutely, Arundhati. Good afternoon. So good afternoon coming in for the markets. Broader end of the markets doing well, and advance decline ratio clearly in the favor of advances versus declines that we're seeing. But on that note, let's get started with the show and solve all your stock-related queries. And to do just that, we have our experts joining us right now. We have Ashish Kyal, CMT author at Wave Strategy Advisors, as well as Shaina Mukattam, independent market expert, to answer all those queries. Shaina, as well as Ashish, good afternoon. Thank you so much for joining us on the show as always. Let's get started with the first query for today, and this is coming in from Sri Vallabh, who's writing to us from Hyderabad. He's holding 8 shares of Infosys. This is at a price of 1,618 rupees per share. He's asking whether to hold or sell at current levels. Shaina, let me start with you. On the fundamentals for this one, Infosys, what are we keeping an eye out on? Wipro reported their numbers yesterday, not great. We saw the stock falling. And today, IT as a pack also has been on the weaker end.
Well, yeah, that's the issue. Actually, sentiment for IT stocks is bad. Having said that, I think, after the correction, Infosys valuations have become attractive. And if you see the fourth quarter numbers also, while they expected to be subdued, they are going to be reasonable in line with expectations. And I would believe that, the trust towards AI is going to be there. We'll have to watch as to what will percentage contribution come for this quarter and going forward, their guidance. But I would say Infosys is, along with other stocks like TCS, the large cap IT, they are stocks that you could add in your portfolio on corrections.
All right, it's a stock that you can add on correction in your portfolio. Ashish, hi, good afternoon. This person holds 8 shares of Infosys at 1,618 rupees. So what does he do with what he's holding? Should he keep it? Should he sell it? Or should he add?
See, if we look at the overall IT space, we can clearly see that has gone through a lot of correction over the past few months, and we are still not seeing any kind of a reversal momentum yet. Having said that, Infosys, I would suggest continue to hold, because I think the worst might be behind us right now. You can average to some extent at current levels, but do not expect any kind of strong momentum emerging overnight. Your holding time has to be at least more than a year, and then we can expect the stock to eventually move towards the level of 1,500 on the upside. And on the downside, a very important support for Infosys is going to be around 1,220 levels. So average it out here, but expect it to be at least for a year or more.
All right, average it out, hold it at least for another year or more. The next query is coming in from Deepak Dave, who writes to us from Gandhinagar. He holds 500 shares of Afcon's Infra at 440 rupees. He is a long-term investor and asks whether he can buy more shares. He's currently making a loss. The stock is trading at 331. It's not done so well in the last year as well. Shaina, let me come to you first. What's the fundamental view on the stock?
Well, I would say I would put it in the risky category. More because it has got a strong promoter, that is Shapoorji Pallonji. At the same time, that there is an issue in terms of liquidity at the promoter group level, and they have actually they have pledged shares of Afcon to improve their liquidity. They have got certain debentures that are coming for payment in the next couple of months. So I would say the overall risk is from the promoter group, where it is a good strong promoter. At the same time, that is a risk that is overhanging over the next couple of months. So I would say that it is better to at least get out of half your quantity, if not the full. And you can relocate it after a couple of months, because in terms of projects, they have got very good projects, high-tech projects, both domestic as well as international. If you look at their order book and compare it to their current turnover, it's almost 3 times. So they have got sufficient orders to keep them going for the next couple of years. At the same time, I would say that there is an issue for the shorter term. So one should switch at least half the quantity.
Okay, switch half the quantity. That's the word on the fundamentals. On the technicals, Ashish, what is your view coming in? Should they continue to hold, sell, or average? Long-term investor.
As far as the stock goes, we can see some sharp recovery from the lower levels in Afcons infra, but still the volatility can be very high. So my suggestion would be continue to hold over here for now. Maintain a strict stop loss of around 312 levels, and on the upside, 390 can be the target for the stock.
Okay, we'll keep an eye out on those levels over there. 390 on the upside for Afcons Infra. That's on the technical front. Let's move on then to the next query for today. We have Vipin, who's writing to us from Lucknow, holding 1,000 shares of Suzlon Energy, and he's bought it at 8.97. So making a good amount of profit on this one. He wants to know the view for one more year. China, Suzlon Energy, the stock has seen a very good run up, but does it merit still holding it? They bought it at 8 rupees. Should they just book out their profits, or one more year holding it is not a worry?
See, 1 more year holding will not be a problem, and the stock has given you a good run up in the last couple of, I would say, days. At the same time, what I would say that in terms of order book, very strong order book. They have got more than 6 gigawatt orders on hand. So sufficient scope to continue their 60% growth that they are reporting. And I think valuations also are reasonable. They're on the slightly higher side. So I think the upside is going to be a little bit capped, but you could continue to hold with stop losses.
Okay. Continue to hold with your stop losses. So let's move on to the next query then. Sunil Gupta writes to us from Pune, and he holds 1,200 shares of Swaraj Engines at 1,200 rupees. He is a long-term investor and wants to know whether to hold or sell. He is making a profit on this stock, and which is currently at 4,066. Shaina, what's the fundamental view on this stock? Should he continue to hold?
This is a subsidiary company of M&M. M&M holds 52% equity in the company. And they supply the diesel engines that go into the Swaraj tractors of M&M. They have done pretty well. In fact, if you see M&M, their Swaraj tractors have shown a very strong growth if you see the last year. And I would believe that the momentum should continue. Of course, monsoons is a question that we need to review, whether monsoons will impact overall turnover in terms of Swaraj tractors in the next couple of quarters. But as of now, I think Swaraj Engines is a hold. One is, of course, because he's got it at a very good price. Second is the balance sheet is very strong. And the growth is also coming out pretty strong if you look at it in terms of volumes for their engines. So I would say it's a hold.
Okay, you would say it's a hold coming in there. Ashish, for you, this Swaraj Engines, viewer has bought it at 1,200 rupees. Should they continue to hold or sell? What's the suggestion? Ashish? Okay, I think we'll connect back with Ashish, but we did have the fundamental view coming in for Swaraj Engines over there. So that's surely something that you should keep an eye out on. A quick check in terms of the market as well. Right now, we are holding on to 24,311 levels for the Nifty is what you're seeing coming in there. Gains of around 0.5%, 100-point uptick for the Nifty 50. We did see that flip-flop in the starting trading session and then picked up pace, and now managing to hold on to 24,300. Whether we sustain those levels by the end of the day will be key to watch out for. A lot of names that have moved around in the last 10-15 odd minutes as well. KSB Limited, that's the one that's picked up a bit of a pace, up almost 1% in the last 15 minutes. SCI, that's also one that you should keep an eye out on, as well as Adani Power. These are some of the names that have been seeing an up move in the last 15 minutes. But on that note, we're going to zip to a very short break. We'll come back with more of your stock-related queries. Stay tuned. Welcome back to your stocks on CNBC TV 18. While the market continues to hold steady at about the 24,300 levels, let's look at the contributors, right? What's supporting the market and what's leading to the drag? So in terms of the contribution, positive contribution coming in from HUL. We spoke about FMCG being the top sectoral gainer today. You have HUL that's topping the charts. You have Reliance that's there, HDFC Bank as well as ITC. So two of the FMCG names that are supporting the market up move. While on the flip side, you have L&T, Sun Pharma, M&M and Infosys, which are on the downside and dragging the market. So that is the contribution that we have coming in from most of these big names. And Reliance, seeing that up move is also something that's contributing well to support the market up move. Angel One, that's another one you should keep an eye out on in terms of the broader end of the markets. Numbers, con call commentary, all of that came in well, especially the commentary at the con call today. And that is why Angel One now is holding on to 10% gain in the trading session as well. So look at it at the day's highest point is what Angel One continues to trade at. But let's keep it going with all your stock related queries then, and we still have Ashish Kyal as well as Shaina Mukaddam with us. Let's move on to the next query. This one is coming in from Venki Patil, who's writing to us from Karnataka, holding 1,500 shares of Hudco. Price is what they've not mentioned, I think. So he wants to know whether he should continue to hold this. What's the view coming in on this one, Ashish? If they're looking to average also, is this a good price? Are you expecting an up move here on the technical levels? What are we watching out for?
Yes, if you look at Hudco, I think the stock has broken already its resistance levels of around 185, 189 and trading above that. So given that the overall undertone has turned back on the upside, and if you look at the entire mid-cap space is outperforming, so we can start seeing these kind of stocks also relatively outperform now. On the upside, we can expect the target of around 220 levels. And on the downside, one can maintain a stop loss of around 187 levels.
All right, so that's the stop loss that you're holding there for that stock. But Shaina, if I can come to you. So this person holds 1,500 shares of Hutco and he wants to know whether to hold or average. What's your view on the stock?
I would say you can hold also and you can average also. Because if you look at the AUMs now for this year, it will be close to about 1.5 lakh. And it is now going to be classified as the upper layer NBFC. It has moved just from housing into infrastructure also, with now quite a bit of contribution coming in from the infrastructure segment. And there the growth is quite good. Balance sheet is also pretty strong. Their net NPAs are almost close to zero. It's just 0.07% or something like that. And in terms of NIMs also quite steady around 3%. So everything is going decent for it. So I would say you can hold and also average if you find any dip.
All right, so you can hold and or average that stock. The next query is coming in from Ambika, who writes to us from Bombay. She holds 1,000 shares of NMDC at 77 rupees and is making a profit on it. The stock is currently at 89. She wants to know if she should continue to hold or sell at current levels. Should she book profits or should she continue to hold? The stock has been doing well. So Shaina, what's the fundamental view on the stock?
The stock has not really given you too much of a return if you are holding it for 2-year period after their bonus issue. At the same time, I believe, the excitement now is more on their tie-up with GMDC and the potential exploration for a new space like the electromagnet space and the possibility of that adding to their overall product portfolio. As of now, they are they are the major producer of iron ore, and while the volumes have gone up substantially during the current year, the overall realizations have remained stable, which actually has prevented too much of an upside, from here in terms of revenues. But at the same time, given the fact that the government has launched a PLI for the mining segment, and NMDC is one of the players which actually could really benefit from it along with GMDC. So I would say as of now you could hold and then review it maybe 6 months, 1 year down the line to review what is happening on that front.
Okay, review it 6 months, 1 year down the line. As of now, continue to hold it. On the technical front, Ashish, would your suggestion be the same as well? Last 6 months, 20% return is what the stock has given. More upside expected.
Yes, absolutely. See, this stock has relatively outperformed when Nifty is still down by nearly around 7-8% from lifetime high levels. We can see NMDC is rallied by nearly 20% over past 6 months. So that's a very positive sign. And I would suggest to continue to hold on over here. One very simple method is that unless and until we see a weekly negative close below the prior day low, that's a very simplest strategy that one can use. And this stock has continued to show that over the past 2-3 weeks. So on the upside, the target can be around 97, 98 levels from here on. And on the downside, the support for the stock is at 86.
Okay, we'll keep an eye out on those levels over there for NMDC. Let's move on then to the next query for today. We have Ritesh, who's writing to us from New Delhi, holding 20 shares of MRF, and this is at a price of 1.37 lakh rupees. Wants to know if he should continue to hold or, right now making some bit of a loss on this one. So, profit on this one. 1.37, it's 1.39 now. What's your view coming in on this one, Shaina? Should they continue to hold, book out their profits?
These are long-term holding stocks, So basically, I would not look at it from a short-term perspective, because if you see balance sheet, it is very strong. And for the quality and the size of this business, valuations are not expensive. If you compare the EV to their turnover, even to the EBITDA. So these factors make it a hold. In terms of raw material costs, yes, there was some increase in raw material costs, both in terms of rubber, but they have taken a 2% increase in price. So I would believe that they should enable them to do better over the next couple of quarters. Any which ways, I would say it's a hold for the long term at current levels.
Hold for the long term is what you're saying. Ashish, what's the technical view for the stock? Should he book his profits or continue to hold?
See, if you look at the entire sector, the auto and the auto ancillary space, we can clearly see a very strong outperformance coming from the two-wheeler segments, even from the four-wheeler segments. We have seen reversals happening in stocks like TMPV and Mahindra & Mahindra. So many of those stocks have started outperforming, and eventually I think these ancillary stocks should also pick up well. And we can expect MRF to reach towards the level of around 1,55,000, where the prior swing high is placed. And if one can hold on for the horizon for 1 year or more, the stock has much higher potential. On the downside, the support for the stock is going to be around 1,30,000. And my suggestion would be hold on to the stock. It has just started its rally on the upside.
All right. Okay, so the next query is coming in from Chandan Jain, who's writing to us from Karnataka with an investment query. So he wants to know if this is the right time to invest in Hero MotoCorp. Shaina, what's your fundamental view on the stock? Is it a good time to enter the stock? Is it a good bet in the long term?
Yeah, as Ashish mentioned, two-wheeler stocks have just started picking up. And I think Hero is one of them. Volume numbers are very strong. And I think they're doing well. This volume pickup has enabled them to maintain their market share. And valuations, it is the cheapest among the three. But I think one can pick it up. One can pick it up at any dips that you get.
Okay. Surely we'll keep an eye out over there for Hero Moto. But on the technicals, is this the right time to look at it? Is this the right level to enter? Or Ashish, maybe wait out, we'll see some bit of a fall.
No, as I mentioned, the two-wheeler segment and the entire auto space is just picking up. And I think this is the best time to enter into this stock. You can enter now. The stop loss can be maintained at around 4,900 levels. And on the upside, the stock can reach towards 6,000 and possibly much higher from here on. So enter at the stock at the current levels. It is a good price.
Okay, let's move on then to the next query. We have Rajashekara, who's writing to us from Hyderabad. He's holding 200 shares of Morpin Lab. Price is 47 rupees per share and currently making some bit of a loss on this one. Wants to know if he should continue to hold the stock. Shaina, what's your view coming in from Morpin Labs?
I wouldn't classify Morpin as a stock that you hold for the long term. If at all, it can give you a bounce in the shorter term, that's different. But I would believe that even for the 9 months, if you see the numbers, they have seen a flat turnover and margins impacted, margins lower and profits lower. So I would say that it's not one of my picks, even in the small cap pharma stock. I would prefer something like a Kaplan or something like that. So I would say it's a switch from current levels.
All right, so a switch from current levels and you wouldn't hold it in the long term. But Ashish, what's the technical view on the stock?
See, technically, I agree with Shaina what she's saying. It has been an underperformer for quite some time. Over short term, any kind of a pullback towards 46, use that as an opportunity to be out from here on and possibly pick up something like a Sun Pharma or better pharma names, then staying back with Morpin Lab.
All right, so you pick a better name than that one. So that's the view coming in there from Ashish.
Okay, absolutely. Now let's move on then to the next query that we have coming in as well. And this is on an auto stock as well. We have Venkata Reddy, who's writing to us from Hyderabad. Investment query. It's on Maruti Suzuki. Is it the right time to look at this name as well? Some of these sales numbers were fine. What's your view on this one, Shaina?
Yeah, absolutely, Vinny. The sales were quite strong if you saw the March numbers. And even I think for the full year, they've given an indication it's about 10% volume growth, which I believe is strong. They're increasing their capacity. I think by FY30, they're talking of a substantial increase in capacity, which actually could drive growth. Also, in terms of their overall performance in terms of stock price, also if you see that, the four-wheelers have not done as well as the two-wheelers. And they are starting to pick up now. So I would believe that Maruti is one, it's very well placed actually to give you a decent return. So I would say you could add Maruti into your portfolio.
So you can add Maruti in your portfolio. But Shaina and Ashish, we're completely out of time on the show. But thank you so much for joining us and answering all of our viewer queries. All right. And with that, it is a wrap on this edition of Your Stocks. But do remember to email us your queries and we will address them with our experts. But stay tuned for Closing Bell to take you through the last hour of trade today.
Beyond market headlines, to understand the reasons for the day's movers and shakers, and get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Well, hello and welcome to Closing Bell. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel. With me is Rima, and the screen is telling you that the bulls are back. At least as of now, they're feeling the rhythm. The broader markets continue to outperform as well, and those that invested in a difficult time, well, they're reaping the benefits. The kind of traction you're seeing in the broader markets, that's heartening, and sectors making a comeback, like FMCG, has actually been a big underperformer. Hey, Rima.
Hi, we had a flat opening, and from there, markets have built. The Nifty has now conquered the 24,300 mark. It's more than a 100-point gain for the Nifty. The Sensex is up nearly 400 points, and this would be the second consecutive weekly gain for our market. Last week, the Nifty added about 6%, while the Nifty Bank was up 8%, and that's last week. And this week, we've consolidated, but with a positive bias, with the Nifty adding 1%. The Midcap index is up 3.5%. In this month of April, the rebound has been sharp. The fall was even sharper, but the rebound is 13.5% for the Midcap index. That's from 1st of April. The advanced decline ratio is positive. 2,200 stocks advancing for about 800 stocks declining. Banks are performing. Many of the sectors are actually doing quite well in trade, but top honors go to the FMCG sector. That's got a gain of 2.5%. Capital market names are seeing buying. Power names are up and about in trade, as are the capital goods. We'll discuss all this in greater detail. We'll talk about individual stocks. Let's quickly run you through the top stories and what's on tap in the last 1 hour of trade. FMCG stocks surge. Companies report strong business update. Bajaj Consumer is surging after a stellar Q4 numbers. Angel One is rallying on the back of a strong quarter. The management also indicates the number of active clients are rising. Details follow on the show. Wipro slumps after a muted set of Q4 numbers. Highlights from our interaction with the management. But we start the show with some trading ideas. Mitesh Thakkar, as always, joins in to tell us how to position ourselves in the last hour of trade. Mitesh, 24,300 on the Nifty. We haven't quite gotten to yesterday's high of 24,400, but the intraday action is fairly heartening. What's been your trading call?
Yeah. So you rightly pointed out, I think the intraday action is good. And see, I've been maintaining this that the overall bias on an immediate basis is still positive. If you look at the 2-hour charts, the 3-hour charts, the indicators are still rising, and despite the volatility, they continue a steady up move. So price, is likely to be with the momentum, and therefore there could be some intraday declines. But overall, as long as the first support is at 24,050. And as long as we're not breaking 23,800, 750 zones, I think we should possibly keep attempting higher levels. And my eventual target for this bounce back itself is around 24,750, 800. So maintaining a positive sense. And ONGC for me is a trading call. That's a buy with a stop at about 278, 278.5, and a target of 295 can be looked at. And similarly, ITC after a big decline is showing first signs of reversal. So ITC is a buy as well. Keep a stop at 301.5. Look for targets of around 315.
Big gains in so many of these FMCG names. FMCG index is the best performing sector today, but HUL is up 4.5%. It's crossed the 50-day moving average. Nestle has crossed the 50 and 100-day moving average. Mitesh just spoke about ITC. There is the rub-off impact on the back of strong numbers from VST. So ITC and Godfrey Phillips, both cigarette manufacturers, are higher in trade. And we'll talk more about the FMCG names. But Mitesh, you want to quickly tell us, other than ITC, any other technical trades on this pack?
Yeah, I have not been tracking the other stocks. I think, there's Godfrey Phillips, but I've not looked at the charts over there. But if you look at the, if I load the chart right now, I think it's a very similar pattern to ITC. It's gone through a big decline, a good correction, and is now showing good signs of reversal. In a bullish case scenario, I think I would look for targets of around 2490 to about 2500 over here. And the stock will be positive as long as we don't break 2150, 55 zones.
Thank you very much for that. Imami 6.2, Colgate higher 6.1, Radico Khaitan 5.9, Dabur, Varun Beverages, United Breweries, Britannia all up 2 to 3%. But let's talk about Bajaj Consumer. That's rallying on the back of a strong quarter. Mangalam joins in with the numbers and analysis.
Well, it's a strong quarter that has come in from Bajaj Consumer, but a stellar set of performance coming in for the last 3 quarters. The stock is up 80% in 2026 so far. And a large part of that can be attributed to the management change. So just to run you through the numbers, it's a 30% revenue growth that we've seen. EBITDA margins have increased by almost 12 percentage points, or 1,200 basis points. It's doubled. EBITDA has grown 140%. Margins have come from 12.5% all the way up to 24%, and the net profit too, from 30 crores all the way up to 64 crores. There's visible change under the new leadership. Remember, Naveen Pandey joined from Unibig. Before that, he was in Marico as well. He joined on 24th June 2025. And if you look at the next 3 quarters after that, so Q2 FY26, revenue growth was 13%, EBITDA growth was 45%. Q3, revenue growth was 31%, EBITDA growth 114%. Q4, now we're speaking 30% revenue growth, 140% EBITDA growth as well. What is the company's growth strategy? Under the new leadership, they've been looking at their core and non-core. In the core, they are pushing low unit packs, so strong 20s growth coming in out there. Near double-digit growth in Almond Drops hair oil, and rural also registering 20s sort of growth coming in. Organized trade accounts for about 30% of their sales. That's growing well too. But the kicker is actually the non-ADHO growth portfolio. I remember here, we've been talking about Bajaj Consumer as having a single portfolio, single product portfolio. Now, the non-Almond Drops portfolio contributes about 225 crores to their sales. It's margin, accretive. It's actually positive in terms of margins. And the company aspires to take this to about 500 crores over the next 3 years. So this would provide further tailwind. Finally, all of that comes down to the valuations. After an 80% jump already in 2026, remember the FY26 PAT was 190 crores. Assume a 25% growth over that. The stock is still trading at 25 times FY27 price to earnings, which is a stark discount to all the other FMCG stocks. So good numbers coming on a day where the FMCG sector is seeing some tailwinds means that the stock is up in double digits.
All right, Mangalam, got that. And since it's Friday, just take a look at some of these stocks actually that coincidentally have done very, very well. The alcohol beverage companies, Tilak Nagar Industries, went through a long phase of consolidation. For this week itself, it's up close to 10%. Allied Blenders is now 570 rupees. Just around, I think, 20 days ago, it was at around 410 rupees. So big move is what we are seeing. Tilak Nagar Industries, Allied Blenders, Radico Khaitan. Just take a look at the kind of move we're seeing out there. 15% just in the last 7 trading sessions. Global Spirits as well. So all these, alcohol beverage companies, they're up anything between 15 to around 25%, I think, just in the last 15 to around 20 sessions or big moves out there. But Mangalam, liquor for later. For now, the FMCG pack, that's buzzing in trade. It had underperformed for a goodish bit, but today, what a comeback.
It is a strong comeback that we've seen. The stocks are buzzing. There's HUL, there's Colgate, Dabur, GCPL, Britannia. And here, when we speak to market experts, all of them were choosing consumer discretionary over staples. So that tell you that, sentiment was fairly against staples as well. But good results coming in from both VST Industries overnight and Bajaj Consumer now has caused the street to look at the staples space once again. What is it that the street is anticipating in terms of demand and performance this time around? Full impact of GST 2.0 will be visible in the fourth quarter when it comes to demand. The price volume gap will normalize, which means that companies will start taking price hikes as well as their raw material inflation has come by. Commentary on inflation and margins will be extremely crucial to track because fourth quarter, there would be margin surprises coming in because companies will still be sitting on low-priced inventory. Even as crude prices have risen, they've taken price hikes. Now, from next quarter onwards, how does margin pan out and how does raw material inflation pan out will be extremely crucial to track. What we know so far, these companies have taken 3 to 4% price hikes, with effect from the first quarter. Paints and edible oil obviously taking between 6 to 10%. So price growth is back in the system. Godrej Consumer has reported double-digit sales growth, high single-digit volume growth. So performance isn't a problem in the fourth quarter. Marico too, cons revenue growth in low 20s, high single-digit volume growth out here as well. And Dabur, the India business, will record a high single-digit growth. But because of unseasonal rains, their summer products have been impacted. And that is another positive because for all these companies with a large exposure to summer products, the likes of Imami, the likes of Varun Beverages, and the likes of Dabur, etc., the heat wave would do well for that part of their portfolio. So all these factors doing well for them. Add to all of this, the recent underperformance of the FMCG stocks has taken their valuations in many cases much below their 5-year averages. HUL, for instance, trading at 43 times, 5-year average at 52 times. They're not cheap, but much cheaper than their 5-year average. Asian Paints, 47 times, 5-year average is 60 times. And Nestle, 62 times, the 5-year average being 65 times. Prospects improving, valuations a little more palatable than what they were earlier, and sentiment against staples and for discretionary. All these factors, along with good results from a couple of players, has caused the cat to move among the pigeons here.
Thank you very much for that. Let's hope, a weak monsoon doesn't play spoil sport in terms of volume growth, and even the offtake or the fact that the price hikes will be accepted by the markets, because the IMD is projecting weaker than expected monsoon with 92% of the long period average. But that's, of course, only the first forecast. But very strong day for FMCG names. Sudeep Bandopadhyay, market expert, now joins in. Sudeep, thank you very much for joining in. Bajaj Consumer, the stock that Mangalam was just first talking about, what a change, a change in management has brought about, and that stock has quietly crept up 80% in the last 1 year. Is that a stock on your radar?
It has been on our radar for quite some time. I think the management change was very interesting. And what is more interesting, Rima, is that the non-core business, which is they have started growing, and we believe that there is significant potential for non-almond oil products to be pushed through the same distribution channel and through the same facilities. And I think they are focusing on that. That part of the business is growing rapidly. And that's a very, very interesting development as far as we are concerned. We'll keep watching the space. As of now, we do like Godrej Consumer. I think after a very long time of underperformance, I'm not talking about the market price. I'm talking about the business underperformance. I think first time when they came up with a business update now, the initial signs of very clear good performance is visible. A non-India business, international business that is, has shown clear signs of turnaround and progress. India business is also doing well. So I think we are watching the Godrej Consumer, and we are liking Godrej Consumer at this stage. None of these FMCG stocks are cheap. So if you're building your portfolio for a long-term perspective, do look at acquiring some of these FMCG stocks. But remember that the next quarter can be very volatile. The raw material prices are expected to go up. Inflation is going to creep up, and a monsoon is supposed to be below normal, at least the first forecast. So there may be some pressure on the first quarter, but if you're building portfolio for long term, I think these dips are a good opportunity to buy.
Sorry, I stand corrected. Bajaj Consumer is up 80% since the start of this year, and in the last 1 year, stock is up 170%. What a powerful move we've seen in Bajaj Consumer. But let's now go across to Devyani for more on Angel One. Came out with the numbers, strong Q4 numbers. She joins in with the highlights. Devyani.
Well, yes, Angel One is buzzing today after delivering a strong set of results led by a jump in revenue and profit. Now, growth was fueled by a surge in F&O and the commodity trading segments, which has helped push their adjusted profits beyond the 34% mark. Now, leadership is also sounding very optimistic, noting that active clients are now returning and the cash segment market share is likely to bounce back in the month of April. With a focus on the higher value customers, the company is now eyeing 45% plus long-term margins for its broking business. All in all, it's been a good set, and the company is doing well in trade today.
Thank you very much for that. All the capital market players are higher in trade. Sudeep, that's a space that you've liked. It's a long-term structural theme. And stocks had corrected. Many of the AMC stocks have corrected, for instance, from their recent highs because of the conflict, the sentiment being poor. Any of the stocks on your buying radar right now, or have you dipped into these stocks in the last 1 month?
We have been liking, growth. So I think that's one company where we believe there is significant potential for growth in revenue as well as margins. They have the largest number of customers on their broking side of the business, and the potential for using the same customer base to provide other services like mutual fund distribution, insurance, wealth management, loan against shares. I think all this margin funding, all this is significant. So we believe there is significant scale up possible in growth, and I think that should be picked up from a long-term perspective. As far as asset management companies are concerned, it's a long-term story, growth story, and these corrections which we have seen in the recent past can be a good opportunity for picking up, for building long-term portfolio. But these are not cheap, and don't expect miracles in the short term from these stocks. The other segment which we definitely like, in spite of the high valuation, is the exchanges. MCX, for obvious reasons, with what's happening in the commodity options coming into play. So MCX, in spite of the valuation, is a favorite. BSE continues to remain a favorite, and also the upcoming NSE listing should add a lot of tailwind to BSE stock. both in terms of valuation pickup and also in terms of NSE will start trading in BSE, which will create a lot of excitement around BSE as far as trading volumes are concerned.
Between the two, which one would you go for?
I will go for, if I have to pick one, I'll go for still MCX.
MCX. Would you look to chase NSE in the private market before it lists or not?
No, I won't like to chase it in the private market. All kind of valuations are being talked about, and it's better to wait for it to list.
And one more question on Grow. That's a stock in your portfolio right now. Would you buy it at 200 rupees? Because stock has doubled from the issue price of 100 rupees.
I would buy, Nima. I think it's worth buying from a long-term perspective. I strongly believe there are multiple growth levers there. It's not in my portfolio, but I recommend it to multiple people.
Okay, all right, got that. Sudeep, I wanted to ask you if you have a word on any of these other companies. Bharat Wire Ropes, I'm not sure whether you heard what I had to say earlier, but the stock has halved from the top. There was various speculation in the past, but it appears there could have been a large trade today, which we'll wait by for the official details. The stock trades, I think, at around 16 times, 17 times earnings, the current earnings, and on an EV upon EBITDA around 10, 11 times approximately post this move. You have a view on this stock? They are 70% exports, so maybe geopolitical issues cooling off could be good for them. Not a stock for the faint-hearted, but any view?
I completely agree with you, Nigel, and I did hear what we were talking about some time back. I like it because of the fact that it is an export-oriented, predominantly export-oriented business, and their location is very convenient for routing the exports. They have a fantastic opportunity. Assuming the geopolitical situation stabilizes, I think the growth definitely will come. So if you are an aggressive investor, it's worthwhile taking a bet on this stock at this stage when the valuation has sharply corrected.
Thank you very much for that. Let's talk about Wipro. That's a stock which is still under pressure, down 3%. So there's been no recovery in Wipro. It started with a cut of about 2.5–3%. It fell even more. Okay, that's the 3-month chart of Wipro. Stock is down nearly 17%. The Q4 numbers were muted. The problem is the Q1 guidance also suggests that the degrowth will continue. The company has been making acquisitions. They've been winning large deals. They won 2 large deals in the quarter gone by, but it's just not translating into actual revenue growth. Revenues for Wipro have declined for the 3rd consecutive year. So there has been a slip between winning deals and actually in terms of it being executed and showing up in terms of the top line growth. Listen in to what the management had to say.
Certain deals that, especially the large deal that we have won, it's taking more time than we would normally want it to be, and that's also delaying the or rather impacting the growth aspects of it. It is very client specific, I would say, nothing to do with the geopolitics that's going on or the trade or tariff.
As we get into Q1, we do see headwinds of 2 incremental months of the wage hike that we'll have to absorb. The revenue environment, given our guidance, you will note is continuing to be weak. So we will have to work through it. There could be some volatility on a quarterly basis, but in the medium term, we will. Our endeavor would be to hold on to the band of margins.
Sudhir, there was some optimism building into the IT earnings. They had fallen so much. Valuations had dropped below the long-term average valuation multiples. These are still dividend capital allocate. They disperse capital in the form of buybacks now in the case of Wipro and even dividends. So there was a tactical opportunity play. But numbers have disappointed for Wipro. Would you still look to buy any other IT name ahead of the numbers?
Not really, Rima. In fact, I've been very clear. I think these are, as you rightly said, only tactical plays. When they're looking at a buyback or a dividend, fundamentally the business is having a lot of hits, and we have to keep that in an environment that is coming up with new models on a daily and weekly basis. We have to wait and watch this space. There's absolutely no point trying to catch anything at this stage. It's better to wait and watch, and let's see who the winners are, who can stabilize business using AI and take the benefit of AI. We did see when Accenture came up with the numbers, they have been able to harness the AI change, AI revolution to an extent, and that's why the numbers were pretty impressive. But I can't say the same about many other large IT companies, and they have to adopt, they have to change with the times, and this is a painful change. It will take some time. They will make some money because of the currency depreciation. They have a lot of cash, so they will declare dividends, do buybacks. So you want to take benefit of those, do take. But fundamentally, from a long-term perspective, I think view is still very, very hazy.
Okay, all right. We want your view on another company. Sudeep, just stay with us. That's BEML. The spotlight's on the company on the back of multiple order wins this month. Earlier today, we caught up with the management, Mr. Roy, who said that with regard to the next milestone, they are targeting 200 million order book from the international business, which currently is at around $100 million. Let's take a look.
As far as 26-27, FY 26-27 is concerned, order book, we are looking at an opportunity size of around 40,000 crore in defense, aerospace, in rail and metro. The next milestone is crossing $200 million order book in the international business, for which we will need to address more orders in heavy earth moving machinery, more orders, more opportunities in the rolling stock, and of course the defense, the platforms, the high mobility vehicle platforms.
Your view on BEML? I tried to ask Mr. Roy, what about this year? Because earlier he was talking about 20% revenue growth and margin expansion of 150 basis points with order book going to around 20,000 crores plus. He ducked that one, maybe rightly so, because he's in silent period, but we'll know very shortly. But he's sounding optimistic about the way from here on. What would you do with the stock at around the 1,750 rupees?
Nigel, I think the challenge with some of these companies is performance and efficiency. There is absolutely no dearth of orders, and the way things are going in the world and in our country, I think their order book will be kind of growing by leaps and bounds. There's absolutely no doubt. I have a lot of question marks on the execution and the financial performance, and I will continue to monitor this space. I'm not saying BEML per se has a major problem. That grouse I have is BHEL, because BHEL performance, barring a couple of quarters in the recent past, have always been subpar. BEML hasn't been bad. I'll want to wait and watch the numbers when they come out. From a long-term perspective, considering the order book and considering the momentum, including in defense, I think it's worth picking up, but keep watching the performance on ground.
Got it. Okay, all right. We thank you for that, Sudeep, for joining in and discussing all of those stocks. Wish you a good remainder of the Friday and a pleasant weekend ahead as well. We catch up next week. Well, before we move to the F&O check, just want to pull up a few stocks. Adani Power stock is just moving from strength to strength. Now it's a 200 rupee stock. What a brilliant move out there. In the last 1 month, it's up more than 30%. Nava Limited, another stock that's up close to 17% as we speak. Massive move on that one. MMTC, there was some fundamental news earlier. So that as well continues to build on to gains. And all these stocks are moving on very, very high volumes. So that's why just spotting them out. But let's do a quick check on the F&O market. Well, intraday chart of Nifty is telling you the picture and the kind of the mood that the markets are in. So the intraday dip got bought into. As we speak, it's a trend day. The Nifty is at the high point of the day. The advanced decline ratio, that's something that will make you feel very, very good. After nearly 5 months, I think April so far, most of the days we have had the number of stocks advancing outweighing the number of stocks declining. That'll be good times, from a portfolio perspective, because otherwise the breadth of the market has been negative. The options data comes up for you on the screen. A couple of strikes, 24,200 put, 24,300 put. Take a look at the premium. On both those two strikes, the premium is down by 30 to around 40% approximately. On the 24,300 put, the premiums come down to 150 bucks from around 250 bucks. However, at around the 24,300 call, the premiums ballpark around 160 rupees. So there is some signs of writing at around the 24,300 call. And if you just add it, 24,300, you add the premium out there for around 160, 180 rupees, it more or less tells you where the resistance comes in at, which is closer to around 24,500, which incidentally is where the 50 DMA is at. So that's the first level of resistance. If you get past that, then you're looking at the 200 DMA, which comes in at around 25,200. So that is going to be a crucial resistance zone. The Nifty Bank, well, that's more near-term in nature because around 800 points away from here, it has its 200 DMA and you'll want it to conquer that mark. So that's going to be important. Stock futures, individual stocks that were seeing shorting, they have come in for a bit of a short squeeze. Biocon, stock is up close to 3% and you have the shorts that are covering out, 11 lakh shares down. You have Oracle as well. Out there as well, there's a bit of a short covering bounce that's taking place. Not a large one, but there appears there is some buying in the cash market. Other stocks that are unfocused, Motilal Oswal, what a brilliant move out there. Fresh buying being seen on that counter. It's backed by delivery in the cash market as well. And finally, Kalyan Jewellers, a little bit off color today. That's seeing some fresh shorts getting added into the system. Net, it's a brilliant trading session. The buy on dips has worked yet again. And it's a trend day. Both the Nifty and the Nifty Bank currently at the high point of the day. We'll slip into a short break, though. We have Alok Agarwal of Alchemy Capital Management who will be joining us on the other side. Stay tuned.
Welcome back. Let's talk about stocks that are buzzing in trade. Pretty good volumes, delivery volumes. Hormis joins in with that list.
Plenty of stocks on that list today. Earnings reactions, stocks that are buzzing on strong volumes as well. We start off with some of the other big movers today. Bharat Wire Ropes is now up 20%. The Apollo Microsystems too, after the license that it received earlier in the day, 17.5% higher on the stock. Apex Frozen Foods, actually all of the shrimp feed names are doing well in today's session. So 11.5% higher on Apex Frozen as well. And look at the volumes. The Bharat Wire Ropes has had 1.5 crore shares traded already. The 20-day average is just 1 lakh. Apollo Micro 2 is almost 5x its 20-day average, and Apex Frozen 2 is around about 8x its 20-day average. If you take a look at the delivery front as well, close to anywhere between 25 to 30% of the total shares that have been traded so far have been marked for delivery on all of these names. Now look at the earnings reactions. Bajaj Consumer at one point was up 15% after its results, still holding on to gains of 10.5. Angel One is now, after its earnings call, has moved to a 10% up move in today's session, and Crystal too, after its results, has done well, which was strong on the year-on-year front and doing well for itself. We take a look at the volumes as well. After the results announcement, Bajaj Consumer's volumes zoomed up, and how? There's 1.5 crore shares traded here as well. 7 lakh shares is the 20-day average. Now look at Angel One. 7 crore shares have been traded today. The 20-day average is just 90 lakh shares. And Crisil 2 has had 4 lakh shares traded, a spike after the results. The 20-day average being just 63,000 shares. If you take a look at the volume on the delivery front, anywhere between 20 to 30% here as well. It'll be interesting to see the final number on Monday. But for now, it's almost 20 to 30% marked for delivery. And PSU stocks are doing well in today's sessions, particularly the railway-linked names IRCON and RVNL. IRCON is up 10%, RVNL is up 3.5%, and Shipping Corporation too is making a bit of an appearance here, 7% higher on this stock as well. IRCON has had 4 crore shares traded already. The 20-day average is 42 lakh shares. The Shipping Corporation has had almost 10 crore shares traded today. The 20-day average being 40 lakh shares, and RVNL too substantially higher on the volumes front. You take a look at the delivery, of course, well, not the most liquid stocks, all of these. So around about 10 to 20% of these names marked for delivery. Of course, you need to keep in mind that the volumes are substantially higher. The final number will be interesting to see.
Thank you very much for that. Alok Agarwal, Head of Quant and Fund Manager at Alchemy Capital Management, is now joining in on the show. Thank you very much for joining in. We're just taking a look at your portfolio. The Smart Alpha has about a 56% holding in mid-caps. Even in the high growth, Alchemy high growth, you've got 34 in mid-cap and 29% in small cap. Can you make the argument for why one should bet on mid-caps and small caps from here on?
Yeah, hi, Rima. The way we look at the markets and portfolio construction, we follow a GARP kind of investing, wherein the growth visibility is far more important. And we see that the majority of the sectors that are seeing a big up move in terms of earnings growth as well as earnings growth visibility, majority of them happen to be more on the mid-cap space or the lower large cap space. So that's where we are more sectorally inclined, more favorable towards those sectors that are giving that kind of visibility.
Big tilt towards many of the metal names. So there is a Nalco, there's a Vedanta, Hindustan Copper, Jindal Steel, SAIL, Hindustan Copper. All these names make it in the top 10 of your portfolio. Can you explain what is the fund's view on your commodity cycle, China demand, prices going ahead?
No, in fact, metals is our top tech sectoral bet, as you rightly pointed out, and multiple things are going in its favor. The fact that natural resources are really required for majority of the growth areas also in the markets. So be it any kind of electronics, be it any semiconductor chip, any kind of EVs or solar panels or data centers, majority of those things require this kind of natural resources as well. And a lot of these natural resources, especially the non-ferrous side, the silver, the copper, and to an extent aluminum as well, they are in deficits. The demand, more importantly, is turning to be a little more inelastic. And most important part is that despite the deficit and high demand, their supply is becoming far more difficult to catch up. Just to make a case in point, for example, silver in last 10 years, without supply chain issues, the total supply has actually declined 2.5% in 10 years put together. No one can imagine that with the supply chain issues with export almost kind of banned in China, and the demand being rising because of this higher adoption of AI, EV, as well as solar panels, the deficit is expected to go into a 6th year of deficit for that commodity as per Silver Institute, and likewise for copper and aluminum as well. So majority of these kind of metals, which are really required for that industrial growth and AI growth as well, most of them are into this kind of zone where the deficit is there and likely to persist.
Okay, all right. Hi, Alok. Good to see you in. But what's the preference right now? If I look at your portfolio, it's rather interesting, right? You need to buy these metal companies in bad times. Who would have thought, Jindal Steel today at around 1,300, Vedanta on its way to around 800. These are managements that in the past, they've had various hurdles, both in terms of the decisions that they've made and also business risk. How do you play it from here on? The ferrous, non-ferrous, or some of the ancillaries? I observe you also have HEG, the graphite electrode player.
Yeah, absolutely, Nigel. I would have wished to buy them at much, much lower prices. But they are in a cycle, in a virtuous cycle, wherein the kind of growth rates and the visibility of that going forward is pretty strong. And this recent wars have only added to the woes of supply chain, wherein the supply gets further curtailed. And we are seeing that those natural resources, the demand is much higher. We are more confident on the structural side of the non-ferrous side, because the more important fact is the supply, even if somebody wants to, cannot really scale up. When it comes to ferrous side, a lot of that supply is curtailed because of decision taken by China to ensure that they do not produce too much. And recently, a couple of months back, when they took more steps to ensure that majority of that production also is consumed in-house in the residential side. So lesser amount being available for exports makes it a lower supply globally. So we are inclined on both sides, but for us, the ferrous side is little more tactical in nature, but the non-ferrous side is far more structural in nature. We do think the best of times is still ahead of us.
Oh, brilliant. Thanks for that. I mean, good clarity. Non-ferrous could potentially have a longer runway even from here on. You know, talking about metals, and another way of playing it, MCX, you know, that's one of your top holdings. And you'll have BSE as well. You know, tell us about both these two and what happens to the unlisted NSE. You know, so one would have thought that's a good place to hide, but these stocks are 10 baggers in the last, I think, 4 years or so.
Yeah, absolutely, Nigel. So let me put this way, that MCX and BSE kind of stocks, they're both the play on capital markets as well. And MCX indirectly is also a play on the metal side, which is our top sectoral bet. If we look at the last decade, India, which is the savers economy, majority of that savings used to be channeled through the deposits to the banks. Banks made use of those low-cost deposits to earn that higher net interest margin, and we saw how the banks delivered great returns in the last decade. Fast forward to post-COVID era, we realized that most of the investors, most of the savers are channeling that money more towards the capital markets, as we see that the banks are seeing lesser deposit growth, whereas we see the SIP numbers for the investors as well. So that amount in the capital market is only going up. Financialization of savings is only picking up. The natural beneficiary is the capital marketplace. Within the capital marketplace, the pecking order in terms of those who have a larger hold, longer period hold on the investors, it is first the exchanges, followed by the wealth managers, followed by the asset managers. So we played around that cycle. We do think we are still at the middle or early middle of that cycle. A larger part of that migration is still pending, and we do see a larger growth coming in for those as well. But within the sector, since it's a consumer-facing one, the exchanges, our preference is for those who gain market share. We saw how BSE, with less than a 1% market share in options, has now gone down to clear northwards of 20% in market share. And MCX happens to be one of the monopolies on the commodities side, whether it is gold, silver, or crude. So those things are also helping it grow faster than the whole segment.
Okay. So in wealth management, which is a stock in your portfolio? In AMCs, it's Nippon Life. And you've got both MCX and BSE. In wealth management?
In wealth management, we don't have a core wealth management, but we do have exposure to Motilal Oswal, which is a combination of multiple such businesses.
Okay, got that. One quick question. Even gold and silver ETFs are a significant part of your portfolio, 8, 9, 10%. Is that just tactical? When did you enter into it? Or has that always been the case? And what's going to be the call on this?
So we are very positive on both gold and silver. We entered into it towards the end of last year, maybe around October, November times. And but our call on that is pretty positive. See, we would have preferred to have miners instead of the ETF itself, but there are not too many gold miners or too many silver miners in India. So that's why the play has been via those ETFs. We do think that with the rising exposure of gold in the overall central bankers' balance sheet, one must note that if we put all central bankers in the world together, their holdings of gold have surpassed that of US Treasuries after a gap of 30 years. With the rising debt levels in the world, especially on the US side, crossing 120%, this call on the central banker side doesn't seem to be a tactical call. It has to be a little more structured in nature. So that demand is a genuine demand that's there, and that's a very good hedge towards against the overall rising debt levels in the market. And that silver definitely, as we said, is a play on the non-ferrous side. I would have preferred to have miners, but yes, till then, ETF is there. Till that time, we have great miners.
Okay, all right. Any exposure to the alcohol beverage space? That's suddenly come back in a big way. There seems to be some kind of optimism that Bihar opens the taps here again. Global Spirits could be a stock in terms of a beneficiary. That's currently up 7%. But the space on the whole has started doing well. You'll have exposure there?
Oh, it's an exciting place, Nigel. Currently not there in the fund currently. Yes, we are exploring, looking at those aspects as well. But, you know, the way I approach towards this portfolio construction is to take those paths which have least amount of resistance on their way. So when I do get those kind of structural stories which have with the slightest of headwinds in their way, it becomes far more easier to allocate to them. We do understand it at the alcohol beverage side. A lot of times there are regulation that keeps coming on the growth side as well. But nevertheless, India is one of those rare growing markets for alcohol beverage consumption. And we are looking at it prospectively, but not currently exposed.
Cheers to that. All right. Thanks, Alok, for joining in. Have a good Friday evening. Catch up soon for a coffee, maybe, not a drink. Thanks for joining it. Well, slip in a short break. Come back. Continue to focus on markets. Ramesh is waiting for us. He'll tell us what he's picking up in terms of dealing room chatter. Welcome back. You're tuned into Closing Bell. You know, and just one quick point, you'll say the markets are up marginally this week itself. Then why are we talking about it being such a good week? Today as well, it's up only around 0.5%. So over the week, the Nifty is up only 1%. The real action actually is in the small cap index. That's up more than 4%. And that's why your portfolio is feeling very, very good. So that's why we say it's a good week. The headline index is consolidating, but otherwise, broader markets, bombastic gains out there. Nimesh joins us to give us an insight into dealing room chatter though. Nimesh, what's the flow picture looking like?
Hi, Nigel. So again, a big move in the broader markets. That's been the theme for this week. As you rightly highlighted, this week the small cap index is up 4%. Even the micro cap index and the SM index has seen a big rally in the last 1 week, 10 days. So clearly the momentum has shifted towards the broader market names. even in today's trade. And look at the breadth today, almost 4:1 on the buy side. A lot of energy stocks, a lot of small cap names are buzzing in trade, and it's backed by some bit of institutional activity as well. From a flow perspective, I would say a small sell figure might come because there is a small MSCI sell basket as well towards the end, so maybe that may impact in terms of flows. Even then, the selling seems to be very much limited to few, say banks or for that matter, IT names. So that's the trend. Otherwise, there is a good momentum in the broader markets. Consumer as a basket has moved very swiftly today. The index is up 2.5%, and there are big moves in that space as well. I guess that's largely underowns a bit of change in ownership there, but the trend seems to be clearly towards the energy names, and that's where the big momentum seems to be in the last couple of days.
Okay, all right, Nimesh. What about individual stocks? What are you tracking?
Well, the first stock on my list is Central Mine Planning. It's a newly listed stock. I think the history is only for a month now. It's been buzzing in trade today. The volumes have picked up in the last couple of days. I understand at least one large influential HNI investor has been accumulating the stock at current levels. So that's the reason why you've seen a big move in that name in the last couple of days and today as well. The second name is GAIL. While the stock has been in a narrow range, but towards the end there is going to be a large MOC sell in GAIL in today's trade. So maybe you'll see a bit of an impact because of the sell flow in gas authority today. And the last couple of names where there is delivery-based buying, and both the stocks are buzzing as well. So Gujarat Gas as well as Pidilite stands out in terms of delivery-based buying in both those names. And additionally for Gujarat Gas, there was a Nomura upgrade as well. And hence we've seen a big move in that name, and that's backed by delivery buying as well.
Thank you very much for that, Nimesh. Always very helpful. Mitesh is back with us for a few BTST calls that you can take over the weekend. Mitesh?
So, while weekends are always tricky, but, given the fact that the bias is on the long side, we'll go with that BTST call, not STVT side. So KA Industries can be bought with a stop of 4,800 for targets of around 4,900. And IndusInd Bank, I think, after a long time has come on the buying radar. So BTST here with a stop at 849.5 for targets of 865.
Thank you very much for that. Let's talk about the macros. The Indian rupee is the best performing currency today and for this month as well. Lata is here to tell us what's working in favor of the rupee. Lata, we were so used to saying, right, the rupee is underperforming versus other emerging market peers. Has that turned the tide?
Well, at the moment, for the day, the rupee has been an outperformer, and for the month as well, outperformed by, we are up by 3% versus the dollar. Most other EM currencies are 2 to 3% lower. Now, the immediate cause for the outperformance today itself is a note from the Reserve Bank, note as in a nudge from the Reserve Bank to oil companies that you don't go around shopping for dollars to all the banks. They have designated just one or two banks and given a line of credit through those banks to the oil companies. The other factor which appears to have created a mood in favor of rupee and against the dollar was the buzz that all gold imports are being rejected from April 1st onwards. That is, gold imports by private parties, and only MMTC and IIBX are being allowed. Now, this was pushed back when the DGFT released a list of 15 banks who will be allowed to mediate for gold imports. That list was pending from April 1st, which is why the delay. But the combination of these factors led to the feeling that there are a lot of procedural steps being taken to ensure that dollar demand is not too much. And that's why you saw a rapid rise in the rupee. It rose by over 0.5% for a better part of the day. And then it receded when the DGFT released that list. Nevertheless, the demand is contained because even oil company demand is just getting channeled so that it doesn't multiply. Likewise, you have the old controls on banks. They cannot have more than 100 million in terms of open positions. And most importantly, FPIs have been buyers for 2 days in a row. It's buyers of stocks means you actually sell dollars and buy rupees. So that again was a pro-rupee move. All this has helped in making the rupee look an outperformer. You must remember that it was a serious underperformer for the past 12 months. So now it's a little bit of take-back time from oversold positions. Just a word, the pressure is not gone. all the EM currencies are in the red today for a reason, and that's because crude prices are nudging $100. The talk of peace and ceasefire notwithstanding. So that pressure remains on the rupee. We are not going to see any big rally, but extreme oversold positions are being corrected.
Okay, all right. Thanks a lot, Lata, for joining in and giving us that neat piece. Well, it's been a while, right, since we spoke about the rupee outperforming. And that's precisely what's happened. Let's hop across to Anand Tandon, market expert who joins us on the show. Hi, Anand. I recall a period for very, very long where you were very conservative. And you were spot on because the broader markets, in fact, did come in for selling. Are there a few ideas that have come up now that are calling for your attention and you would look to dip in?
You know, we have the last time we met, I had indicated that perhaps one should start buying a bit. At that time, I guess I was over conservative because the market since has rallied again. But I don't know how far the rally can last. We are again up against valuations which are stretched. Look, the market has gone back to almost at the level it was before the war. And then the issue is that the war brought in with it a rising fuel price, a weaker currency, so perhaps a potential slowdown in the economy, an earnings cut, all of which is likely to have, be visible in the current quarter, not in the quarter gone by. Especially if a problem in the West, in Asia West continues. So I don't see what the excitement is about. We are again nudging the upper end of the valuation for the index. And that will mean that while you may be able to find a few stocks here and there which are relatively cheap, haven't moved up, by and large, I think the market is not at a level where you should be rushing to buy at this stage.
But when it was lower, say a week back, Anand, were you buying?
Like as I said on your show, I mean, one could have allocated a little bit of any allocation that you were underweight on in the market. But I didn't think even then that there was a need to actually jump in big time. Luckily, it appears that the war perhaps it may solve itself faster than I had anticipated. We'll see how it goes. For now, at least the players there are making the right noises. So if it were to get sorted out, then clearly that is some relief. There aren't that many sectors that offer themselves up for investment even today, if you will look at it, because what we've seen is mostly a rebound back from the fall. And, as I said, the earnings growth to me still looks tepid. The emerging markets, I mean, the other markets around the world are looking a lot more attractive. So if you are actually looking at India from a little distance away from India, you would wonder what it is that you're looking to buy. And therefore, the problem remains that for Indian investors as well.
All right, the backbone of the market is going to be important, which in this case is the banking stock. So Anand, request you to stay with us. We've got a big weekend coming up with regard to earnings. And Ananya joins us to tell us what do we expect from HDFC Bank. Ananya?
Q4 are expected to be steady on operations, but the main focus will be on governance and management commentary. Now, previously, they had come out with their business update, and we can see that the growth remains healthy, with advances growing around 12% year-on-year and 4% sequentially, while deposits remain strong at 14% year-on-year and nearly 9% quarter-on-quarter. CASA ratio has moderated to 34% on year-on-year basis. Now, coming to the earnings side, the street expects that this is a stable quarter and not a big surprise. Now, net interest income and pre-provision profit are expected to grow around 3% on Q-on-Q basis and 5% on year-on-year basis, while PAT is seen up 2% sequentially, but largely flat year-on-year. Now, the big focus will be on the governance. After chairman's resignation citing issues regarding values and ethics, the bank has clarified that there are no material, operational or regulatory issues going on, and RBI has also mentioned the same, that they did not find any material concerns with the company. However, the lack of clarity on what triggered the resignation is weighing on sentiment. So this will be the key monitorable for the stock going forward.
Thank you very much for that, Ananya. So performance will be steady. Focus will be on the regulatory aspect. And whether we get any clarity on that. ICICI Bank, what's the street expecting here?
It continues to remain in a strong execution phase with no structural concerns in the franchise. Now, for Q4, expectations are steady with NII expected to grow around 7% year-on-year, while PPOP and PAT are both expected to grow about 3% year-on-year, indicating stable earnings momentum. Now, the growth outlook remains stable with margins expected to stay range-bound at around 4.3% in FY26 and gradually improve to 4.4 to 4.5% over the next 2 years. Now, asset quality is also expected to remain best in class with GNPA and NNPA at around 1.4% and 0.3% respectively, while credit costs are expected to stay contained at 45 to 50 basis points. Now, loan growth is expected around 16% on a year-on-year basis, and deposits are expected to grow around 15% for FY26. Now, the key near-term concern remains the additional provisioning linked to RBI's PSL review, though this seems more of a compliance issue rather than an underlying stress.
Thank you very much for that. Here's a quick programming note. As we slip into a break, we're proud to bring back HSBC presents CNBC TV 18 Future Female Forward Season 4, co-presented by Cognizant with a powerful cultural launch gala in New Delhi. Top industry leaders come together for a dynamic town hall on equity and leadership in New India, along with curated entertainment performances. The launch will also see the announcement of a special advisory committee to guide female micro-entrepreneurs through the year and drive more meaningful impact. Tune in to 23rd of April, 5 p.m. onwards on CNBC TV 18. Block your date and time. Welcome back. We've got about 4.5 minutes to close what's going to be a good trading session for our markets, with the Midcap Index up nearly 1.4%, 800-point rally on the Midcap Index. It's up 3.5% so far this week. Anand, Ananya was just telling us the expectation from HDFC Bank and ICICI Bank. So the picture will be clear next week on Monday. But in the private sector banks, it's Axis Bank, which has been a big outperformer. Do you have thoughts on all these in the large cap private sector bank, which stands out?
Well, I mean, I think I mean, each one can have its own favorite. I don't think there is anything majorly wrong with any of them. So, an HDFC is probably underperformed the most, may actually do quite well. Axis has, as you said, been performing fair consistently, as has ICICI. Take your pick. I don't think that there's going to be much difference between any of them in terms of overall growth. The numbers are clear. CASA is down. Margins will be therefore what you need to watch. The ability to raise liabilities is what we are looking for. You can therefore add a Kotak and an SBI into the fray. Those are pretty much the ones that are likely to sustain or do well in this kind of scenario.
Capital market plays. You've got an Angel One up 10%, strong numbers. Grow has doubled from the IPO issue price. Your pick here?
I would stick with either insurance or wealth management, not particularly fond of other capital market plays.
You've spoken about insurance in the past as well as one of the ideas that you have. Staples have made a comeback today, particularly a company like Bajaj Consumer. Very strong numbers. Do you have I know in the past you've spoken about high valuations, which makes you concerned about the overall sector. But look at Bajaj Consumer. It's up 85% in this year itself.
Well, yes, so there's always an outlier out there, and they seem to have got some of the things right, largely because they have now perhaps an expanded portfolio. But if you were to look at the sector as a whole, I think you're still looking at fairly tepid gains. And given the fact that we are perhaps going into a slightly more inflationary scenario, you have to look at those companies which have the pricing power. Probably the larger companies will benefit more than the smaller ones.
Any ideas that you have for us? Specialty chemicals, insurance are segments you've liked in the past. Any more you'd want to add?
Not particularly. Like I said, I think market continues to remain, again, fairly pricey. So you are still looking at sectors which are likely to show you numbers. And clearly among them, banking and some areas like specialty chemicals were good. Specialty chemicals now will become more selective because of the fact that some of the input costs are going to create problems.
Any sector where you're positive on the entire segment? There is a top-down bet where a rising tide will lift all boats.
Well, clearly the power sector is one such, but unfortunately in power, most of the companies have regulated returns, the larger companies, and therefore one can't just keep on bidding up the prices in terms of PE. And with that caveat, I think, you will find that the earnings growth will be coming through. I don't want to comment on the valuations of individual companies. And again, as I've said many times before, transmission is clearly the place to be.
Transmission. And renewables, that's also seen a lot of interest.
That always beats me, given the fact that, actually speaking, if India was to reduce its import duty, we will be swamped, and there is no renewable company in India which can actually stand up. And if you really were to open up the bidding, then you will find that the prices continue to go down, which essentially of the per unit price would continue to go down, which essentially means that unless you are able looking at a lower interest rate in terms of your project cost, there isn't that much ROE to be made. Again, while there is a lot of enthusiasm in the sector, I don't particularly find myself enthused about it.
Anand, we'll leave the conversation here for now. Thank you very much for joining in. Happy weekend to you. Just counting down to today's trading session. The Sensex and Nifty are closing at the day's high. Mid-caps and small caps are shining. And BSE listed firms' market capitalization has now rebounded to pre-Iran levels of $5 trillion. In terms of levels, the Nifty is closing with a gain of 170 points, above 24,350, Sensex higher by 550 points. Mid-caps, small caps gaining nearly 1.5%, very strong advanced decline ratio. Sectorally, buying visible in the FMCG sector, power-related names saw interest. And in individual stocks, just to run you through some of the big movers, you had HUL right on top. Asian Paints also saw some buying. Nestle India, JSW Steel, Apollo Hospitals, Power Grid, Max Healthcare, Reliance Industries was a big mover with a gain of 1.5%. On the way down, Wipro and HDFC Life, which disappointed the street with their numbers, were the laggards today, 2.5% gone on there. We've wrapped up the second consecutive weekly gain for our markets, and this week we've seen a rally of more than 1.5% on the Nifty. We thank you for watching this show. Don't go anywhere. On the other side is our special show, Editors Roundtable. Global cues lifted Dalal Street for the second straight week. The Nifty and the Sensex gained over 1%, while Midcap stole the show. That index surged nearly 4%. Except for autos, all sectoral indices clocked gains for this week. 14 lakh crore rupees in investor wealth was added just this week. Over the next 30 minutes, we decode the action on Dalal Street. We track the evolving energy security play amid global tensions. We'll assess where the textile stocks are at an inflection point. Hello and welcome to Editors Roundtable. I'm Reema Tendulkar. With me are Nimesh, Nigel and Prashant. And joining us here on the show today is Samit Vartak, founder and CIO at Sage One Investment. Hi guys, last week was a super strong week, and this week we've consolidated but with a positive bias and very strong price action seen in mid caps and small caps.
Absolutely. So clearly momentum is back in the broader markets, and this typically happens, after the March sell-off. You've seen a big rebound in the broader market names in the last couple of years. So that the trend has actually played out again this year as well. There was panic in the March, towards the March end, and now there is a bit of a left-out feeling. Honestly, when I talk to investors, they are like, oh, the stock is up 20-30%, but I have not participated. So there is a bit of left-out as well now. But yeah, clearly, the momentum is clearly back with the broader market names.
That is the market, right? Till 10 days back, it was, the feeling was, somehow, if you're left out, you're lucky.
Yeah.
I mean, you're not getting beaten up, right?
Yes.
And now
it
in
is
10
like,
days, 15 days, as prices have moved, that sentiment is just, you turn from, what is that?
JOMO to FOMO.
JOMO to FOMO, right? Joy of missing out to fear of missing out now.
Yeah.
But that is what markets do. And I think, but Reema, I have to say that although lots of people have reached out, and the question has been whether this is real and whether this can be trusted, or will we once again get into a bit of a, fall phase, and that's the question always. But I think more and more that confidence is starting to come back, that maybe we've seen the worst. Remember, oil is still not at it's not at 70. It is still closer to $100, right? But markets are pricing in that it will not stay at 98, 100. It'll come off, and that's what 12-month out oil futures, etc. pricing. $75, $80, still higher than where we were pre-war. So yeah, I mean, markets at least signaling that confidence perhaps has started to come back a little bit.
I think, more so from confidence, it's all about positioning, right? The market was so light in terms of positioning. Everybody's portfolio got sold into. The MTF book had actually virtually, had to square off in the March end. So purely from a positioning point of view, there was hardly anyone who was holding on, at least the MTF book, the trading book. And that's why, seen very sharp reaction into stocks as well. A small news, and now you'll see a lot of companies also announcing positive news. They're getting bagging orders, they're doing some deals, and stocks are reacting. So that's the market.
Well, in terms of the F&O positioning as well, right? You had 2.7 lakh contracts on the short side from FIs, which is the highest. 85% of their positions in absolute terms is 2.7 lakh contracts. And in a matter of, I think, 12, 13 trading sessions, 2.7 lakh contracts has come down to sub 2 lakh contracts.
Exactly.
So that's the power of short covering. And as Nimish has been telling us, off and on, at least FIs are not selling big.
Yeah.
In fact, they're nibbling in 2, 3, 500 crores of buying. Welcome back, I think so.
Yeah, absolutely.
There's one stat that I'd like to share, that the combined market capitalization of the BSE listed firms is back to the pre-conflict level of $5 trillion. And from the February lows, 27th of February, the market capitalization of BSE 500 has gone up by $600 billion. The Nifty and the Sensex are still some distance away from conquering or getting back to the pre-conflict level, but the mid-cap and small-cap are back. Yeah, they're higher.
And I guess that's the reason why we've got today Samit Vartak, the guest who's joining us today. He's actually a champion in mid and small cap. His large part of the portfolio is into broader market names. So I guess if Samit is there, maybe we can start asking him as to how is he navigating the volatility. Is he?
Samit, can you hear us?
Yes. I can.
Oh, great.
Hi,
great, Samit. Hi, Samit. So, Samit, if you want to just quickly give your thoughts on how are you navigating this whole volatility in the broader markets, and what's the sense now? We've seen very sharp corrections in the last 18 months, and of course, the stocks have rallied 30-40%, but still they are so much beaten down. How are you approaching these broader market names now?
Right. See, I think it's always good to understand these cycles, and in my memos I have presented analysis of various cycles, and one of the cycles is of small caps, the broader market, right? So if you see, the small cap cycle lasts for about 2.5 to 4 years. So if you see, the last peak happened in September 2024. Before that was September 21. Before that was in 2018. Before that, 2015, 2011, 2008. You see, it's a repetitive cycle. You need to be cognizant of that. What's happened this time is that, that cycle, once the small caps peak, there is a correction for almost 9 to 18 months. So we are at the end of 18 months since the last peak. So that gives you some indication that, okay, we are somewhere closer to the bottom. Add to that the March, seasonally weak period, right? So, I had presented in my last memo saying that the worst month during the year is February, where the average returns are minus 3.5. The best returns are in April, where the average returns are 5.5%, right? So, and March, we know about, the factors which drive a lot of forced selling. There is, liquidity which gets sucked out of the market. And so we had the larger small cap cycle sort of at the bottom of the cycle. Add to that the annual weeks cycle period, of this, and add to that the war, the kind of you couldn't hear a single positive news on India, right? So when you have three of these congruence of these three big factors, generally that's the time you need to be taking advantage of the market. After that, we have seen even in the COVID times, right? A lot of things get factored in. Even COVID, but bottom happened on the 23rd of March. Even this time, it happened exactly on the 23rd of March, right? And by 23rd of March, markets had gotten a sense of how this risk is going to play out, And after that, things got really, really worse. Over the next 1 year, the second COVID wave was so brutal. Even then the market saw through it, because market would look forward 1 year down the line. So today, a lot of things look negative in terms of oil prices. There is a lot of uncertainty in the world, but once market gets it takes some time, 3, 4, 5 weeks, and I think it has taken that kind of view. And then see, on ground things hadn't worsened as much, especially on the small caps. And
got that, Sumit. Got that. Got your point, Sumit. Got your point. So, what I want to ask you was, if you believe that the 18-month consolidation or the downtrend is over, typically how the small cap and the broader markets react? How much upside normally you've seen in the past as well, and this time, what is your expectations?
Right. So once the bottom happens, the upside lasts for about a couple of years. As I said, 9 months to 18 months, out of that 3.5 years is in correction, and then you have a couple of years of upside. The average or almost the minimum upside during this bottom to top is about 92%. That's been, if you look at the past 6 cycles, that's been the upside. Of course, these are all indicators, not necessarily this is guaranteed. Investment is all about probabilities, and there is no certainty of this, but that's an indication. So that's the upside. Of course, you need to bet on the right sectors, and if you bet on the right sectors, the upside is even higher.
Sumit, hi, Prashant here. Just a quick point. So this 9 to 18 month cycle, so just tell us what you did. Did you move out of small caps as a space, went to large caps? Or as a portfolio manager, that does not work, and then get back in once. If this is a sort of a pattern, not exactly how it plays out, but if this is even roughly a pattern, as you say, does it? Did you do that?
Yeah. We did not do that. See, our focus is betting on companies where there is at least 20% earnings growth in the next 2 to 3 years, 20% per year. So we are stuck with that. Then we ride through these cycles. Rarely have we taken broad-based, cash calls. What we have done, especially whenever there is such a crisis situation, you need to churn your portfolio, right? So there would be stocks which may not have fallen as much, and there are stocks which have fallen a lot. So for example, say in the managed spaces place, there were the solar modules players who had fallen a lot. There are a lot of export oriented which had fallen a lot. So you churn your portfolio, get into those, because they probably have gone down by 40-50%. And when things reverse, then a lot of the weak players are already out, and there are no sellers left. When the buying happens, the pullback is also sharp. See, as a fund manager, it's very difficult to take a cash call. Just for an example, right? I have presented a table showcasing that.
Which is, sorry, the first space you mentioned was which one?
The managed spaces and real estate. Managed spaces.
Which is office and smart works, etc.
Yeah, so office, I would say it's more of co-working space. Managed spaces is where, they have longer term, contracts. They don't really lease out few seats. They lease out the entire floors or, so it's a very different where there is very little ALM mismatch of, their contract with the landlord versus their contract with the client. They generally have long-term lock-ins of 3 years. So those are the spaces where I think it's an annuity business. It's not, a short-term business.
And these are stocks you like as well, right? I mean, these are.
I like.
I mean, we're
yes,
talking.
Absolutely.
Yeah, these are.
Absolutely. Lot of.
Yeah.
Sorry, Prashant, you were asking. Come back to.
No. Sorry. Go on. Just finish that point, Samit.
Yeah, I mean, see what happened was because of IT. A lot of related sectors. People do relate it to real estate. Because I think IT. If IT job, if there are IT job losses, and people relate it to real estate, that would also take. So real estate got hit. I mean, by 40-50%. Same thing happened with managed spaces because it's also considered to be part of real estate. But then if you look at the individual businesses, there are a lot of players in Bombay real estate which also got hit as much, which has no relation with IT. There are these managed spaces. Actually, there very little business comes from IT. There are so many GCCs which are coming into India, and most of them say that they don't have enough space for the demand that they are getting. They have annuity business. It's an ALM. There's no ALM mismatch. And it's not anything related to IT or sort of a real estate kind of a business. And they were so cheap that we churned the portfolio to add these names. Same thing happened with solar modules. And especially when Iran war started. I mean that even made even more sense because they were down by 30-40%. The valuations became so attractive that every country would want to delink themselves from oil. And I think for India, solar is the best play.
Yeah. Actually, that provides a perfect segue, Samit, and we'll come back. So those are two areas we want to ask you what else you've done, just in terms of themes. But Nimish has put together some data on exactly that, which is energy security and how's that flowing through from a market and stock perspective. Nimish.
So, Prashant, this entire Iran war, the biggest fallout has been the energy security. That's been the big buzzword in the markets as well, and stocks have in general reacted as well. The entire power basket apparently has done really well since the Iran war broke out. So I've broken down, and largely all sorts of sector stocks within that power has done well. First, the plate will come, which is for the thermal power companies. I've just identified three names. Adani Power, the stock is up 34%. BHEL is up 12%, and Tata Power is up 11%. And there will be a valuation table as well. They're trading at close to anywhere between, say, 28 times to 31 times. Only BHEL is an outlier there. It's trading at 87 times. So, yes, there is a momentum in the thermal names, but keep an eye on the valuations as well. That was some of those names in the thermal space. The next table is on the solar stocks. Even solar stocks have done really well in the last 1 month. Premier is up 40%, Wari is up 28%, Acme Solar 27%, and MV Photovoltaic is up 35%. But here the valuation seems to be quite sanguine. It's not like out of the whack in terms of valuations. Anywhere between 14-15 times to almost 23 times on a 1 year forward. So, and they've corrected sharply. At one point in time, I remember premium was sitting at almost 50 times. So it's almost half in terms of valuations from the peak levels. So that was the solar companies. Even go down further to the wind names. Suzlon is up 15%. Inox Wind is up 7%. But if you look at, I mean, it's not showing up in the chart, but Inox Wind from a high of 200 had fallen all the way to 75. You've seen a bit of a rally there, but even after the correction and now with the rally, it's still quoting at close to 17 times. So again, reasonable in terms of valuations on a 1 year forward. Similarly, transformer businesses, at least these businesses have not fallen much and they're still very expensive and they've rallied a small. So the likes of, say, GE Vernova, Hitachi, Siemens, all have been pretty much flat to positive, but they all are trading at very expensive valuations. And the last but not the least, I've identified some PSUs as well, the power PSUs, REC, PFC, Power Grid and all. I mean, obviously for them, the valuation is not a big concern, but even they've seen a bit of a rally. So across the power names, whether it's thermal, solar, wind, power financing companies, all have seen a bit of a momentum in the last 1 month ever since the war broke out. And clearly the energy security is something which a lot of investors have started betting on post the Iran war conflict.
Absolutely. That's interesting data and the move that we've seen. Samit, if you want to come in on anything you've done here, I mean, you spoke about the solar module companies. So this theme or let's address one or two other areas which you find attractive, Samit.
Yeah, I mean, see, again, the attractiveness is not just from the perspective of demand side, but also in terms of valuation, right? So I think a lot of export-oriented themes got impacted. For example, textile. Textiles, the garment manufacturers have corrected almost 30-40%, from the top, and you have the FTA signed with UK, with EU, the tariff issue with sort of US, which seemed to be, the worst case scenario. Now, at least we are normalized. So a lot of demand, and with rupee having depreciated by almost 12% against the US and probably 20% against, euro or, other currencies. I mean, it's pretty attractive. Same thing is with, some of these specialty chemical companies or the CDMO names. I think with the rupee depreciation, a lot of export-oriented themes also would be benefiting. Other areas which I really like are, some of the NBFC spaces, like gold finance or housing finance. Even they have corrected a lot. I mean, some of these housing finance companies have, are down by 30-40%. Gold finance companies, even after great results, are down, 30% from the top. And their growth is still probably, way about 20%. So if you are looking for good companies which will offer 20% plus growth at reasonable valuation, there are a lot. I mean, you look at our example of an AIF, right? It's a broad-based AIF which has micro caps to, larger mid caps. The earnings growth of that portfolio is almost 50% per year for the next 2 years. And then the 1 year forward multiple is 18 times. That's the kind of correction which has happened, across the board, and a lot of value has emerged. It's not available probably in the larger space or, a favored space, but there are a lot of spaces which have got hit 30, 40, 50%, and a lot of value has emerged there.
Samit, I remember a couple of sectors where you've been bullish on. I know you can't talk on stocks, but defense as a space, you own some of those mid-cap defense names, and also some of those, hotel stocks, especially the hospitality space. So in that, have you added anything more, or you like that defense space, or for that matter, the entire, hospitals and hotels and all? Anything that stands out for you now?
Yeah, I mean, defense definitely stands out. See, but the problem with defense is that the main names, the very well-known names are very expensive. None of these are available at anything less than, 40, 50 times kind of a multiple. And it doesn't make sense for us, at these kind of valuations. But, there are sort of the artillery manufacturers or, the M155 shell manufacturers, which are really cheap. They have their pipes business, plus they have the defense, where you are getting this defense business almost at, no cost. We have added one more company, which is more on the unlisted side, pre-IPO stage. Again, the valuation there is 1 year forward of single digit. So there are, if you go same sectors, if you go to the unknown space, which are not really favored by the market, you are getting valuations of single digit to maybe low teen multiples. Whereas if you go to the known names, it's crowded space with all the mutual funds probably crowding in and taking the valuations too much up beyond the comfort level. And one has to remember that defense kind of plays are very cyclical. In the past 16, 17 years, when the cycle ends, the correction is almost 80 to 90%, and it has happened thrice in the last 15, 16 years. Right? So valuation is very, very important. You can't just get swayed by only the theme.
Samit, hold that thought. We need to slip into a very short break. We'll come back and talk more about export-oriented sectors, textiles in particular.
Welcome back. You're tuned into Editor's Roundtable, and the question that we're asking is, are the textile-related plays at an inflection point? And the reasoning is there are various headwinds that have actually turned into tailwinds. Case in point being the US tariffs. From around 50%, it's come down to around 10%. Then besides that, there are FTAs with UK as well as with Europe that are awaiting ratification. So once the governments come on board, then they'll see the light of day. But the writing is already on the wall. The rupee depreciation, yes, they could have hurt in terms of flows, but actually it's a tailwind for some of these companies as well. And besides that, Bangladesh is facing energy issues. Remember, Bangladesh, on the labor cost-wise, are very competitive compared to in India. But otherwise, on the energy front, they are struggling. And that actually could make India relatively more competitive, particularly on the textile space. Finally, I was looking at the cotton yarn spreads, and that's spiked up by a large deal, 20 to 25% up. On a per kg basis, that's moved to around 130, 135 rupees per kg. I was referring to an Elara note as well, and they as well have verified this data. There's a big surge in terms of spreads that were 100 rupees just in January. That's at around 135 rupees odd the last time I checked. So stocks in focus is going to be quite interesting. There are various companies that have exposure to the United States in the garmenting segment. Case in point being a Pearl Global or maybe a Gokuldas as well, and Arvind. All of them have a good amount of exposure to the United States. Besides that, there are home textile companies. Welspun India stock has seen a sharp correction from the top. Can it make its way back? The other one we're looking at is Indocount as well. So will home textiles fight back? And when you're looking at some of these spinners, there is a stock like KPR Mills, which some believe it's very, very well placed from here on because it's got a good blend. They have the spinning capacity out there, and garment is close to around 45% of their revenue mix with a good exposure to UK as well as Europe. So that could be one of those stocks, one of those dark horses out there. So we'll keep an eye out on that one. And finally, spinning to ready-to-stitch fabrics of Vardhaman Textiles as well could be the other play out there. So the textile space has been a relatively under-owned, unloved sector for a while, but there are various headwinds that have turned into tailwinds. Will things look out from here on, and is it at an inflection point? Well, Samit, I was just looking at your portfolio. I think you have close to around 4% allocation to textiles. Could you tell us, within this basket, what do you like? Is it the spinners, the garment plays, geographically as well? Some have a high exposure to US. Some see a bigger opportunity in UK as well as Europe. Your take?
Yeah, I mean, we like the garment manufacturer. And talking of garments, I'm sorry, I'm overdressed for the show. I see you guys are already ready for the weekend. I got the note little late. But yeah. Yeah, I mean, I like the garment manufacturer, as you said, having exposure to EU and UK and, US. It's a great combination. A lot of, these guys have put up huge capacity. They've added capacity. They're ready for, and you see, the disadvantage that Bangladesh has, and we have that advantage. Plus our, currency has depreciated and these markets are opening up. There is not a better scenario, in the past that we have seen.
Okay, Arif, one more.
Maybe just, I don't know, we're out of here, but I have the broad outline, Samit, of your portfolio, and you like stuff in building materials as well, right, Samit?
Yes. I mean, see, that's an evergreen theme for me. It's been, for the last 10 years, because I think India's growth has come in from more of infrastructure spend. And infrastructure spend happens across, different, I mean, it keeps on shifting, but you need to find, niche players where they're diversified across industries, so for example, cable manufacturers, whether it's the data centers, whether it's the distribution of power network that needs to be built. I think they will be in demand. Fabrication pipes across the board, if you're needing more factories, data centers, even solar plants sit on these fabrication pipes. Those are also evergreen kind of players. Now with this oil and gas, even the pipes companies, the oil and gas pipe companies will do well. So you need to pick the niche where it's diversified. It's not sort of one sector kind of risk that you're taking. And a lot of these players have become reasonably cheap. And that's where we find the opportunities.
How many stocks in the portfolio now, Samit?
So see, we have PMSs. So the main PMS would have about 18, 19 stocks. In the AIF would be about 45 stocks. So it's a spread. It's a widespread portfolio, because we do take smaller bets in the microcap space too, because that's become the most attractive space now. the valuations are, we haven't seen those kind of valuations in the last, at least other than COVID, maybe in the last 10 years, lowest valuation. So depending on, so if it's little larger stocks, it's a little more concentrated, but if it's smaller micro cap, it's a little more
Smaller
diversified. Yeah.
And that 50% earnings growth expectation, right, on a portfolio basis, which is quite incredible.
Exactly.
With valuations or whatever, under 20 times.
Right. Such valuations were not available in the past, 10 years, other than the COVID lows.
Thank you, Samit, for joining in. It's been a great conversation. Next time, come down to our studio and we'll send you the memo in advance. Thank you very much for joining in.
Thank you so much.
Maybe the T-shirt as well.
And the T-shirt as well. Well,
I'll just come for that.
Okay. All right. Thank you very much. It's curtains down in this edition of Editors Roundtable. Thank you very much for watching.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The big stories that we're tracking for you this evening. Parliament is all set to vote on the women's reservation and delimitation bills to expand the size of the Lok Sabha to 850 seats. The government notifies the 2023 Act on Women's Reservation. It is unclear why the Act was notified in the middle of a Parliament debate to amend the same law for its implementation in 2029. Opposition leader Rahul Gandhi accuses the government of attempting to redraw the political map and snatch the rights of OBCs. DMK accuses the BJP of using women as a shield for its political ambitions. Opposition parties maintain they support women's reservation but question why the government is linking it to delimitation. President Trump says the Iran war is going swimmingly and should be ending pretty soon, praises the role played by Pakistan yet again and says he might go to Islamabad if a deal is being signed between both countries. Celebrations across Lebanon as the 10-day ceasefire with Israel takes effect, but Israel's Prime Minister Netanyahu refuses to withdraw the army from southern Lebanon. Israel and Lebanon are expected to hold a summit which will be the first in 37 years. Crude oil prices dropped below $100 amidst hopes of a breakthrough between the US and Iran. Shipping remains choked at the Strait of Hormuz as France and UK gear up to hold the summit to open the key waterway. The Sensex and the Nifty gained for the second week in a row. All sectoral indices gained this week, barring autos. More than 14 lakh crore rupees added to market cap of listed companies this week. The rupee continues to regain lost ground against the dollar. RBI curbs on oil companies and restrictions on gold imports, helping the rupee gain 3% in April so far. The government allows 15 banks to import gold and silver ahead of Akshaya Tritiya next week. Vedanta's chairman Anil Agarwal faces an FIR after 20 people died in a boiler blast at the company's power plant in Chhattisgarh. Police have also named several other company officials, accusing them of negligence. The co-founder of Netflix, Reed Hastings, will step down from the company's board in June, ending a tenure that lasted nearly 3 decades. Netflix shares slide in trade despite reporting a $5 billion quarterly profit as growth outlook disappoints Wall Street. Well, let's go straight to the top story this evening, and it comes in from Parliament. Parliament is all set to vote on 3 crucial legislations to implement the 33% reservation for women and delimitation to expand the size of the Lok Sabha to a maximum of 850 seats and redraw electoral boundaries. Now, the government needs 2/3 majority for the bills to go through. Remember, this is a constitutional amendment, and that is why 2/3 majority is required. The numbers at this point in time do not look like they are in the government's favour. Prime Minister Modi, in a tweet on X, had urged all political parties to vote in favour of women's reservation. Opposition parties have questioned why the government is linking delimitations to the women's reservation bill. The Congress has accused the government of gerrymandering, an American term used to describe deliberate manipulation of electoral boundaries. The DMK and its Supremo M.K. Stalin alleging that the delimitation bill is carefully crafted by the government to deprive southern states, particularly Tamil Nadu, of rightful political representation. Speaking in Parliament yesterday, Home Minister Amit Shah had claimed that southern states will not see any reduction in their proportional seat share. He also promised a uniform 50% increase in seats for all states. However, the delimitation bill does not say this explicitly or spell out any formula. When asked about it, the Home Minister said he is placing this before Parliament in his capacity as the minister piloting the bill. The Congress has demanded 33% quota for OBC women within the Women's Quota Bill. Opposition leader Rahul Gandhi accused the government of attempting to change India's electoral map and deprive OBCs of their rights. In a separate development, the government notified the 2023 Act on Women's Reservation. It is unclear why the Act was notified in the middle of the Parliament debate to amend the same law for its implementation in 2029. Here are highlights from a fiery debate in Parliament.
This is an attempt to change the electoral map of India, using and hiding behind India's women. And actually it is a shameful act.
हमारी पूरी पार्टी माननीय प्रधानमंत्री जी के नेतृत्व में माताओं को अधिकार देने के लिए, बहनों को अधिकार देने के लिए, दलित, शोषित, वंचित, पिछड़ों को अधिकार देने के लिए 33% रिजर्वेशन के लिए चिंतित है.
You have proposed delimitation with such haste, the same haste that you showed on demonetization. And unfortunately, we all know what damage that did to the country. Delimitation, sir, will turn out to be political demonetization. Don't do it, sir.
महिला आरक्षण ने स्थानीय शासन को अधिक समावेशी
bulldozing each and every bill.
Well, Ashmit joins us now with the details of what is transpired in Parliament. Ashmit, we are now counting down to the crucial vote. The question, though, is does the government have the two-thirds majority in the Lok Sabha that will be required to pass this through?
Well, indeed, the government requires a supermajority for this constitutional amendment bill to go through, and that effectively means that of the entire strength of 543 members, the magic number for the centre will be 360. That's the number that they'll be aiming for. But do they have the numbers? Well, the centre, with all the allies put together, add up to about somewhere in the vicinity of 300 to 310. So clearly they're short by 50 to 60 seats off that magic number. So it's not a small gap that they're looking at, it's a large gap. On the other hand, conversely, looking at it from the opposition's perspective, the magic number for them will be 180. Now, the opposition parties altogether who voiced their concerns with respect to delimitation, all their seats put together tally up to over 230. So they clearly have the bench strength to come in the way to effectively block this piece of legislation, which in fact was what Rahul Gandhi was also saying, that the opposition parties will stand united, will not allow for this constitutional amendment to go through. But the caveat here is that as far as the electoral math is concerned, as far as the Lok Sabha math is concerned, that is subject to the number of members present and voting. So what does that translate into? Of course, we're only a few minutes away now from the answer. But coming back to the debate itself, well, there are concerns. There were assurances that the centre has given repeatedly on the floor of the House that there will be a uniform, equitable 50% rise in the seats of all states. The question, however, that all the opposition parties are asking is that why is that assurance not in the letter of the bill? Why is that missing? Why is there no constitutional guarantee? Their fear is that on one hand, there is the verbal assurance coming in from the leader of the centre that there will be a 50% increase. On the other hand, there's a constitutional mandate which clearly says that the distribution of seats will be linked to the population, which invariably leans in favour of northern states which have a higher population base as compared to the southern states. So those concerns continue. What the answer is to that constitutional amendment, we'll find out in only moments from now.
Ashmit, many thanks for joining us. The action continues in Parliament. Nominated member Harivansh Narayan Singh has been re-elected as Deputy Chairman of the Rajya Sabha. This is the first time he's been re-elected as a nominated member. He was elected unopposed as the opposition boycotted the elections. JP Nadda, the leader of the upper house, moved the motion to choose Harivansh as the Deputy Chairman. The office fell vacant after Singh's term ended on the 9th of this month. Let's head to the big international story. President Trump says the war in Iran is progressing, and I quote, swimmingly, and it should be ending, quote again, pretty soon. Speaking at an event in Vegas overnight, the president praised Pakistan's mediation efforts and said that he might go to Islamabad if the US and Iran are ready to sign an agreement. Trump also said a 10-day ceasefire has been reached between Lebanon and Israel, and leaders from both countries could meet at the White House. If this happens, this will be the first summit between Israel and Lebanon in 37 years. Now, hours after the ceasefire announcement, the president of southern towns in Lebanon drove across the streets holding victory signs. Displaced civilians in southern Lebanon were also seen returning home. The conflict between Israeli forces and militant group Hezbollah have killed over 2,100 people in Lebanon and displaced more than 2 million. Iran has also welcomed the ceasefire agreed between Lebanon and Israel. Tehran's foreign ministry spokesperson continued to maintain that the ceasefire was already part of the Iran-US agreement brokered by Pakistan. Crude oil prices have eased below $100 a barrel, but the Strait of Hormuz remains choked with only 6 vessels crossing the waterway today. The U.S. naval blockade is now in force, but it only applies to ships entering and exiting Iranian ports. However, shipping remains choked as the insurance companies are unwilling to take any risks. Now, UK Prime Minister Keir Starmer and French President Emmanuel Macron are set to co-chair an international summit in Paris on reopening the strait and assessing the impact on global supply chain. The summit will include officials joining virtually from 40 countries and the International Maritime Organization, including India, but excluding the US.
We have a very good relationship with Iran right now, as hard as it is to believe. And I think it's a combination of about 4 weeks of bombing and a very powerful blockade. The blockade is maybe more powerful than the bombing. We had to do something. We had to make sure that Iran never gets a nuclear weapon. And we're at that. They've agreed to that. They've totally agreed to that. They've agreed to almost everything. So maybe if they can get to the table, there's the difference. They agree. They got to get to the table with a pen. We'll have that over with. I would go to Pakistan, yeah. Pakistan has been great. They've been so good. Islamabad, I might go, yeah. I might go. If the deal is signed in Islamabad, I might go. The field marshal has been great. The prime minister has been really great in Pakistan. So I might go. They want me. The blockade has been incredible. It's held. They're not doing any business. They're unable to do any business because of the blockade. And so the combination of having no Navy, having no Air Force, having no anti-aircraft equipment, they have nothing.
जी हाँ, भारत को निमंत्रण मिला है इस मीटिंग में भाग लेने के लिए और मीटिंग मेरे ख्याल से कुछ घंटों में शुरू होने वाली है। जहाँ तक किस स्तर पे हमारी वहाँ पर भागीदारी होगी इसके बारे में आपको जानकारी देंगे और मीटिंग के पश्चात भी आपको ये जानकारी देंगे कि इस प्रकार की बात वहाँ पर हुई।
Well, that's the Ministry of External Affairs spokesperson saying that India has been invited to the Macro-Slama meeting and they will participate in the talks later this evening. Time for us to head into a break, but up next, Parliament is set to vote on the Women's Reservation and Delimitation Bill to expand the size of the Lok Sabha to 850 seats soon. We'll be joined by journalist Neerja Chaudhary and Ranjana Kumari of CSR India when we return. Well, on to the day's market action. Markets ending near the day's high with Nifty closing above 24,350. The Nifty Bank gaining nearly 500 points while the Midcap Index outperformed. All sectoral indices closing higher. Capital markets, FMCG, Midcap Index up by about 750 points. The Sensex and the Nifty closing flat. The Capital Markets Index almost 3% higher. For the week, the markets have ended higher as well. For the second straight week, the Nifty and the Sensex up by about 1% or so, and the Nifty Midcap Index up by almost 4%. Autos, though, closing about 1% lower. So the BSE listed companies have added nearly 14 lakh crore rupees this week. Nigel is standing by to wrap up the market action. Nigel, closing strong, but what does the week ahead look like?
Well, Friday was indeed a good day, both for the equity markets as well as the money market, as the rupee as well showed some strength. Well, in terms of the indices this week, the Nifty was up only around 1%. You'll be asking, what's happening? I mean, what are you talking about such a good-looking market? The reason that the markets have been looking so good is because your portfolios have been looking good. And that's courtesy the outperformance you've seen from the mid-cap as well as the small-cap indices. The mid-cap index is up 3.5% for this week, and the small-cap index is up close to around 4%. And the breadth of the market is a telling story out there, because after nearly around 5 months, we're seeing the number of stocks advancing more than the number of stocks declining on a day-to-day basis. Well, on Friday, the FMCG pack, the underowned, underperforming index, well, that came back in style. You had HUL that was up and about, Nestle was up and about, and ITC as well. Remember, all those have corrected a large deal from the recent top. In addition to that, you know, if the geopolitical issue settles, then those input costs won't spike up as much. And we know when input costs go up, actually the larger names, they do relatively better. So they were the top gainers. In terms of losers, Wipro reacted to its numbers. It was a downtick out there. And HDFC Life as well did take a bit of a knock in trade. However, from the broader markets, plenty of earnings that were good and were rock solid. Case in point being a Bajaj Corp. The street liked those numbers. The stock was flying away. Angel One was up and about, and also you had VST Industries. So select companies from the broader markets did pretty well in terms of earnings, and the street likes that. And alcohol beverage companies, they seem that to be sensing that maybe the worst is behind, and they're hopeful that probably you could see some kind of opening up in Bihar. That's just a hope. There's optimism coming out of that, but for the time being, Tilak Nagar Industries, Radico, as well as Allied Blenders in the last 15 days, those stocks have been big gainers. Other big winners in trade include the likes of Bharat Wire Ropes, where volumes are very high, MMTC, as well as Apex Frozen. All the stocks did well. So in terms of the Nifty, the near-term resistance comes in at around the 50 DMA, which is ballpark around 24,450. And then you have the 200 DMA at around the 25,100 odd mark. In terms of the outlook from here on, we'll track the earnings, geopolitical risk. Hopefully, the worst is behind us. An eye on the monsoon as well, because that could be inflationary in nature. All in all, a good week for the bulls, and they go into the weekend quite happy.
Yes, certainly happy. The market's closing in positive territory for the second straight week. Nigel, many thanks for joining us. But let's revisit the top story of the day. Parliament all set to vote on 3 legislations to implement women's reservation and delimitation to expand the size of Lok Sabha to 850 seats and redraw electoral boundaries. The numbers on the face of it not in the government's favour. The opposition has accused the government of gerrymandering and bulldozing the delimitation bill. Let's bring in our guests to understand the implications of this. We're now joined by Ranjana Kumari from CSR India. Ranjana, many thanks for joining us. We are, of course, waiting for the vote to take place in Parliament. To start with, do you believe the government will manage the numbers? You're on mute, Ranjana.
Thank you, Shireen. I think it's a very important bill. Congress has been committed to it. All the opposition parties have sworn by this bill. They have all supported in 2 years back, 2023. They all passed it with the similar kind of conditions. Only difference now is, and also it's now very clear from the government proposal that seats will be increased in the states in proportion to what they have now. For example, the UP will have from 80 to 120, then Tamil Nadu will have from 39 to 59. So I don't see any discrimination at this stage, and no reason to really block it, except that members of parliament never have shown their commitment, especially opposition at this stage, to women of India. I feel that there is no reason also to fear when delimitation commission will be set up, when the census will happen, then only the clear picture will emerge. But for the time being, 2011 census has been basis for everything, whether it is our economic planning, whether it is for everything. So why not for this also? And let it be passed, let it get implemented at least. After 30 years of our hard work, mobilization, doing so much to see that this bill takes...
But Ranjana, no, sure. I understand that. But the opposition's argument in response to that in Parliament is that, look, you want to pass the women's reservation bill, we passed it. You want to put it in place and put it in motion, do it at the current number. Why are you linking it to the delimitation exercise? Let the delimitation exercise be a separate exercise. Why piggyback it on the women's reservation bill? Now, the government itself has announced a census exercise. The census is currently underway. Again, the opposition party is saying, why not wait for the census? Moreover, to your point about the fact that assurances have been guaranteed by the 2 of the highest leaders in the House, the Prime Minister as well as the Home Minister, but there is no backing of that in the provisions of the bill itself. How do you respond?
Actually, these are very difficult arguments, because we have seen 3 decades, the bill being, in fact, passed in Rajya Sabha and was not being able to brought into Lok Sabha during Manmohan Singh ji's government. And later, many attempts have been made to pass this bill. But the sad story is that no male member of parliament in the existing parliament of 543 wants to do away with their own seat. And that fear has led them all to bring in some or the other excuse to delay, to halt the bill. So but there is no reason that we can believe that today 543, out of which only approximately 14% are women, rest of men will be willing to give away their own seats. If that's the situation, then how it will ever happen? It cannot happen. We have seen it. I mean, 30 years is a very long time for any, democratic system to really correct the deficit and imbalance in the parliament. So why it didn't happen? Because they don't want to leave their seat. And you know that our parties are totally patriarchal control. The men control it. All the parliamentary committees are made constituted by men. Only 1 or 2 women nominally are members of the parliamentary committee. Across the board, left to right to center, all parties. So in this situation, how do you really visualize any kind of change happening?
Right. Let's address the delimitation issue, because that is the big bone of contention. All parties unanimously speaking in Parliament saying that they have no problem with the women's reservation bill. What they have a problem with is the delimitation bill, Ranjana. So let's address that. Now, the assurance given is that there will be a flat 50% increase. The opposition's question is, it is nowhere mentioned in the law, in the bill itself, and that is where the fear emanates from.
You know, this was made very clear by Prime Minister of India. I think we should take his words inside the parliament as the promise, and also that the ruling party's responsibility is to include this language in the proposal. And I'm sure they must have done it, because yesterday Mr. Amit Shah made that promise that it will be included. And then look, the whole delimitation debate is a very political debate. Southern states have made a point which is very valid, that they will lose the bigger chunk, and and northern India will get much more, because southern states should not be penalized for really going for population stabilization. They have really done a very good job. The women have got into job market. Women are much more visible in the southern Indian political systems and parties. But at the same time, north will be the beneficiary of it. So I think this debate needs to be really separate, and has to work out every detail of it, so that no state feels in our federal system penalized. And this should not be linked with women reservation bill. I think women reservation bill, a very simple formula that, okay, let's increase it by 50%. For the time being, let's have 2011 as the base census, and let's pass it, and let's implement women reservation, get women into the parliament, more women into the parliament. So I think that is something which is should be done at the moment. All opposition parties should be, our appeal to them from all women's organization side is that, the ones who support the women reservation bill for years and years, please, keep your promise. Let this be passed, and let the women reservation be implemented. Let the delimitation and census, and census, you said that they are saying census is happening. Our country's systems, how many years it takes. Somebody yesterday was saying 4 months we will come out with a report. Have we ever seen such magic wand being used? So certainly census is on. I am very happy that, but then, how much it will take, how many years, why make women of India victim of all these logics and arguments every now and then, every time when bill has been brought. Shireen, you have been there. I have talked to you many times earlier also on this issue, and you know what eventually happens. The casualty is women's representation. The casualty is the fixing this deficit of women missing from our democratic system.
Yes, women are often the casualty, but let me bring Neerja Chaudhary into the conversation as well. Neerja, many thanks for joining us. We are waiting for the vote to take place in Parliament. Neerja, let's understand from you, do you believe the government will muster the numbers to ensure that this goes through?
No, I don't believe the government will muster the numbers. The bill will fall. The bills will fall. Whether they could have sent it to a parliamentary committee for debate, I don't know whether that was considered, whether the opposition would have agreed, because the government would have a majority, but it would have helped them buy time and look at all the issues that the opposition has raised much more in detail. What is baffling to me is that the BJP normally conducts and mounts very meticulous operations. They're going to the detail, they get it right. And they knew that this bill is linked to delimitation to operationalize it. It's been passed, but it has to be implemented. And they also knew for a couple of years now that the southern states have huge reservations and angst about delimitation. Forget women's reservation bill for a moment, but about the very prospect of their number of seats going down and the northern Indian states increasing their number and therefore their political clout. Now that is something that had to be addressed. Now the Prime Minister and other ministers had said even before the special session of Parliament that seats would be increased by 50% and that the ratio between the states would not be changed. That's something the Home Minister has said again, the Prime Minister said again, the Law Minister said again, but that does not find a place in the bills, in writing. It's an assurance. Now, there is weight to an assurance if a Home Minister who's piloting the bill makes it on the floor of the House. But bills are bills. Written is written. Yes. And therefore, why did this happen? Why were, this is the baffling part of the story. The damage that will be done is not only that the bill falls. Of course, the BJP will try and create a narrative out of it because they know women are a very important constituency for 2029 and for the coming elections. They will create a narrative, show the opposition in the wrong. But, to sustain a narrative when it is built around a promise and not something delivered is that much more difficult to do. So what you will have in the coming days is you will have women versus regional subnationalism, a Tamil pride, a Bengali pride, a Karnataka pride, a Kerala pride, states particularly in the south, barring maybe Andhra Pradesh. That their representation has become a very hot issue. I've heard women in Tamil Nadu say who fought for reservation for 3 decades. They say, we don't care, the women reservation can wait. To us, the representation of Tamil Nadu is very, very important. So this is the kind of sentiment it will generate, leading to a deeper north-south divide. And I think a greater cynicism about our politics in general and our politicians in general, both of the ruling side and the opposition. They just talk, they go in for gimmicks, they play games, but they don't actually deliver where it matters. And women have waited too long, to trifle with them in this way and not be able to take it to its ultimate conclusion so near and yet so far. The other thing that's very clear, the bill will go down to 2039 now. You don't expect it to surface before that.
2039?
I don't see it being passed. If it falls today, what will happen? It will be linked to the next census. The next census will take the household part of the first part of the census will take certainly 2.5 years. After that comes the second part of the census where you'll have caste enumeration, personal details. That will take another 2 years. Then you'll have a delimitation exercise. And then if the southern state sentiment is anything to go by, they will challenge it in court. Even today they've said, if this bill is passed, we will challenge it in court. So you look at a situation where it will go past 2034.
Except the bill specifies that this is not challengeable, and the judiciary is not going to be able to have a say as far as the delimitation exercise is concerned. But Nirja, I want to come.
Will be challenged.
Right. No, but Nirja, I want to come back to what you said, and that's an important point, and I think many are wondering that, why call a special session in the midst of assembly elections at this point in time if you didn't have the numbers? Now, do you think that perhaps the thinking was that let's attempt it if it doesn't go through, if it falls, we will still be the political beneficiaries.
That could be the thinking. I don't believe that it is that we will get the votes of women in West Bengal or Tamil Nadu. Tamil Nadu has only 3 days of campaigning left after the 18th. Bengal only 6-7 days of campaigning left. By this time, people have made up their minds. So it is not, I don't think to really influence the voters in these two states. Yes, women, the calculation could be, yes, we will create a narrative around. But as I say, you know, the voter has become smart. A woman today wants, I will vote for you if you give me that 9,000 rupees a month or 2,500 rupees a month, or you actually ensure that the seats are there. Don't give me a promise of implementation 10 years down the line. They're not going to be, I think it'll create a narrative for a short while, but so I don't understand this. And I feel we've not got all the parties have not got, particularly the ruling party, their politics of negotiation right. They are good at negotiations on many other fronts. On this negotiation, they have not got it right.
And to the point that you were making, that perhaps this even widens the trust deficit that already exists even further. But, you know, while you believe that it's unlikely to benefit the ruling party, that is the BJP, at the center in any form or fashion in the upcoming assembly elections, does it in fact provide a leg up to people like MK Stalin? You know, they were getting a bit concerned about the Vijay factor, for instance, in Tamil Nadu and so on and so forth. Does this in fact bolster the case for the incumbents in states like Tamil Nadu? I don't know how much of a factor this will be in West Bengal.
Yes.
I think, that's sub-nationalism. That feeling of, Tamil pride and Bengali pride. Yes, it could help in certain, with certain sections. It could help them, actually, the regional leaders.
Ranjana, would you agree?
Well, I do agree with Neeraji on this, and I think it's very important. There are two reasons. I have a feeling that maybe BJP only wanted to play it as a politics. They only wanted to see it as a strategy at this moment for deflecting on certain issues. And secondly, also, if they were serious, certainly there should have been more, just like all the other bill, more serious business of talking to the opposition and, bringing them, everybody on board, making this very clear in the bill, write it that 50% will increase in every state irrespective, and as to make it clear so that there is no conflict that, what will happen to South, what will happen to North, and in terms of political influence. So I think this is something which is, and secondly, also, you see, let's not forget that women are now vote bank. They are determining victory and, in different states of state elections, whether it's Madhya Pradesh, Bihar, Odisha, they have decisively voted, and also that because of the Panchayati Raj mobilization, there's a higher level of political consciousness of women, and women are able to, decide on their own. So perhaps that's a long-term thing, but short-term, I also agree totally with Neeraji that there is no question of having any kind of influence within 3 or 7 days. Whatever media may try, whatever social media we may try to use, in such a short period, I don't see much impact in the immediate election.
Yes, well, unlikely to have an impact in the upcoming state elections. Neerja and Ranjana, thanks very much for joining us. We're just getting information that the vote itself has now been postponed to 7 p.m. So we will appreciate it if you could join us then for your commentary as the developments of the day take shape. But the vote, which was expected to take place at 4 p.m., is now scheduled for 7 p.m. in Parliament. We are going to take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment. The rupee has continued to regain lost ground against the dollar. The Reserve Bank's curbs on oil companies and restrictions on gold imports helping the rupee gain 3% in April. Latha joins us now to decode the currency's performance. Latha.
Well, at the moment, for the day, the rupee has been an outperformer, and for the month as well, outperformed by, we are up by 3% versus the dollar. Most other EM currencies are 2 to 3% lower. Now, the immediate cause for the outperformance today itself is a note from the Reserve Bank, note as in a nudge from the Reserve Bank to oil companies that you don't go around shopping for dollars to all the banks. They have designated just 1 or 2 banks and given a line of credit through those banks to the oil companies. The other factor which appears to have created a mood in favor of rupee and against the dollar was the buzz that all gold imports are being rejected from April 1st onwards. That is, gold imports by private parties, and only MMTC and IIBX are being allowed. Now, this was pushed back when the DGFT released a list of 15 banks who will be allowed to mediate for gold imports. That list was pending from April 1st, which is why the delay. But the combination of these factors led to the feeling that there are a lot of procedural steps being taken to ensure that dollar demand is not too much. And that's why you saw a rapid rise in the rupee. It rose by over 0.5% for a better part of the day. And then it receded when the DGFT released that list. Nevertheless, the demand is contained because even oil company demand is just getting channeled so that it doesn't multiply. Likewise, you have the old controls on banks. They cannot have more than 100 million in terms of open positions. And most importantly, FPIs have been buyers for 2 days in a row. It's buyers of stocks means you actually sell dollars and buy rupees. So that again was a pro rupee move. All this has helped in making the rupee look an outperformer. You must remember that it was a serious underperformer for the past 12 months. So now it's a little bit of take-back time from oversold positions. Just a word, the pressure is not gone. All the EM currencies are in the red today for a reason. And that's because crude prices are nudging $100. The talk of peace and ceasefire notwithstanding. So that pressure remains on the rupee. We are not going to see any big rally, but extreme oversold positions are being corrected.
All right, Latha, many thanks. And speaking of gold, the Commerce Ministry has issued a list of 15 banks that are authorized by the Reserve Bank to import gold and silver from the 1st of April 2026 to the 31st March 2029. This move comes ahead of Akshaya Tritiya next week. The list includes HDFC Bank, ICICI Bank, Kotak Mahindra Bank and Yes Bank. This move comes after a report by Reuters suggested that Indian banks halted gold and silver import orders from overseas suppliers because tons of these metals are stuck at customs because the government had not yet issued a formal order. Shares of Wipro ending the day nearly 3% lower after reporting muted Q4 numbers. The tech giant's dollar revenue rose 0.5%, but the company expects revenues to contract in the first quarter of this fiscal. Wipro also announced a buyback worth 15,000 crores. Speaking to CNBC TV 18, the company's management said the deal pipeline is strong. However, some large deal ramp-ups are taking longer than expected to close.
Certain deals that, especially the large deal that we have won, it's taking more time than we would normally want it to be. And that's also delaying the, or rather impacting the growth aspects of it. It is very client specific, I would say, nothing to do with the geopolitics that's going on or the trade or tariff.
So, yeah, we hired 7,500. We are not giving a guidance for FY27. Very, very demand specific, and demand looks up, we'll plan that. Today we have enough headspace, both from lower attrition, space to improve our utilization. The supply side is taken care. So the demand for hiring will be very, very demand specific, I would say. Not giving a yearly outlook right now. Very volatile environment.
Well, that's the Wipro management. An FIR has been filed against Vedanta chairman Anil Agarwal along with the company's manager Devendra Patel and other officials. This is in connection with the boiler blast at the company's power plant in Chhattisgarh's Sakti district that killed 20 workers. The explosion occurred on the 14th of April when a steel tube carrying high-pressure steam from the boiler to the turbine burst. This incident left several workers with severe burn injuries. News 18 India's Abhishek Shukla brings us more.
पूरे मामले की जांच भी शुरू हो गई है। एफआईआर भी पुलिस ने इस मामले में दर्ज कर ली है। वेदांता के चेयरमैन अनिल अग्रवाल पर भी नामजद एफआईआर इस बार यहां पर की गई है। पूरे मामले की जांच जल्दी शुरू हो जाएगी। कई टीमें बनाई गई हैं जो इस पूरे मसले की जांच यहां पर करेंगी। जिन लोगों की मौत हुई है उनको प्लांट प्रबंधन ने 35 लाख के राहत राशि की घोषणा की है। राज्य सरकार की तरफ से 5 लाख की राहत राशि और केंद्र सरकार की तरफ से 2 लाख की राशि की घोषणा की गई है। लेकिन सबसे बड़ा सवाल है कि हादसा हुआ कैसे, जिसमें 20 जिंदगियां ले ली और 16 लोग मौत से जूझ रहे हैं। बताया जा रहा है शुरुआती तौर पर जो बातें सामने आई हैं कि लोड बढ़ाने की वजह से ये पाइप फटा है और पाइप फटने के बाद ये हादसा हुआ है। आपको बता दें कुछ साल पहले वेदांता में ही बालको प्लांट में चिमनी हादसा हुआ था, उसमें भी कई लोगों की जान चली गई थी। इसलिए एक बार फिर से सबकी निगाहें इस पर हैं कि क्या इस बार जांच में निकलकर सामने आता है और इस पूरे मसले पर दोषी कौन पाया जाता है।
An FIR against Vedanta chairman Anil Agarwal. Over 1,000 people were rendered homeless after a devastating fire gutted over 280 shanties in Lucknow last evening. No casualties have been reported so far. Officials said the blaze spread rapidly through the densely packed settlement due to strong winds and highly flammable material present in the huts. Locals claim that multiple small LPG cylinders exploded during the incident, worsening the fire. In global earnings, streaming platform Netflix has beat estimates in first quarter. Net income more than doubled to $5.28 billion, while revenue rose 16% on an annual basis. The company maintained its previous full-year revenue guidance of $50.7 to $51.7 billion. However, the company's stock remained under pressure. This as chairman and co-founder Reed Hastings announced that he will be exiting the board in June when his term expires. Uber has agreed to purchase an additional 4.5% stake of German food delivery firm Delivery Hero. The San Francisco-based giant will acquire around $318 million worth of shares from Prosus, Delivery Hero's largest shareholder. This will be done at a price of €20 per share. Prosus says the move is part of efforts to comply with European Union competition rules. The acting director of U.S. Immigration Task Force, Todd Lyons, has resigned. He was appointed in March last year and oversaw the agency during the tumultuous immigration crackdown. Lyons' last day will be the 31st of May, and the reason for his departure not known yet. And before we wrap, quick recap of the headlines at this hour. Parliament is set to vote on the women's reservation and delimitation bills to expand the size of Lok Sabha to 850 seats. Reports suggest voting will take place post 7 p.m. The government notifies the 2023 Act on Women's Reservation. Unclear why the Act was notified in the middle of the debate. Opposition leader Rahul Gandhi accuses the government of attempting to redraw the political map and snatch the rights of OBCs. DMK accuses the BJP of using women as a shield for its political ambition. Opposition parties maintain they support women's reservation but question why the government is linking it to delimitation. President Trump says Iran's war is going swimmingly and should be ending pretty soon. Praises the role played by Pakistan, says he might go to Islamabad if a deal is signed between the US and Iran. Celebrations across Lebanon as the 10-day ceasefire with Israel takes effect, but Israel's Prime Minister Netanyahu refuses to withdraw the army from southern Lebanon. Israel and Lebanon are expected to hold a summit, which will be the first in 37 years. Crude oil prices dropped below $100 amidst hopes of a breakthrough between US and Iran. Shipping remains choked at the Strait of Hormuz as France and the UK gear up to hold the summit to open the key waterway. The Sensex and the Nifty gained for the second week in a row. All sectoral indices gained this week, barring autos. More than 14 lakh crore rupees added to market cap of listed companies this week. The rupee continues to regain lost ground against the dollar. RBI curbs on oil companies and restrictions on gold imports helped the rupee gain 3% in April so far. The government allows 15 banks to import gold and silver ahead of Akshaya Tritiya next week. Vedanta's chairman Anil Agarwal faces an FIR after 20 people died in a boiler blast at the company's power plant in Chhattisgarh. Police have also named several other company officials, accusing them of negligence. Well, that's a wrap on this edition of Business 360. Remember, we continue to track all the action linked to Parliament, the US market action, and the latest in the Iran-US talks coming up for you on CNBC TV 18.
Welcome back to Cut the BS.
Till now, we've spoken about profits, cash flows, capex, and debt.
Today, we answer a question investors constantly debate.
Is faster growth always better?
When companies grow revenue quickly, profits rise too in some cases.
This shows up clearly in the income statement.
But you know, the real question is not just growth.
The real question is what it takes to achieve that growth.
Now, many businesses need capital to grow.
And that capital, as we've shown, shows up on the balance sheets of the companies.
New factories, more inventory, new stores.
And sometimes, to fund that, companies also raise debt or equity.
This is where a key concept comes in: return on capital.
Return on capital simply asks one question.
For every rupee invested in the business, how much profit is generated?
And if a company earns high return on capital, the growth is powerful.
Every rupee reinvested generates strong profits.
And this is why some of these companies with high return ratios have compounded shareholders' wealth for decades.
They grow steadily while maintaining high returns.
But remember, growth can also destroy value.
So if a company invests heavily but earns low returns, each new project adds pressure.
The balance sheet becomes larger, but profitability does not move proportionately.
In some capital-heavy sectors, this can happen during aggressive expansion cycles.
And this is where the cash flow statement becomes very important.
If operating cash flows remain strong even after expansion, growth is healthy.
But if companies are constantly raising money via debt or equity to keep growing, investors should pay attention.
So the next time you hear a company talking about rapid expansion,
ask just one simple question.
What returns is that growth generating?
Right, with that, the next episode of Cut the BS, we'll talk about valuations.
So tell us if there is something specific that you want to understand, and we'll explain that on the show.
No complexities, no jargon, just cut the BS.
Hello and welcome. You're watching News Centre. I am Ashmit Kumar. Now, the Parliament is set to vote on 3 legislations to implement 33% reservation for women and delimitation to expand the size of Lok Sabha to 850 seats and redraw electoral boundaries. Now, the government needs a 2/3 majority for the bills to sail through. The numbers are not in the government's favour. Prime Minister Modi, in a tweet on X, had urged all political parties to vote in favour of women's reservation. Opposition parties have questioned why the government is linking delimitation to women's reservation. The Congress has accused the government of gerrymandering, an American term used to describe deliberate manipulation of electoral boundaries. The DMK and its supremo, M.K. Stalin, has alleged that the delimitation bill is a carefully crafted trap by the government to deprive southern states, particularly Tamil Nadu, of rightful political representation. Speaking in the parliament yesterday, Home Minister Amit Shah claimed that southern states will not see any reduction in their proportional seat share. He also promised a uniform 50% increase in seats for all states. However, the delimitation bill does not say this explicitly or spell out any formula. When asked about it, Home Minister Amit Shah said that he's placing this before the parliament in his capacity as the minister piloting the bill. The Congress has demanded a 33% quota for OBC women within the women's quota bill. Opposition leaders Rahul Gandhi today accused the government of attempting to change the India's electoral map and deprive the OBCs of their rights. In a separate development, the government notified the 2023 Act on Women's Reservation. It is unclear why the Act was notified in the middle of a parliament debate to amend the same law for its implementation in 2029. Here are some highlights from a fiery debate in parliament.
This is an attempt to change the electoral map of India. Using and hiding behind India's women. And actually it is a shameful act.
हमारी पूरी पार्टी माननीय प्रधानमंत्री जी के नेतृत्व में माताओं को अधिकार देने के लिए, बहनों को अधिकार देने के लिए, दलित, शोषित, वंचित, पिछड़ों को अधिकार देने के लिए 33% रिजर्वेशन के लिए चिंतित है.
You have proposed delimitation with such haste, the same haste that you showed on demonetization. And unfortunately, we all know what damage that did to the country. Delimitation, sir, will turn out to be political demonetization. Don't do it, sir.
नाटंकी बंद करिए. बहुत नाटंकी हो गया. करना चाहिए. एक दिन में हो जाएगा. 544, 50% women reservation. We will all pass the bill today. हम लोग सब राजी हैं. कर दीजिए ना. हिम्मत नहीं है आपको.
The government has passed the bill, notified it. And what is the point? Last night nearly at around 10 o'clock. And what is the point in the discussion over here after you've notified it?
Yes.
This is what we want a clarification on that.
Well, again, a heated subject of debate, a polarizing issue. And to discuss this further, we have with us BJP spokesperson Niyoma Gupta with us. Also joining us in a bit will be DMK spokesperson Salem Dharan with us. And also joining us is advocate and researcher Alok Prasanna. Thank you so much for joining us to our panelists. Ms. Gupta, let me come to you first. The voting has been pushed back from 4 p.m. to 7 p.m. What I want to quickly ask is the BJP confident it has the numbers for this constitutional amendment to go through? Because the electoral math, at least in the Lok Sabha, does not seem to suggest that. You, along with the allies, have somewhere in the neighborhood of 300 seats. The magic number for you would be 360.
Yes, sir. Good evening. Thank you for having me on your forum, sir. So we are confident, and when the intention is so good and it's all about Nari Shakti, we really hope the opposition sees sense of it and doesn't make a mockery, which has just happened, as we've seen in the case of Rahul Gandhiji's speech. So we are very, very confident, and as I told you, the intention is very clear. When it was passed in 2023, it was passed with a full majority. And after yesterday, all clarifications were made by our Prime Minister and then by Mr. Amit Shah. So today, if you see whatever the rebuttals and all are not really making sense. Like if you just dissect Mr. Gandhi's speech, instead of some substantial or addressing issues related to the bill, he seemingly wasted his time
on a comical, as I think what was in his opinion, taunting, making jibes about wife issues, frivolous remarks on Operation Sindoor, and he chose not to actually substantiate his big claim. So as a responsible leader of opposition, he should have mentioned and engaged with the responses which happened yesterday. But of course, he chose to ignore and declare the bill would be defeated. Why? On what logic? I heard nothing in his speech which was making sense. And his convoluted analogy of darkness, magic, kids, parties, and other
Ms. Gupta, I'll just steer the conversation back to delimitation and not Rahul Gandhi. I'll just steer the conversation back. A quick follow-up question. Where is the confidence stemming from in terms of achieving that figure of 360? The reason I ask is that just 4 opposition parties put together, that's the Congress, SP, TMC and DMK, will have more seats than what is required to defeat this bill.
Yeah, so when it comes to this, as I told you, the intention of the bill is about Nari Shakti, but these people are kind of deflecting the whole topic of Nari Shakti and making it into nuances of divisive politics. So I think people will see through that, and we still have our top speakers to come into play, and the convincing will continue on that level. And as you know, when it spoke about delimitation, Modi ji has given an assurance in the parliament and even expressed willingness to give it in writing that the delimitation will not reduce or impact any state's representation as these guys are projecting it, or voice in the parliament as a matter of fact. In fact, it will be carried out through the proper procedure and with due diligence, safeguards in place, and there will be no room for political maneuver. So right now, if you see their consistent debates, points are on about delimitation and divisive politics when they're not understanding for Nari Shakti. Yes, sir.
Right, Ms. Gupta. Let's take that issue up. The assurance that has come from the highest of the leadership within the government about how there will be a uniform 50% increase in the seats of all states, and therefore there is no cause for concern for parties such as the DMK, for states such as Kerala. There's no reason for concern. Mr. Prasanna, let me get your thoughts on that. The argument that has been put forth by opposition leaders is that while this assurance is welcome, coming from the highest of leadership within the government, but it is not reflected. This certainty, this guarantee is not there in the copy of the bill, which is what leads to a lot of uncertainty and causes grave concern in the minds of southern leaders.
You're right, Ashmit. And in fact, I think there is a mistake in the, I would say, omission in the 131st Amendment Bill, because without amending Article 82, it is not possible to promise any such thing. It is in fact Article 82 which enshrines the value of one person, one vote, one value. And it's a core constitutional principle and idea. And as long as that is there under its current form, nobody can promise or assure in writing or otherwise that all the states' shares will be increased by 50%. Because let's understand how delimitation takes place. You have population figures, right, which is divided by state. Each state is supposed to get as many seats as its proportion in the population. So if Tamil Nadu's proportion in India's population is 5%, it will only get 5% seats. If Uttar Pradesh population is 16%, it will get 16% of the seats. This is guaranteed not by the Delimitation Commission, but by Article 82. The Delimitation Commission, if it is set up in accordance with the proposed delimitation bill, will contain a retired Supreme Court judge, will contain the chief election commissioner or his nominee, and of course, a state election commissioner for each state. They will be guided by Article 82. The Honorable Prime Minister's statement or the Home Minister's statement is actually quite irrelevant to the exercise. So unless Article 82 is amended to say that from their current representation in the Lok Sabha, all states will get 50% more representation, it does not matter what the Prime Minister or anybody else says on the floor of the Lok Sabha. Article 82 has not been proposed to be amended in the 131st Amendment Bill, and therefore it is not possible to make a uniform increase. In fact, the 131st Amendment Bill says we will take into account latest census figures. If those figures are 2011, then the seats will have to be allocated purely on the basis of census figures per state, and within states on the basis of the 2011 figures once again. So delimitation, if it happens in the way in which the 131st Amendment has been passed and the Delimitation Act is passed, 50% increase assurance does not mean.
Let me take that point across to Mr. Selam Dharnidharan. Mr. Dharnidharan, the one issue that the opposition is raising repeatedly, and this is something that they use to counter the statements coming from the government, is that, look, on one hand, you have an assurance coming in from the government that all states will see a 50% increase. That's the assurance coming in. On the other hand, there's
Article 81(2), which is a constitutional mandate, which says very clearly that the distribution of seats will be as per the population and that ratio should be consistent across all states. So states with greater populations will get greater representation. States with lower populations will get lower representation. The two are not possible at the same time. One of the two is only possible. Is that the concern that you've raised before the parliament?
The nature of the bill in itself is dubious because the women reservation bill was passed way back in 2023. No one is speaking about it. And nearly every parliamentarian, irrespective of the party lines, had voted in favor of the bill, except for 2 voting against it. So the bill is passed. So the women reservation, if it has to be provided, could have been done immediately. It can be done any time now. 181 seats reserved for women. This is nothing but a bill that wants to change or rather alter the democratic fabric of this country. I will tell you, I have to explain the Delimitation Commission. It has 2 functions. The one is to increase or decrease the number of constituencies based on population, and 2, it is to redraw boundaries as well as reclassify reserved to non-reserved seats. So the second function, that is to redraw constituencies or to classify or reclassify constituencies as reserved, has been happening. It is only the first function, that is to increase or decrease the number of constituencies as per population, has been frozen because of Constitutional Amendment 1976 freezing it for 25 years and 2001 freezing it for another 25 years. So after 2026, until and unless the government would bring about an amendment to freeze it for another 25 years, or altogether alter this nature of the bill whereby the constituencies need not be changed based on population, there is always a danger. Now they're talking about Delimitation Commission. The Delimitation Commission always existed. A retired judge has always been sitting there. And in fact, after every census, the constituencies would be redrawn, or constituencies will be reclassified as reserved or non-reserved based on what percentage of people there are from or from scheduled caste, scheduled tribe communities, and so on and so forth. This bill even proposed to undo that. Now, at any point of time, constituencies can be redrawn, or a constituency can be termed as reserved. This can result in gerrymandering. We are not talking about the nuances or the details. We are only talking about this is Nari Shakti. No, which is not true, because women reservation bill has been passed in 2023. So why another bill with 4 days to the elections and introduced and deliberated in 4 days? This is the question which BJP has to answer. If they want to implement women reservation 33%, it can be done at any point of time ASAP. No one is against it. Now, only point is delimitation. We want you implement reservation, and then you bring up a constitutional amendment saying there won't be any change to the seats as per Article 82 based on population. And then you want to increase or decrease, then that is later debate that we can deliberate after the census. Currently, we don't even know the population of the country because the census has not been done. The 2021 census has not been done. India is the only democratic country that has a distinction of not doing its census after 5 years having lapsed. How long are we going to cover as an excuse?
Sure.
So this is nothing to do with this.
Some of those points. Let me take up some of those points with Ms. Gupta. Ms. Gupta, again, the one issue that is being argued repeatedly is that the assurance is fine, that the 50% assurance is fine. I'll just come to the point on gerrymandering as well.
Gerrymandering,
But the argument that is consistently being made is the issue that I wanted to draw your attention to is that tomorrow when there's a delimitation commission headed by a Supreme Court judge, that judge will not be looking at the assurances that were made orally on the floor of the House. They will look at the letter of the law, which very clearly says that the seats have to be in proportion of the population, and that is a ratio that has to be consistent across all states. So it's not possible to do a uniform 50% seat increase.
Okay, so I'll just take it point by point, sir, if you allow me. When it comes to Salem, sir, if I'm not mistaken, about the gerrymandering, please understand, like the opposition, they keep talking about how the new constituencies will favor the ruling party, and they seem to be quite sure about this. Having said that, does that mean that they knew from experience and their past actions that delimitation automatically means gerrymandering will happen? Because we do not believe that, nor will we do anything of such sort. However, this is what I've heard on the debates previously also, that examples from the not so distant 2008 delimitation will tell you exactly what they are so fearful. Like if you look at the constituencies like in Dhule in Maharashtra, or Gulbara in Karnataka, where the Congress carefully, sir, engineered a demographic veto into small assembly constituencies within these larger Lok Sabha constituencies to make sure that BJP never wins there. Here's something ironic. The Padma Bhanagar constituency, Bangalore South, also was a victim of the 2008 delimitation, which was actually once described, if I'm not mistaken, as a hen doing ballet. Imagine, sir, that think about how badly this constituency and 100 of others were redrawn without thinking to suit their vote bank. And then the Congress comes and lectures us about democracy and fairness. Look at what they used to do when they were in power. Now they're fearing that, basically they're going into retrospect, self-reflect, and they're fearing the same. But this is an assurance given by the Prime Minister. We have repetitively said that the whole delimitation process, the census, etc., is a constitutional mechanism which has to have its logical course and the due course which it will be given. And the most important, it will be completed within the time-bound period. It will be done with due diligence. An assurance by the Prime Minister cannot be just said it's a fleeting statement. It is by the most responsible authority sitting in power. And when we are bringing up Nari Shakti, everybody turns around and says, we are supporting Nari Shakti, but we are not doing this. This is not a decoupled concept or a coupled concept. It's neither a competed concept. These are two separate agendas happening at the same time, sir.
Sure.
Thank you, sir.
Let me also get Mr. Prasanna in on this conversation. One of the other issues that has been raised by the opposition is that why trust only the 2011 census? Why not wait for the 2026 census? It's anyways around the corner. And the big anomaly that is pointed out is that in the 2011 census, there is no caste breakup, and therefore that causes perhaps exclusion for certain communities, such as the OBC community. That was the argument made by opposition leaders. Mr. Prasanna.
Yeah, just one quick clarification. I may have said 82 instead of 81 clause 2 in the previous form. So just for readers' reference, I'm just clarifying that. Sorry. The second point is that 2011 census did contain SC and ST numbers. In fact, every census is required to enumerate scheduled castes and scheduled tribes. So the 2011 census also gives us absolute numbers of scheduled castes and scheduled tribes. OBCs are not yet included. There is also no political reservations for OBCs. It may happen in the future, but I don't think that is that much of a concern at the moment in affecting the bill. My concern, however, is 2011 is already 15 years out of date. By the time of the 2029 elections, it will be 18 years out of date. I am of the view that delimitation, there was a mistake that took place in 1976 by freezing delimitation to 1971. That should never have happened. That was tampering the original constitutional design. Be that as it may, if we are going to rectify that mistake, we should not do that by making a less bad mistake. We should do the right thing. And the right thing is to wait for the latest census, the 2026 census, which is underway, to be completed and then carry out delimitation. Now, strictly speaking, that may be possible if the delimitation commission is constituted after 2028 or 2029, even with the current changes. Right. But I think the government's point that we should use the 2011 census, I think is a bad idea. Because I'll give you the simple example of Bangalore. Bangalore in the 2011 census had about 84 lakh people. As per the latest data from all possible sources, Bangalore's population is about 1.5 crores. Population is nearly doubled. You will find the same thing has happened in Hyderabad, in a place like Pune. You have seen massive demographic changes happen in small rural areas of Uttarakhand and Himachal and plenty of other places, right? I mean, modern democracy should run on modern data, not on outdated data for political purposes. That was a mistake which was made in 1976. I don't think the government should repeat that.
Not trusting outdated data, not trusting 15-year-old data is the argument that you're making. But Ms. Gupta also wants to come in on that. I'll just request her to be a little patient with us. We'll come back. We'll slip into a very short break. We'll come back and we'll continue this conversation on the other side. Well, again, the polarizing subject of delimitation via the women's reservation law. That debate is currently underway in the Parliament. Joining us now to help us decode some of that aspects of the debate is with us BJP spokesperson Niyoma Gupta with us. Also with us DMK spokesperson Salem Dharanidharan, and also joining us advocate and researcher Mr. Alok Prasanna. Ms. Gupta, before we headed into a break, there was a comment that you wanted to make as to why the BJP is insisting on the 2011 census. Why not go ahead with 2026? This was a fruit of your labor, 2026 census. It's supposed to be digital, supposed to be turned around by just the next year. Why not wait for it?
So it will happen according to the constitutional mechanism, as I was saying. In fact, I was just taking a leaf of the advocate who was talking about Article 81. And, amending Article 81 was a point, and constitutionally discarding that one person, one vote, one value principle permanently. Technically, if you see the past two delimitation froze in 1976 according to the 42nd Amendment and 2001 according to the 84th Amendment, which already did this, and the latter it did was in 2026. However, the issue is that inserting the 50% proportion increase clause would mean it would become a permanent fixture of the Constitution. Thus, even if the northern states come together like the South did in the 80s and 90s and stabilize the population, southern states will continue in their process. So this is a scenario which has to have a logical conclusion. So that angle must be kept. So I really appreciate the points given by the previous advocate, but I just wanted to add this connotation to his theory.
But Ms. Gupta, again, to come in on that very same issue, whether it should be one person, one vote, that again sits juxtaposed against the issue that has been raised by very many opposition leaders, that also what happens to states as units of a larger country. That is the question being raised. What happens to the federal compact? Mr. Dharanidharan, let me get your thoughts on that. This argument that is being made by the BJP that, look, one person, one vote, what's wrong with that? That is the question that is being posed across to you.
Then you'll have to go to the history. Why did the population of Tamil Nadu, or rather many of the southern states, reduce? It is because of the union government policy of the 1970s, which is why TFR rate of Tamil Nadu and other southern states reduced to less than 2, and whereas in many of the northern states remained in 3. Now we ask the question, why should we be penalized because we follow the two-child policy of the union government? That is a question that I want to ask. And again, if I have to add further, see, now the whole point is why this bill now, the Women Reservation Bill was passed in 2023. Now, why do you have to announce this 3 days before and want to get passed in 4 days? So what should the union government should have done is immediately should have implemented the Women's Reservation Bill, point 1. And point number 2, right now in 2026 should have passed an amendment continuing the freeze indefinitely on delimitation, and then conducted the census, socio-economic survey of all caste. I'm not even saying just a caste survey. I'm saying a survey that will give us as much data as possible. People of different castes, different rural urban divide, socio-economic parity, and then based on that have a deliberation with the state government to see how we could redesign the whole thing. And then, okay, when all the states would agree, then say, okay, fine. Now that let's say, I do understand the argument. For example, a parliamentarian, Muzaffar Raja represents 4 million people. A parliamentarian, Sikkim represents 7.5 lakh people. But again, why should the South be penalized because they were very good in child control? So then have deliberation and then work out on a new formula. Why the hurry in 4 days? And why the document does not even mention proportional increase in seats? It doesn't.
Let me get Mr. Gupta in on this.
Commission.
Mr. Gupta, you want to respond to that?
Yeah, I'll make it very quickly, sir. See, what the Modi government is proposing now is not just ensures no loss in seats actually, but an actual increase. And additionally, it ensures that the constituency sizes reduce slightly to make governance easier and more practical, a point I'm sure even the opposition agrees with. And after all, the spirit of delimitation and redrawing boundaries is also to ensure that the representatives govern similarly sized constituency with similar sized population as far as possible. This is the generic thumb rule. One person, one vote, one value. And an expansion of the 850
so that's
seats.
The thumb rule that the government is looking to follow.
So,
can I quickly
come in?
Lord, that's the...
just let me finish.
That's the criticism that the opposition leaders are giving, that either you can have the 50% increase across all states or you have Article 81.2. Both cannot happen together. 81.2 says that there needs to be a consistent ratio across all states for population versus seats.
Sir,
that's the submission that the DMK is making. Mr. Dharani, you want to come in on that?
The whole point which I wanted to make is exactly right. So on the floor, the Home Minister or the BJP leaders keep saying that it's going to be equal increase, that is 50% increase across states. And then at the same time, BJP is making a counter argument that 1 person, 1 vote, which means that each constituency would have fixed number of parliamentarians, which means certain states would have disproportionately higher percentage of parliament representing in the parliament, and some states like Tamil Nadu will have significantly lower percentage of parliament.
So that's the concern flowing out of Tamil Nadu.
Exactly.
We're running out of time. Let me just get Mr. Prasanna in for a final comment. Mr. Prasanna, again, just final word. The BJP is known to be very efficient in terms of managing elections and the parliamentary affairs. This is one of such cases where perhaps the numbers are not stacking up for them. Various experts tell us they will not hit that magic number of 360. If that were to happen, is there a broader picture here that we're not able to see as to why the government would insist on such a constitutional amendment?
No, I'm no one to comment on that. But let me put it this way. I have constitutional concerns with this bill. There are good pragmatic concerns also with this bill. But I did think Mr. Amit Shah made a very valid point. It was during yesterday's bill that you cannot actually gerrymander elections in India, because at the end of the day, the Indian voter is a little too smart. You can't cut and slice and dice them and make sure they vote exactly the way you want them to. At the end of the day, they vote as a mass, not individually perhaps. As a mass, they vote on what they feel is their need and their requirement. So any party which thinks that they can gerrymander their way into a majority in this country is deluded, let's be very honest. So I cannot speak for the government's motives. I'm a person who's only observing this from 1,000 miles away in Bangalore. And my sense is there are serious constitutional concerns and there are serious pragmatic concerns which should make the government rethink this move. I maintain delimitation is necessary. It should be done as soon as possible, but it is better to wait and do it right rather than hurry and do it.
Fair enough. Mr. Prasanna, Ms. Gupta, Mr. Dharani, thank you so much for joining us. In just minutes from now, we'll see the Home Minister address the Lok Sabha, and then subsequently voting is expected at 7. We'll, of course, keep our ears and eyes peeled for any action out of the Parliament. But with that, it's a wrap on this edition of News Centre. More news and updates will continue right here.
Hello and welcome to Startup Street. I'm Arundhati Ramanan and these are the top headlines from the startup world. Indigo invests 10 crore rupees in Sarla Aviation, shifts to homegrown air taxi bet after Archer deal collapses. Shunya FTOL targets 2028 Bengaluru launch. Sequoia Capital raises $7 billion fund under new leadership, doubles down on late-stage AI bets, including OpenAI and Anthropic. D2C fragrance brand Fifth Sense raises 6.3 crore rupees in pre-seed round led by OTP Ventures. Investor interest builds as Fragonote FitCool lineup fundraisers. Meta hires Thinking Machines Lab founding member Joshua Gross as talent exodus continues from MRA Murati's AI startup. Snapit appoints ex-Ola executive Abhinav Ankur as CEO to drive expansion in fast-growing house health segment, takes on Urban Company and Pronto. Those were the headlines that we're tracking for you this evening on Startup Street. But first up on the show on What's Brewing Today, Jungle Ventures is rethinking how it engages with founders, quite literally taking things off the boardroom and onto the cricket pitch. At its latest meet in Mumbai, investors and entrepreneurs came together in an unconventional setting, reflecting a broader shift in venture capital towards deeper, more collaborative partnerships. Aishwarya Anand brings us this report.
Cricket, capital and conversations. What happens when venture capitalists, global investors and founders swap boardrooms for a cricket pitch? Well, that's exactly what Jungle Ventures did in Mumbai, hosting its annual meet right here on the field. But beyond the novelty, the format reflects a broader shift, where VC firms are increasingly looking to build founder relationships beyond the capital. No suits, no slide decks, just bats, balls and banter. Jungle turned its AGM into a cricket match. But why cricket?
I think this is the first time we're doing cricket. And why not cricket? I think that's the ambition this sport has, and that goes with the country. And obviously, we believe we have the best founders here with similar ambitions, so I thought cricket will represent our founders the best.
But for Jungle, cricket is more than a nod to India's biggest sport. It is meant to reflect the philosophy behind startup building itself. And if building a startup is like playing cricket, what format is it really most like?
Cricket is a great sport that represents the patience that's required in order to really build companies that last the test of time. In fact, if anything, we should be playing test cricket and not T5 cricket.
It teaches you that life is longer, one game lost, another game won gets you there. In test match cricket, there's always a second inning. There's always a second inning. So I just big fan of that. Doesn't matter what the pitch is, there'll always be a second innings.
But the story here goes beyond startup building metaphors. It reflects how the founder-investor relationship is evolving in the venture capital ecosystem today. So what do founders increasingly want from VCs now? And in the venture world, are investors, selectors, commentators, or coaches?
I wish the VCs were coaches, but I still think there's a long distance to go. And I would say, apart from commentators, we are also critics, which is also a big place that exists in the world of cricket. So I would love to see VCs transition to being real coaches, maybe at times even captains. Even non-playing captains would be amazing if VC was to do. But I don't think we are there yet.
They're the coaches because they tell you what to do when you need it the most and play from the sides, which is like just like coach. And fortunate to have Jungle as our coaches here for sure.
Well, I think we've always viewed being an investor in a company as a partnership with a founder. And so I think this is great to see founders and investors coming together, being on the same team.
And perhaps changing the setting changes the conversation too. So what happens when you take an AGM out of a boardroom and onto a cricket field?
It's quite an interesting and innovative kind of having a twist with an AGM. And I think it's also a good way to come together in a different kind of setting.
From Europe to Southeast Asia,
investors and founders travelled in, some even picking up a cricket bat for the very first time.
It's my first time in India and it's really exciting. Also first time cricket, and I have played today and it was a very cool experience. I like it.
Oh, it's fun. It's fun. It's fun. I mean, like, I don't know most of the people here. I think there's probably 5 of us from Southeast Asia. So it's a good opportunity to learn something new and, you know, meet with people from different backgrounds. It's not just the portfolio founders, but also, like, you know, the LPs, the venture capital.
And whether the comparison was to cricket, football, or even a marathon, one idea kept surfacing through the day. What do sport and startup building have in common?
It's like running a marathon, right? You know, rain or shine, good or bad, you just have to keep on persevering, right? So marathon is not like a sprint where you just run 0 to 100. This marathon is really long, like multiple kilometers, right? So in building a startup, you just have to have that tenacity, that courage and perseverance to just keep going. And as long as you believe in your vision and you think that could work, you just have to keep pushing forward.
It's often a team effort, and picking the right team members, it's quite important. The ability to adapt to changing environments is quite important, and resilience and execution matter probably as much as the idea that you have.
Cricket may have been the format, but the message is clear. In the venture ecosystem, writing a check may no longer be enough. Now, for firms like Jungle, the pitch is about building partnerships, strategy, and long-term conviction. This is Aishwarya Anand for CNBC TV 18.
On the hot seat today, Astronova Mobility, one of India's emerging players in the EV financing space, has raised 60 crore rupees in a Series A round led by Ivy Cap Ventures, with participation from Asian Development Bank and Silicon Valley-based Trucks Venture Capital. Founded in 2023, the company is building a full-stack platform to accelerate electric vehicle adoption in the commercial segment, already enabling financing for over 25,000 EVs across categories. With this fresh capital, Astronova is looking to deepen its tech and data capabilities, unlock significant debt financing, and target a 5x scale-up over the next 18 months. Joining us now to talk about the road ahead is Kunal Mundra, the founder and CEO of Astronova Mobility. Kunal, thank you so much for taking time out and being here with us on Startup Street. You know, the company was founded in 2023, and in a very short span, you've sort of scaled to financing over 25,000 EVs, right? What was the gap in the market that traditional lenders were sort of missing, especially in the commercial EV space?
Firstly, thank you so much for having us on the screen. So, you know, the problem statement in our minds was very simple. If you just look at India's transition to EVs over the next few years, and, you know, starting from the commercial side of operations, there's over $100 billion of capital that's required. And I think the biggest challenge today is this, that, you know, you've got fleets on one side, which tend to be smaller, more local operations. They need very specialized underwriting. And EVs as a category are just evolving continuously. Technology is evolving. It's really hard to underwrite the asset today, unfortunately, because the ecosystem isn't evolved. Residual values, secondhand values haven't really been well established. And therefore, what you really need is a specialist player in the middle that solves for this asset risk in an emerging category like EVs, and simultaneously has the ability to really underwrite these operators in a very specialized manner. So that's essentially what we're solving. And we're therefore creating a platform that allows, hopefully, you know, tens of billions of dollars to then flow over time into the space, accelerating the speed at which people adopt EVs, and hopefully, therefore, accelerating the pace at which India moves towards net zero.
Sure, and you know, you're sort of operating at the intersection of EV adoption and financing, right? But unlike passenger EVs, the commercial segment sort of has very different economics and risks. So which specific segments, whether it's two-wheelers, three-wheelers, or heavy-duty trucks, are sort of driving the most demand for you today? And where do you see the strongest unit economics emerging from?
It's interesting. I think, you know, it's kind of moved upwards. So I think unit economics first got established in the two-wheeler segment. Then they got established in the three-wheeler segment. Now four-wheeler segments are seeing much faster and better kind of adoption because TCOs are getting proven. and the quality of assets that are in the market are improving. So I think what's happening is India started with the smaller form factors, and our mix kind of reflects that smaller form factor orientation. But I can see, if you ask me over the last 3 months, I'm seeing an accelerated demand on four-wheeler passenger cars in the commercial space, light commercial vehicles, which would be the EV equivalent of a Tata Ace. We're seeing a lot of bus demand. We're also seeing truck demand coming in. So I think it's really exciting for India that now demand seems to be fairly broad-based in nature. And my suspicion is over the next 5 to 7 years, there's no category that will get left behind.
All right, so no category will get left behind is what you think. And you've sort of raised the 60 crore rupees in a Series A round led by Ivy Cap Ventures, right? How do you plan to deploy this capital, particularly across data, AI, and engineering capabilities?
So, I think if you've got a clear vision, if you've got capital and you've got a great team, you can make anything happen. So I think step one is obviously investing in the team. But, like you rightly pointed out, I think we already have an incredible data platform and a tech stack. And we're now starting to see the benefits of, the analytics and the AI engine on top of it. So, for example, today we can predict if a customer is unfortunately go to a tough time and potentially want to return the vehicle over the next 3 to 5 days based on how they're operating the asset. It just allows us to intervene and partner with the customer better to help them find the right outcome, right? So our sense is, out of the 60 crores, obviously we'll invest in people, and specifically we'll invest in building out our data platform, our tech platform, and invest in AI capabilities so we can leverage that large and unique data set that we have coming from each and every one of our assets every second.
Sure. And you're targeting a 5x growth over the next 18 months and aiming to enable $1 billion worth of EV deployments, right? If you could sort of take us through what are the key levers that will drive the scale, and what are you currently making in terms of revenues, what are you clocking, and where do you hope to end this year?
So, I think the key question for us is really, as we scale up, the important fact is, and I always use this, you cannot run faster than the ecosystem, right? And therefore being very, very thoughtful about where we deploy our capital, what structures do we use, which customers do we target. I think that's going to be the key question for us, because it's very important we make the right choices, and which is why we are so broad-based across, two-wheelers all the way to trucks. We cover small fleets, large fleets, we cover individual customers. So I think really the key for us is to pick our spots, offer the right customer, the right value proposition that they can run profitably. And I think the key challenge is just making sure we make these right decisions across the market over the next 5 to 7 years.
Sure. And, given that a large part of your customer base includes small fleet operators with limited credit access, how do you sort of manage risk and ensure asset quality while scaling rapidly?
So I think, the key is, and that's why we have kind of a three-pronged approach to it. One is, of course, using data, right? Using data to underwrite over time has helped us understand which customer will be able to make their money operating in EV. And if they make the right money, then they will not default, because it's never a problem of intention. It's a problem of ability, right? So I think just using data to find the right customer and underwrite them. The second thing is, in an industry like ours where the product itself is constantly evolving, we've built a really strong engineering team that allows us to assess which is the right asset or the right OEM or the right product for a given customer's use case. So, right, kind of marrying the right customer with the right product is the second part of it, which really allows us to reduce our risk. Because if the product performs, our customer will earn what they hope to earn, and they will pay their EMIs or their leases on time, right? So that's kind of the second leg. And I think the third leg is really when you look at scaling up. Look, I think it's important. Out of that $100 billion, our aim is not to solve for $10 million, right? Then that we haven't moved the needle. So really the third leg for us beyond data and asset is really interesting and innovative structuring programs that we have that allow large and significant debt capital to flow through our platform, right? So that's the third piece. So in our minds, if we can leverage data effectively, including AI, if we can make sure we are marrying the right customer to the right asset, and if we can make sure that we can really partner with large pools of capital in a manner that solves for their concerns around credit risk and asset risk, then we can truly unlock this segment.
All right, Kunal, thank you so much for outlining what the sector needs, and we wish you all the best on this journey going forward.
Thank you so much for having me here.
And moving on, it is Friday and it's time to take stock of all the deals from the startup world. This week saw a total of 10 deals worth $33 million, according to Venture Intelligence. Some of the notable deals include AI enabler for digital commerce, GobbleCube, which got $15 million from InfoEdge, K Capital, Saskina Asia VC. HR tech startup TrackCheck raises $8 million from IvyCap Ventures, in home automation startup Aliste Tech raises $3.2 million from YourNest and others. That's not all. Industrial AI startup IntelliThink gets $1.83 million from Anicut Capital, Pentathlon Ventures and Veltis Capital, while intra-city air taxi service Sarla Aviation raises $1.07 million from Indigo Ventures. According to Venture Intelligence, this year has seen a total of 294 deals worth $2.8 billion. And moving on, and on that note, it is time for us to head into a short break. But coming up next, InCred Alternatives closes its maiden Special Opportunities Credit Fund at 1,500 crore rupees. We decode the firm's investment mantra. On the other side, stay tuned.
Welcome back to Startup Street. Incred Alternatives has closed its maiden special opportunities fund at 1,500 crore rupees, taking its total private credit assets under management past 4,000 crore rupees, signaling strong investor appetite in what is still a nascent market. The focus, old economy businesses with hard asset coverage, established cash flows and clear structural downside protection built in at the time of investment. But what's driving the surge and how big is the opportunity from here? Joining me now is Saurabh Jalaria, the founding member of Incred and CIO Private Credit at Incred Alternatives. Saurabh, welcome to Startup Street. You've hit the hard cap of 1,500 crore rupees for your maiden special opportunities fund. What's driving the surge in investor appetite for private credit in India, Saurabh? And how different is this opportunity compared to more mature markets like the US or Europe?
First of all, thank you for having me on the show. I think the surge in private credit is largely led by investor diversification needs, moving away from the traditional equity market investments that they're used to. Private credit also offers higher risk-adjusted return compared to the more traditional debt sources like mutual funds or bank FDs. And that's been a very compelling case for investors to make it a core part of their portfolio allocation. You asked about the question about how does it differ from the Western market. I'll say three specific points in which how the Indian private credit is different from the West. The first is all private credit funds in India that's governed by SEBI come under the Cat 2 AIF regulations, which is a closed-ended fund. And hence, we do not run any asset liability mismatch. We do not offer any liquidity for the time of the fund that's under deployment. Second is most private credit funds in India focus on senior secured debt, which has strong covenants and value protection.
Yes.
And lastly, I think the big difference is also the type of industries and sectors that where private credit is deployed in India tends to be more asset heavy and traditional businesses compared to the West that's focused more on services and technology, sectors that are more likely to get disrupted by AI. And hence, Indian private credit as a combination of these three factors look very different from the West.
Sure, but like I mentioned earlier, this fund is focused on old economy businesses with hard asset backing. Why double down, Saurabh, on these sectors at a time when capital is chasing new age growth stories? And what does downside protection really mean in your underwriting? And how do you build that into deals from day one?
Sure. So I think we need to differentiate here between equity capital and debt capital. Equity capital, as you rightly said, is chasing new age businesses where they're trying to multiply their money. The returns are exponentially on the way up. Debt capital, by definition, has a finite or fixed return on the way up. And hence, it's very important for us to protect the downside of any transaction that we enter into. We find old economy attractive for a couple of reasons. One, they have more predictable cash flows compared to the new age businesses. And more importantly, in a debt scenario, they also have hard asset collateral, which provides a downside protection in case the cash flow volatility is going beyond what the underwriting standard is. And as a combination, there is a strong downside protection that ensures that debt is always covered, even if the returns might get compromised in case things haven't gone as per the plan.
All right, Saurabh, you've already deployed nearly 75% of the fund across sectors like auto, power, oil and gas, and hospitality. What kind of opportunities are you seeing on the ground?
So we see two very distinct opportunities. The first that needs solution debt capital, something that the traditional lenders like banks and NBFCs are unable to meet. And the second is opportunistic debt capital that's driven by volatility. It could be tariff-related volatility that we saw last year. We think there's going to be a lot of capital markets-related volatility in a year like this. There's always typically a demand-supply volatility for a particular sector. It could be state-driven. It could be driven at a central level. So these are the two opportunities that we cater to.
Okay. Now, this fund sort of has seen participation from family offices, HNIs, and international investors. How are you convincing global investors to back Indian private credit at this stage? And with over 4,000 crore rupees in private credit AUM, now what's the playbook for scaling from here?
So I'll say this, that the domestic family offices and HNIs are now much more sophisticated than they used to be. I think the requirements for having a fund that's very institutionally governed is very similar to how an HNI or a family office is now looking at every fund. Compared to about 5-7 years back, when the Western money or the dollar capital was largely backing Indian equity stories, I think we see a lot of diversification even from that front, where they're now looking at credit as a very valid diversification as to taking an India exposure.
Sure. One final question, if you quickly answer that. What does the next 3 to 5 years look like for private credit in India? Do you see this becoming a mainstream asset class for Indian investors? And if it does, what does it unlock, not just for investors, but for India's broader financing ecosystem?
Sure. So I think in short answer, yes, absolutely. It already is a very core part of most sophisticated portfolios that we see. In terms of scale of the market, this is roughly a US dollar $25 to $30 billion market. So it's under 1% of our GDP. If you look at this number in the West, this number is in the range of 3 to 4%. So there is massive runway for growth. We've also seen that availability of private credit creates its own demand. So as promoters and companies find out that besides a traditional bank or the broader equity markets, there's another instrument that solves their needs. We've seen a lot of use cases come up from sectors that need this solution capital. And this is being reflected in the growth of this industry going forward.
All right. With that, it's time for me to wrap up our conversation. Saurabh, many thanks for joining us on Startup Street today.
Thanks for having me.
Well, with that, it's a wrap on this edition of Startup Street. For more news and updates, stay tuned to CNBC TV 18.
Hello and welcome to CNBC TV 18. Have markets turned the corner is the big question. The Iran-US war and the spike in energy costs has been this latest in a series of events which have really taken a bite out of market returns. Before, of course, late February when the war broke out, it was the AI trade in the US which was puncturing and putting question marks on terminal values for a lot of businesses. In 2025, for a long time, it was Trump tariffs, which really dangled a sword over market returns. So that's the question that everybody is asking. Look at the price action over the last few days, and perhaps the answer is in the affirmative that yes, maybe the worst is in the price. We put that question to one of the most veteran fund managers in India, Prashant Jain. He's founder and chief investment officer at 3P Investment Managers. And I began this conversation by asking him exactly that. Has the market turned the corner? Is he now constructive and confident that it's going to be a lot better from here on? Listen in.
I think I'm quite optimistic about the resilience of India, about the ability of India's economy to handle the spike in crude prices, some disruptions. India is far better positioned this time around because our current account deficits are structurally lower, and the impact on the economy there should be commensurately moderate. And even our capital markets, while foreigners are selling, there is no supply or very little supply from the primary markets. And the domestic flows, I think, should not just hold, but they should grow over time. And therefore, the ability of markets to absorb this supply selling is quite good. And over time, I think investments made around this time should yield above average returns.
Yeah. You know, Prashant, you must have seen, right, a lot of sort of hullabaloo on social media and elsewhere around the question of why foreign investors are selling. And recently, right? And Akash Prakash wrote a piece recently, and he outlined a list which is, global. Some of the global Asian peers are more attractive. Here in India, earnings growth has slowed down. None of the it's not new. Nothing is new. ROEs he mentioned perhaps have come off as well. You know, in your opinion, have some things changed in terms of things which were always structurally positive for India, which is higher rates of growth and better earnings profile, return ratios? Has that suffered a little bit in any way whatsoever, Prashant?
On the contrary, I mean, India's growth is accelerating, right? You are growing at 7%, back-to-back second or third year. So when have we done that in the past? India's bank balance sheets, corporate balance sheets are in the pink of health. Your current account deficit is near 1%. Your fiscal deficit is quite reasonable. I think India is quite well positioned. The fact remains that 2 years back, India's premium over EMs had gone up to much above average levels. And also, I think the earnings were overestimated. And I mean, we have been of the view that for last 2 years, that earnings growth will converge with the nominal GDP growth of the country, maybe slightly higher than that. Because in most sectors, we do not see any margins improving. And from the COVID lows, the margins normalized, they improved. And therefore, it was wrong to extrapolate that earnings growth. I think there could have been some earnings disappointments, but that's more to do with probably slightly aggressive estimates. The selling of last year, I think, also had the shift towards AI, the popularity of AI. I think clearly that was not in favor of India because India does not have, or it lacks, meaningful AI plays. In fact, IT is looked upon by some, I don't agree with that, as an anti-AI play. So, and finally, last month, I think this spike in oil, the fear of even higher oil prices, and the fear of sharply lower currency, which would hurt foreign investors a lot more. I think that has led to this last round of selling. So we have had 3 back-to-back, one slightly longer term, one last year and one this. I think this, whenever the situation stabilizes, the foreign outflows should stop. I must also add that it matters little now at how foreign flows are for the markets, because the bigger source of supply in these markets was the primary markets. Investors have lost money in 2 out of 3 issuances. So I think those excesses are behind us. That supply should be sharply lower, and therefore the ability of markets to absorb any FII selling is quite strong. See, foreign selling can delay returns, but I don't think it can deny you the returns. The returns will eventually come.
So you're saying 3 things. One was earnings being systematically overestimated, basically projected that the COVID boom and coming. I mean, that basically will go on forever, which was wrong. AI related, lack of AI plays perhaps attributed to some of the selling, and this oil shock, right? Is this one. And you said, well, although foreign flows in that sense for longer term returns matters little, you said that will also change once the situation stabilizes. Prashant, you for the last, I think, 15, 20 years, we've spoken, always mentioned oil on the top of the list as worries for India, as one of the most important macro factors for India and the markets. It's around $90, $95. I mean, how do you assess that situation? If it stays here, as many say, it may.
I think India's vulnerability to oil has considerably moderated, because oil exports as percentage of GDP have fallen from 5% maybe 10 years back to about 3%. And to that extent, you have a lot more room to absorb higher oil prices. India's current account deficit also has fallen from between 2 to 3% in the past to around 1%. So your ability to absorb higher oil prices is therefore much higher. See, please remember that 10 years back, India used to fund its current account deficit at times from portfolio flows. Today, you have lost more than $10 billion in a single month, $40 billion in maybe 16 or 18 months, and still your economy is growing. Markets are holding up reasonably well. And the correction in the markets is, as much due to excessive valuations, as much as it is due to the excessive fundraising, and foreigners have also played a part. But the flow of
कि आप इस सदन के अभिभावक हैं, आपकी ही निसरा में सदन की कार्यवाही, सदन के नियम और संविधान के हिसाब से चलती है। ये महत्वपूर्ण संविधान संशोधन बिल पर आपने करीब 130 सदस्यों को बोलने का मौका दिया है, और ऐसे जैसे अभी आपने बताया, इसमें से 56 सदस्य महिलाएं हैं। वो एक प्रकार से बहुत बड़ा रिकॉर्ड शायद बनेगा, ऐसा मुझे लगता है।
संविधान संशोधन 33 का है, संविधान संशोधन 33 का, लेकिन 75% को मौका दिया है।
मान्यवर, इस चर्चा को अगर बारीकी से कोई शब्दों में ही सुनेगा तो महिला आरक्षण के लिए जो संविधान संशोधन है, इसका किसी ने विरोध नहीं किया है। सबने बोलने के लिए तो बोला है कि हम महिला आरक्षण के पक्ष में है। ये संविधान संशोधन जो आया है उसका हम स्वागत करते हैं, मगर उसको बारीकी से देखें तो इंडी अलायंस के सभी सदस्यों ने अगर मगर किंतु परंतु इसका उपयोग कर स्पष्ट रूप से महिला आरक्षण का विरोध किया है। और मान्यवर, कई जगह पे ऐसा दिखाई पड़ा, कि विरोध हमारे दृष्टिकोण की जगह हमारे इम्प्लीमेंटेशन के तरीके पर है। परंतु मैं इस सदन के माध्यम से देश की जनता के सामने स्पष्ट करना चाहता हूं कि ये जो विरोध है वो इम्प्लीमेंटेशन का नहीं है। ये विरोध केवल और केवल महिला आरक्षण का ही विरोध किया। और मान्यवर, मैं ये बात को जब बोलता हूं तब मेरी जिम्मेदारी बनती है कि इस सदन को इस बात से मैं कन्विंस करूं कि तरीकों का विरोध नहीं है, बिल के तत्व का महिलाओं के आरक्षण का विरोध है। मान्यवर, ये 3 विधेयकों में अरे धैर्य रखो भैया, धैर्य रखो, अखिलेश जी समझाओ जरा। मान्यवर, ये 3 बिलों में इसका उद्देश्य मैं स्पष्ट करना चाहता हूं। पहला उद्देश्य है सरकार का और हमारे नेता नरेंद्र मोदी जी का कि महिला सशक्तिकरण करने वाले इस संविधान सुधार को समयबद्ध तरीके से लागू कर 29 का चुनाव महिला आरक्षण के साथ कराया जाए। इसका दूसरा उद्देश्य है एक व्यक्ति एक वोट और एक मूल्य, इस सिद्धांत हमारे लोकतंत्र की नींव में जो हमारी संविधान सभा ने तय किया था, वो सिद्धांत के स्पिरिट को यहां पर लागू किया गया। मान्यवर, ये पूरे सदन में 543 सदस्य बैठते हैं। किसी की सीट में वोटर्स की संख्या 39 लाख है, किसी की 60,000, और ढेर सारी सीटें ऐसी हैं जो 70 के दशक में फ्रीज हो गए, तब से लेकर आज तक इतनी बड़ी हो गई है कि सांसद अपने मतदाता को अपना मुंह भी नहीं दिखा सकता, क्योंकि इतनी बड़ी आबादी को वो कैसे संभाल पाए। मान्यवर, जो मतदाता है उसकी अपेक्षाएं होती है, उनकी समस्याएं होती है, और समस्याओं के निराकरण के लिए वो सांसद के पास भी जाना चाहता है, मिलना भी चाहता है। क्या इस सदन में जो विरोध करते हैं उसमें से कोई मुझे समझा सकता है कि जिस सांसद के कॉन्स्टिट्यूएंसी में 39 लाख वोटर हो, वो किस प्रकार से अपनी सांसद की जिम्मेदारी का निर्वहन करेगा? और इसी विषय को दृष्टिगत रखते हुए हमारे संविधान में समय समय पर परिसीमन का प्रावधान किया गया है, और परिसीमन के प्रावधान से ही एससी और एसटी जो जिसकी संख्या बढ़ती है उसकी सीटें भी बढ़ने का प्रावधान है। तो एक प्रकार से जो परिसीमन का विरोध कर रहे हैं वो एससी और एसटी सीटों की बढ़ोतरी का विरोध कर रहा है, वो ध्यान में रखें। मान्यवर, संतुलित, समावेशी और व्यवहारिक लोकतांत्रिक ढांचा ये तैयार करना, इसकी जिम्मेदारी संविधान ने सरकार जो अधिकार में होती है उसको दी। तो अभी ये जिम्मेदारी नरेंद्र मोदी जी की सरकार को दी गई है। उनको पसंद नहीं है, मगर ये तो देश की जनता निर्णय करती है। वो वंश परंपरागत नहीं होता है, वो लोग चुनकर भेजते हैं। संघीय संतुलन बनाने रखना, लोकसभा में जनसंख्या के अनुरूप प्रतिनिधित्व आना और राज्यों की शक्तियों के बीच में भी संतुलन बनाना, ये परिसीमन के उद्देश्य संविधान सभा की चर्चा और हमारे संविधान में परिसीमन का जो जिक्र है उसमें कहे। इसके साथ साथ नए भूगोल, प्रशासनिक वास्तविकताओं और शहरीकरण और रोड, रास्ते, रेल से बढ़ी हुई कनेक्टिविटी और नए जिले, ये सबका संज्ञान परिसीमन में लेना होता है, क्योंकि ये सारी चीजें सांसद को अपनी ड्यूटी का निर्वहन करने के लिए बहुत जरूरी है। मान्यवर, संविधान के अनुच्छेद 81, 82 और 170 इसके अंदर इस सारे सिद्धांतों को समाहित किया गया है और उसी के निर्वहन के लिए नरेंद्र मोदी जी के नेतृत्व में सरकार ये संवैधानिक सुधार लेकर आई। महिला सशक्तिकरण, समान प्रतिनिधित्व और संतुलित संघीय ढांचे का निर्माण करने की जिम्मेदारी के निर्वहन से ही आए। मान्यवर, कई सारे सदस्यों ने अनेक प्रकार की आशंकाएं व्यक्त की। उन्होंने ये कहा कि अभी क्यों लाए, तो मैं ये बताना चाहता हूं कि जो नारी शक्ति वंदन अधिनियम आया उसमें जिक्र है कि 2026 के बाद होने वाली जनगणना के बाद जो परिसमन होगा उसमें महिलाओं के लिए आरक्षण सुनिश्चित करेगा। अब ये पूछते हैं तो उस वक्त काफी सदस्यों ने पूछा है कि बिल लाते वक्त आपने जिक्र क्यों किया 26 के बाद की जनगणना। मान्यवर, हमने नहीं किया है। 71 में इनकी सरकार थी, इंदिरा जी की सरकार थी, तब इसको फ्रीज कर गई थी और वो फ्रीज के कारण हमें इसका जिक्र करना पड़ा। वो फ्रीज की हुई सीटों की संख्या उठाते हैं तभी ये नारी शक्ति वंदन अधिनियम का इम्प्लीमेंटेशन होता है, इसलिए हम लेकर आए। और 71 से अब तक सीटों की संख्या फ्रीज रही और चलते 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 मैं कुछ सीटों का नाम बोलना चाहता हूं माननीय। मलकाजगिरी तेलंगाना 48 लाख संख्या मतदाताओं की, बेंगलुरु उत्तर 29 लाख संख्या, बेंगलुरु दक्षिण 29 लाख संख्या, गाजियाबाद जहां से कभी रक्षा मंत्री जी भी सांसद रहे 28 लाख संख्या, उत्तर पश्चिम दिल्ली 27 लाख संख्या। 127 सीटें ऐसी है मान्यवर जिसमें 20 लाख से ज्यादा वोटर से 20 लाख से ज्यादा। अब मुझे कोई बताए भला, जहां 48 लाख वोटर है वो सांसद कैसे 48 लाख मतदाताओं की अपेक्षाओं के साथ अपने आप को मैच कर, इसकी पूर्ति अरे अखिलेश भाई, एक लेवल की बात चल रही है यार, कहां केंद्रीय विद्यालय कर रहे हो अभी, इसका समय आएगा। मान्यवर, इनकी बात कहने दो तो जरा स्तर मालूम पड़े।
अध्यक्ष महोदय, जो आंकड़े बता रहे हैं माननीय मंत्री जी, हम केवल ये जानना चाहते हैं किस सेंसस के आधार पर ये जो आंकड़े बता रहे हैं, क्योंकि जो गाजियाबाद का आंकड़ा बताया जा रहा है वो बहुत कम बताया जा रहा है। आज की परिस्थिति में हो सकता है वो दुगना हो।
मैं यही कह रहा हूं, ये पुराना है, मैं यही कह रहा हूं, अगर डिलिमिटेशन करने दोगे तो नया आ जाएगा और एक की जगह दो सीटें बन जाएगी। मान्यवर, उनको ये भी पता नहीं है कि वो अपने स्टैंड के पक्ष में आर्ग्यूमेंट दे रहे हैं या विपक्ष में दे रहे हैं। मान्यवर, 127 सीटें ऐसी है जहां 20 लाख से ज्यादा वोटर। अब इसमें एक व्यक्ति, एक मत और एक मूल्य, इस सिद्धांत का पूर्णतया उल्लंघन होता है। कहीं पर तो 45 लाख मतदाताओं के समूह को एक प्रतिनिधि मिला है और कहीं पर 6 लाख मतदाताओं के समूह को एक प्रतिनिधि मिला है। तो मत का मूल्य जो एक होना चाहिए वो नहीं हुआ है मान्यवर। और मैं विश्वास दिलाता हूं कि डिलिमिटेशन के लिए ये लोग सहयोग कर दे, हमें भरोसा करें और डिलिमिटेशन करने दे तो ये मूल्य एक समान हो जाए। मान्यवर, मैं इसके इतिहास में भी जाना चाहता हूं। सबसे पहले 1972 में तत्कालीन प्रधानमंत्री इंदिरा गांधी जी की सरकार ने परिसीमन विधेयक लाकर सीटों को 525 से बढ़ाकर 545 की और फिर इसको फ्रीज कर दिया। 76 में सत्ता बचाने के लिए इमरजेंसी के काल में 42वें संशोधन द्वारा परिसीमन पर रोक लगा दी। अब इंदिरा जी तो प्रधानमंत्री थी, कानून लाकर रोक लगाई परिसीमन पर, और ये देखिए साहब कितने शक्तिशाली है, विपक्ष में बैठकर परिसीमन पर रोक लगाना चाहते हैं। मगर उस वक्त भी कांग्रेस पार्टी ने ही परिसीमन से देश की जनता को वंचित रखा था, और आज भी कांग्रेस पार्टी ही परिसीमन से वंचित रख रही है। मान्यवर, 2001 में 84वां संशोधन हुआ और 2026 तक सीटों की संख्या को फ्रीज कर दिया गया। तो ये जो कह रहे हैं कि नारी शक्ति वंदन अधिनियम में 2026 कहां से आया, तो वो बताता हूं। एक सेकंड। मान्यवर, ये कह रहे वाजपेयी जी थे, वाजपेयी जी बड़े विद्वान पुरुष थे, ये इनको जानते थे, तो इन्होंने प्रयास ही नहीं किया, बेचारे ने आगे बढ़ा दिया इंदिरा जी का। मगर हम तो समझते थे कि आप हमें सपोर्ट करोगे, तो हम तो बिल लेकर आ गए, अब आप गिराना चाहते हो भाई। तो वाजपेयी जी ये बात की कल्पना कर सकते थे। कांग्रेस पार्टी को हम लोगों से वाजपेयी जी बहुत अच्छे से जानते थे, क्योंकि 19 महीना जेल में रहे थे मान्यवर, वो बहुत अच्छे से पहचानते थे। और 84वां संशोधन इसने 26 तक फ्रीज कर दिया, और 50 वर्षों तक 1976 से लेकर 2026 तक क्या रिकॉर्ड से हटाना है? प्लीज अध्यक्ष जी, प्लीज, अरे बैठ जाओ, मैं बता देता।
तय करने दो, आप मत करें, प्लीज बैठिए।
मैं इनकी इज्जत करते इसका सम्मान करता हूं माननीय अध्यक्ष जी। अभी से लेकर अंत तक अगर फ्लो के कारण कोई असंसदीय शब्द निकल जाता है, तो आप स्वयं इसको हटा देना, इनको बोलने का मौका मत देना। मान्यवर, 50 वर्षों तक 1976 से लेकर 2026 तक देश की जनता को जनसंख्या के अनुपात में प्रतिनिधित्व नहीं मिला। 26 में ये सीमा समाप्त हो। अब 26 में सीमा समाप्त होने के बाद अगर डिलिमिटेशन करते हैं, तो डिलिमिटेशन 29 के पहले समाप्त नहीं हो सकता, क्योंकि परिसीमन आयोग का एक नियम है कि हर कॉन्स्टिट्यूएंसी में जाकर पब्लिक हियरिंग देना होता है। तो 543 कॉन्स्टिट्यूएंसी का पब्लिक हियरिंग 26 के मध्य से लेकर 29 तक हो नहीं सकता, और 27 तक जनगणना के आंकड़े नहीं आ सकते। तो स्वाभाविक है, अगर हम 29 का चुनाव नारी शक्ति वंदन अधिनियम के स्पिरिट के साथ कराना चाहते हैं, इस देश के 50% मतदाताओं को इस महान सदन में 33% आरक्षण देना चाहते हैं, तो अभी ही ये लाना पड़ेगा। ये जो पूछ रहे थे क्यों अभी आ रहा है, इसके लिए मैं पूरी बात समझा रहा हूं। वैसे मैं मानता हूं ये समझे हुए, मगर मान्यवर कहावत है ना, सोता है उसको जगा सकते हैं, जो जागता ही पड़ा हो उसको कोई उठा नहीं सकता। ये सब समझते हैं, मगर एक भ्रांति खड़ी करना चाहते हैं। मान्यवर, 76 में इस देश की आबादी थी 54.8 करोड़ और आज 140 करोड़, तो 54.79 करोड़ आबादी में जितने सांसद थे उतने ही 140 करोड़ की आबादी के बाद रखना, ये इनका मानना है। मान्यवर, आर्ग्यूमेंट क्या दिए गए कि सबको बोलने का कम मिलेगा, 0 ओवर में मौका नहीं मिलेगा। मान्यवर, सरकार का दायित्व है कि सदन के सदस्यों की संख्या बढ़ेगी तो सरकार सदन के दिनों की संख्या भी बढ़ाएगी। और मान्यवर, आप तो बड़े दयालु हो, रात को 12-12 बजे तक सबको 0 ओवर का मौका देते हैं। और एक तीसरा भी तरीका है साहब, तीसरा भी तरीका है कि अभी जो समय राहुल गांधी जी के अप्रोच के कारण जाया जाता है वो राहुल जी भी बंद कर दे तो अपने आप बोलने का सबको टाइम मिल जाएगा। ये विरोध कर 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 स्थगन करा करा कर जो समय बेकार कर देते हैं वो अगर वो भी बंद कर दे तो कुछ सरकार बढ़ाएगी, कुछ राहुल जी बढ़ाएंगे और कुछ आप बढ़ा लोगे, तो समय की चिंता किसी को करने की जरूरत नहीं है। मान्यवर, परिसीमन आयोग वो एक प्रकार से संवैधानिक अधिकार है हर मतदाता को अपना प्रतिनिधित्व समान रूप से प्राप्त करने का, और 120% की वृद्धि होने के बाद ये कभी हो नहीं सकता कि एक समान। मैं तमिलनाडु का ही उदाहरण देना चाहता हूं। मान्यवर, तमिलनाडु में 39 सीटें हैं अभी। अगर डीएमके का मानकर हम इसी 543 सीट में आरक्षण करते हैं तो 13 सीटें महिलाओं के लिए आरक्षित हो जाएगी और 26 सीटें ओपन रहेगी। अगर 2011 की जनगणना के आधार पर करते हैं तो तमिलनाडु की सीटें 6 कम हो जाएगी, परंतु हम वो नहीं कर रहे। हम 50% वृद्धि हर राज्य की कर रहे हैं जिससे किसी का प्रोरेटा नहीं। तो अब क्या होगा, 59% सीटों में 20 सीटें बढ़ेगी और 39 सीटें महिला ओपन रहेगी और 20 सीटें महिलाओं के लिए आरक्षित रहेगी। मान्यवर, अभी कहां समाप्त हुआ है भाई, आप भी राहुल जी के तरह मेरे बोलने का क्रम आप तय करो। नहीं तो कोई आपत्ति नहीं है, मैं दूंगा ना, इससे भी अच्छी दरखास्त दूंगा, चिंता मत करो। और मान्यवर, कुछ सदस्यों ने सवाल उठाया कि जनगणना क्यों समय पर नहीं हुई। मान्यवर, सबको मालूम है कि 21 में जनगणना होनी थी और 21 में इस सदी की सबसे बड़ी महामारी आई, कोविड का संकट आया और कोविड के संकट के कारण जनगणना संभव नहीं हो पाई। कोविड का संकट समाप्त होने के बाद देश को काफी समय लगा इसमें से उभरने में, और जब 24 में जनगणना की शुरुआत हुई तब कुछ दलों ने उचित ही मांग करी कि भाई जाति के आधार पर जनगणना करनी चाहिए। सरकार ने अनेक दलों के साथ चर्चा की, अनेक जाति समूहों के साथ चर्चा की, कई सारे सामाजिक ग्रुपों के साथ चर्चा की, कुछ सरकारों से भी चर्चा करी, राज्य सरकारों से, और बाद में निर्णय करा 25 में कि हम जाति जनगणना कराएंगे। मान्यवर, और ये निर्णय होने के बाद अब जो जनगणना हो रही है उसमें जब व्यक्तियों की गणना होगी तब जाति का कॉलम आने वाला है और जाति की गणना भी होगी, ये सुनिश्चित है। मान्यवर, मैं पहले भी जो जनगणना हुई है कांग्रेस पार्टी के समय में, इसके भी प्रश्नोत्तरी को स्टडी किया हूं। जब बिल्डिंग की जनगणना होती है, उस वक्त जाति जनगणना तो ये करते ही नहीं थे, परंतु धर्म भी नहीं पूछा जाता था और कुछ नहीं पूछा जाता था। मगर जब व्यक्ति की जनगणना होती है, तब ये सारे सवाल आते हैं, कितना पढ़े लिखे हो, कब जन्म हुआ था, धर्म क्या है। अब ये भी पूछेंगे कि जाति क्या है। इसमें किसी को संशय करने की जरूरत नहीं है। नरेंद्र मोदी जी ने दूरदर्शिता के साथ आपको पहचान कर कैबिनेट प्रस्ताव में जनगणना की जाति के साथ होगी, वो प्रस्ताव पारित किया। तो इसमें कोई भी कंफ्यूजन रखने की। पीयूष भाई, क्या अपेक्षा रख रहे हो? ये जाति जनगणना की डिमांड नहीं कर रहे हैं, हमें उलझाना चाहते हैं। अब पीयूष भाई बेचारे भूले हैं, वो कहते हैं कि जाति जनगणना की घोषणा कर रहे, ताली बजाओ। हम कर रहे हैं तो ये ताली नहीं बजाएंगे। उनको जाति जनगणना से कोई लेन देन नहीं है, उनको यहाँ बैठने से लेन देन है, जो नहीं होने वाला है भैया। अभी मान्यवर, मैं फिर से एक बार 140 करोड़ की जनता के मन में किसी की भी प्रकार का भ्रांति, कंफ्यूजन न हो, इसलिए स्पष्ट करना चाहता हूं कि नरेंद्र मोदी जी की कैबिनेट ने जाति जनगणना का जो निर्णय किया है, वो कैबिनेट प्रस्ताव में 26 की जनगणना जाति के साथ कराने का निर्णय किया है। और मान्यवर, अब ये बिल जब से आया है तब से विपक्ष ने कुछ भ्रांतियां फैलाना शुरू की। सबसे पहली भ्रांति फैलाना शुरू की कि जाति जनगणना को टालने के लिए ये कर रहे हैं। जाति जनगणना को टालने के लिए हम ये संविधान संशोधन लेकर आए हैं। मैं इनको बताना चाहता हूं मान्यवर, 3 माह पहले जाति जनगणना का पूरा टाइम टेबल हम घोषित कर चुके हैं, टालने का सवाल ही नहीं है। जातिवार जनगणना की शुरुआत हो गई है। उसका पहला चरण जो है वो अभी चल रहा है। फिर आए कि दक्षिण को अन्याय हो जाएगा। कल मुझे थोड़ा भय लगा कि उत्तर बनाम दक्षिण का नैरेटिव एक रात के लिए भी दक्षिण के राज्यों में नहीं होना चाहिए। मैं फिर से स्पष्ट कर देता हूं, दक्षिण का राज्यों का इस सदन पर इतना ही अधिकार है जितना उत्तर के राज्यों का अधिकार है। अरे दक्षिण छोड़िए, छोटी सी यूटी लक्षद्वीप का भी इतना अधिकार है जितना उत्तर प्रदेश, गुजरात और बिहार का। ये देश को इस तरह के नैरेटिव से, उत्तर दक्षिण के नैरेटिव से टुकड़े टुकड़े नहीं करना चाहिए। इससे ऊपर उठना चाहिए। ये क्या कहना चाहते हैं कि ये सदन में जो व्यक्ति बैठता है वो ये सोचता है कि किस राज्य से मैं आ रहा हूं। मान्यवर, हम शपथ लेते हैं तो मन से लेते हैं। जो संविधान हाथ में लेकर शपथ लिए हैं वो उत्तर दक्षिण का भेद कराना चाहते हैं, हम नहीं होने देंगे। मान्यवर, जो भी सदस्य यहाँ शपथ लेता है वो भारत को अक्षुण्ण रखने की शपथ रहता है, पूरे भारत के कल्याण की शपथ लेता है। वो अपनी कॉन्स्टिट्यूएंसी, अपना राज्य, अपना धर्म, अपनी जाति की शपथ नहीं लेता है। और ये क्या नैरेटिव फैलाया और ये मानते हैं कि ये नैरेटिव से हमारी पॉपुलैरिटी हो जाएगी, बाल सफेद हो जाएंगे या नहीं बैठ पाओगे, नहीं हो पाए। देश के अंदर विभाजन कर कर कोई सत्ता प्राप्त नहीं कर सकता। मान्यवर, बैठ जाओ।
गुस्सा क्यों खा रहे हो? इतना गुस्सा मत खाओ प्लीज, प्लीज। इतना सदन में, मारन जी, सदन में इतना गुस्सा नहीं करते हैं, शांत।
मान्यवर, मान्यवर, जोर से बोलने से, बोलना है आपको, मैं बैठ जाता हूं, बोलो चलो। नहीं, उनको बोलने दीजिए ना,
प्लीज। नो नो,
मान्यवर, 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 माननीय अध्यक्ष जी, झूठ को जोर से बोलने से सच नहीं होता, सच सच होता। मैं बड़ी शांति से समझा रहा हूं कि ये परिसीमन आयोग और संवैधानिक सुधार के लिए ये नैरेटिव फैलाया जा रहा है। आज भी सभी लोग बोले हैं कि इससे दक्षिण के राज्यों का प्रतिनिधित्व की दृष्टि से नुकसान होगा। मैं ये बात कर रहा हूं, वो हकीकत नहीं है। अब जब मैं हकीकत नहीं है कहता हूं तो कल मैंने डिटेल बताया था, मगर फिर भी भाषण पढ़े जाते हैं फ्यूचर में। ये नैरेटिव तोड़ने के लिए जरूरी है कि मैं एक लाइन में समझाऊंगा। कर्नाटक, आंध्र प्रदेश, तेलंगाना, तमिलनाडु और केरला, 4-5 राज्यों का जो काल्पनिक एक दक्षिण उत्तर करा है, इसके 5 राज्य है, उसकी 543 सीटों में अभी स्ट्रेंथ है 129। अब ये 129 जो स्ट्रेंथ है 543 के प्रतिशत निकालते हैं तो 23.76% होती है। अब 50% वृद्धि कर जब ये 5 राज्यों की सीटों का हम आवंटन करते हैं तो 129 से बढ़कर 195 होती है। 129 के बढ़कर सीटें 195 होगी, जिसका 816 में प्रतिशत भार निकालते हैं तो 23.87 आएगा। तो पहले 23.76 था और अब थोड़ा सा बढ़कर 23.87 होगा। इसलिए मैं कह रहा हूं किसी का नुकसान नहीं। मान्यवर, कुछ सदस्यों ने
मान्यवर, आप पारित कराने की सहमति दो, अभी पेश करा देंगे। हाँ, 1 घंटा रुक जाएंगे। चलो, माननीय गृह मंत्री बता दो इनको, 1 घंटा रुक जाएंगे। कि तैयार है 50% का बिल, 1 घंटा रुक जाएंगे। पेश तैयार हो तो कर दें इनको।
1 सेकंड बैठ जाओ। बैठो। ये राजा जी, एक मिनट मुझे सुनो।
बता दो इनको।
अगर इस बिल का विरोध करने का कारण 50% लिखित में चाहिए तो 1 घंटा सदन बंद कर दिए, मैं ऑफिशियल अमेंडमेंट लेकर आता हूं मान्यवर, मगर बिल पारित करने का वो वादा करते। अब वेणुगोपाल जी बताए क्या बिल पारित करेंगे?
चलिए, सहमत हो? सदन में बात कर लेते, सहमत हो? अभी अमेंडमेंट लाएंगे, चलो शुरू करते आगे।
सर last minute, sir, last minute, yesterday onwards, when the bill introduced itself, entire opposition demanding we want this to be in the legislation. Number two, the constitutional protection of the delimitation to the states, number of the seats in the state should be protected. We are asking the Home Minister whether are you ready to dealing the delimitation process along with the women reservation, number one. Number two, if you are ready to include the number of seats in each state by legislation by 50%, these two things, are you ready?
सर अब बैठ जाओ, हो गए भाई, तेरा नेता बोल लिया। मान्यवर वेणुगोपाल जी ने 2 शार्प क्वेश्चन पूछे। अरे बैठ जाओ गोगोई साहब, 5 तारीख को काउंटिंग है यार, बैठ जाओ अभी। अरे 4 तारीख को काउंटिंग है, बैठ जाओ। मान्यवर साहब, मैं इनका जवाब देता हूं, इनको बिठा दीजिए थोड़ा माइक पे प्लीज।
अखिलेश जी से पूछ लेना।
मान्यवर, मुझे लगता है कि आपके नसीब में यश लिखा है, एक बिल पारित हो जाएगा शायद। मान्यवर वेणुगोपाल जी ने 2 चीजें करी कि एक तो 50% आरक्षण और 50% सीटें बढ़ाई जाएगी, उसको बिल में शामिल करने के लिए ऑफिशियल अमेंडमेंट लाने के लिए तैयार हो। हाँ जी, मैं तैयार हूं। एक सेकंड, अब नहीं होता भाई, बैठ जाओ, दूसरा भी बताता हूं। मान्यवर 1 घंटा आप सदन स्थगित कर दीजिए। 1 घंटे में मैं मेरा ऑफिशियल अमेंडमेंट मेरे पास में तैयार है, जेरोक्स कराकर सभी सदस्यों को सर्कुलेट कर दूंगा, क्योंकि हमें 50% सीट बढ़ानी है, हमें कुछ छिपाना नहीं है, हमें कोई चोरी करनी नहीं है, तो हम कर देंगे। और दूसरा उन्होंने कहा कि डिलिमिटेशन 26 की जनगणना का, ये झांसे में मैं नहीं आऊंगा, क्योंकि ये इसके माध्यम से अरे बैठ जाओ ना, बैठ जाओ।
क्या कई बार है ना, सदन में भी फैसले हो जाते हैं, इसलिए सदन में फैसला कर लो।
माइक ही नहीं है। अध्यक्ष महोदय, क्योंकि आपने कहा और माननीय मंत्री जी कुछ बात रख रहे हैं और हमारी तरफ से कोई बात आई है, अभी तक 11 साल का जो अनुभव है लगभग, अध्यक्ष महोदय, अगर भारतीय जनता पार्टी ये लिख करके दे देगी कि हम महिला प्रधानमंत्री बनाएंगे, तब भी हम इन पर भरोसा नहीं करेंगे।
मान्यवर,
इसलिए ऑफिशियल अमेंडमेंट
मैं बाद में इसका जवाब देता हूं। मान्यवर, मैं इस देश की मातृशक्ति को कहना चाहता हूं कि राहुल गांधी जी की अनुपस्थिति में कांग्रेस पार्टी ने जो प्रस्ताव रखा है वो एक बहुत सुहाना जाल है, महिला आरक्षण को फिर से एक बार 29 के पहले नहीं होने देंगे। इसलिए मान्यवर, ये जो कहते हैं कि हमारे राज्यों का समान भार होना चाहिए, मैं सहमत हूं। महिला आरक्षण 29 के पहले ही करना चाहिए, 29 के बाद ले जाने के लिए इनका षड्यंत्र सफल हम नहीं होने देंगे। मान्यवर, मैं समझ रहा हूं कि ये वोट नहीं देंगे तो महिला आरक्षण का बिल गिर जाएगा, मगर इस देश की की महिलाएं देख रही है, उनके रास्ते का रोड़ा कौन है वो देख रहे हैं। मान्यवर, मान्यवर, यहाँ पर तो शोर शराबा कर कर बच जाओगे, मगर माताओं बहनों का जो आक्रोश आपके खिलाफ है ना, जब मैदान में जाओगे तब मालूम पड़ेगा। भागते हुए रास्ता नहीं मिलेगा। चुनाव में जब जाएंगे तब मालूम पड़ेगा, मातृशक्ति हिसाब मांगेगी। मान्यवर, यहाँ कुछ सदस्यों ने मैं बताता हूं भाई साहब, मान्यवर, यहाँ पर कुछ सदस्यों ने दूसरी भ्रांति फैलाई कि मुस्लिम महिलाओं को भी आरक्षण मिले। अरे आता हूं भाई, आता हूं। पहले अखिलेश बैठे हैं तो पहले उनकी बात करूं ना। पहली बेंच पर बैठे देखो। मान्यवर, मैं यहां सरकार की, संविधान की और भारतीय जनता पार्टी की नीतियों की पॉलिसी के बारे में स्पष्ट करना चाहता हूं। भारतीय संविधान धर्म के आधार पर आरक्षण को स्वीकार नहीं करता है। मान्यवर, इसके दो कारण हैं। पप्पू सुन लिया ना? अब शांति रखो, ठंड रखो यार, चलो। मान्यवर, आरक्षण पाने की योग्यता पहला कारण है। आरक्षण पाने की योग्यता ऐसी नहीं होनी चाहिए जिसको कोई प्राप्त कर सके। ये संविधान की बात मैं कर रहा हूं। अगर आज कोई अन्य धर्म का व्यक्ति है जिसको आरक्षण मिलता है, यहां नहीं मिलता है, और अगर वो मुस्लिम बन जाता है तो उसको आरक्षण मिलेगा। तो आरक्षण जन्म से ही मिलता है मान्यवर, किसी प्रकार से प्राप्त नहीं किया, इसलिए वहां पर उसको सील किया है। और दूसरा, ओवैसी जी ध्यान से सुनना, दूसरा अनुच्छेद 15(4) के अनुसार आरक्षण उन लोगों के है, उन लोगों के लिए है जो सामाजिक और शैक्षिक रूप से पिछड़े वर्ग में आते हैं या अनुसूचित जाति और अनुसूचित जनजाति में पैदा हुए हैं। अनुच्छेद 16(4) इसके तहत आरक्षण पिछड़े वर्ग को, नागरिकों को दिया जाता है। अब संविधान में कहीं पर भी धर्म के आधार पर आरक्षण देने की मान्यता नहीं है। ये इंडी अलायंस वालों ने अपनी तुष्टीकरण की राजनीति के कारण इस देश में मुस्लिम आरक्षण की डिमांड खड़ी करना चाहते हैं। और इस संविधान की बात करते हैं। कोई भी संविधान पढ़कर बता दे मुझे, संविधान के किस आर्टिकल से धर्म के आधार पर आप आरक्षण करोगे? कोई बता दे मुझे। एक भी आर्टिकल में कोई प्रोविजन नहीं। मान्यवर, इसलिए भारतीय जनता पार्टी, हमारी सरकार, दोनों का नीति स्पष्ट है। जो संविधान सम्मत नहीं है वो धर्म के आधार पर आरक्षण हम ना भी देंगे, ना कभी किसी को देने देंगे। मान्यवर, अब मैं ओबीसी की बात करता हूं। सुनो ना, सीट बदल देनी पड़ेगी पप्पू जी। मान्यवर, इस देश में ओबीसी का सबसे बड़ा कोई विरोधी पार्टी है तो मैं बिल्कुल कंफ्यूजन के बगैर कह सकता हूं कांग्रेस पार्टी। इन्होंने चौधरी चरण सिंह और सीताराम केसरी का अध्यक्ष का दोनों को काल पूरा नहीं कर रहे। 1957 में, ध्यान से सुनना, अखिलेश जी कहां बैठे हो आपको मालूम होना चाहिए। 1957 में काका साहेब कालेलकर समिति के सुझाव आए जो ओबीसी को आरक्षण देते थे। उन्होंने काका साहब कालेलकर समिति के पूरे सुझावों को ठंडे बस्ते में डाल दिया। 1980 में ये जवाहरलाल जी थे। 1980 में इंदिरा जी आई, मंडल आयोग का सुझाव आया और मंडल आयोग के सुझाव को इंदिरा जी ने ठंडे बस्ते में डाल दिया। 90 में जब बीपी सिंह आए तब वो मंडल आयोग का इंप्लीमेंटेशन लेकर आए और उस वक्त मान्यवर विपक्ष के नेता राजीव गांधी थे। तो नेहरू जी, इंदिरा जी और अब राजीव गांधी, उन्होंने यहां पर अपने जीवन का सबसे लंबा भाषण मंडल आयोग का विरोध करने में किया, अपने जीवन का सबसे। और कांग्रेस ने 51 और 71 दोनों में जाति जनगणना का भी विरोध किया। मान्यवर, अब क्योंकि अब मेल नहीं खा रहा है, 15-20 बार चुनाव हार गए, तो अब ये ओबीसी के हितैषी बनने आए। मान्यवर, मैं आज आपके सामने कहना चाहता हूं, कांग्रेस पार्टी ने अब तक एक भी ओबीसी का प्रधानमंत्री नहीं दिया। भारतीय जनता पार्टी ने नरेंद्र मोदी और अति पिछड़ा समाज के व्यक्ति को प्रधानमंत्री बनाया। मान्यवर, इन्होंने काका साहब कालेलकर समिति में
It's killing it in China. Just killing it. No one's talking about that. So you've got memory, you've got great demand in China, you've got terrific new products and foldable phone in the fall, and all the press writes about is people who are leaving Apple. Today we had another person leaving. Well, he'd been there for 31 years. He was supposed to die at his desk. Oh no, he chose not to die at his desk. He decided to retire. Will you give me a break? Tim Cook has great people.
It's true, although you've made a decision to die at your desk.
Well, versus what? A mattress? I mean, where are you supposed to go out?
Versus retirement.
Where the hell are you
right?
supposed to go out?
Yeah.
I went on my tombstone. He didn't work hard enough. I think it's got to be poignant.
Yeah.
It's a poignant moment.
We will keep an eye on Apple, as we will on so many of the other large cap companies, many of which have had a great week, talking about things like names such as Tesla up dramatically this week, Microsoft up dramatically this week.
Microsoft had a charm offensive. I don't know if you got hit by that.
I got hit by the charm offensive. Yeah. I mean, you had your own little meeting. I had a larger meeting.
Well, I'll tell you, the guy was impressive.
Opening bell 5 minutes from now. Don't go anywhere.
have been asked 122 times in my life by a bureaucrat, who allowed you to do this? You know, the notion that innovation will require permission is holding India back. Socialism is capitalism without competition and bankruptcy. Basically, if you remove bankruptcy and you remove competition, socialism and capitalism are the same thing, right? See, IPL has made cricket more meritocratic in ways that the Ranji Trophy never did. I think private equity has made Indian business more meritocratic in ways that nationalized banks never did. In 1970, out of the 10 top pharma companies in India, there was only one Indian company. Today, there's only one multinational in the top 10, right? And that is because Indian pharma companies became meritocratic, right? Indian pharma exists because entrepreneurs danced with the government. I mean, the most embarrassing number about India 35 years after 1991 is that 45% of our labor force still works on farms.
What's the bravest thing you've done so far?
Oh, it's having children. Getting married. All of them are going to be non-professional.
India's manufacturing story is one that evokes sharp reactions. It's a story of triumphs, but equally a story of missteps and failed ambitions. While we lament about regulatory cholesterol, stymieing dreams and scale, we also must credit the stroke of pen action that birthed many industries in independent India. The Indian pharma sector is one such example. From zero domestic pharma companies 4 decades ago to now being recognized as the pharmacy of the world. India's pharma sector has quietly but undeniably changed the rules of the game, making drugs affordable and accessible to millions of people around the world. In telling the story of Lupin, one of India's manufacturing miracles, Manish Sabharwal explains why Indian pharma took off, but more importantly also shines the light on the magic of entrepreneurship. How is that some can see a future that others can't? What drives them to push the boundaries of what is possible even when the odds are stacked against them? What gave the late Deshbandhu Gupta the courage to start up with a seed capital of 5,000 rupees courtesy his wife and create one of India's top 10 pharma companies that today commands a market cap of over 100,000 crore rupees with $1 billion in sales in the US market? Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. My guest today has spent his entrepreneurial journey on solving India's most fundamental challenge, not just creating jobs, but making them better. As a co-founder of Teen Lease Services, he's helped shape one of India's largest human capital engines, connecting millions to employment across factories, offices, and campuses. From building India's apprenticeship ecosystem to influencing policy at the highest levels, his work sits at the intersection of labor, education, and reform. And now, in his book, Made in India, he makes a compelling case for why the country's future will be defined not by unicorns, but by the quality of its jobs, wages, workforce productivity. Blunt, data-driven, and unapologetically contrarian. Joining me today is Manish Sabharwal. Manish, it's great to have you join us on Young Turks Reloaded. Thanks very much for being here.
Thank you.
Let's address the issue of the Indian pharma story, which is what you've tried to talk about in your book. In telling the Lupin story, you've essentially told the story of the Indian pharma sector. And as I pointed out at the start, while we lament, and you have certainly lamented over the last several decades about regulatory cholesterol killing entrepreneurship, here was policy that actually provided the booster shot, the steroid almost, to create the Indian pharmaceutical industry and make it what it is today.
Well, this industry should not exist in India. I think the Indian pharma industry, our Indian pharma companies, and particularly DBG, defy the notion of destiny, right? Because no economist would predict that a country 128th in the world in per capita would be making 60% of the world's medicines, having more than 40% of the world's US FDA plants, and sell medicines in 200 countries. Now, where did that industry come from? It is really two governments on two opposite sides of the planet. The Indian government in 1970, which is 1970 Patents Act, which replaced product patents with process patents for 35 years only. It went away in 2005. And the 1984 Hatch-Waxman Act, which Ronald Reagan put in the US, where he said that, because before that, even when drugs went off patent, there was no pathway for companies to launch the generic version of those drugs. So absolutely, I think that regulatory cholesterol has held India back, but I must acknowledge that good policy can really create wonders. And the Indian pharma industry is also very different from its intellectual cousin, the software industry, because software exports 90% of their product. Its pharma industry sells 50% in India and 50% globally. So I think that companies like Lupin and Cipla are more important to India and the world than their revenues, because I don't think AIDS would have been eradicated in the world without Cipla, and TB would have been eradicated in the world without Lupin, right? Both of them are the world's largest producer of those medicines even today. And in particular, I hung it on DBG because, my father was in the police. I didn't have any money to start my company. I am a child of liberalization, private equity, venture capital was available when I started. I mean, I graduated the year liberalization started. But this pharma industry entrepreneurs, most of them grew up in the licensed Raj, which was hostile to entrepreneurship. There was no concept of venture capital. If you didn't have connections or you didn't have capital, you couldn't be an entrepreneur, right? My father, who was in the police, and my mother broke out when I said I wanted to be an entrepreneur because we said, we don't have money. Only people with money can be entrepreneurs.
As did DBG's father when he said that he wanted to turn entrepreneur.
Yes, because entrepreneurs is a complex debate about whether entrepreneurs are born or made. And I'm not sure entrepreneurs are born. They have some good instincts, which all leaders have. So I think the industry should not exist. It exists because of the government, and the Indian pharma exists because entrepreneurs danced with the government, rather than this stupid metaphor we have of tug of war between the government and entrepreneurs, right? Where one wins when the other loses. I think the Indian pharma industry shows that tug of war is a very dated metaphor for the relationship between business and government.
So in telling this story and the many lessons that you articulate in the book, how do we replicate the manufacturing miracle that we saw with the Indian pharma sector? How do we replicate that success across other sectors? And where do you feel most confident of being able to do that?
First of all, we have to stop giving up on manufacturing. General Niazi surrendered with 90,000 troops in Bangladesh. And it feels sometimes like all our economists keep saying that India should give up on manufacturing and just focus on services. Raghuram Rajan makes the case. Many other people make the case. I think that's a mistake. It's a defeatism which is self-fulfilling, right? Technology has automated many processes. It's much less labor-intensive than it used to be. But 11% of our labor force working in manufacturing is absolutely the wrong number. It is the same as post-industrial United States. So clearly there was something wrong in India's manufacturing ecosystem, where China, starting at the same time as us, became the factory to the world. While we became the pharmacy to the world, we became the software capital of the world, but we didn't become the factory to the world, even though we have 45% of our labor force still working on farms. I mean, the most embarrassing number about India 35 years after 1991 is that 45% of our labor force still works on farms. And we were, at least I also 20 years had started believing that China's farm to non-farm transition is happening to factories, India's farm to non-farm will happen to services. Customer sales, logistics, and but sales, customer service, and logistics are the three fastest growing segments of India's job market. But I think that was an incomplete and a wrong view to the world. So I think improving the infrastructure, which we already have done quite substantially, I think taking on the labor laws, which the labor courts have done to some extent. But there's still an unfinished job of reducing the regulatory cholesterol, whether it is the amount of criminal provisions. Chand Vishwas is some progress last week, which 12,500 ways to go to jail were removed by a single bill. But I still think that the mentality of prohibited till permitted, I have been asked 122 times in my life by a bureaucrat, who allowed you to do this? Now, from a theory of
122 times.
I have kept a list specifically of different things that I've tried and launched, and they said, because it's a profound question, right? All innovation has to be permissionless, right? The notion that innovation will require permission is holding India back. I think the interrogation of the administrative state also has not happened. So regulatory cholesterol, I need to move beyond the slogan of regulatory cholesterol to make it specific. What is regulatory cholesterol? It is the thousands of ways that go to jail. But it is also the multiplicity of administrative instruments. The Constitution only allows acts and rules. Now, as a country, say we will have acts and rules. You don't have a single source of truth in India for where you can go and say, is this act or rule applicable? Is it live? So I think there's a huge amount of unleashing of entrepreneurial energy. And the challenge is everybody, when I talk about regulatory cholesterol, thinks I'm talking about big companies. Big companies have sorted this problem out. For them, regulatory
cholesterol... They have means of taking on the regulatory cholesterol.
For them, it's a thorn in the flesh. It's not a dagger in the heart. Even Teamlease, the company I founded and now I've stepped down from, has 160 guys in regulatory affairs. These guys are dharti pe boj, they are cost center. But it doesn't bother me if I have 700 court cases against me in labor laws, right? Because I believe that...
Do you actually have 700 court cases against you?
Yes, because labor laws were written in a way that I don't think you could comply with 100% of India's labor laws without violating 10% of them. So I think now there is a huge move on ease of doing business, deregulation, decriminalization, but we are far from the horizon. We cannot compare ourselves to where we were. India and China had the same per capita GDP in 19. They are not smarter than us. They are not more hardworking than us. But now they are 5 times more than us because entrepreneurship was unleashed.
So how do we then take on China? There is not a sector today where China is not at least competing with the US and in some cases perhaps even leading the US. What will it take for us to be able to unleash the entrepreneurial spirit, the entrepreneurial power, but also the innovation quotient, which is the big sort of, constraint that seems to be holding us back as well?
Yes, I mean, I think at its heart, it's going to be human capital, right? The repair, prepare, and upgrade of our citizens, the school system, the skill system, and the college system. But if you wanted to take it right to the end, because finally you can't repair people who didn't.
Good evening. Thanks for joining us on India Business Hour. I'm Shireen Bhan. The big headlines that we're tracking for you this evening. Crude oil prices plunge over 10% after Iran's foreign minister declares the Strait of Hormuz is fully open for commercial vessels for the period of the ceasefire. President Trump thanks Iran. Wall Street rallies at opening bell. President Trump says the Iran war is going swimmingly and should be ending pretty soon, praises the role played by Pakistan, says he might go to Islamabad if a deal is being signed between the US and Iran. Reports suggest the summit could take place as early as this Sunday. Celebrations across Lebanon as the 10-day ceasefire with Israel takes effect, but Israel's Prime Minister Netanyahu refuses to withdraw the army from southern Lebanon. Israel and Lebanon are expected to hold a summit which will be a first in 37 years. Parliament is set to vote on the women's reservation and delimitation bills to expand the size of Lok Sabha to 850 seats. Home Minister Amit Shah promises 50% increase in Lok Sabha seats for all states, but the proposed law does not prescribe a formula for the same. Opposition leader Rahul Gandhi accuses the government of attempting to redraw the political map and snatch the rights of OBCs. DMK accuses the BJP of using women as a shield for its political ambition. Opposition parties maintain they support women's reservation but question why the government is linking it to delimitation. The Sensex and the Nifty gained for the second week in a row. All sectoral indices gained this week, barring autos. More than 14 lakh crore rupees added to the market cap of listed companies this week. The rupee continues to regain lost ground against the dollar. RBI curbs on oil companies and restrictions on gold imports helps the rupee gain 3% in April so far. The government allows 15 banks to import gold and silver ahead of Akshay Tritiya next week. Vedanta's chairman Anil Agarwal faces an FIR after 20 people died in a boiler blast at the company's power plant in Chhattisgarh. Police have also named several other company officials, accusing them of negligence. The co-founder of Netflix, Reed Hastings, will step down from the company's board in June, ending a tenure that lasted nearly 3 decades. Netflix shares slide in trade despite reporting a $5 billion quarterly profit as the growth outlook disappoints Wall Street. Well, the big international story, crude oil prices plunging more than 10% and Wall Street is rallying at opening bell. And this after Iran's foreign minister, Sayed Abbas Araghchi, said the Strait of Hormuz remains open for commercial ships for the remaining period of the ceasefire. Now, the 2-week ceasefire between US and Iran is set to end on the 22nd of April, but there is another ceasefire, and that is the ceasefire announced between Lebanon and Israel, which was announced by President Trump. Now, in a social media post, US President Donald Trump also said, and I quote, "Iran has announced the strait is fully open and ready for passage. Thank you." That is the post coming in from President Trump, but he's also called it the Strait of Iran, not just the Strait of Hormuz. Moments later, in another post, Trump claimed that the naval blockade of Iranian ports will continue till America's transaction with Iran is 100% complete. He also added that the process should go very quickly and most points are already negotiated. Just last night, President Trump had said the war should end, and I quote, pretty soon, and had praised Pakistan's mediation efforts. Trump had said he might even go to Islamabad if the US and Iran are ready to sign an agreement. Now, Axios reports that a summit could take place as early as this Sunday. Axios is also reporting that both the US and Iran are negotiating a 3-page plan to end the conflict. The report says that the US is exploring the option to release $20 billion of frozen Iranian funds in return for Iran giving up its stockpile of enriched uranium. Celebrations erupting in Lebanon, meanwhile, after a 10-day ceasefire took effect. Residents of southern Lebanon have driven across streets holding victory signs. The conflict between Israeli forces and the militant group Hezbollah has killed over 2,100 people in Lebanon and displaced more than 2 million. Now, we're joined by Ali Al-Riyami, energy consultant and former Director General of Oil and Gas Marketing of the Energy Ministry in Oman, and Sunil Vaswani, Executive Director at the Container Shipping Lines Association. Gentlemen, appreciate you joining us here on CNBC TV 18 on what is a big story that is developing. Mr. Riyami, let me start by asking you, what do you make of the announcement that's come in from the Iranian Foreign Minister Sayed Abbas Araghchi saying that for the period of the ceasefire, the Strait of Hormuz is now open, something that President Trump acknowledges as well, thanking Iran for the same?
Thank you very much, Shireen, for having me. I think it's a very positive move and positive news. The market, the oil market and the energy market received this news very positively, and immediately we have started seeing the prices going down, and also everybody from the both parties, from the Americans and also the Iranians, they are declaring a win situation, which is something also that we have to consider, because one of the problems that we were facing before, that nobody wants to believe that it was defeated. So this gives a chance for diplomacy, and also it gives the chance for the Iranians to link the opening of Strait of Hormuz with the ceasefire in Lebanon, and also to the Americans to say that they have won and they have managed to impose opening of Hormuz by force. But anyway, at the end of the day, I think most important for us it is that this is going to be taken as a very positive, move forward or straightforward. And I hope that this can be a beginning of a very positive discussions and negotiations in the coming days.
Yes, most certainly. That is the hope at this point in time, and that's the hope that's being reflected in the prices. Oil prices down almost 10% at this point in time, reacting to this development. Sunil Vaswani, Executive Director at the Container Shipping Lines Association, also joins us. Sunil, many thanks for joining us. Does this now give the much-needed reassurance to insurance companies who were still holding back, given the various developments, even though you had the naval blockade in place, you had the assurance from President Trump and so on and so forth? But will this this now give the reassurance to insurance companies to start moving?
Well, good evening. And, it's indeed a very welcome, announcement that's come in. But I think still from the shipping point of view and from the insurance point of view, in my opinion, the companies might want to wait till the actual deal is struck because, there are a lot of water has flown under the bridge over the last several weeks. So essentially, before things can resume to complete normalcy, it would be a wait and watch situation, but it's definitely a welcome move, and it would be watched very closely by one and all.
Yes, I would imagine that, people would want to see this done and dusted before they get on with any degree of normalcy. But that's what I want to understand from you, Mr. Vaswani, that what will it take to actually start to see some movement to get the backlog moving, etc.? What are we talking about now that there seems to be progress in negotiations? Hopefully, one doesn't know, but various reports suggest that, there could be another round of talks in Islamabad. If all goes well and the strait does remain open, how long will it take to achieve some degree of normalcy?
Well, first and foremost, the vessels that are stranded inside the Persian Gulf, on the west of Hormuz, once we start seeing those ships moving out and safely moving out, that'll give some confidence. And then, of course, slowly and steadily, one could decide on what shape and form the services will take. There are two forms of ships that go across the Strait of Hormuz. One is, of course, the tankers, the LPG carriers. Those are very essential for the exports from the Persian Gulf and what the rest of the global community looks at, because the supplies of LPG and oil need to move normally. Once that happens, of course, the container carriers, will have to, I think they will wait and watch how the insurance companies behave. I mean, in the way that what they come out with, and about their service pattern also, because there have been too many ups and downs. Service patterns have been changed very frequently. So while everybody would want to get back to normalcy as soon as possible, but definitely there would be a degree of caution that would be exercised before everything moves back completely to normalcy.
Yes, I would imagine that is going to be the case. Mr. Riyami, let me come back to you and also understand from you what you expect now oil prices to trade at if this were to hold, if the peace talks, if the negotiated agreement holds. What will it mean for oil prices in the short term?
Actually, it is too early, and also the ceasefire, and also to connect the allowing the ships to pass through the Strait of Hormuz and the ceasefire in Lebanon. It is going to be a very fragile. Our experience with Israelis, especially when this kind of situations with Lebanon, it can break any time. So I think we need to give some time to allow the diplomacy to work, and also to see if this is going to continue or not. But definitely the prices are also very sensitive, and we have seen already, like you have mentioned, that 10% of the prices immediately after the announcement they went down. But this is just to take out the extra premiums that they were there because of Strait of Hormuz. Once we start, seeing the flow of ships that going in and out of Strait of Hormuz, that will bring another 2 or 3%, prices down. But I think this is a very early days. We need to finalize the deal either in Islamabad or in Geneva or anywhere. We need to see that document is signed by both parties, and also the ceasefire in Lebanon takes place, and the agreement in that side it is happening, and then we can say, or we can talk about the prices of oil. But at the moment, I think it is linked by two things: Strait of Hormuz, and also the production of the countries that they have already suffered of bringing down their production, and to bring it back to the normal stages, it needs some time. So I don't expect the prices to go down back to 70s and 60s, but that will take time until the countries been able technically to bring up the production. But the good thing is that the Strait of Hormuz is open not only for the oil and gas, but also for the other goods. You guys in India have been suffering with LPG, but this will allow the LPG and other petrochemicals and also products to move outside the Strait of Hormuz and to bring, the stability to the energy market again to where it was before the war.
Absolutely, you're right. Every country virtually has been suffering, especially Asian countries have been suffering on account of the closure of the Strait of Hormuz. And the hope is now that at least if this goes through and this is sustainable, that we could see some of that pressure easing. But as you point out, it is still early days. It would be premature to suggest that there is a deal in place. Let's see if those talks happen in Islamabad over the weekend. And we will have to wait to see a negotiated agreement in writing before we can take this conversation further. Ali Riami and Sunil Vaswani, appreciate you joining us here on India Business Hour on the big story that's breaking this evening. Thanks very much for your time. But the other big national story, after 2 days of intense debate, Parliament is voting on 3 legislations to implement 33% reservation for women and delimitation. That is the controversial one, to expand the size of the Lok Sabha to 850 seats and redraw electoral boundaries. The government needs a 2/3 majority for the bills to go through. The numbers are not in the government's favour. Opposition parties have questioned why the government is linking delimitation to the women's reservation. The opposition accusing the government of gerrymandering, an American term used to describe deliberate manipulation of electoral boundaries. The DMK and its Supremo Stalin have alleged that the delimitation bill is a carefully crafted trap by the government to deprive southern states, particularly Tamil Nadu, of rightful political representation. Now, Home Minister Amit Shah spoke during his closing remarks, once again assuring a 50% hike in Lok Sabha seats for all states. However, the delimitation bill does not say this explicitly or spell out any formula. In fact, the Home Minister suggesting that perhaps they could adjourn the House and the government would bring in another amendment. But here are the highlights from a fiery debate that's taking place in Parliament.
This is an attempt to change the electoral map of India, using and hiding behind India's women. And actually it is a shameful act.
You have proposed delimitation with such haste, the same haste that you showed on demonetization. And unfortunately, we all know what damage that did to the country. Delimitation, sir, will turn out to be political demonetization. Don't do it, sir.
कर्नाटक, आंध्र प्रदेश, तेलंगाना, तमिलनाडु और केरला, 4-5 राज्यों का जो काल्पनिक एक दक्षिण उत्तर करा है, इसके 5 राज्य है, उसकी 543 सीटों में अभी स्ट्रेंथ है 129। अब 129 जो स्ट्रेंथ है 543 के प्रतिशत निकालते हैं तो 23.76% होती है। अब 50% वृद्धि कर जब ये 5 राज्यों की सीटों का हम आवंटन करते हैं तो 129 से बढ़कर 195 होती है। 129 के बढ़कर सीटें 195 होगी, जिसका 816 में प्रतिशत भार निकालते हैं तो 23.87 आएगा। तो पहले 23.76 था और अब थोड़ा सा बढ़कर 23.87 होगा। इसलिए मैं कह रहा हूं किसी का नुकसान नहीं।
Well, closing remarks there from the Home Minister Amit Shah in Parliament. The Lok Sabha now has begun voting on the legislations. Here's the live action.
प्लेट पर मल्टीमीडिया डिवाइस के बाईं ओर लगे वोट सिक्योर बटन और हेडफोन प्लेट पर दाईं ओर लगे निम्नलिखित बटनों में से कोई एक बटन साथ-साथ दबाएं। हाँ, हरे रंग के स्टिकर के नीचे, नहीं लाल रंग के स्टिकर के नीचे, मतदान में भाग नहीं लेना, पीले रंग के स्टिकर के नीचे। गोंग ध्वनि दूसरी बार सुनाई देने तक दोनों बटनों को दबाए रखना अनिवार्य है। माननीय सदस्य कृपया नोट करें कि उनके मत दर्ज नहीं होंगे यदि बटनों को पहली गोंग ध्वनि सुनाई देने से पहले दबा दिया जाता है या दोनों बटनों को दूसरी गोंग ध्वनि सुनाई देने तक एक साथ दबाकर नहीं रखा जाता है। माननीय सदस्य दूसरी गोंग ध्वनि के कुछ सेकंड के पश्चात अंतिम परिणाम वास्तव में देख सकते हैं। माननीय सदस्य माननीय अध्यक्ष के आसन के किसी भी तरफ संस्थापित व्यक्तिगत परिणाम डिस्प्ले बोर्डों पर, मल्टीमीडिया डिवाइस पर और हाँ नहीं मतदान में भाग नहीं लेने वाले बटन जैसा भी मामला हो पर अपने मत की जांच कर सकते हैं। मत दर्ज नहीं होने की दशा में अथवा यदि कोई सदस्य अपने मत में परिवर्तन करना चाहते हैं तो वे पर्ची के माध्यम से मतदान की मांग कर सकते हैं। Kind attention of honorable members is invited to the points in the operation of the automatic vote recording system. Before a division starts, every honorable member should occupy his or her own seat and operate the system from that seat only. When the honorable speaker says, "Now division," the Secretary General will activate the voting button and a gong sound will be heard simultaneously. For voting, only after the sound of the gong, repeat, only after the sound of the gong, honorable members may simultaneously press the vote secure button towards the left side of the multimedia device on the headphone plate and any one of the following buttons fixed on the right side of the headphone plate. For yes, below green color sticker, no, below red color sticker, abstain below yellow color sticker. It is essential to keep both the buttons pressed till another gong is heard. Honorable members may please note that their votes will not be registered if buttons are kept pressed before the first gong or both buttons are not kept simultaneously pressed till the second gong. Honorable members can actually see the final result after a gap of a few seconds after the second gong. Honorable members can check their vote on individual result display boards installed on either side of Honorable Speaker's chair, the multimedia device, and also on the yes, no, abstain button as the case may be. In case vote is not registered or if any member wishes to change their vote, they may call for voting through slips.
अब मत विभाजन